Mark. Thanks, Key. Thanks, Darren, for your comments. I got your email too, so I'll action that too for you, Darren. Thanks, Lynn. And thank you for all of that with the little fella. We'll let you know how that's going. Thanks, Wayne. Thanks for your good questions, and everybody have a great week in the market. And yeah, I look forward to. Thanks, Jack. And yeah, enjoy Gann Mastery, you guys. We're all going to go and do day 3 with Matt and Noel tomorrow. So good job for backing up tonight, and obviously being in a class at the moment. So I know that's never easy, and your head's probably as as Lois said, probably about to explode. But it's all good stuff. Just keep jamming it in, and it all tends to stick eventually. Thanks, Tim, for your the late mail into the quotes of quotable quotes by Tim Walker. And thanks, mate. I'll catch up with you shortly. And yep, I'll catch you next time we meet and coach. And I hope everybody, as I said, has a good week. And if I don't see you next week, I'll be in touch to let you know. So, any final questions? I'll grab those now. Otherwise, I'll pull stumps, and we'll catch you soon. Alrighty, I'll take that as we're said and done. So thanks, everybody, and we'll catch you. So we're now recording, which is fantastic. So obviously, welcome to session 6 as part of our Ultimate Gann course coaching. So let me bring up my presentation, which I'm going to be using for this evening. So I'll get that up and running, and we'll have a bit of a chat about what our plan of attack for is tonight. So obviously, I had to dig back over what we talked about the last time we were together. So I've got obviously a good idea. As I said, it was about the 4th of November when we last got together. So the markets have sort of had a good month or so to have a discussion on where they might be heading. So. Obviously, just to advise you once again, as per normal, I'm sure you haven't forgotten, but I'll play as if you have. Is that Safety in the Market holds what's called an Australian Financial Services License. We're licensed to provide general financial advice in things like securities and derivatives. We've not taken into consideration your personal financial objectives. So, in putting together this Ultimate Gann coaching and all of our classes and workshops and online training, we've not taken into consideration the perfect outcome for the individual. What we're looking at is using this information in a general sense and using it as an educational purpose. And you've got to make the final and the ultimate decision as to whether or not that's suitable in your circumstances. And as always, we say to you to seek licensed financial advice if you're after any direct advice as to what you should be doing. So we've got that out of the way. And once again, any questions always you can ask, and I'll be happy to help you there. So tonight's session, what I was planning on covering was first and foremost just a quick little discussion on how we plan on catching up. So if we run at one session a week, I think it takes us into sort of the middle part of February, thereabouts next year, and we're comfortable to do that if needs be. I'm not going to try and run ask for you to put your hands up and and take a quick head count. So you might remember back to the very start of our time before you commenced the Ultimate Gann coaching program, I sent out a little survey which talked about what your expectations were and those sorts of things. I guess to make it a little bit more formal and make it a little bit easier to track your responses and to make sure that I guess everybody gets a chance to respond. Over the next, before next week's session, and probably towards the end of this week, you'll receive a survey via email, and all you need to do is, there'll be just a couple of questions, and then I'll be able to collate all of that, and then I can make a plan that best fits. So I guess some of the suggestions are is we can keep running one session a week, and until we come to the time that we need to, obviously, until we complete our sessions, which is certainly one aspect of how we might consider running. I'm also interested to sort of get a little bit of feedback as to how you guys seeing the Christmas period and the New Year period working, because obviously, if people are going away and those sorts of things, I don't want to impede on time with family, etc. So I'm also open to sort of doing a couple of catch-up classes. So, potentially maybe doing 2 nights a week, or maybe picking up something over a weekend, or those sorts of things. Now, I know that everybody has a life and other nights aren't suitable and the weekends might not work, and there's lots of different things there. So I'll just throw the questions out there and you guys can answer and see what sort of solution would best fit for you. And then I'll sort of collate all of the responses, and then I'll sort of sit down and have to think about what the best way to tackle it is. So as I said, simple road would be just to pick it up one session per week until we get to our conclusion, or we can, maybe just do a week or two of a couple of catch-up sessions. Not doing it every, I'm not planning on doing 2 sessions a week you know, for the next sort of, you know, 3 or 4 weeks just to knock it over before Christmas. It's definitely something I think we'll need to take into the next year, but I'm open to picking up some catch-up sessions along the way if that's, you know, suitable, and you know, we'll talk about some bonus sessions or things like that if needs be. So I guess I'm just throwing that out there for you, and I'll be interested to get your thoughts. But as I said, this is a hard environment or a hard format for me to capture everybody without asking them individually, so I don't want you to feel like your voice hasn't been heard. So we'll do it in a more formalised manner where I'll send out a survey and you'll be able to tackle that accordingly. So just be on the lookout for that over the next few days. Okay. Obviously, we're going to do a market update now. That's going to require probably a little bit more time than it usually would, because obviously we've got to update the best part of a market of a month's worth of information. I can pretty much surmise it for you in one easy word: sideways on most of the major indexes and most of the major you know, commodities markets. Obviously, gold was one that kept moving, but there's been you know, pretty much a sideways channel. Now, I don't know whether that's because obviously the market was just patient enough to wait for us to catch up, and now that we're back in class, so to speak, the markets will take off. I'd actually like that. I've been a little bit bored with this sideways movement. It's certainly on oil, it's been very, very, I guess, painful, and I'll share with you the setup that I was sort of watching for that, which actually hasn't materialised, so to speak. So we'll do a market update, and as I said, that'll probably be a slightly longer-winded version tonight. Certainly things like Newcrest Mining, when we last left it, we were sort of talking about a trade off a double bottom. We've had 2 ABC longs since then, and obviously, as we know, gold's really been the only market that's really you know, pushed forward and pushed to fresh highs. So I'd be interested to see how you guys have been seeing that, and you know, would actually sort of be happy to devote a little bit of time to the Q&A as to how you might have tackled that, or what your expectations or what your results were, and whether you traded it, whether you sat on the sidelines and watched, and all those sorts of things, because there's certainly been some good money to be made there. The Aussie dollar, we were also talking about a little bit of a setup that was on that on a retracement that we were watching, and you know, that was probably a slightly profitable trade or break even, depending on how you managed your stops. But once again, you know, if you sort of you know, put into action what we've been talking about, there was definitely a trade set up on the cards there, but it's also started to move a little bit sideways. So we'll do a market update and we'll also look at the major indexes as well, and just have a look at trend like we normally do to make sure that we're over it. So we'll review our markets, obviously those being Newcrest Mining and the Aussie dollar, and then I guess want to start to tackle third dimension work. So squaring time and price was one of David's favourite tools, and obviously something he used to great success. So the third dimension studies actually have quite a few moving components to them there. You know, there's not just, for example, you know, Gann angles on their own. That's just one aspect, squaring highs, squaring lows. We're not going to do all of that tonight. We're going to sort of break it down into bite-sized pieces. So tonight's focus will really be probably built around just sort of geometric angles, a quick little review over what is a geometric angle, how do we use them, and I guess what do we know about them in our markets of choice on Newcrest and the Aussie dollar. So I found a few things that I think are working there, but once again, it's about giving you a process. If there's a tool that's probably as misused as much as, say, time by degrees is, because that tends to be the one that most people jump for, throw it on the market and wonder why it doesn't sort of stick. When I teach geometric angles lessons, you know, I look at people's charts and they literally are Charlotte's Web. They have so many angles that they seem to convince themselves that, you know, every top or bottom there'll be an angle that squares it out. And to be honest, it probably is. If you put got you know, lines and angles on a chart, you'll eventually run into something. And if you eventually start playing around with calendar days or trading days and muck around with point sizes, I've got every confidence that you'll pick every top or bottom. But we need some systematic rules. We need some simple rules that enable us to know where we're sitting in the market. So I guess what I also want to start to do from, you know, I feel like we've obviously after our break, we need to come back and just get into a rhythm again. But I guess I want to start to, you know, raise the tempo a little bit, as well as to the amount of analysis we're doing in a session. So rather than just sort of taking a quick view over swing charts and those sorts of things, which should be routine and process for you, you know, what we should start to do now is have one saved chart that we basically would look at on a day-to-day basis. And that saved chart page would have obviously, you know, it could be a swing or a bar, depending on how you like to look at things. It would have obviously major resistance cards on it, the ones that are working. And it would also probably have a couple of major angles on it as well. So we don't want to have too many angles, but if there's angles that are currently working within a market, we want to always know where our markets are positioned in relationship to third dimension studies, because there's plenty of good trades that come along the way where you just might be seeing where an angle, for example, intersects a resistance card. So, for example, a 1x1 touching a 50% point or something along those lines. It can actually give you trade ideas. So it can give you the impetus to actually start thinking that there could be a setup on the cards, even though it may not yet have materialized. For example, on your swing chart, you may not be able to see that coming just yet. So I guess for me, it's about getting into a usable process or a usable routine with third dimension. And over the next few weeks, I guess, you know, if we're going to open the door to third dimension studies, so we'll kick off tonight with things like geometric angles, but then we'll take a look at squaring time and price, squaring highs, squaring lows, squaring a range. We also need to take a look at squares. We also need to take a look at boxes, and we also need to take a look at speed angles. So we've got a fair amount of third dimension studies, which will probably take us maybe 3 or 4 sessions to actually break out all of them, so we can actually feel a bit more comfortable with it. And then I guess we've done a little bit of work on price, we've done a little bit of work on pure time, and then what we want to do is start, as we get towards the end, is we want to start baking the cake and putting the recipe together, where we can actually start putting together that practical forecast that I've talked about as being a bit of our end game into next year. So I guess that's our plan of attack, as I mentioned. So yeah, we'll do a market update. We'll take a look at our markets and see what we could have taken away from that. Once again, making sure we have a discussion, setting up a discussion or some theory to begin with on squaring time and price, and then bring it home with setting it up practically within a market and having a saved chart page. So I guess one of the nice parts about Profit Source is being able to organize your saved chart pages like you would your normal Windows files under like a Windows Explorer menu. So being able to sort of say, okay, Newcrest mining, Gann angles, Newcrest mining boxes, Newcrest mining squares, Newcrest mining resistance cards, swing charts, those sorts of things. Same with the Aussie dollar. We should start to be able to get that filing system, and then I guess we could probably put together what you'd consider a master chart, where we have the main angle that could be working in the market at any given time, the major resistance cards, and obviously major turning points. So if we were to put together a time by degrees reference card, for example, those wall vibration charts, that would also be something that we're putting on there. Now, I guess something I want to note, which was a good discussion. Obviously, the discussion boards have obviously been a bit quiet because of, we haven't been having sessions. And but I would sort of like to mention, I'm not sure if he's in the room tonight, but when I was taking a look through there, and I did note with interest that Richard had actually posted I was on the Tuesday night group, I'm sure. I hope I'm not making that up. Yeah, it's the Tuesday night group, so he's obviously in our group. He doesn't seem to be in the room tonight, but Richard had actually talked about around the 4th of December being a top for, or a turning point, I should say, on Newcrest mining. And I was going to give him a big rap because the market actually made it top on the 3rd, and the market's fallen away pretty strongly from there. So not sure if anyone had seen that, and obviously I agree with the work that Richard's posted. He was just putting some time frame analysis work in there. So certainly hats off to him, because that was in advance being able to put it together. So we'll take a look at that when we bring up a chart, and we'll put that together. So make a little bit of a side note to go back and take a look at that thread that was put together by Richard. It's actually, I have it here. What I might do is, just while we're having a yap about it, I'll just pause this camera. And what I'll do is I'll just stop sharing that screen, and I'll share, remember how all this stuff works again. Yeah, there we go, share the page here. So you should be able to see my my screen here. So what we've got is Richard, who's put together a little bit of a forecast here, saying, looking at the more recent advances and retracements, and he's talking about balancing time and calendar day and degrees. He's saying that Friday the 4th of December, Saturday the 5th, and we know markets don't trade on the 5th, and finally the 7th of December could have all been areas to look for. So what I'd say is that that's worked out to be pretty strong as far as an area to watch in the market. So we'll have a look at Newcrest mining and pull that apart. So let me jump into Profit Source really quickly, and what I'll do is I'll bring that up so we can take a look at what our markets have been doing. So I guess taking a look at the share price index. We've been pretty much locked in a range, since we last met, from about that 4,500 to 4,800 mark. So if I go back to where we were, I think it was the 4th of November when we last met. So that's getting very close to our seasonal date, which we were watching. Early November was something we've been talking about in the time that we have been together as potentially a top. Now, hopefully I don't need to take you back to the lessons to say, all right, well, if you're looking for a turnaround at that sort of date, you weren't looking for a top is probably the best way to describe it. And since that, the market did make a low around about that early November date, remembering that most of the major turns that we've seen in the market have all been around the early part of the month. So if I quickly scroll back to remind you, you've got early November, early July, early June, early March, early January, and then we obviously saw early November produce a relatively strong low. The market sort of got away, and I really did think it was a bit up and away from there. That first higher bottom potential there was something that I was thinking, all right, well, it's gapped up, potentially an island, but nice strong movement on the way up. Can't think if it was it was an ABC long. This is on the share price index, thinking, yep, market could be up and away, and obviously we did get filled, big outside day, and I don't think it got anywhere close to 50%, and obviously then fell out of bed. And since then we've really, other than that one day down where we sort of saw a gap down, and then once again maybe an island, where we're looking at the next sort of higher bottom in this, what is this sideways period. And if I sort of bracket that sideways period just with some horizontal lines, that's really the area that we've been caught in within the current market. So at the moment, could be coming back to test that sort of channel. and maybe we, I had been looking as potential. I think that low is quite strong. That one there on the 27th, and I've been watching for this market to push away, but it really hasn't given us that first high bottom opportunity to get long yet, and so we're still sort of caught in this sideways period. So it has definitely been a challenge. So there's not been a huge amount going on since we last got together in terms of major trends, particularly on the index markets. So just to follow the normal process or the routine, obviously the swing chart's going to give me an interesting story. At this stage, we have an uncertain trend. I guess of note here, 239 points on the way up is certainly the biggest upswing we had since that early November upswing. So that's, once again, got my attention as being relatively strong. And 115 is certainly a lot less than 194. So you can see our swing chart here is giving us a number of, sort of old tops here, back in sort of early November. And then you've got a couple of old bottoms there, false breakthrough, and maybe that will just be that first high bottom on the way back out. So we are waiting. If we do get a confirmed higher bottom in the next, day or two, or in the next few sessions, you could say, we're in a situation where we're seeing confirmation of that first higher bottom. And what that means is that the trend will then be technically up and obviously potentially a place to get long, with the full knowledge that we're yet to break out of this sideways range. Our market's interesting on a weekly chart. So if you take a look at the weekly chart, you'll see that, we do have a higher bottom. We do have a lower top. All we need is it to break out through that weekly top in November, and we will have an uptrend as being confirmed. But all of our trends have actually, gone from being very clear to actually uncertain, and they've done so, in a pretty quick fashion. So we had a fair amount of clarity on the bigger picture, where we had sort of the 3-day and the weekly swing charts all pointing to higher prices, and then they've all moved into uncertain territory as well. Keeping that focus on our swing ranges, 319 is a little bit less than 326. 253 is certainly a lot less than that 400-point swing down. So from that perspective, you do have some contraction on the downside. If we can get a nice expanding range to the upside, we're in a situation where, trends are back to being confirmed as up. So our market's definitely been a little bit different to what the major markets have been telling us. And what I mean by that is if we go and take a look at, say, the S&P 500, it's had a slightly different picture whereby, it's just got all of these sort of old tops here, which you just can't seem to break out through. So I just jump back into my bar chart. You'll see here that, the market is really just holding this top around 11, call it 1100 and a few points on the S&P 500. So really what you've got here is you do actually have a setup for a trade. If I was talking about the, breaking of multiple bar chart tops or bottoms from your number one trading plan, you really do have the potential for a setup here. But really what you need is I'd be wanting to see at least a couple of days close. If I put a horizontal line on there, you could argue that they're all multiple tops through there, but as you can see, we haven't had one close. It's had 2-3 cracks to get above, but it can't actually close or hold above there. So I guess what I'd be cautioning here is, whilst I think the breakout is more likely to the upside, as you can see, you've got a couple of outside days followed by an inside day. That's a pretty good suggestion that there's a fair amount of volatility going on, and people are, I'd say people are a little unsure as to what's going on. I know I've been, certainly scratching my head on a few things. I think the market's in a good position to actually push to higher prices, but it's just whether or not we've got that opportunity. So I guess if you were calling that multiple bar chart top, my guidance to you would be is that I'd be looking for at least a 2-day close filter above those tops. I think buying it purely as a breakout, I think has a bit of risk, as we've seen. Buying it as a breakout through there, you've seen the market likely stop you out, and the last couple of times it's had a crack, you've had the same result. So I'd be saying maybe, a couple of days above. And look, what would be, ideally the safest trade? We've always talked about if we could draw the lines on the market like this, we could give up education. If we could get a couple of nice, strong closes above there, obviously volume as a backup, you'd really love to see high volume pushing through. I would expect if that was to occur, it might be a 2-day, it could even be a 3-day move, as obviously as David talks about. This trend line, markets can often make 3 days a really strong move. What would be really encouraging is to, maybe wait for a couple of days of closes. But even then, if it came back and then sort of retested that top, gave you maybe like a 50% pullback, came back and sat on those old tops on some weak volume, that'd give you a higher bottom, and then you could be looking to, to push to higher prices. So if I pop out of where we are in profit source now, just come back to you guys. I guess if you were, a betting person in the index market, I think the Australian market's just lost its way a little bit. It's now looking for leads from the US, where it's been happy to sort of drive further on its own bat. I think a lot of people who bought have already bought, and I think new money's waiting to come in, but it's cautious at this stage. What I'd be saying is that, the December seasonal date is one that, if we did get a breakout to the upside, I think that could be definitely an area to be watching, just purely because it's an area that we know to watch for each year. Over the next couple of weeks, obviously, because we are in early December, I've gone back and I've done some studies, and this is separate to our two markets, but it's worthwhile me having a discussion with you, is that if you go back and look at your master time cycle work, which was actually something that we left off on the last session that we did, yeah, I'll come to that in 2 seconds, Debbie, because I know exactly what you're talking about there. One of the things I was watching is that over the last few years, the phenomenon known as the Christmas rally is obviously one that many people know as a condition in the market. Now, obviously, because we've had bear markets over the last couple of years, we haven't had Christmas rallies. But if you go back and take a look at what happened in 99, back in 89 and those sorts of things using master time cycles, you'll probably find that there is a volatile but actually quite clear trend as far as a potential for a Christmas rally. So that sort of post, seasonal date into the early part, say January 4th, January 5th, would be an area that I'd be watching for a potential little run this year. Now, the market could get cactus and sideways until that December seasonal date. It might end up being a low and pushing out from there. But all I'll point out to you is that the possibility of a Christmas rally in the terms of how that's used in the market, I think is absolutely a chance. There's a bold statement. It's absolutely a chance. So it's a definite maybe. But I think the likelihood of that happening is one that I'd definitely be watching. So I've sort of encouraged people to have a look at that and to know how they might be on top of that. So let me just jump back into profit source. And I want to answer your question for you, Debbie, and I've obviously just sort of sum up where we are on the S&P 500 as well. I didn't do it on the share price index, so I might actually just jump back and finish off our discussion, because obviously we've looked at swing charts, etc., but we should know, essentially where we sit in terms of retracements. So if we're looking at the major bearish range, which is the 09 top, sorry, 07 top into the 09 low, 68.80 was the high, 31.11 was the low. We're yet to see anywhere close to that 50% point. So, the closest we got here was the top here at 4,900. So about 100 points off. Now, if we happen to get a market hit that price around about a seasonal date, for example, or if it made a low or made a high or something around a seasonal date on or around 50%, David actually says markets that give you 50% pullbacks or sit on 50% extensions or 50%, big picture, all-time low to all-time high type stuff, and do so on seasonal dates, they're generally a gift. And so that'll be something that I'll keep in the back of your mind as well. Now, to answer Debbie's question, she's sort of talking about the S&P 500, much like the Dow that we know, is that it's been locked in this sideways pattern. It's had a few good goes to see whether or not it can push higher. Volume's been less than average. Okay, so I guess one of the reasons why you could argue maybe we haven't seen a strong push through here is that we just really haven't seen a huge rolling in with the volume behind it. So, on these couple of days where it's tried to break out through there, that one there, and those 2 days, whilst it's higher than the previous couple, you'd have to argue that it's nowhere near the sort of volumes that we've seen. Where we've obviously that could be contract rollover, so can't draw too much into that yet. June, September, that'd be contract rollover, but we're still sort of trading lower than normal volumes, and that's been a bit of a concern. Is that the markets haven't been able to push higher because there just hasn't been the volume or people buying. Now, conversely, on the days that markets have been going down, it's been going down on quite weak volume as well. So what I'm suggesting is I don't think people are too committed really one way or the other. I wouldn't say the bears are in control and I wouldn't say the bulls are in control. It's very much just a neutral market. So we know that we're in an uncertain trend. We've had lower tops, lower bottoms. We've now busted back out through those tops. Weekly chart, I guess, is still what is a very clear guide to us, which we're not getting on our share price index market, is that we are seeing clear higher tops and clear higher bottoms on the weekly chart. We have seen obviously a weaker pullback, so 45 compared to sort of 72 points. Now we've only seen 52, so we've got a pretty, I'd argue that that's really good precision or repetition. 84 and a bit, 87, 80, 86. They're all pretty close as far as numbers. Now we're 52 points. If those sort of market swings are going to continue, we've probably got about another 30 to 35 odd points, which would be interesting to see where that puts us. So one of the things that Debbie was pointing out, and part of the reason why the market is probably in a bit of a holding pattern, is that we are sitting, once again, very close to that 50% of our bear range. So 1586.50 is the high, and the low is 665.70. So we're pretty much hovering around that, and you'd have to argue, you'd have to be in a bearish, a neutral to bearish camp. While ever we're hovering underneath that major 50%, I don't think it's time yet to pour back into the long-term investing side of the markets and buy up all the shares that you can. Gann has some rules, and if I had Tim with me, he could give me the page numbers, but he talks often about 50% points of the major move down being, you know, logical selling points when the market just runs out of steam running into them. Now, combined, the perspective that we often look at is balancing time would also be one that we could take a look at. It's about 511 days down. That's approximated because it's a weekly chart. That actually gives us about the 16th of the 11th. Okay, so if we take a look at where the markets have made their stalling point, just tune that up and we'll get that exactly right. Top was on the 11th of the 10th, one day out there. And if we take a look at the low here, it's on the 6th of March. So we know that that run down in terms of time was 512 days. And if you take a look at sort of 256 days, which is 50%, it was going to give you about the 17th of the 11th. Now, whilst the market has actually gone higher than the 17th, that's the sort of 16th, 17th there, the market really has struggled. So we're not, you know, it really would have been nice if you could get an exact 50% alignment in time and price. But at this stage, I do think, you know, that's a good enough call to say that, you know, 50% in time, 50% in price. As you can see, if you stopped being long, as I move our retracement tool, had I given you, you know, if we could all be smart enough in hindsight to say, well, stop being long after the 17th of the 11th, don't try and be long, you know, you'd be pretty happy with your results, because that was really the last of our decent runs out of November. Market topped on the 16th. So I think there could be something to be said that the 50% time and price alignment is having something to do with the market, sorry, I saw your question, Debbie. I'm just finishing my statement. So I'm not surprised the market, I guess, if I come out of profit source, I'll tell you, I'm not surprised that the market is high 50% retracements in terms of time and price. They're pretty strong areas to watch. And I think you guys would have a skill set now that would give you comfort in knowing that would be a place to watch. Now, Debbie said you've got friends that are trading the mini Dow, yep, and they're out of the market at the moment, but they're waiting for either a lower top or a higher bottom. And the Dow, yeah, we'll take a look at the Dow. So look, David says our greatest, you know, and I harp on this, and I only heard him say it again in September of this year when we were up in, you know, the Master Forecasting Summit on the Gold Coast. You know, David says one of the greatest things you've got going for you is you don't have to be in the market all the time. And, you know, if you've been trying to trade this market over the last couple of weeks, it's been pretty painful. You know, there's been some good runs, but, you know, I know in some of the equity trades that I'm involved in and sort of trying to get set in, you know, it's just been hard work. And I guess, you know, hindsight says if we'd been out of the market altogether, we've, you know, been better use of our money getting whatever percent we get in the bank. So you're absolutely right. I think waiting for confirmation right now in our index markets has a lot of sense. Now, we could obviously have a different view on, say, something like Newcrest Mine because it's more gold driven. The Aussie dollar, obviously, there's less, you know, less factors that are built around index markets that tend to affect the currency markets. But Debbie, you know, I have absolutely, you know, if you all said to me, I'm sitting on the sidelines waiting for confirmation because I just think being in the market right now is a bit of a mug's game, I completely agree with you and have no problems with whatsoever. I'm sort of trying to cheekily find a few things that I think could be getting in early, but that's, you know, that's proving to be a bit more challenging at the moment. So waiting for confirmation could be a good crack at it. And I think that's probably what we can say this market's trying to do. It's actually trying to find confirmation. It's trying to find someone who's going to take it higher, who's going to drag it lower, and then everyone's going to pour into that camp. So, yeah, no worries, Des. Everything's good, mate. So I gave a bit of a long-winded intro as far as the kids' situation is concerned, but everybody's home and we're all well. So that's fine, Des. So I'll catch you up on that a bit later if you'd like. All right, so let's go back and jump in and we've taken a look at the Dow, we've taken a look at the share price index. They're kind of hovering about the same level. If you want to argue the toss of the coin, you could say that the share price index is slightly underperforming the S&P 500 if you consider the same position in terms of time and price. So let's get back into profit source and we'll take a look at the Dow Jones. We won't look at the help module. There we go. Take a look at the Dow Jones futures contract. All right, so let me get that set up. So once again, sort of looking right on that 50%. I won't bother tuning that up to the nth degree. As you can see, we're sort of hovering right on that, you know, point in terms of time, or sorry, in terms of price, making sure we know where it sits in terms of a balancing time. You know, we're starting to sort of look at, you know, if we're expecting that time frame to balance out. Right around that sort of, once again, 16th of November. So if we're sort of expecting that, it was about the 11th, wasn't it? You know, we could already be looking into, you know, July of next year, July, early August. If the market sort of had a little bit of a pause around the 17th of the 11th, you'd argue that 50% is working well. You know, the 100% point might also give you something to watch for. You could argue that the 25% points were ones that were pretty useful because that had given us the 12th of July. Now the low came in on the 8th. The market really moved away on the 13th. So, you know, the argument here is, you know, 512, 128 is a quarter, 256 is half. Market sort of 23rd to the 11th has been, you know, really where the market sort of made its last little dash up. It has gone higher, but as we talked about on the S&P 500, you know, trading through that sort of the whole last week's been sideways rubbish. And if you look at the 75% point in time, you know, we're now looking at about the 25th of March next year. So I'll just get out of my chair for 2 seconds. Grab my phone. The only reason I'm grabbing my phone is it's got a calendar in it, and I just want to look and see where the 25th of March sits next year. Because obviously 25th of March straight away gets me a little bit excited about, you know, our seasonal date in March. Now the 25th is a Thursday, so the seasonal date's on the Sunday. Okay, so it's Sunday, Monday would be the actual seasonal date. So the 25th sort of is pretty close to that. It is a trading day. And if you've got something, you know, I'd put that in the calendar now, around about late July, early August, as just being a date to watch. And, you know, maybe we'll see the market drive into a top or a bottom. We'll let the market tell us that story. And then obviously you've got, you know, if that comes together, you've got 25th of March, then you've got around, you know, July, August as an area to watch. So, you know, just doing some simple work is actually giving you some benchmarks to be watching in the in the major index markets. And the S&P 500 and the Dow are obviously moving in very similar ways. So we know, looking at our information on a swing chart, we've got the same sort of picture that we have on the S&P 500, expanding upside swings, 163 points down, potential for a higher bottom, and maybe we're going to get out of this little sort of sideways conglomeration at the moment. Trend is certainly uncertain. If we did get a higher confirmation or a higher swing bottom, interesting to note that the session on Friday for both the S&P 500 and the Dow were both inside days. So maybe the market is in that little bit of a process of its refueling before it wants to go higher. Little gap through there. The market's attempted to close it. It has. It's sitting above that though. I think, you know, as I said, the breakout for me is more logical to the upside, but that doesn't mean that, you know, the expectation wouldn't be that, you know, there's some downside in it as well. So, you know, don't sell yourself into the fact that it has to be, you know, to the upside. I've made that mistake, I can tell you. And, you know, you just want to go with what the market tells you. So same sort of filters would apply with, we're now at about 125%, but we are holding above that 100% point. All right. So it sort of hasn't tapped 125. We're holding around that 10,347 mark. That seems to be an area it likes to hover around. Problem we have though is that we can't just take that purely as a standard breakout trade. I think your risk is relatively high if we call that sort of an average of the multiple bar chart tops. You know, you're really going to want to see a couple of days closing above. I'd say that 2-day close filter would give the market a fair amount of confidence to push higher. So clear out chat to date. So I'm just going to come back and views because you know, we've looked at the SPY, we've looked at the S&P 500 and the Dow. Is everyone happy with the, you know, is that in agreement with the sort of work that you guys are doing, and are you comfortable that that's you know, a fair assessment of where we sit in the market, particularly with the how would I handle it if it breaks out one way or the other? Breakouts to the upside, I think you're definitely going to want to see at least a 2-day close above those tops before I got really excited. Volume being on strong volume would also be a good sign. Running into our seasonal date, of which we're, you know, about a week, you know, 2 or 3 weeks away from. Lost all track of. Today's the 8th of December, by the way. That's more for my benefit, not yours. So if I do the tough mathematical calculations, we're talking about you know, 13 odd days before we get, so about 2 weeks to that seasonal date. So we might see the market go sideways until then. One of the studies I do is I go back and look at how long the sideways runs and sideways periods would be. Now, we know that the Aussie dollar and Newcrest are moving, so that's not something we're going to do in depth. But as a little sideline exercise, I go back and take a look at the last, you know, 10 sideways periods on the S&P 500 or the share price index and work out what the average time length is. I can tell you I've done that for oil, and I can tell you that the average length and the high end is about 50 days, and I can tell you we're about there now. So that's part of the reason why I'm expecting a little bit of a breakout. But when it comes to the equity markets and the index markets, that's kind of how I'm seeing them. Certainly comfortable to be out of them. Confirmation of a higher bottom tonight would be a good sign. Breaking out of those tops would be even better. 2-day close, and then maybe getting a higher swing bottom. And if it can do that in the next, say, 3 or 4 days, comes back, retests, sits on those tops, we might get a strong run into the seasonal dates. So, yeah, so Wayne said you've been looking for a short setup on the S&P since the 17th, been stopped out now twice and still watching. Yeah, it's yeah, I don't really have I can't blame you for trying those setups because I think they had a lot of merit. I think what we've got though is some patience and really this is the sort of time where David would probably try and get into an intraday setup. He'd probably try and get close to the market and get set with really a small amount of risk and let the market kick him out. And if it kicked him out 3 or 4 times, he didn't bother about that because when it did go, he'd be on it and he'd make it all back. But I'm quite happy for you, Wayne, if you say, yeah, look, twice bitten, twice shy now. It's a little bit, but hang in there, keep stalking it. Don't let the opportunity slip away. But I keep tipping my hat. I do think the breakout will come to the upside. That's what my intuition for the best part of it is telling me. I don't think this market's ready to fall over completely yet. I still think there needs to be a rush of some dumb money. And I think everyone's being a bit too coy about where this top is right now. And I don't think the market's generally that smart to know that here's the top. So if it is, I'm happy to be proven wrong. But I do think that, if this market can get its act together, we might get a strong run into the seasonal date. And then we talk very briefly about that Christmas rally. Now, the Christmas rally generally runs from the seasonal date into the early part of, January. Now, that's not to say that we may not see a run down into the December seasonal date. That could end up being a low. So everything I say could, go out the basket, and the seasonal date might be a low. But at this stage, if I, had to nail me to a wall, I think the breakout should come to the upside. But if it doesn't come soon, the more risk there is to that downside. So I'm happy to sort of field any questions equity market based. I'm happy to do a longer discussion on it tonight, only because it's been a little while since we've had a chat. And, there's been a lot going on. As much as there's been sideways movements, there's still plenty to talk about and to see what you've been doing. Thanks for Wayne for sharing what he's done. He's had a crack trying to, get short, and that hasn't sort of panned out as well as he would have liked at this stage. Obviously, Debbie's saying some of her colleagues and friends are saying, let's sit out, wait for confirmation, which I think's got a lot of merit. But just in general, if, for those guys who are trading indexes, I'm happy to have a chat about those. Questions aren't brimming at this stage. Obviously, if you want to ask me a little bit later. I just had someone let me know that they've been watching it go sideways, and their better half has had them doing some painting. So that's always a good use of your time if you're not trading. See what sort of odd jobs around the house can be done, because that'll mean that you don't get too fidgety and have to go and touch the trades. It's actually been in many ways a little bit of a blessing to be distracted by other things, and I don't feel too bad. I don't feel like I've missed out on anything. The market's really going as sideways as they have. So, all right. Well, I want to look at 2 other markets before we get into our markets of choice. I want to go and take a look at the oil market, and I want to take a look at gold, because obviously they're 2 strong things. We'll have a quick squiz at the US dollar as well, because that's got a big part to play. Then I want to do Newcrest Mining and the Aussie dollar, so have a detailed discussion on those and get your input and get your feedback. Kind of feel like it's our first session together, and I worry that you're a bit quiet. So, if that's just me, that's great. If you've got questions, if you've been sitting on things for the last month going, I'm not sure, or I wish, or could I, if only Aaron was here and maybe he could, help me out or whatever, now's a really good time, because I want to make sure that you guys are comfortable with the little break that we've had. I want to make sure it's been productive, and if there's been questions, we get those answered. So I'll jump back into PS, and I'll take a look at the gold market first, and then we'll take a look at oil. We might do gold, US dollar, and then oil. How's that sound? All right, so back into profit source. So if we take a look at the gold market, which has obviously been driving, the move on Newcrest, since we last got together, November 3rd, that's when we'd seen gold break out to, 1,060, 1,080, and really what we'd been watching was, that double bottom on Newcrest. Oh, that's okay, no problem, Debbie. Working on the assignment's good as well. If you take a look at where gold was sitting, around about when we were last having a chat, we're sitting right on that 50%. And, I guess from a balancing time perspective, the market had sort of done, about 19 days up, about, 17, probably a little bit less actually, probably 16 days, 15, 16 days down. So sitting on a 50%, obviously market was poised to, as we now know in hindsight, to actually rocket. And we know that it, without really giving us many signals to trade, you got an outside day there followed by, another down day, and then finally got going. So you would have got a swing in your chart there. Not the easiest setups to have taken in gold. Market obviously then pushed to, that $1,200 an ounce, which everybody got, ecstatic about. Then we had this day here where we had, a change of, 1,200 was, 11.95 is the high and 11.30 is the low. So you've got a, 50, no, even more. $65 move, in one day on an outside day. And then obviously, if anyone can explain if you're long how to hold through that sort of thing, unless you had stops underneath that swing bottom, which I'd say is probably a tough ask. Obviously, a bit hard to then participate in this sort of move to sort of the high, which is at 12.30, 12.27. So Lois is telling me gold's hit the top of the square and 50% of the square of the all-time low. Yep, very comfortable that, yeah, in time, okay. Very comfortable for gold to take a little bit of break here. I was sort of only seeing some people recently, and I said I thought it was a little bit overdone. Obviously, we've had a pretty solid pullback in the last two sessions. So, you know, here you had a $47 move in a session, and then, you know, another followed up by, you know, another move of, you know, that gives you change of close to close. But if you look at the range of the day, you've got 1166 and 1130, so you've got a $30 range on that day. So I guess looking at where it sits in terms of a retracement in this first little bit, well, it's come back to sit once again very close to that 50%. I'd actually be quite happy for it to come back down and sort of sit right on that 50 before it finds some balance and maybe gets going again. I think you could start to see a little bit of sideways anyway. You know, it's just, you know, sideways to down anyway. The US dollar looks like it wants to have a little bit of a run. No guesses for what the swing chart's telling you. Okay, so if you don't need to know the trend, it's been pretty simple. The trend has been clearly up, as you can see, and seeing expanding ranges. So, you know, we've then seen this big sell-off to the downside. So you really are looking, if it can push through that 50%, you might actually be looking at a lower top as a shorting opportunity. And, you know, that could be something that would translate through to our Newcrest mining share. But at this stage, the one-day swing chart's still up. The one-week swing chart is screamingly up. So you'd want to have some strong time and price reasons for that top, and Lois has just mentioned a couple of there for us. Very hard at the moment to be using a resistance card, because obviously we're at record highs here. We're at, you know, it's hard to sort of see how far the market's retraced in terms of time and price. So I'd be kind of keen to know what this range had done here. So I might just make that a weekly chart. I'm sort of thinking about ranges repeating and extreme ranges. So, you know, in terms of price, this is, you've got a massive movement here from the lows in sort of 1976 to the highs in 1980. And I might just drag that, using the big picture, I might just drag that forward and just see where we're sitting in terms of the current move. So we know that range actually had some repetition to it, because if I plonk it on that low there, we did get that 100% point, and we're now at 125% of that major range. And I guess if I plonk it on that low there as well, yeah, we're about 66 2/3. So, you know, definitely historically we're starting to see a bit of an overstretched market. So all the indicators tend to point that it's a little bit overbought. But, you know, if it came and gave us a pullback, you know, maybe a cheeky lower top trade for, you know, a short period in time, followed by you know, some more upside, because there are plenty of pundits calling for gold going higher. Actually saying gold's approaching 360 months from the 1980 high, and also 360 months and 360 degrees or days from turn. So yeah, absolutely, they would be important areas for us to keep an eye on. So I obviously keep you. I'll go and take a look at that, Ashley, and I'll post some stuff on the forum if I can get any make any, you know, real sort of discoveries there. But at this stage, you know, market's very strong. We've had big volatility, and I think that's going to come into play. We've got to remember part of the reason why that's okay, Ashley. 360 weeks, I'm with you. You know, obviously 360 days, 360 minutes, 360 weeks, 360 months, 360 years. They're all important areas for us to watch. Now, I guess why we've seen such a strong sell-off on gold is that we've seen, I guess, the US dollar over the last couple of sessions really sort of power back up. So, you know, you've got this little sort of low here on the 1st of December, and then the market's, you know, moved, you know, a fair few percentage points, you know, in 1.3% in that session. And, you know, if you sort of take a look, it's sort of a 3 or 4% move in a few days. But I'm not really sold on anything other than the fact I've actually got a date of early February next year as one to be watching for the US dollar for the major turn. Every time we've seen a rally of any sort of description, it's been followed by selling opportunities. So if you follow this run down, whilst we've got some increased volatility here, we also had something similar. So one of the things I always do when I'm measuring sort of what I think might be a counter trend move is that I go back and look at the last major turn, or the last major sort of run up, and I'd say that's probably, in terms of a counter trend move, that's the last major up move. And then I'd go and sort of plonk it on where we are right now. So in context of that move from mid-October to early November, we've only done about 75% of that. I'd have no problems whatsoever for this market to get up to that 100% point. And if we sort of look at the time that it's taken to do that, now you've got 13 days up there. I sort of plonk that on where we are now. Well, that's sort of giving us pretty much where we are in the market now. So, you know, if that was to sort of hit that 100% point in the next day or two, assuming that it gets stronger, then I'd be quite happy to think that that is just once again another selling opportunity, because all the way down through the US dollar, every single recovery has just ended up being an opportunity to just get in there and sell some more. So, people have been selling into the rallies. On one day off there, I think. So I'll just move that forward. I just want to see that the context of that previous move. Why am I not getting that? All right, so yeah, absolutely, Wayne. We're going to deal with point sizes tonight for geometric angles, and then we'll start to pick up on squares when we do the squares lesson, as far as that's concerned. So definitely on my radar, because it's always a question that people get, always want to ask me. So if we're looking at previous sort of counter trend moves, I'd probably call that number one, where that orange arrow is. We're now sort of saying number two, well, that's run out at 100%. So I'm now sort of plonk it on that low there. Well, if it ran out there, well, we've sort of got, even a tighter point. So you could probably pop some speed angles on all of these little moves, particularly the original reference range. So being a little bit pedantic, we haven't even talked about speed angles yet, but I'm just going to be a little bit pedantic and get this exactly where I want it to be. And I'll just copy and paste that. Get rid of that one. It's a made up one. So if and I've managed to bugger that. Well done. Go back and copy that original one again. Well, that'll give us a pretty good indication that in the next day or two, we could get up there. Now, I don't know about you guys, but if you saw a little top forming somewhere about there, that gives you a nice little double top. And, the market's really struggled. It hasn't sort of closed much above that 76.5 point. So, yeah, look, another session or so, US dollar strengthening, gold weakening, and then we might find that the market is in a position to start heading lower again. So that initial reference angle or reference speed angle is about, that's probably 1, 2, 3, 4, 5, 6, 7, 9, 11, 12, 13, 14 days. So 14 days would give us into tomorrow. So into tomorrow's US session or tonight's US session. So that's all kind of lining up maybe for another opportunity, another run, I guess, as in the gold market, so that we will keep that in mind as we look at Newcrest. One thing that I guess I'll point out to you, obviously many of you guys, if not all of you, are in the Platinum program. And I guess I've been watching oil in 2009 doing just with boring regularity, these 50% retracements. So 50% retracements in price and time, but let's just keep it to price at this stage. There's one opportunity, there's 50%. Market, that's the best run you'll see all year on oil. I can give you that as a hindsight bit of analysis for you. Next little run there, well, you've also got another 50% retracement there. That was also a 50% retracement with a bit of fudge factor. That one there, from memory, was also 50%. Then if we keep moving it out, picking on that low, picking on that top, there's another 50%. Now, obviously, that's they're a nicer one as far as hitting 50%. That was a nicer one there, hitting 50%. Just point out to you that you look at the actual August contract, which is what you would have been trading through this period. If we use that as top number one, and that is top number two, use that as a 200% rule. If you do it on the actual August contract, 200% to the point gives you that on at 50%. And July 13th is the anniversary of the all-time high. So trading short, stopping and reversing there and going back out the other way was definitely a possibility. I know some people who did it. And what I'll point out to you is that when we last got together, oil was, meandering around this level here. And it was sort of looking like it wanted to hold. And, it was, not really going lower. It's continued to sort of give us a bit of death by paper cuts. And really, if you've tried to trade through there, you've really, probably pulled your hair out, on a regular basis. There hasn't really been any standard signals to trade. But if you look at the swing chart, it's sort of been, really choppy, equal tops, lower bottoms. There hasn't really been a way to get in there. There's been some good intraday trading, but, that gets a bit of hard work because you've got to sit up all night long. So if I share with you, I guess, my view that I was watching that as another 50% opportunity. So the market pushed out strongly from there. You read that Platinum article that I just that went out, in late November, I think it was. talking about why I like that date on master time cycles. I still think that's going to hold as a low. And as you can imagine, I've been, I saw that as a first high bottom opportunity, had another down day, looking for another first high bottom opportunity. Very rude outside day that had you taken that as an ABC would have got you in and out on the same day. And then we had another down day. So maybe it's going to come back and double bottom with that date, but it's right on that 50%. So for me, that's an area that I'll be watching, key area to hold on oil. So I'll just set that up exactly. So it's $82 even, and the low here is 65.05. So that's sort of 73.52 mark would be an area to watch. Now that's kind of interesting because that 73.52 mark is also. I'll just open up a new chart. I'll open up a new chart and I'll just do a highs resistance card on oil. I know the all-time high is 147.27. Send that right. So 73.64 is half the all-time high. So as you can see, market held, market held, market held. I'll just go back to that previous chart. They've got 73.52. So call that 73.53 on the small range, and then using that with 73.63. So there's 10 cents difference, okay? But that's a really strong cluster for me. So I'm thinking what was old tops now looking like it could become old bottoms. Now, I'll pop out of here and I'll come back to have a chat to you on the camera. So I guess to crystallize that, because I know a lot of you guys do follow oil and some of the stocks, 73.53 is the low tonight so far on oil. Fantastic. Thanks, David. That's going to be a real tipping point. If the market can hold that, it's not to say it's going to leap and it'll take off, but I'd have to stay in the bull camp while ever it sort of holds that. If it sticks its nose back under, as David said, it's starting to test that low at the moment, breaks those old tops, breaks those 50%, half the all-time high. I think the roadmap might tell us that we've got some lower prices to come, but we're right on an interesting tipping point, and oil's just been absolutely painful to trade over the last month. So it's definitely been, and Key's telling me that the 8th of December is 161 days from the 30th of the 6th high. So I was aware of that, but I'll point that out for everybody. So pop the camera off and I'll just jump back in. So the 8th of December, 7th or 8th of December. So Key's talking about that 161 day count that I've come a little bit partial to over the years, and sort of holding around about that double top high there. So maybe we're seeing double tops here followed by a double bottom. If I point out to you that off our low there in July. So you guys are getting a bit of a forecast on oil. I'm feeling so concerned that I've neglected you for too many weeks that I'm now sort of passing out all the forecasts I can. But if anybody is watching, that as a date, major low here in July. I'll just throw some angles on here to keep us interested. We're sort of squaring out around about the the 21st of December, so there could be some things to watch. To me, that 1 by 1 angle, and we're going to do angles tonight, but that 1 by 1 angle off the July low, as you can see here, support was held. As you can see, it's calling tops and bottoms pretty well, so we're getting into our angles less than early, but hey, there's no time like the present. So I'd happily call that a bit of a strike. Hold that top there. Happily pulled that bottom apart, missed that top there, but obviously the market was pretty cactus after that. And you can see that the last couple of times it's got anywhere close. So as you can see, the 50% holding around this 1 by 1 Gann angle, it's going to be a bun fight in this market. And really, I think if it gets under the 50% and it gets under that 1 by 1, I think you're going to see that could be a low. Keeping in mind that 21st to 12th is exactly 1 year from that low there, which is the bear market low 19th to the 12th. So the December seasonal date's been very kind to this market. So if it gets under the 1 by 1 and under the 50%, you might call the 21st to the 12th a low. And if it can get above and hold above the 1 by 1 and make high tops and high bottoms, you might consider that it's going to run into potentially a high. So that's a little bit extra. So there you go. There's some oil stuff for you as well, just to keep you all on your toes. All right. So happy to share that with you guys as well, just as a little bit of a bonus. So as I can say, this market through here has been absolute rats and mice. And I mentioned to you earlier that one of the things I go and do is go and measure how many days sideways the market ran. So it's run about 37 days from top to bottom, and at the moment we're up to about 46, 47 days, which would be very close. We'd call that half of 90. And as I said to you, The oil market hasn't over the years, and once again, not trying to make this an oil lesson, about 50 days is the maximum that it goes sideways for. So we're getting very close to that period now. So if it doesn't hurry up and do something now, I'll be left scratching my head a little bit and back to the research drawing board. All right. So let's, we've sort of, very quickly taking a look at the swing chart, you'll see why it's been such a hard market to get a grasp on. So the trend at the moment is still lower tops, lower bottoms. So you are trying to go long against what is a downtrend. Strong reasons why I like that as a low, and through here it's been tough going. And if you take a look at the weekly chart, and I guess this is something that has been helpful for me trying to get an idea, am I looking for a top or a bottom, is all we need on the weekly chart to get the idea that we've got a confirmed uptrend. We've got a higher top. If we can get a higher bottom on the weekly, we're in a situation where we've now got a confirmed uptrend, which has pretty much been what this market's trying to do most of the year. So we've had a little bit of sideways through here. This weekly trend has stayed uncertain now for a long, long time. This is an interesting point. It's sort of now starting to do expanding ranges, 795, 811, 961, but we have a very clear expansion to the upside. So I think there's enough guidance in there for you guys. If it holds at 50% and that one by one, then I think we can maybe call the seasonal date around 21st could be a top, and if not, we could be looking for a bottom. All right, so let me come back to you guys. Have a quick drink. So that's sort of the who's who and the zoo of the major markets that we look at. What we'll do is we'll take a look at Newcrest mining now and get into a detailed discussion there, and the Aussie dollar, and just get your views and see how you've been tackling it. And from that perspective, we'll then lead into having a quick chat about third dimension studies, just getting started with Gann angles. I'd be interested to hear what you guys think about Gann angles, whether you've got a really great system for filing or, for creation of those charts, and then sort of making sure you go back and check them. Because as I said, everyone I find tends to start out with the Charlotte's Web approach, and they tend to miss things because they've got so many lines on the chart. Now, I'm just going to pause this camera. I'm going to jump back into Profit Source, and I'm going to ask, just give me 2 seconds. I'm just going to open up some windows in my office. I thought it's a cool night in Sydney, but it's actually a fair bit warmer, and I'm thinking my wife's gone to turn the air conditioning off because she does that when I'm not around. She hates the cold and likes the heat. Rather than turning on the air conditioning, I'm going to open up some windows. So give me 2 seconds. There's one. Alrighty, that's better. Nice breeze coming through as I. Oh. Yeah. All right. So let's jump back into Profit Source. So obviously, Newcrest mining being the major mover, I guess, over our time together. So when we were last together, we were right at the point where we were just talking on the 3rd or 4th of November. We're sort of talking, yeah, that's the 3rd. So I think it was the 4th we were together. We're talking about how that was a trade you could have been potentially in, and there was a few of you guys who'd suggested that you had. We'd been watching that as a pretty clear place to watch for a low. Remember, we talked about that first lower top short trade, around about 150%. We'd seen the market run up and false break that 50%, give us a little bit of an island bottom, double bottom there, some times balanced out. We saw that early. There was lots of sort of things going, and really what we were sort of trading off around about that time was calling that sort of focus. We're doing some time trend analysis. Remember, we're counting days up and days down. And we're sort of really focusing on that as being as a double bottom that we might potentially trade. Now, getting in, long the openers off that double bottom was certainly a doable thing. Long the openers that day, trail your stops in behind the close of that day potentially, or even just a third of the daily range behind there. Big gap up the next day, you could have then put some stops behind the gap. I guess the concern I had was that we've seen these big ABC ranges roll before, and then had some concern seeing them sort of not repeat. And I think from memory, without sort of remembering exactly what I said, is I sort of said, be careful. That first ABC, I was worried that we're going to get an even bigger range than that. Now, if I look at that as a swing chart, that was 361 as a range up. No problem, Graham. All right, I'll come back to you guys. All right, how are we doing? I'm fading, yep. Check my microphone, all right. I'm back with you guys. How's that sound? A little bit better? Let me know if that's working a little bit better. But yeah, no problem. I'll have to only work with one window open. There we go. No worries. Sorry about that. It was great for me, but obviously didn't quite expect the wind to knock the mic around so much. So anyway, that's fine. We'll Yep, no problem. Des, already part of what I'm thinking of doing. So yeah, already part of the discussion. So, all right, no problem. So, okay, we've solved the camera or the mic issue, so that's taken care of. So let me jump back in Profit Source. We'll start that discussion again on Newcrest mining. All right, so what I was saying was that we were watching that double bottom around about this area here as a potential way to trade. Looking at that as a first confirmation of the double bottom, and then what you had was along the opener signal on the 3rd of November, gapped up on the 4th. Concern we had was obviously we've seen these big ranges before, followed by sort of ABC trades that have failed. So I remember I was sort of talking about, yeah, a little bit concerned if this got too far away and maybe trading it without sort of normal ABC rules. As you can see here, 361 compared to 471. This range I think was more within the realm of a range that this market could do. So there was that other one there, 548. It did, 548, then didn't give you much after it. 471 didn't give you much after it. So I think when you saw that 361 range, that should have given you a bit of confidence that that range was doable on the ABC, on the merit of that ABC. But I really expected that 361 range to be more like a 471 or a $5. So it was actually nice of the market to give us a potential higher bottom. What was good about that ABC trade? Never closed the gap. Came back and sat right in that gap, which was nice. Nice little 38% retracement. And if you want a textbook sort of volume pattern, they don't get a lot better than that. All right. So obviously you had the market running up for 3 days, nice strong volume. On that reversal day, the volume dropped away, and then on that point C day, the volume fell away. So to me, that was hopefully one of those sort of ABC trades that you guys felt confident to jump in on, and probably get a fair whack at. So nice strong day to enter. Entered market touched 50%, and market obviously running stops using normal milestones might have seen you stopped out under 50. Stops at entry plus commission would have been helpful there. Little inside day, and then it obviously gapped down. Okay, hard to hold against those sorts of scenarios, particularly after 50%. So argument could be said, trailing stops under swing bottoms might have been a smarter place there. You should have walked away to break even or better. And then obviously another ABC trade was presented. So the second one came along. Bit of hard work gapping from B to C. You might be thinking, no good. But obviously in the context of where this was headed, the market actually did quite well. So out of that run there, depending on how you'd managed it, yep, I'll come to you. I'm just seeing your message there, Robert. I'll get to the detail of how you guys handled it in just a second. I want to point out to you though, if we just put a swing overlay on that chart, hindsight's a wonderful thing, but the way I, guiding you to manage it is if you looked at that as the strong low, which we did, which was early November, first ABC, and then if you just trailed stops underneath swing bottoms, you found that obviously stopped out somewhere up here about 36 bucks. You might have argued when it started to make the potential for an island top. Obviously, it's gapped up here. Maybe that would have been a place to maybe trail stops underneath the gap there. But anyway, you cut it. We now have an island top that sits in the market. So just to highlight that for you, and that's interesting because Richard, obviously, with his forecast that he put together on the discussion board, said, yeah, watch around the 4th of December. So the top came in on the 3rd, gave you an island reversal top. So on that date, island reversal top, some confidence to potentially get short. Now, just to sort of take a look at what Robert and Graham said. So you went long on the 9th of the 11th, moved stops to entry plus commission. 12th of the 11th, then got stopped out 13th of the 11th on the open. So yeah, on that one there, yeah. So bit of a bugger. And I guess in hindsight, one of the things that David would do, and this is actually a lesson from the Swiss rank trading lesson that David did at in the master forecasting course, is remember how he talks about even though the market's touched 50%, well, no, I'm talking like you've all read it, so I apologise. I know a couple of you have. David would, even though it's hit 50%, he'd still, move things up and he'd trail stops under swing bottom. So in this particular case, had you got long out of the, and I guess the whole argument here came for getting long out of this point here, which was the 2nd of November, getting long on the 3rd, that would have given you some breathing room to just trail stops underneath your swing bottoms. Waiting for the first ABC trade, obviously there was merit in that as well. Unfortunately, did enough to get you in. give you that one unfortunate day where the market did something silly, and it'd be really, I remember watching that thinking, how painful is that? Because look at the volume on that day, it's, you know, somewhat lower than the other day. So I was thinking, yeah, what's the chances of this now rocketing now that that ABC trade's been stopped out? And obviously that's what happened. So hindsight's a wonderful thing, but I just want to point out to you that I think with the quality of the setup that we had, double bottom, I think trailing stops under swing bottoms through that run wouldn't be too much of a stretch of the imagination. I don't think it's, you know, impossible for us to say that's a strategy that was far beyond us before we'd even think about getting in. Double bottom, strong area for a low. If you miss that, maybe trailing stops under swing bottoms. And I guess another way you could have managed it was using David's 2-day reversal rule. So allowing the market to come 2 days against you. And so, you know, allowing the market to come 2 days against you, as you can see, the only time it's come 2 days against you is back down here. So, all right, let me come back to camera. So Robert said, yeah, typical, you're in a meeting all that day, and that's why you moved your stops to entry plus commission. Yeah, look, you know, I guess learning exercise, you know, and you know, you can't always be there, and you can't always have stops in the right place. But just, I guess the real lesson that I want from what we've just seen there is that adjustment to managing ABC trades and swing trades as a whole, managing stops under swing bottoms, I think was a fair assessment in that case. So I don't think it's too much of a stretch of the imagination. I can imagine getting into the next second ABC trade after you got stopped out of the first and gaps from B to C, but that's where going to that bigger picture might have been helpful. Lynn saying here, yeah, work gets in the way. I've always said work does get in the way. Yeah, and yeah, Graham's saying you can only trade end of day only. I've always said having a job does get in the way of trading, so that's why I don't have a job. I have something I enjoy, and I'm in a lucky position. So I fully appreciate where all you guys are coming from, but I don't have a solution for that, and I know you guys aren't asking for one. It's just a case of what can we learn from this and go back and take a look at it. One of the other things I think, looking for the bigger picture, as I jump back into that, yeah, can we swap? Yeah, I'm actually looking for a new chief strategist, Robert. So if you're in the market, I'm sure you know, we should talk. You have to know what a chief strategist does, and I don't. So I'm looking for one that's all taken care of. So someone who's got prior experience in the role. All right, let me jump into what I'm seeing this market doing right now. So a couple of things I want to do, you know, is take a look at what the swing chart's telling me. So let's do that first. So obviously we've seen higher tops, higher bottoms, big extension to the upside. We've seen a big, you know, sell off to the downside. Could we argue that maybe that's a little bit overdone? Yes, there's some, you know, a case for that. Looking at what the US dollar is doing, I think that's the real driver. If we get strength in the US dollar, we're going to see a weakening gold price and vice versa. We're sitting right on that 50%. Maybe we're going to get that one more down day, US dollar strengthen for another session. I'd have to look at that 405 range and say it does look a little overcooked. You know, it's done 441 there, so I guess it can do those ranges to the downside, but it does look a little bit large. You are really setting up now for what the potential could be as a lower swing top, but as I said, 405, I think it's unlikely to repeat. You know, 441 did basically did 50%. I'm looking for the sizes of downside ranges: 280, 271, 251. Yeah, so you really are talking an extreme. So I would, if you were looking to manage a short trade here, I don't think you could be using that as a reference range. I think you'd have to sort of, you know, trail stops behind tops or whatever you plan on doing in that particular case. Weekly chart's still up, and I think that's the major bias. Okay, so, you know, 405 is still less than 568. There's that little double bottom. So I guess that's what I'm following at the moment. You know, if everything ran to 200% in one straight line, double tops and double bottoms, I think the world would be an easier place to trade. So I'm still sort of committed to the fact that I think that double bottom, definitely one that we can take a look at. It sort of ran to about 125, 133%, gave you an island reversal top on that date that Richard was talking about. It's come back and sat on the 75%. Once again, maybe if it came back and sat on that 50% point and gave you another double bottom, but I'd just be watching, you know, 42.88 and 40.05 into the near future as being prices to watch. And I'll be watching for them around about our seasonal dates. We know, you know, we've done some work on seasonal dates on Newcrest mining, so we've got a little bit of intelligence there. We should know what our seasonal dates generally produce around the December period, and you know, that would be certainly one thing we'd keep in the back of our mind. But you know, I'd be watching these milestones as important places to watch. And once again, we're caught a little bit with resistance cards because we are getting very close to double top territory. So if I go back to this picture, what I wanted to do. go to this picture, we've got 40.05 and 42.88. I now line those up. You know, you've got 40.55. So what I was trying to do is see if that 150% lined up with those old tops, or whether, you know, 200% is going to give us a fresh high, 150% is going to bring us very close to those all-time highs. So they could be some price targets if we do get a swing up again that we could be looking for. And a couple of things, we always need to take a look at where we sit on the bigger picture. So using the, we could do a ranges resistance card, but it's going to be less useful to us, unfortunately, because we are, you know, hovering around highs at the moment. So 87.5%, 75%, they haven't come into play. So really where we'd be most interested in terms of getting prices for highs, I think we could take a look at is using our lows resistance card. I'm just going to set up our preset Gann square. I'm going to use two major lows. So I'm going to use this one here as the 2008 low. So that's 1655. So if I use that, we've got a situation where, well, that top for the double top came right in on 125% of that low. That should be more than that. Yeah, no, that's 100% of the low. Yeah, 125% came back, sat down there. We haven't got anything to really give us credence for that top off that resistance card, and we're not really sitting on any sort of support at the moment. It's sort of fallen through there. So I guess the argument you could have here is if the US dollar does get really strong and shows no sign of stopping, and if we got the market coming back and sort of doing something like that, where, you know, you had a really strong reversal day there, and you could start to maybe call that an A, that a B, something like that as being a C, well, we could see maybe a short trade running into the middle of the month, and then maybe we're going to see a low around our seasonal date if we can find some other time harmonies. But there'll be things, I guess, we can start to bring together over the weeks ahead as we run into that seasonal date. We can start to firm up if there's anything strong there. So we know that obviously that's one of our major lows to use. The next one we're going to go back and pick on is the all-time low, just to see if that can firm up our view where we're sitting in price. So our all-time low is $1.13. And I don't have enough. All right, so $1.13's, you know, a harder one to use, only because, you know, Newcrest is obviously doing that fairly well. Well, you've got some pretty strong reasons why. If I do that top there, 39.75, find my calculator again, which is in front of me. I just want to work out how many multiples of that top, or $1.13, go into that top. So I'll get a calculator. So 39.75 divided by $1.13. It's about 35 times the low. So market's made a top very close. If I stretch that out there, it won't be exact. So yeah, it's about 35.25, which puts us to where we are there. So big signal day on the 3rd, which was, as Richard said, was a date to watch, getting into the weak part of that next square, and obviously the market's broken down from there. Now, $1.13 as a move is obviously going to be a bit hard to work with. So here's an instance where, using a resistance card, I'll just open up a new chart because that'll take forever to get back there, where I'd be more comfortable to probably go to something that's a slightly larger multiple. So Wayne, you were talking about point sizes with squares. This would be one instance where I probably wanted to see where we're sitting on the bigger picture. So I'll make that $1.13, my starting point. But instead of making it 1 cent, I'll actually probably make that 10 cents. I won't need as many. I'll still need lots of columns. I won't need hardly any rows. And what I can do is just drag across to where we are in the current market. And what we're seeing is each of those little orange big squares should actually now be $11.30. So the real major point. So what you, oops, if I just picked two of our orange lines, let's say that one there, I'll turn that into a blue line, and I'll pick on that one there. distance between those 2 points is going to be 10 multiples of our low. So we're actually going to see that that's $11.13 as opposed to $1.13. So really what we're seeing is 10 strong or 10 squares rather than 1 square of the low. So what it tells me is that, you know, sitting on that point there obviously made those pretty strong areas to watch for changes in trend. I'm always pretty tight on the mathematics. I don't go changing them to numbers that just curve fit the market. So we're always going to use numbers that relate to mathematical principles. 5 cents is one, 10 cents is another. So moving in multiples of 5 or 10 would be a way that you can certainly handle that. And we'll do a lot more on that when we talk about squares. All right, so potential for a little double top coming up. We're sitting, you know, relatively, you know, we have some places to watch as far as our double tops milestones repeating in price, and we also have, you know, some of that 200%, you know, targets. Got to get through that top to get there though, so that would be one that we'd be watching. Obviously, trailing stops through this run here would have produced a good result, but obviously not the easiest thing to do. Take note that that is an island reversal top, and obviously this market can do islands on a regular basis just because of its gapping nature. So that's going to require a fair bit of energy to close. Sitting on a 50%, that's dramatically out of balance as far as time's concerned. So this is my, I guess, concern for this market is that, you know, the market's run up 30 days, bottom to top. So, you know, you'd be happy with that as a time frame to watch. And it's run back all of about 5 days. So if I wanted to sort of, you know, project a time frame, well, 50% of that time frame, 45 days off that bottom is going to give me around about that seasonal date. So I think we stick with the swing chart as far as what it's telling us, and probably around that middle December date would be the next area that we could keep a close eye on. So, all right, so there's, once again, Newcrest mining with 100 different concepts thrown at you in one phase. That's kind of how I'm seeing it at the moment. So just let me clear that chat. So how does that stand with everybody? Let's open the discussion on Newcrest mining, and then we'll do the Aussie dollar. But questions, comments, or queries as far as that's concerned? Happy with the approach and the analysis? You know, maybe not happy that you didn't get to trade the whole run, but use that, as I said, as an exercise for next time. Anyone seeing it differently? Anyone a super bear on gold? Should we be setting up for multiple short trades and you know, looking to short this market back to zero? Or, you know, I'm interested to get your views and thoughts as this is unfolded. Yeah, which speed angles would you be watching? Yep, I'll jump back in and I can certainly play around with those and be happy to do that for you in a second, Graham. I guess when we talk about geometric angles, you know, we're happy to pull that apart, you know, when we get into that bit. Simple clarity. Thanks, Des. Appreciate that. That's I try and make it simple. Hindsight also helps. It's very easy to trade last week's market. It all seems simple then. Yep, and he's happy. That's good. A good run through. Shoot out if there's questions, guys. Let me know. I'm glad that you're happy, which is good. Happy and understanding is fantastic. Obviously happy though to have a discussion about where it doesn't make sense if that's the case. All right, well, we've seen happy. I'll happily move on. Let me know if it's not. All right, I'm going to assume that silence is consent, so I'll assume that everything just made perfect sense, and you'll all be able to, you know, recite that to me next week. So I gave you homework and said, all right, give me a one-pager on all the analysis, you'd be able to handle that all accurately. So I guess synopsis is this, is that gold, I think, needs a pullback before it can really rocket to higher prices. So some continued volatility, maybe even some sideways. This Newcrest mining's way out of balance as far as time's concerned. This run-up's been 30 days up. If it could do 30 days up and 15 days down and sit on 50%, that would make me a whole lot happier. It's come back 5 days and it's already managed to hit the 50%. To me, that tells me it's overshot to the downside and it's likely to have a bounce to the upside. But I still would be very much watching that sort of 50% time frame, be it 15 days. The fact that it pushes it around about our seasonal date, maybe this market's going to be a bit choppy and volatile until around the middle of the month, and then we might start to see some continuation of those trends. Then we've got those 150, 200% milestones in play off that double bottom. So all of those things I think are ones to keep in the back of our head. And a little bit of, you know, sitting on the sidelines at the moment is not a huge problem until this market gets a little bit of certainty. That downswing, though, that $4 current downswing that would be an A to B range, you know, I'd really see that at a stretch repeating. So, you know, if you were going to trade a short run, you'd want to, you know, maybe get in by 25, get out by 75, something along those lines, only to you know, only to ensure that you're not putting all your eggs in one basket to say that what has been a massive oversold or a massive movement to the downside. We can't call it oversold yet because it could keep going. But a massive movement to the downside in such a short period of time, to me, the rubber band's been a bit stretched too far, and it probably needs to flick back the other way, and that's probably what we'll see. Particularly if the US dollar, like our analysis led it into, you know, if the little bullish runs that we've seen in the US dollar have come to an end, we should see obviously another down leg in the US dollar. That'll make gold bullish, and that should push Newcrest the right way. To the upside. I shouldn't say the right way. Every way is the right way as long as you set the right way. Des is saying recent market has reinforced the need to be patient. The question is, can we do that? I made the comment that right at the start, Des, it's sometimes handy to have these things in your life that divert your attention from the market. I've just been quite lucky that it's actually meant my attention's been diverted at a time where the market's been doing next to nothing. So usually when I'll come back to, I've made the joke a few times when you take a look on the oil chart when both my kids were born. That's the first, when Miles was born, I think oil dropped about 35%, and then when Oliver was born, it dropped 80%. So I'll point out to you that because Oliver was born on the 8th of July and the top came in on the 13th or whatever. So the 11th of July. So as I keep joking with everybody, everyone wants to know when we're having our next child, because it generally means bearish markets for oil. But yeah, Graham said planning more kids. Yeah. Don't worry, I'll let you know, because I won't miss out next time, because obviously I tend not to do too much in the market when your kids are brand new and born. So yeah, I've missed out 2 times, so I'm going to have to get on top of that. But all I'll say is that the patience question is go back to simple philosophy. At the moment, it's about quality of setup. If you can't get a quality of setup, at least reduce your position size. All right. So I've been trying to chip away at a few things. Those guys who get ABC Bulletin, you'll see we've had a couple of losses. And I've been chipping it away at a couple of things. They're great setups that just didn't come together, but I've been very comfortable to sort of push position sizes that were more conservative whilst we're going through this market. And it's certainly not a time to be brave with massive position sizes, because yeah, you could be a hero, but you could also end up just ripping up dough quickly. So all I'll say is that yeah, patience. Des's question, can we do it? Well, you got 2 choices. You'll either, the market will teach you the lesson. You can either go through it once, or you can go through it 100 times, and eventually, something will finally click. So, all right. But yeah, it's an age-old question. Patience is a virtue. All right, let's take a quick squeeze at the Aussie dollar, and it's had probably a less of a spectacular move than the Newcrest mining market. There's been less going on. When we last were with each other in class, we were on the 4th of November there, and that was a setup that I've been watching, and was looking at that on a bigger picture ABC. So it come back and sat right on 50%. The argument would have been maybe waiting for a higher bottom. I actually am quite comfortable to trade those as just a standard ABC setup off the bigger picture. Obviously, it requires some management techniques that are a little bit different. You can't sort of set them up exactly in the same way. But that to me is just a big picture ABC. We had our little update which confirmed it. The market actually did push higher, and it did get to that 50% point, and then it fluffed around and then basically came back down. So as I mentioned right at the start of our class tonight, had you been in that run there, you're either sort of been stopped out through here and you've had a break even or a slight profit, but it did enough to get to 50%. So if you're managing milestones off that move, you were definitely in a situation where your stops would have been moved higher. Stops under swing bottoms, something along those lines might have, that outside day would have produced a swing on that update. So if you'd gone stops under that swing bottom, you would have been stopped out a couple of days later. I was liking that range as far as that 100% was concerned, because that was going to give me that, about 96, 97, 100% repeat, which I thought was quite doable. Obviously, since then the market's had different views. We've had interest rate rises and all that sort of stuff, which haven't really been flown on or flowed onto such a big move in the Aussie. It was 19 days up, and then I guess from there we had about 19 days. Price gave you, about the 20. The low there's the 20th, and market didn't do too much out of there, and it's fluffed around. There we had that big outside day, or big down day, and Graham's saying it's coming up as a 3-day ABC. I'm assuming long. No, I'm on. What am I doing? Gonna be a short. Sure. All right, I'm not quite seeing it, but not to worry at this stage. I'll dig around later. So, look, the market, like all of our other grand markets, has really been sort of benching through that sort of sideways period, and been a tough environment for us. Yeah, okay, set for 50%. Okay, that's probably the reason. Thanks for that, Graham. We've sort of been, floating through this sideways range, and from about 89 to 93, 94 now. That's a 4-cent move. Remember that, that adds up to being, something sizable. You know, we're not talking a really, you know, tight sideways range here, but, you know, for me at this stage, I think, you know, what we need to wait for, even if we drag it down to there, call it 93, we need to wait for some direction from this market, and really what we'd be watching for now is a breakout trade. If it breaks out underneath that low, highly unlikely. Maybe even if we get set from potentially a double bottom, comes back, double bottoms off there and takes off, or breaks out through these tops. But I think we're going to get a little bit more of this sort of whipsawing sideways stuff. I think we need to wait for the US dollar to settle down again. Obviously, it's had some strength, so therefore it sort of pushes some pressure back onto the Aussie dollar. Commodities falling, that tends to make the Aussie dollar go with it. At the moment, we do have a lower top, lower bottom scenario, so we do have a confirmed downtrend, expanding ranges to the downside, expanding to the upside. Weekly trend, though, is still up, but getting a little bit weaker. The pullbacks are starting to, you know, through here, they were 50%, 50%, 50%, and now we've sort of had a, you know, probably about a 70 or an 80% pullback. So all I'd suggest there is that, you know, waiting for potentially that breakout to give us the direction of what we're interested in. Once again, highs resistance cards haven't been overly helpful because, ranges resistance cards, we're probably sitting right on about 87.5%. Certainly not on 50% or anything silly like that. Yeah, there we have it, right on that 87.5%. Fill that in so you can see what I'm talking about. So until we get a breakout through there, it's hard to see, you know, this market, you know, wanting to go much higher. First higher bottom above that sort of stuff would be good confirmation of a trade setup. So time will tell there. 75% is obviously the milestone underneath that. So we're nowhere near that. So we, you know, I don't see it getting back to about 88.5 cents. That, you know, the US dollar would have to just fly through the roof. So I guess we're mainly, if we're thinking more about tops rather than bottoms, we've sort of got to get back and focus on our lows cards. So if I get in here and focus on the October low from last year, 4 decimals, need the low there's 59.75. So I'm making the box size the same as my start value. I'm going to not need anywhere near too many. But at the moment, we're in a scenario where we've done about 50% of that low, and that's where we've actually come in and double bottomed. So that's where we're sort of holding, and the market's come down, bounced off that. So I think that's obviously going to be a smart area to watch as continued support. And then obviously we've got to wait for that 87.5% point breaking out through those tops. Could get a sideways market develop, and yeah, a little bit hard to trade that sort of environment. So a little bit of a tougher one. I guess bigger picture, always sort of going back. I'd be looking at, you know, just to get back and do some basic time stuff. Looking at what our balancing time relationship says. So it's about 105 days down, just looking for repetitions of that. There you go. I love it when a plan comes together. So, you know, 10th of February this year, gave us a small top. 26th of May, well, the top came in on the 4th of June. I can't call that one. 8th of September, not much happened. And then 105 days later, you've got about the 22nd of December. So lots seems to be pushing in around about that seasonal date. So I'd be going back and thinking, all right, seasonal dates. 1 year ago, what happened on that date? Well, there's the 26th. A little bit of a sort of, you could argue pulling it either way. You could argue that's a turn. You could argue that's a turn around the seasonal date. Go back and keep looking around December's. We get a turn there on the 18th. Strong run out through there. December the year before. I'm just trying to firm up, you know, if I got anything working here around about our seasonal dates. Top came in, wrong top. So yeah, about the 18th, we're getting a lot of turns. So, you know, a little bit early on seasonal dates. So I guess the good news is that there's stuff that does tend to happen around the middle of December, in a nutshell. So there we have the 27th, and the top before there's the 12th. So you're definitely getting runs around that period in the market. I can keep going back. I guess just to line it up with the master time cycle, we could probably go and look at what happened 10 years ago. If we happen to get a turn in December in late 99, too much there. So you sort of got a move out from 3rd of December into a run around about the 13th of January. So we got a low somewhere around the 3rd of December. Can't do because obviously that's a top. Don't mind me. 3rd of December, early, you know, that sort of tells us December into early January runs. So yeah, we haven't really come up with too many too much science in that. It's just more a bit more conjecture. As I said, I'll need to do a bit more work in that just to firm up for both markets whether or not we've got something happening in for December. And if I have a look at middle of there's 89. There's that 18th again. So 18th of December, 18th of December, 18th of December. So can I throw it out there to you guys at this stage of the game? But I think we're caught, certainly in a little bit of sideways, tougher market to trade, waiting for some breakouts on the upside or the downside. But just a quick little synopsis, that 87.5% sitting on the highest resistance card, I think, or ranges resistance card, I think is important. Doing some more work on the all-time low would also make sense as well. But just running at that balancing time, 400% of that 105-day range, gave us around about the 22nd of December now. I haven't checked to the end of the month yet because I don't know what days the weekends are on. But if the calendar, there we go. So just taking a look at December, the 18th is a Thursday, the 19th is a Friday. You've got the 20th and the 21st and the 22nd, which are Saturday, Sunday, Monday. So if you pull it sort of, to the end of the week, 18th and 19th is a Thursday, Friday, 22nd, 23rd is the Monday. So Monday/Tuesday, that's all US time, of course. Will be dependent on because it trades in the US. So the 18th is definitely an area that you might be waiting for a setup somewhere on or around that date. Just doing some high-level stuff, trying to lock it in with what we've been doing in the past without getting into re-lessons on all the things that we've been watching. So, all right, once again, let me throw it back to you guys. We've spent a couple of hours talking markets now, so hopefully it's re-engaged the brain. If you've fallen out of a little bit of a routine, hopefully that's helped you get back into one, because that's the level of work that we should be doing on our markets. And obviously, because we've had such a break, we haven't been able to watch that stuff unfold. Hence, we've needed a bigger discussion tonight. But I hope you found that discussion, worthwhile and valuable, because I think there's a lot of good stuff in there. I'd definitely go back and go through the work that we've just done when you watch the playback, and just make some of the charts that we've created, and just make sure you cement some of those lessons. I think there are some important ones. So I'm just going to bring up my PowerPoint presentation, but happy to take any questions that you might have on either the Aussie dollar or the on Newcrest mining as it sits, plus the other stuff that we talked about. No, we're happy. All right then. Well, as I said, I'll assume that your silence is that you're moving along and everything's progressing well. All right. So what I wanted to do tonight was really just commence our discussion on third dimension work. So as I mentioned, you've got just standard geometric angles, you've got squares, you've got boxes, you've got speed angles, you've got what have I missed? Squaring high, squaring low, squaring ranges. So third dimension stuff is something I really got engaged in early. I just found that third dimension work clicked. I like the idea that time and price were the same, and you watch for markets to reach their balance points or counterbalance points with regards to that work. So I guess we've already talked about that. I guess when I talk about squaring time and price, just to revise our work, we sort of say that it's the third dimension as far as the technique's concerned. David actually tells us in the Ultimate Gann course, if time and price could not be treated as the same, you couldn't square them. And that's a concept that tends to ruffle feathers early on, is that can we really treat price and time as the same thing? I'm comfortable to say yes, but it did take me a fair while to come to that conclusion. I always thought price was more important than time, and then I actually went through a process where I thought price and time were equal, and now I know that obviously time is the most important thing, but that's the standard development, and it's logical that that's the process it takes. So we can talk about squaring time and price to calculate pressure dates, and that's something that we're going to do over the coming weeks. And obviously, we really want to focus on just being able to judge strength and weakness and get a market set up accordingly. So the easiest way to measure, obviously, the third dimension or squaring time and price is what's called a Gann angle or a geometric angle. First studied, many traders believe that they're a simple trend line. There's a lot more to it than that, and in Market Wizards, in one of the chapters there's a bloke that just tears Gann angles apart and says that they can't work and all of that sort of stuff, only because he doesn't understand how they're constructed. He sort of says where Gann says a 45-degree line, and he sort of wants to get out a protractor and make sure it's exactly 45 degrees. Well, we know that a 1-by-1 line will always be 45 degrees as long as it is on a scale that's consistent with that. If it's on a compressed scale, then it's not going to look like a 1-by-1. It's 45-degree line. It could look at a different angle. So we're obviously going to use them as a trend line, but we're going to use them as a tool to rate strength or weakness, and we're going to say obviously geometric angles are the easiest way to turn time and price into one technique. Just as a quick revision, when I set these up, everything fits in there, no problem. Drag that out. No, that doesn't help either. All right, somehow in the importing, it's managed to stick that E out, so that should mean price, and obviously that's Tim with an E. Okay, so price and Tim. And obviously we take a look at a scale whereby if we Those colors just aren't animating. All right. Let me move through this and I'll just draw you a picture. How's that sound? All right. I'm going to give you a whiteboard and I'll actually draw you what I was going to show you there. It'll all look good in the setup. I'll promise you that. All right. So I'll use one of these nice big fat markers. So really what we've got is two scales, and that's not a particularly straight line, but that'll do. We know that if a market runs up for 100 days, runs up 100 points, we call that value of 100 in terms of days and 100 in terms of points or price. We could argue that that line has run out at 1 unit of time to 1 unit of price, hence we call it a 1 by 1 line. Gann said the most important line or most important angle is a 1 by 1 line. We're obviously also going to focus on 2 by 1s and 1 by 2s, whereby the market's traveling at more points per time or less points per time, and obviously they're important. Now we can use these in single sense, in the sense of putting one on at a time. Often it's easier just to put a Gann fan on and you can see which ones are intersecting with the market. The problem that brings is it sort of starts to hit everything, and we get very excited, and we may actually have nothing to work with, but we get excited about having nothing to work with. So I guess sparingly we want to apply these, and we want to sort of take off the information that's not working. So I'm very happy for you to apply Gann angles on your, or Gann fans on your chart, but what would make sense is to sort of take off the information that is not being used by those lines. So for example, if the market's above or below the lines, I tend to delete them. Now, Des actually asked me a question, to talk about, I guess, trading days and calendar days and how they can sometimes give conflicting signals. And here's the problem with the use of angles. If I go back to the presentation, is that we can get conflicting views. And I guess the way that I've always dealt with it is that I've tried to use what David calls the proven servant rule. So what's worked for you in the past will work again. So if something's been working well, that takes a higher precedent over a new angle that might give you a conflicting signal, and I'll embellish, or not embellish, I'll develop that as a concept as we go through. So we look at the relationship of price to time. Gann angles run up at a set rate of price to time, 1 by 1s, 2 by 1s. We've spoken about that. I guess here's where the point gets really convoluted, is that here's where you start to get an expansion of what seems like a simple technique, which is just sticking an angle on a chart. And now we're starting to be able to apply them in 4 different ways. So they can obviously be drawn up and down, all right? So they can be drawn up from a low and down from a high. They can also be drawn forwards and backwards, okay? So we use them as a projecting sense to rate the current market or to go into the future. We can also go back historically and say, well, based upon, are these two in alignment based on, previous tops or bottoms in the market? And then you've got this next little function here, which says that it can be drawn using calendars or trading days. Now, that as an assumption gives you essentially 4 or 5 different ways that you can use this information. And Des makes a great point, is that what if it gives you 5 different outcomes? How do you interpret those? How do you weight them more heavily? Now, we haven't even got into the concept of maybe changing point sizes, okay? So you've got 5 different outcomes, and then when you change the point sizes, you've now got another 5 different outcomes. So potentially 10 different pieces of information in the market, and how do you weight those accordingly? So I guess what I say to people when they get started with setting up a market is you've got to go and put angles or a Gann fan on every major top or on every major bottom. Remember, how would I define major top or bottom? I'd probably say using the turning points filter, just squint a little bit and see for the pointy and the spiky bits that stick out. But you don't need to run a Gann angle or a Gann fan off intermediate lows, like a weekly swing bottom or a weekly swing top. The reason being is by doing that, you'll come up with so much information that you'll get confused. So really, monthly turning points are a good place to start. Once you then know where those angles are and what's working, you can actually, if you're keeping a hand-drawn chart, after you've decided that it's working pretty well, then it can maybe make its way onto your chart. But at this stage, let's not try and get too caught up in having angles off every major top or bottom. That being said, I have run angles off every major top or bottom and every secondary top and bottom on oil, and I know the ones that work best. So therefore, I can exclude. But it's a little bit of a process. You've got to immerse yourself, and you've got to swim through, choppy waters to get to the other side, so you can actually know what's the quickest route through. So I don't have any real clear tips as to what the how you rate them as one being more important than the other. But the more times the market intersects or hits with that, obviously, then the greater it weights in your level of importance. Once again, I apologise, it's chopped off that image. But if you haven't got the commodities course, this is just an extract. You've probably seen it from your Gann Mastery manuals. It's actually in your Gann Ultimate Gann course from memory. If you haven't got the commodities course, I would say get it. The lesson, in many ways, that I got the maximum benefit from, and I'll share with you what I got from that David doesn't necessarily teach you through the Ultimate Gann course, is zero angles, is something that Gann talks about. And I found that was the first chapter in the commodities course that I tackled, because The commodities course is not a book that you read from cover to cover. It's really technique driven. So I was doing a lot of work on third dimension stuff at the time when I got the commodities course. And so for me, that was the first chapter that I turned to. And there are a couple of things in there that Gann gives you that just gives you a different way to look at it. So I'd always encourage you to have that sitting on the shelf. If I panned around behind me, you'd see mine sitting on the shelf there as well. So going back to this one, this is from Gann. Gann talks about the 45-degree or the 1x1 line being the most important. We know that for a fact. Obviously, then says the 2x1, the 4x1, they're the most important angles. But it's a bit hard to read that. I can see. No, it's not too bad on that screen. He also talks about here markets that indicate a decline. So when it breaks an angle, we should expect it to decline to the next angle below it. But I can't find anywhere where he says when it breaks above an angle, it goes to the next one, which it does, but he just doesn't state that. So there's a little bit of things that obviously he leaves out and you need to put together. All right, well, we're not going to do the thank yous just yet, but that's just, I've just put that in there. I know many of you do have the commodities course. And so, in conjunction with what we're doing, if you haven't yet, or you haven't recently picked up Gann's lesson from the commodities course, David's notes are through it if you've got David's version, and he does make a couple of little subtle hints in places where he says things are important. So if we jump out of the PowerPoint presentation and we sort of talk about how we're going to set up our markets, really when we talk about major anchors, you guys shouldn't need any help in me directing you to major tops and major bottoms. So for me, the birth of the contract, the all-time high and the all-time low are three of the major reference points that we use for the creation of angles or the placement of angles. I'd also be running off the most current cycle top and the most current cycle bottom. And all we're looking to do is really firm up, I guess, what we've got in context of what's working in the market. Is it strong or is it weak? So what I'm going to do is I'll jump into Newcrest mining and the Aussie dollar and sort of show you some of the things that I've set up. We don't want to get into having all of these angles running off tops or bottoms. I guess the only way to get clarity in this is to do the work yourself. I know when I hear Tim talk about soybeans and running angles off here and running angles off there, or Matt talks about the yen, and even with Noel with the SPY, because I don't do as much work on the SPY as what he does, I get lost when I hear them talking about it. The only way that it really becomes real for me is to actually go in and place the angles. So I guess I'm going to, we'll do our couple of markets. I might show you some stuff on oil that just because it, very, relevant to my thinking as the market of choice. And then I'll throw it back to you guys, obviously, for questions for Q&A. Des, haven't really fleshed out your question, so give me some feedback as to what you need, particularly if there's some examples I can, that we come up with, and open it to you guys. Tonight's not meant to be the complete discussion of everything to do with third dimension. It'll just get us started, and that'll lead us into some more work on speed angles and squares and boxes and squaring time and price to get pressure dates, which we'll pick up over the coming weeks. All right. So jumping into profit source, as we just mentioned, we'll kick off with Newcrest mining. So I guess looking at a chart, working backwards, where would be places? I'm just going to put some circles around places where I'd consider running angles from. Obviously, major top, major bottom in terms of the cycle. I'd be considering, of course, the all-time low. So let me just drop a little circle on there. So we have the all-time low. Obviously, that happens to be the all-time high, which is our cycle high. And of course, I'd be considering using the birth of the contract as well. Now, this is some of the stuff you get more from the commodities course than you do necessarily from David's Ultimate Gann course. He does obviously talk a little bit about it through the MFC, the Master Forecasting course as well. So first and foremost, I would generally, picking a point to start with. When I use the birth of the contract, I'll generally go and get the Gann fan. Now, here's the problem. Do I use the higher the day, the lower the day? Well, I guess here is one of the areas that I'll come back and talk about zero dates. So I might leave that one alone. Let's just work on actual prices to work with, and then I'll come back and cover that off. So $1.13 from memory is the all-time low, but we need to be accurate in terms of price as well as time here. So I need to get the date right as well, 3rd of December. Oh, isn't that interesting? 3rd of December, all-time low, and current top in the market, 3rd of December. So anyway, we've seen it before. I know it's not exactly 10 years apart, but if that's 97, that's 12 years apart. Oh, there you go. So 1997 to 2009, 12 years to the day. Anyone want to tell me how many months there are in 12 years? You guys do the tough mathematics. Yeah, 144, price for everybody. So is that a number that we've seen before? I'd hope we could argue that is a number that we can see before. So in setting this up, we're going to use our start date. Our start value needs to be accurate now. You can run angles as weeks as well as days, but we'll use them as days. Point size at this stage is going to be 1 cent. Now, greatest thing that I learned from David in terms of setting things up is to always color code your angles or color code bits on your chart. So as you can see, my 1x1 line is an orange, 2x1's red, 1x2's blue, and so I color code all of them so I can actually get it makes it a lot easier for me to understand what I'm looking at. So what I tend to do when I'm first setting up angles running out of an all-time low, I'd just be keen to say, okay, well, let's nominate places where it's been working. So, you'd argue through that little area there, the market did find some support, some resistance was there. Market, once it broke back on the underside of the 1x1, wasn't much good. When it breaks through one angle, it generally goes to the next. When it breaks through one angle, it goes to the next. So it's following Gann's rules pretty well. Breaks through angles, not getting to the upside. Market sort of held it like a rail through here on that sort of pink line. That top there squared out pretty well. I don't know about you, but if I could get back in the time machine, back into 1999, 7th of May, market hits that top and then gives you an island reversal, then gives you first lower top. These are the sorts of trades that we're all interested in. So if I sort of pulled that apart and called that an ABC, well, I'd say it's only gone to 75%. There was I thinking it'd run a little bit further, but nice big gap down, nice island reversal, sitting on an angle. It's one of those things that you could argue would be the sort of trades that we're most interested in. We're seeing periods where it's holding, but it's certainly false breaking on the odd occasion, so it can hold a little bit above the angle. So I'm learning already that I probably should not just go long or short based upon it breaking the angle. I should wait for confirmation. Looking at that, I'd say it's given us a fairly reliable signal. That top there was pretty well called. What was a top then became a bottom. Just seeing that looks to me like very close to a 50% retracement. No, a little bit less, 37.5. Came back, sat on an old top, sitting on an angle. There's your first ABC long. And look at that, that's an absolute rocket. So that one went to 200% or 150%. So looking at that as a setup, you had some price going for you in terms of a retracement. You had it sitting on that old top. But the context of that point A sitting on a angle as well, which had been running off the all-time low, would have got you particularly red hot. Looking at point B sitting there, point B is, on the underside of that angle, you might say, well, I'm going to leave that ABC trade alone until it gets above that angle, and you would have been vindicated because you would have seen that market, that third trade fail, running it into 75% into that angle. That might have been a good place to jump out. So you can use angles as places to, help you get in and trades and manage trades into. So just keep, oops, push the wrong button here. It's firing up the symbol tree. There we go. Turn that off now. So I'll get rid of the ABCs because that just clutters it all up. So looking at that area there, sort of little double bottom there, market took off. So look, I'm comfortable to know that these angles, well, squared out those tops pretty well. The market was pulling up short from the angle. That's a little subtle sign of strength. Market sat right on it on 25th of the 10th, 2005, took off. Had another crack at it, so came back and, if I sat someone down from the world of technical analysis, they'd swear that all we've done is drawn a trend line there. But we can argue that it's a lot different, that is in context of time and price being in proportion to each other. So the actual all-time high had a couple of little false breaks. Now, once it broke back under the 1x1 there, you'd pretty much only want to be one way in the market, and it sold off from the 1x1 and it came back down to the 1x2. So I think we've got enough going for us to say, all right, well, this market is technically, operating pretty well as far as angles are concerned. Now, that's only one use of the angles off one starting point. Now, it's actually below the 1x1, so we'd have to rate this as technically weak, right? Because it's below the 1x1 angle, but, it's a hard call. It's at an all-time high. Would it be fantastic if I could just, for 2 seconds say that, gold just undergoes a fantastic move and on or around about our seasonal date it hit, the underside of that 1x1 angle, that would make me, just completely ecstatic. That's sort of saying $45, which I don't think is likely to happen, but that's certainly the sort of thing that I always am looking for. Now, this is one angle or one series of angles, okay? Now, of course, everything above the 1x1 is not much use to us because the market is not above that line. So when I'm setting these up, I would actually turn all of those off just to make my chart a whole lot clearer. It's going to take a long time for the market to get down to those angles, okay? So I'd be also comfortable to turn off 1x3s, 1x4s, and 1x8s. I'd have that as a saved chart page, and I just regularly update that and just have a look-see as to where we sit, and obviously get into the context of where that is. Now, that's a one. I'd create a saved chart page of this, and I'd basically put on here, Gann angle, all-time low calendar angles. And I'd save that as a chart page, and I just have that as something I would cycle through regularly just to see whether or not I'm engaging those angles at any stage. Now, we know full well that we can go from a calendar day angle to a trading day angle. Now, that changes the pitch of our angles, but now what I have to do is go back and turn on those other angles and see whether or not there are other angles that are more useful to us than the 1 by 1, etc. So, well, okay, well, I can get rid of 2 by 1 because obviously the market's never reached that high point, so I'll go and turn all of those off. So looking at a trading day angle running out, I go back and repeat the process and just see, well, look how well has the trading day angle's been working. And, you know, sure, there's some periods through here where I can see it, you know, holding some lows there. It doesn't seem to have the same, you got another low there, tops there. I was going to say, well, there you go, tops. I was going to say it doesn't have the same level of harmony, but, you know, when you dig a little bit deeper, a couple of lows holding there. So I think they're relevant, you know, that chart is relevant to us to have trading angles as well as calendars, so you can't dismiss one over the other. At the moment, the market, yeah, it really pushed through. Trading angle was holding those tops. Then it broke out, so it held once, held twice, broke out. Obviously, wanting to be long was pretty much the way you wanted to be. And what's it really telling us at the moment? Well, the market is holding above that 1 by 1 line, but it's not anywhere close to sitting on it. So it's a little bit hard for us to form a view on what that's telling me right now. Okay, so that's two ways that we can look at our angle. I'd save that once again as a saved chart page. So I guess there's a few things I'd get you to, I'll sort of spell them out and then we'll go and do them. So the first thing you do is you grab all-time low, all-time high, running a calendar day and a trading day chart off that 1 point, okay, and seeing what works best, okay? So that's obviously the first and foremost part to that part of the puzzle. What I'm about to do next is something that comes from the commodities course where I'm going to take that all-time low, but I'm not going to worry so much about the terms of the price, which is $1.13. I'm actually going to more worry about the date, which we know is the 3rd of December. So what I'm going to do is actually create what's called a zero angle. So instead of running the Gann fan off $1.13, I'm actually going to run it off 0. So we do that for the all-time high, we do that for the all-time low. And guess what? We're going to do 0 angles on calendar day charts and 0 angles on trading day charts as well. So we've now just come up with 2 extra ways to look at the market. So at the moment, we could argue that the calendar day and the trading day angles off the all-time low don't intersect where the current market is. Now, it doesn't mean that they're not important. It just means that they're not currently useful to me. So save chart page in the back of your mind. You constantly, bring it up and have a look, but it's not telling me too much right now in terms of rating strength and weakness. So what I'll do is I'll jump into profit source and just basically show you the work that we can do with the 0 angle. And so what I'm going to do is I'm going to use that $1.13, sorry, use that 0 date as being the low as being important. So I know the 3rd of December 97 is important. Instead of using a starting value of $1.13, I'm going to use a start value of 0. And what I'm going to start to look for is see, well, do the 0 angles give me, I'll start on a calendar day chart, which I am. Do the 0 angles give me something to work with? Well, I guess when I look at low, all those lows running through there, and then what was support becoming resistance, there's your sort of first little ABC 50% retracement, fell to the next angle, pulled that top, squared that bottom, squared that bottom. I'd say this is working, relatively well. Once again, not quite on there. Squaring out, calling for some support around those levels there. Pretty much hitting those tops. And at this stage, once again, we're not getting too much because we're right between angles. So that doesn't help me too much. So I'll turn it into a trading day chart. Once again, I'd be saving these individually just to, make sure that I had a reference to them. Well, there's a low, there's a high. Squaring out those tops. So look, there's plenty of merit in these, and it's really about selecting the right time that they can be working for you. There's some tops. There's also some lows through there. It's also not, unfortunately, telling me too much currently because I'm in between these angles. Now, the point I'm going to make is the next one I'm going to make. I'll come back to camera and share that with you. Is the further you are away from your starting date, the wider the angles, or what I call the separation, is going to be. So if you're using a date from 20 years ago, you're going to find that your angles are exceptionally wide apart. So getting the market activity to operate within those is sometimes challenging. That's why we can't just say we can only use the all-time low or we can only use the all-time high. We've got to use some of the ranges that are more relevant to us. So we've talked about what reference points work, and then we've talked about the variables. So using, the price and then using them as a 0 date. Now, I guess I'll throw it out there. Are we clear on using angles as 0 dates after that explanation? Because I'm sure some of you may not have done it that way before. Depending on who teaches the lesson at Gann Mastery, some of us teach it with some zero date stuff in there. Some of us don't, depending on time really, because there's a lot to cover in that lesson. So does that all make sense? And is that something you're using currently as far as zero dates? I'm sure the guys who've got the commodities course would be saying, yep, we know all about that. So Debbie said, how do you decide what date to take the angle from? Major tops, major bottoms, all-time lows, all-time highs. So Graham said it's interesting not using it, but you will do. Yep, please do. It's a very, very powerful thing. All right, it's very useful. Let's just say that. So all right, so lowest is good. Okay, yep. So some are saying they haven't used it much, but they know about zero dates, which is fine. Okay, so what I want to do now is just touch on using zero dates from the birth of the contract, and then we'll start to tackle those highs. So what I'm going to do is disappear the angles there. This now makes a bit more sense when I go back to birth of the contract. We know the birth of the contract here is the 4th of June 1987. Pretty important day in the life of Newcrest Mining. Now, I wouldn't use the low or the high on that day, but I'm actually going to use it as a zero date. So I'm going to use the date that this stock started trading, which is the 4th of June 87. I'm going to make it the start value being 0. So what it means is it's a true 1-by-1 line. It means that the market will run up the same rate of price for the same rate of time. So using that 0 angle, now once again, this is a calendar day chart, not a trading day chart. So actually, no, it is. It's now a calendar day chart. I looked a bit odd. So using the birth of the contract, this is really like, using the very start of the corner of your charting, paper. There's some lows there, picking another low there, squaring out that top. Seeing what else we come up with here. It's a few little tops there. That's not a great hit, but it's something to note. Market's actually trading underneath our angle there. Market's sort of floating around there, not a huge amount from that. So the birth of the contract, squaring out that top. So that's on a calendar's approach. The trading day angle approach is quite different. It actually gives us a number of extra areas to watch. So as you can see here, squaring out that top, squaring out that bottom, squaring out that low there. So in this case, I'd say that the birth of the contract 0 angle generally is working a little bit better on a trading day chart than on a calendar day chart. So that could be a little bit of our focus going forward. I don't know, that might have been a bad low to call. Right, so it's pretty much sitting on that angle, and then as it pushes away. So that's kind of a little bit of an extra as to how I actually use 0 dates on markets. So so we don't lose continuity, rather than jumping to the high at the moment, I'm going to jump into the Aussie dollar, and I'm going to do the exact same thing. I've had a question here where it says, given the timeframes, do I find, going over big timeframes, do I find switching the Gann fan to weeks has merit? I'm a bit of a purist in that way, Des. I probably just I do them all on daily charts, and I don't generally use weekly angles. I like to have, daily angles on daily charts, and even if that means going over a big time frame, then I just accept that. So I must admit, I'm not a big user of weekly angles, but definitely a big user of daily angles. Now, just to sort of, do the same lesson again, but on the Aussie dollar. So you've got here the 13th of January 1987. What I'm going to do is I'm going to run a Gann fan off the birth of the contract, so 13th of January 87, but I'm going to start it at 0. Okay, so I'm going to start my progression all the way down here in the I'll put a calendar chart. So zoom in. So I've got to zoom in obviously because it's such a big chart. All right, it's got so many years of history. Really what I'm looking at now is I'm just seeing where am I getting some major intersections. So market's sort of bouncing around there, not fantastic. Definitely held a little bit of an angle there, held through the angles there. Not a huge use of it, and obviously because it's a fairly interesting starting point because it's all the way we're talking here the Aussie dollar being 50 cents. So the 0 angle here is working pretty hard to touch the market. Bit of support, bit of resistance, bit of support through there. That one, I think you'd be pretty comfortable to say that if it only works once, but it works that well, if you manage to pick up that low and trade out of it, you'd be relatively happy in conjunction with a lot of other things. You're not just going to buy and sell based on 0 angles, but there you've got your calendar day angles, and if I take a look at the trading day angles as well, you've got something to work with there. So all I'm going to say to you is that, I'll come back to camera. So all I'm going to say to you is that the proof's in the pudding. So I'd really challenge you guys to start to work with those 0 angles because they do give some insight. Keep very much the focus though that we're not going to trade off them singularly. All right, it's never a case of, okay, well, the market's hit an angle, we're going to buy it or we're going to sell it. But if you can combine that angle with some time and price reasons to trade, you've really got, and that's why we use a variety of angles, because they don't always intersect with the market. So what we're going to do is line them up with other time and price reasons that we have at that stage. So I found them very, very useful in that regard. And, as I said, proof's in the pudding, getting out there and doing it. The challenge that exists with it is, as I said, lots of angles on a chart, knowing when to use them, having a memory of where they are and saying, I think I'm getting close to that one by one, etc. And I guess you've got to remember as well that the market, when it comes to the trading rules associated with angles, you've got to always, caution is a good thing. So what I mean by that is that if the market breaks an angle once but can't close above it or can't close below it, then that's not as strong as if it sort of can break through and close above. So David's 2-day close filter, where we're waiting for a market to break through the angle and close 2 days above or close 2 days below, in the early days would be a very good sort of filter to build into your rules, just to make sure you don't get caught on false breaks, because the market's not perfect. It doesn't have perfect symmetry. And when we're talking about time and price, what we tend to find is it's the market has lost motion. So what happens is it overshoots an angle, so it'll push through the angle before it can swing back the other way. So it's a bit like that rubber band. When you let it go, it does return to its mean, but it will wobble a little bit before it returns. So all I'd say to you is that you've got to build some rules around it. That 2-day close filter, so the market's got to close 2 days above or below those angles, or if that's what you're using as your main driver, or you've got to have other strong time and price reasons behind it. So we talked about birth of contract, trading day, calendar day angles off the off the birth of contract of both Newcrest Mining and the Aussie dollar. What we'll take a look at now is we'll go and look at the high and the most recent low on Newcrest, and we'll do some stuff on the Aussie dollar as well. Just to bring in some stuff that's more current in the market, and then we can probably talk about point sizes, and then that'll probably do us for tonight. So I know we are running a little bit long. I knew tonight would obviously be a little longer though, just due to our time for catching up. All right, so Newcrest Mining. The all-time high, so this one certainly has merit for us to run some angles off. If I pull that apart, I know the all-time high is $40.50. If I run down off that top, well, I can see that the 8x1, well, it didn't really do too much for us. The 4x1 did a pretty good job in pulling that, as some support. Resistance came in here at the 2x1. The 1x1 was fantastic at giving us an area to watch for, an island reversal. I'd just be interested if I can line up on a Gann retracement tool. I was hoping that would be like, 75% or 80, something where I could line up some price there. It's not to be. So sitting right on that angle, there's some reasons there why that might have given you some confidence to think, all right, well, island reversal on a 1x1 off the top, as it confirmed that island maybe getting short. Certainly been some support through there. Okay, support. Certainly some resistance through here. So this is where we sort of first got together on Newcrest Mining. So I'm not surprised we saw the market sort of hovering around what had been resistance, and then once it sort of broke out, suddenly we've started to find that it was some support. Now, if we put it into the context of that ABC that we just saw, you've got your A, B, C. To get into this trade, you're entering on the good side of the 1x1. You're entering on the positive side. So I'm not surprised it's used that as a bit of a springboard. And, we've seen the market make its top. Now, here's our next challenge, is because this top that we're using is pretty close to where we are in the market. You're going to find that these angles aren't too far apart. We're only talking about $1 here, less than, $1 there. The market could basically, move very quickly through here. So less merit is given. This is where you've got to combine time and price. So, we've got the 3rd of December, anniversary of the all-time low, the work that Richard did, island, we've got all these things. And now we're looking at it saying, all right, well, it's also squaring out off the top. So that also had some merit. Looking at a trading day angle, we could come back and say, all right, I'll get rid of those ABCs. Looking at that trading angle, we've seen the market obviously hold, have some resistance. The market's just stuck its nose today back underneath that 1x1. So you'd have to argue that this market does look somewhat weaker to the downside, or sorry, to the upside, because it's got its nose back under that 1x1. So these are just giving us little tools to be able to rate strength. Now, if we follow Gann's rules, if it breaks through one angle, it should head to the next. Maybe we're looking at that sort of, if we manage to get the 22nd, seasonal date at $31, or, if I follow that line along, $31 odd, then you'd have a time and price alignment lining up with the, a seasonal date. That could be something to watch for. So we can run these forward, as we know. Just to quickly touch on, we can also run them backwards. And when we run them backwards, we square out with these tops here. So we get some harmony when we run them backwards as well. So that's always something that we want to pick on, is run them forwards, run them backwards. So we know that that would be one that we would have, saved in chart pages with the right angle saved and working on. And the most recent low in the market would also be one that I'd be happy to have an angle on. But other than that, they'd be probably the only ones I'd be really working with. I need to get that right. So 1655 is the low. Now, here's a great example of point size as being a problem. So if I hold that up, you can see that those angles there, all right, have held. Now, I was very much aware of that when I was looking at that as a double bottom. All right, I didn't really point it out at the time, but the fact that it had come back and sat on that angle, what was originally support had come back and been support again. I would watch for this market, if it did fall to the south side, to sit through on that angle again. It's worked once, it's worked twice. You could expect it to work again, and if it breaks through that angle, then that would be a very, a much safer place to be going short. We've got our calendar days, we've got our trading days, and that trading day is also squaring out with that top at the moment. The point I was going to make here is that we could argue that maybe the point sizes here are not as accurate as we should be, because we've got our 1 by 1 line all the way down here. So this is where you can start to maybe make a modification just to get the 1 by 1 line more interacting with the market. I'd maybe move it at 5 cents first, all right, and that obviously adjusts our scale, and that to me looks more like a legitimate 45-degree line, all right? And if we take a look at what's happened, the market has just stuck its nose back underneath, so that once again signifies a little bit of weakness. If you go to a 10-cent increment, you'll see that it's just too much. Now what we've got, the 1 by 1's overshooting the market, and it's saying that this market's particularly weak. So we know that running 10 cents a day is probably too much. Running 5 cents a day, to me, makes that look more like a 45-degree line. So I can pick that up on calendars, I can pick it up on traders. And one of the other ways I know whether I'm using the right scale is to actually flick it back. And if I run it back, you see how that low and that top square out. So for me, that's a legitimate, we square out with that top. So 5 cents a day, I think, is not one that we would be, there's a low. It's not one that we would be in trouble for using, all right? Now, I'm only going to use these in situations where I'm really close to the current anchor. So in this case, we're, about a year away from the current anchor. So we might have to adjust our point sizes. But if I was running off the all-time low, which is, we know back here, I'll pick on again because I had another example I wanted to show you. I'd definitely be running at 1 cent per day. I wouldn't be running out at 5 cents per day. If I run backwards off that low, $13. So I didn't show you this before, but when you run back from that low, a calendar chart, it actually squares out the what was the all-time high at that stage. So for me, that tells me that that all-time high, if you'd actually run what was the all-time high back in 1987, if you'd run an angle off that on the way down, you could have actually gone very close to knowing where that low might have come in. So you might have been able to use that in at that time. But I like the fact that just by running it backwards, it gives me some harmonies with the market. So that's why you always want to run things forward and run things backwards. But as you can see now, we've got a couple of angles on the chart, and if I throw the one on the top on the way down, I've got enough information here to keep any kid happy as far as preschool children and colours, And here's where and now I can make that a trading day chart, and I can watch for all the lines to intersect. The $1 million question I get from people all the time is where the lines intersect, does that mean anything? And I guess I'll jump out of here and I'll come back to camera. So where the lines intersect. So if I'm running lines from a top to a bottom and a bottom to a top and all of those sorts of things, and I've got all these lines on a chart, where they intersect, does that mean anything? And I'd have to say, if you had 10 other overwhelming reasons why that was important, that area that you were looking, then I would allow it to come into my analysis. If it's the only thing you've got going for you where the two lines intersect off the top or a bottom, leave it alone. I don't know where Gann talks about the lines intersecting being important. David doesn't talk about it. I can find you 100 examples of where the lines cross the market, makes a dramatic turn, and I can find you 100 examples of where the lines cross and nothing happens. So in absence of other guidance, if you have lots of things working for you, and that's just one other piece in the puzzle, I'm happy for you to include it. But if it's just the only thing you've got going for you, then I would leave that alone and not read too much into it. So 2 seconds as I need to close my window as the rain starts to come in. So the southerlies hit Sydney. All right, so Darren said running back from the all-time low gave the previous all-time low. How would that have been affected by pricing change that occurred with splits and rights issues as it adjusted what was the all-time low? Found that in the first week. Yeah, so, yeah, no, I'm with you there. So what happens is when you get these adjustments, they can muck around with the prices. So I tend to just go with the flow in the sense of if the prices get adjusted, I just run with the numbers, and if it happens to muck up my what was squaring out tops or bottoms, but because the price action should all be adjusted within proportion, you shouldn't actually find that your angles intersect at different places. By all means, by all rights, it should actually line up the same way that it did before. But part of the reason that I like to trade commodities and those things is that they don't get adjusted. It can be a problem with stocks if they do have splits and adjustments and capital reconstructions. What you were using as major lows or major highs, all-time tops and bottoms can change, and therefore the numbers change, and that can be a bit problematic. But let me have a bit more of a think about that because I don't have the answer I've given you is not a clear one, and I'm not really thinking what would be a clear answer at this stage. So I'll have a think about that through the week, and we can pick that up next week. All right, so I think you're following the gist of what we did. So what I might do is I might leave the Aussie dollar for you guys to do. So what I'm saying there is that you need to run some angles off lows and highs, and make sure you run trading days and calendar days, and then do some zero date work. And I'll pick that up, and we'll talk about that research and what it's telling us for next week. Just looking at the time now, I'm just thinking 2.5 hours. I'm sure not much more is going to go in. It's enough information for tonight. I think you get the gist of what we're trying to do, but I will definitely pick that up, and we'll do it with the Aussie dollar come next week, particularly if there's anything of interest that's useful to us there. All right, so I guess just to do a recap on what we've talked about tonight. Just as a reminder, I'll send you out a survey that'll come out via email just to work out how we're going to pick up sessions, whether you want to do some catch-up work, so whether you want to do a couple of sessions a week, or whether you want to do weekends or nights or whatever, or whether you're just happy to do one session a week. And look, I'll do my best to go with what the broadest spectrum of the class is. I'm not going to disadvantage people. So if it just means we've got to plot out week by week, we'll happily do that. But if everyone's of agreement that they're happy to do, even if it's 1 or 2 weeks of doing a couple of double sessions, it just means we'll get that momentum. So expect that to come out. Obviously, we spoke at length about what the current markets are doing, and Des made a great point about patience. I've ordered some patience that should be arriving tomorrow. I just can't wait for it. What I'll point out is that the markets are teaching us a level of patience at the moment. Look for your quality of setups. Forget the quantity at the moment. Capital preservation. Don't just chip away at your capital going backwards because you're frustrated you can't get into the market. And then obviously what we did is we took a good look at Newcrest Mining, which we think is due a bit of a pullback. We'll be watching the US dollar and gold as a guide there. Aussie dollar caught in a bit of a sideways range, and we'll just see what develops over the weeks ahead. But I think oil could certainly have something to keep us busy. We talked a little bit about that sort of stuff. And I guess it's just getting back into a routine. And the plan of attack is to, next week we might talk about squaring highs or lows for pressure dates, but we also need to look at boxes and squares and all of those sorts of things as well. So, thanks for that, Debbie. As I said, rather than sort of doing a Chinese parliament as sort of getting everyone to put up their hands, Debbie's just given me a suggestion about when we could break and all of that sort of stuff. And certainly we'll take a break around Christmas, guys. I'm not running sessions on Christmas Day or Boxing Day. I know your family will probably need you around those times, like mine will. But all I'll say is we'll work out a roadmap together. Okay, it's not just me going to tell you what's going to happen. We'll work out a roadmap as a group as to how we're going to take our sessions from here. And as I said, if it's just a case of doing it week by week, having a break through Christmas and into next year, then we'll do it that way. Otherwise, we'll plan some catch-up sessions. So rest assured, Debbie, we'll get that taken care of. Thanks, Des. As always, I appreciate your efforts and your participation. Thanks, Lynn. Thanks, Jose. Thanks, Graham. Thanks, Annie. I appreciate that. Thanks, Key. I'm glad everything's got back to the normal chaos is a whole lot better than the abnormal chaos. So thanks, Gerald and Darren. So look, appreciate everybody's patience. I know it was probably it was a break right at the time where we were getting some good momentum, but what can we do? That's just how life goes, and we'll take it from there. So. We'll pick it up from there, guys, and hopefully tonight's got you back on track. There's some work ahead of us, and we'll bring it all together, come closer as the sessions come together. So thanks, Wayne, thanks, Linda, and Graham, and Robert, and Stephen. Thanks for everybody. So let's get back into the forums as well. So let's get them moving as well, and get some questions going, and we'll get some good discussions going, and I'll promise to do a whole lot more work in that area as well, guys. So all the best. Thanks for your patience and getting back on the horse with us tonight. No problem, Lois. You finished your assignment. Well, that'll keep. We'll get you. Get you your passing in your assignment, and this will give you plenty more time to tackle. So, good stuff, everybody. If there's any final questions, now's a great time to shoot. Otherwise, I'll give you all I can't say an early market. It's a late market, so it's obviously been a long one tonight. So, thanks for hanging in there, guys, and I hope you all have a great week, and we'll definitely be together come Tuesday night next week. All right, everybody. Well, have a great week, and yeah, we'll talk soon. So. So, yeah, officially welcome, and thanks for joining us again tonight on Tuesday for some Ultimate Gann online coaching. So, hope your week's been well. Obviously, it seems quick, I guess, time frame since when we last got together, and obviously had a bit of a chat. So, plenty to have a chat about tonight. I really want to get stuck into the, I guess, third dimension work that we mentioned last week. So we began our discussion just by doing a little bit of work on angles, etc. Hopefully, that's something you've put into practice over the week. And if there's any questions on that, more than happy to take those in our discussion tonight. Obviously, going to try and push through our just weekly update or market updates relatively quickly this week, mainly because I've had some comments backwards and forwards. Some people are obviously finding it useful, but obviously it does take time. So, sort of happy to get your feedback as to how you're finding it, whether you want to spend more time on that sort of updating and doing some analysis on the sort of position of the markets, but then obviously the time it takes to do that obviously costs us in other areas. So always open to feedback and suggestions, and obviously I've been in touch with a few people from both groups just to see how they're traveling, and they've had some fantastic feedback today. So always happy to hear any feedback that you would like to send through, either through the discussion board, or always send an email through to the office, and they'll be more than happy to pass that along to me with any suggestions that you might have. So as we get started, I'll quickly cover off on our normal bits and pieces. So just reminding you of our financial services license obligation, whereby we're not in a position to give you direct and specific financial advice to your circumstances, but obviously we've taken into consideration information that we regard of a general nature. Safety in the Market does hold the appropriate accreditation or licensing to conduct these types of online events, and we're in a position where we can give you general advice in the market. I've got a qualification that enables me to act as an authorised representative of that licence, and obviously you must take into consideration any of the information that we share with you and weigh it up with regards to your own personal circumstances. So that's the standard one that we talk about each week, but obviously you're advised accordingly, and if at any stage you have questions, please let me know. I haven't had too many to date, so that must be a good thing, but if there ever is a question, even from small to large, I'm very, very happy to always have those answered for you. So I guess tonight's session will follow the format that we're used to, which is where we I guess have a bit of a chat about the markets. I guess want to do a little bit of an update on the classes. I had some technology problems with my machine this week, so I had to get it rebuilt, and in doing so, that survey that I had promised to send out to everybody kind of got lost, unfortunately, and getting it set up is not as quick or easy as what one would have hoped. So unfortunately, that meant that I couldn't get out the survey that I had wanted to, I guess, really engage people and find out where they sat on classes and how they wanted to play catch up. So I guess I've had discussions with a few people, and I'm still going to give everybody their opportunity to put together their views. Probably what I'll do is I'll put a poll into the discussion forum, so you can basically answer the questions there. I guess what I'm finding is in talking to people, they do want to break through the Christmas period, and I think that's only fair. Obviously, it's most of us, or most of you, I should say, probably don't have the amount of sort of leave or holidays that you'd like to be fully rested. So I don't want to impinge on family time around Christmas and New Year. So we'll talk a little bit about, I guess, how we're going to potentially structure the classes over that Christmas period. So we'll definitely have a break through that time. And I guess the notion of sort of picking up and doing multiple classes each week, to be honest, has probably not been something that people have been overly keen in the feedback that I've had so far. And that's fine, because look, obviously, finding another night or even a part of the weekend would probably be a stretch for most people, considering we're pretty time poor. So I guess I think the best course of action is for us to just sort of persevere with our catch-ups on a one-by-one or once-a-week basis. And I'm thinking I might do even a bonus session through the sort of Christmas, New Year period, and whether you join in or whether you just watch that as a recording, that can give us a bit of an update through that period, just so we're not losing continuity on our markets, and particularly so we're not missing any setups if they come along. So as I said, I'm still yet to sort of formalise that, but my plan is to, through this week, have a little poll up on the discussion boards for our private forums for coaching, and that'll sort of discuss the plan of attack. And I guess my plan at this stage, unless I've misread the intent of a number of people that I've spoken to and who've sent in emails, etc., I would suggest that we'll probably just do a once per week catch up, and that'll probably take us through to sort of February before we knock over all of our time together. That's factoring in a little bit of a break, obviously, through the Christmas New Year period as well. So I think that's probably the plan of attack at this stage, unless for whatever reason we get overwhelming discussions or overwhelming wants to do it in a slightly different way. I think we can persevere that way, and I'm more than happy to continue that in that fashion. So obviously we'll do a market update, and yep, Linda says sounds fantastic. Okay, so no problem there. Happy, as I said, I don't want to have a massive discussion about it tonight, but it's just if that'll make sense and sounds good, more than happy to hear your feedback. And as I said, if there's something different, we'll give you a way that you can raise that in some way through the forums, just to sort of have your opinion heard, because I know it's certainly an important thing to get everybody's take on it. So pretty simply, we obviously had a large break due to the window, and if you missed last week's session or you haven't seen the recordings, etc., just to let you know, the family's all well and good and all at home and improving by the week. So as I said, early Christmas present, and thanks for all your kind words and wishes, but we're pretty much back on track. I'm surprised how kids, how quickly they do get over things and how quickly they heal. So I'm personally pretty happy about all of that. So that's been my best news of the last week or so. Obviously, we're going to review our market, so take a look at Newcrest and the Aussie dollar. We still are locked in a little bit of a sideways move, but I guess I want to relate that to what I'm seeing in the bigger picture. I guess there's a correlation, and if you've been watching the discussion boards, one of our members, Murray's, posted some analysis with regards to Christmas rallies. It's a well-known phenomenon whereby the market, generally speaking, and Gann actually wrote about it probably 60 or 70 years ago, where he talked about markets running from the seasonal date around about the 20th of December up into around sort of the 5th of January. The 4th and 5th of January is not actually one of our seasonal dates, but it's a date that actually Gann talks about as being particularly important. For you guys that were at the Master Forecasting Summit, you remember we had a bit of a discussion on that, because it does have a little bit of an astrological influence, just as a phenomenon that occurs around those periods, but nothing we need to worry about so much in our discussions here. But I am sort of looking at the market and how it's positioned. I'm thinking we are in line for one of those little Christmas rallies. Our market's probably not the best lead to look for that signal, but I certainly don't think it's our market that's going to drag the world higher. But I think positioning and looking at, say, the S&P 500 and the Dow Jones, we're situating where we're seeing a number of sort of rising bottoms against what is some resistance. So if we can get a breakout through there and potentially a pullback into the seasonal date, which I think is obviously going to be on everybody's radar, and then a push higher, we might see this market, the equity markets in particular, start to get a little bit of a run on. So there'll certainly be some trading opportunities coming up. So we'll take a look at how that might impact things like the Newcrest mining and also the Aussie dollar. We'll also take a look at obviously the overall markets as far as where they're positioned. I only wrote an article today that deals with where our markets sit on bigger pictures to do with 50% retracements. Both the S&P 500, the Australian market, and the Japanese market, the Nikkei, they're all sitting, just underneath that 50%. The Japanese market's well under. London and the Indian markets and the Chinese markets are actually sitting above those 50%. So we've got a little bit of a mixed bag, and I guess I'm a little struggling to see us really pushing to stronger prices until we get that 50% milestone taken out and held, and some confidence above that. So potentially a little bit of a Christmas rally into that sort of 5,000 point area, and followed by potentially a sell-off could be what we're looking to see unfold over the next week or two. But time will tell, and we'll talk about that, and we'll get some charts up to sort of show you what we're thinking about there. I guess I want to continue the discussion on the third dimension. So last week we commenced the brief discussion on Gann angles and just getting some simple use of angles working. So hopefully you went away and did some work on the Aussie dollar, and I'll be interested to hear any of your comments or queries with regards to that. So running angles off all-time lows, all-time highs, and I guess just getting a mechanism that enables you to get organised in such a way that you can use that information and make it worthwhile. I did utilise the term Charlotte's Web, which we talked about the variety of different angles running across markets, and eventually we call tops or bottoms. We talked about, I guess, the complexity as well of using Gann angles, because not only do you have trading in calendar days, you have obviously forwards and backwards, you have up and down, and I guess you also have the ability to run them using zero angles, which was something that we talked about last week. And in some markets they work fantastically well. Some markets they don't always give us things to play with, but they are certainly worthwhile running on all markets. And so we had a little bit of a chat about that. Hopefully you've had a play with the angles work in recent times, and we'll try and use those to rate the current position of our markets and what's working for those. I wanted to pick up on speed angles as well tonight. So when we're going to continue discussing the third dimension, speed angles for me are a fantastic confirmation tool. they're never going to be something that you can use as a standalone indicator. You can always use them to understand whether your market's running strong or weak within comparison to previous moves. And it's important to know which speed angles we should be using. So there'll be a couple that I'm going to sort of share with you on markets other than the Newcrest or the Aussie dollar, just to give you an idea of how I'm watching certain things unfold. And then what I want to do is get stuck into squares. So what I mean by that is I just want to start talking about generally getting which squares to use and obviously judging strength and weakness. So you'll note that I've jumped over squaring time and price in the form of squaring highs and squaring lows and squaring ranges for pressure dates. It's a pretty complicated, well, I won't say it's complicated, but it's a very full-on use of the third dimension when you're doing that, because you're going to come up with a lot of dates. So I want to talk about that pretty much in one lesson on its own and just remind us of how we can keep the dates all recorded, because once you start squaring different tops, squaring different bottoms and squaring different ranges, you end up with a multitude of dates. And it really does come down to how you manage or file those dates away, because you then want to lock those in with time by degrees and time frames and balancing time and interim time frames. So you've really got to learn how to bake the cake and put all the recipes in. But the great challenge lies in keeping an eye on those dates. And look, I must admit, in 2009, I've been a little bit guilty with squaring some of the ranges and highs and lows on oil and sort of putting them to the side and not going back and actually reminding myself of those dates, because it's actually something that's been pretty useful in 2009 to give you a footprint or a little area to watch for changes in trend, and they would have been of great assistance over and above the work that you would have been doing already with regards to where you thought the markets might turn. But it was just one of those extra confirmation indicators. And I was just reading through the Ultimate Gann course before I got organised tonight, and obviously David talks about the third dimension and angles and squaring time and price. He said they're definitely not standalone indicators, but he certainly says there that every major call or every major forecast for, he says the 10 years prior at that time that he was writing, all had an element of third dimension in them, and so therefore they're excellent confirmation tools. So we're going to obviously continue on with our discussion in that regard. So that's our plan of attack, and we need to talk about market squares, we need to talk about permanent squares. We've got two markets to play around with, so I want to do a thorough discussion or a thorough case study on both of our markets. So what we'll try and do is make our market update at the front half, I guess, a little bit more topical with regards to the information that's very important. I'm going to assume that you guys should know the first, second, third dimension, first 1 day, 2 day, 3 day, and weekly swing chart trends. You don't need me to hold your hand there anymore, I don't think, but they should be things that you would know before sitting down and having a bit of a discussion with us each and every night. So there should be some prep work that you're doing, particularly on our markets. And it's hard. I get a sense of the fact that some guys are doing a fantastic amount of work, and then I get a sense of some people are kind of waiting for the update each week. So I can tell you, you'll get a whole lot more from our discussion, be them the updates on the market or where I see things going, if you kind of have a view as to where the trades are sitting at that time. So I obviously encourage you to do that. And then obviously when we're sort of talking about homework, the week, I've had some good suggestions from obviously the group saying, look, we should be using the discussion board as follow-up, as homework, and as a place where we can get together and discuss. So I'd like to get a sense of whether you guys are, putting in some time through the week prior to when we meet next, or whether sort of you're just using them as standalone sessions and sort of picking up the pieces from there. So as I said, always happy for that feedback, and it's important that you pass that along where possible. So I guess that's how I see tonight running. So as I said, I want to get off to a running start. Squares are, like David says, an acquired taste, like avocados and oysters. I must admit, I left squares alone for a considerable period of time. I sort of mastered price, being able to sort of, use highs, lows, and ranges, resistance cards. Not quite knowing at that stage that in many ways they were squares, but I didn't quite know that they were squares. I kind of thought that they were two different things. And knowing what's a market square, what's a permanent square, which number to use, and then being able to keep a track of where it sits in all of them. Because let's say for 2 seconds you're running a hand-drawn chart, and you're running a square of 52, a square of 144, a square of 168, a square of the all-time low, and a square of the all-time high. There's probably 5 squares straight out of the gate that you can play with. How would you record that information to know whether or not you're actually using it in a right way or using it in a productive way? Because I don't know if you guys have ever had the experience where you've had a market that's strong in one square and weak in another, and how you're meant to reconcile all of that. I will tell you, if you go back and take a look at the low in 2008 for the oil market, which is obviously one of the calls I put together that's probably been my best to date. It was interesting that it was weak. The low that was formed was strong in the square of 52, strong in the square of 144, strong in the square of 168, and also strong in the square of 975, which was the all-time low. So that was one of those events where all of the squares lined up and said that the low that had formed was definitely a strong place for the market to find a bottom. So that's a case of where it's all come together, and that's your sort of classic textbook sort of view. but I'd be obviously confident to say that there's times where you are getting a combination of messages. So you might have weak or neutral in one square, and then you've got suddenly weak or neutral in another, and how do you reconcile those? And I guess we just need to have that discussion and see what your experiences are and talk a way around it. But it always comes to me, if we go back to the first session where we got together, any classic Gann setup. So when we're talking for any major change in trend that we believe is tradable, you're obviously looking for time, you're looking for price, you're looking for pattern, position of the market, and volatility. So you've got to have a combination of all of these things coming together. For example, if I had let's say a double bottom that was 180 degrees apart, that was 10-year master time cycles coming together, and it had a repeating, time count like the 161-day count on oil or something along those lines, that was locking all of those in. If it wasn't weak, if it was particularly, let's say for example the turn was weak in a square rather than strong in the square, I'd probably have to override all of those things. Let's say it's an island reversal as well. So squares are one of those things that we learn to overlay. Early in our discussion with squares, I'd be interested if anyone found squares simple for the first time that they looked at them and thought they made perfect sense, because they do take time to work at. Whether you're using squares now in your current work or whether you sort of left them to one side, what I want to do with this lesson is make sure you feel comfortable to apply in our market of choice and be able to rate the strength or weakness of a market. Now, it's interesting that we look at something like Newcrest Mining as being one of our squares of, markets of choice. It's interesting when you apply, say, the square of 144, we get quite a good effect with that. Now, it's interesting that occurs because I also know gold, for example, has a very good relationship to the square of 144. So you really do see that correlation there. So I'm not surprised that that's something that we do see. But all of that's things that we're going to unfold as we have our discussions tonight. So let me throw it open to you guys at this stage. Any comments from last week's session? Any questions before we get stuck in? Because I'll jump into profit source and we'll get started on our updates on the markets. But just interested to get your feedback, guys, and what your thoughts are at this stage and how that sounds. And as I said, I'm sort of feeling a bit, I won't say lonely, but feeling like I haven't been in contact. So I'm sort of a little bit disconnected. So I want to make sure that you guys are happy with where everything's positioned. Great, Des is all sweet, and Annie's good, fantastic. So that's fantastic. Yep, good and ready, fantastic. If we're all happy, that's well and good. That makes me feel good. So Richard, you're saying the 0-date Gann fan from the all-time high in Newcrest Mining seems unworkable. Okay, so Richard, I'll play around that for you. So let's do our market update, and when we get to Newcrest Mining, let's play around with the. Let's make a note of that. I'll just make myself a note. It's terrible when someone cleans up the office and they take all my pens. Nice when I'm much happier living in mess, but at least I know where everything is then. All right, well, all my pens have been pinched, but that's okay. I'll definitely remember that. So the 0-date Gann fan from the all-time high seems unworkable. I'd say what we really mean there, is that we've probably got to adjust the point size, because the all-time high is actually in recent times. It's only in the last sort of 12 months. So I'd say it's just a point size adjustment, but I'll definitely deal with that when we get to Newcrest Mining. And a couple of other messages, a couple of people saying that they follow the SPY with the 458 square in the background. So obviously the SPY, if you want a lesson on squares, the square of 458 from the all-time low, like Noel's given a huge amount of stuff, particularly in recent times in the platinum articles and those sorts of things. It's absolutely red hot, and I can show you some stuff on oil as well, where the square of 975, which is the same sort of thing, is working fantastically well. So we'll and actually saying found gold working around 168 and 336. Yeah, fantastic. So multiples of 168. So yeah, I guess we get a lot from our natural squares and how we apply them, because we're going to start to branch off, because not only will we get to see them working in price, but we'll also get to see them working in time and how important they are. So all of these things are important. I guess if you remind me of the, and I don't actually, 2 seconds while I grab my calculator. So I knew I didn't have everything ready, because I know when we talk about the all-time low on Newcrest Mining, for example, so just sort of talking and thinking out loud, when you get the all-time low, you're looking at it. We said it's about $1.13. It's actually $1.12.5 or whatever. But if you actually divide $1.12 by $1.44, you actually get about 75 or 78%. So we're seeing numbers even within 144 that actually end up being timeframes that might relate to, say, Newcrest Mining. So we'll have a look at those as well along the way. But there's plenty to discuss. One of the things, I guess, as well, that a lot of people don't spend a lot of time on is that when you establish a first range out within a market, we know to look for that in points, but we can actually watch to see the market trading within a square of an of a first range out. So, for example, the square of 341 on the share price index, if you go back to the 2003 low, 341 points was a multiple that seemed to come up in that market regularly. And if you actually create a square of 341, both the time and the price ended up being relatively good markers, well, the price particularly, but the time as well. So all of those things can get rolled into the use of squares. So we're going to try and look at the subtleties and the nuances of how we can apply those, because I guess for most people, they tend to be things that they throw to the back of the pile as far as squares is concerned. So we have plenty to talk about, so I shall get stuck in and make all of that happen. So, all right, just let me get that cleared. Okay, so I'm just going to pause this camera, and I'll jump into profit source. And I'll leave that one square up. All right, there we go. Let me just jump into profit source, and we'll get our little update going. So, all right, so there's profit source. Okay, so you should be able to see my screen, which you can. So we'll start obviously with our major movers. So, I think, of course, the share price index is one that we can spend some time on. Just making sure, yeah, we are recording. Good. Once again, where we left ourselves, we were about a week ago, and if we put a swing overlay on there, you can see from a one-day perspective, the market's been pretty choppy. Very hard work, to make those trading ranges. I guess we'll note that we are starting to get this sort of series of higher bottoms. So if you were going to argue that we've got a wedge or a pattern of those sorts of descriptions forming, I guess we could approximate that sort of top where we've got some resistance at the moment. And then if we put some just a very broad line, we are sort of seeing some rising bottoms here. So we saw this low gap down and nearly give us an island reversal on the 27th, which I had as quite a strong date. We've seen the market come back and come down and potentially make a higher bottom there. Got that little outside day, which obviously puts a swing, but if we ignore that, we could pretty much sort of argue that we have a very loose but understandable ABC trade. So at this stage, if you're watching that as a first high bottom trade, you are sort of holding. There's probably a Gann angle, and I can get rid of the actual trend line and see whether we have some Gann angle support. So using last week's discussion, I'll turn off some of these lines. It looks to me to be about a 4x1, I think. No, the 2x1 or 3x1. So if you look at that, the market is holding that 3x1 angle. Okay. So in context of the bigger picture, whilst we don't have a clear, we don't have a clear trend in play, we are seeing a series of rising bottoms against what is probably, 3 or 4 tops sitting there. So I think you'd have to argue that the breakout, if it is due to occur with these rising bottoms, my feeling and certainly that of some of my colleagues is that we're looking more for a breakout to the upside. And I think this little Christmas Santa rally, which sometimes happens regularly around this time, could be the catalyst for there. Now, if you take a look at Murray's work on the forum, and I won't steal his good work, but if you take a look at Murray's work, he sort of says from around about the 10th to the 14th is where this rally sort of kicks off. So on the share price index, I think it might be a fair assessment if you maybe were to see higher bottoms forming out of here, or certainly closing these gaps, breaking out through these tops. There's quite a number of trading opportunities, I think, that do exist in the current environment. And, if you look at the bigger picture trend, if I put sort of the 3-day swing overlay on the chart, it sort of does smooth things out a little bit. So 3-day overlay, lower tops, we are getting that higher bottom confirmed today, or sorry, 2 days ago. We saw, 3 days up. You could argue that that's a little bit of an overbalance in price trade. So if I maybe make it a swing chart without the overlay, make it a 3-day perspective, we are seeing, 239 compared to 319. Yeah, so Graham used to just put there, 14 out of the last 16 years Christmas rallies, and it was on the radio today. Geez, I hate it being on the radio because it probably means it won't happen this year. But that being said, statistically it is very valid to see the rally now. My understanding, or the best use of the rally, I guess, is generally out of the seasonal date, which we'll call the 21st, 22nd. Generally speaking, I tell people to be clear of the market by about the 4th or 5th of January, because that's when the markets tend to give you a pretty strong short signal. So it's a very sometimes short-lived and fast-lived rally. I guess I'll come out because I think it's pertinent to have a chat. I'll get back onto the camera. You've often heard me talk about how volume is such an important factor in measuring, all of our trade setups. This is the one time of year, though, that I tell people that volume basically becomes a bit secondary, because the volumes do fall away quite dramatically a lot of your institutional buying and a lot of your funds buying tends to sort of dry up because they're all on Christmas holiday. So it is very much, from my thought process, a retail driven rally as people sort of jump in around about that time. So what I'd say to you is that if you have conflicting volume signals, but you have sort of the right price and time alignments, I tend to go with the price and time alignments, and I tend to ignore the volume probably from about this period now until the early part of the new year, because it just really is unreliable. Best way you can go and do that, like Graham said, 14 out of the last 16 years, go back and see where volume was helpful to you. But as a general rule, I'll have to tell you volume's one that just gets chucked out at this stage because it's just not valid, and that's on stocks and indexes and the whole shebang. So volume becomes one of those indicators that's just not as reliable around this time of year. So yeah, Linda's made a good point, which the volume has been strong the last couple of days. So I'll jump back into that chart, and so yeah, December, March rollovers occurring. So volume's high for, yep. So we're seeing the contract rollovers. So we're moving out of all of the December contracts. Probably I'd say people have already started to move out of the December contracts, but if I was opening positions in the SPY, they'd definitely be in March. They wouldn't be in December. But all I'd be saying is that, yeah, we're starting to see that normal rollover activity where volumes do start to spike. But we are seeing, I think, a little bit more interest in this market, and we'll just have to wait and see what happens as the days unfold. Of course, you've got to wait for your signals. You don't just take the punt of buying on the days unless you've got strong time reasons. But all I'm saying is that I think it's very much time to be on red alert for all the markets that we're stalking. So if I jump back in, and I'll keep going with what I was saying there with profit source, we've got this concept of, on the 3-day chart, you can see that there's definitely some of this sort of, congestion around that 4,800 mark, but you are seeing those rising bottoms, and 399, 253, 211, you're starting to see contraction on those bottom ranges. And I can tell you, if this market does another 139 points, and breaks out through that top and starts to expand, you're probably going to be in a situation where you can definitely, push to higher prices. One thing as well is through this period, and we can probably start to sort of commence our little discussion, or maybe not quite at this stage, we'll get to that on speed angles, but all I'd say is if this, for whatever reason, proves to be a low, so I'm sort of talking about that area there, I guess what a strategy that often helps in this scenario is probably not working too heavily with milestones. So let's say we get a run out to 5,000, that would be perfect. A run out to that sort of level. All I'd say is a strategy that can work quite well, rather than using traditional milestones, is to maybe just trail stops under swing bottoms, and then sort of around the 4th or 5th of January, maybe look to cover those positions. I'm just checking the calendar, so I just want to make sure I know what days 4th and 5th of January are. So there's no point, having, not knowing, knowing what days they are. So sorry, just finding a calendar. Hit the right button eventually. So just looking into January next year, the 4th and 5th are a Monday, Tuesday, so we've got no issues there. So, thanks guys. They're not it's not an issue with them being a weekend. So I think they would be definitely good areas to be watching into next year. But if we do get a run out through there, I'd say potentially, trailing stops under swing bottoms, and just using a time stop on the 4th or 5th of January. Lots to talk about in this one market, and I don't want you to miss out, because I think it will affect many of the equities that are in our market. Now, I know the SPY is not our market that we're following, but it's kind of makes sense for us to go and take a decent look at it. Back in '89, we saw a similar sort of event. So going back to a 20-year cycle. So once again, trying to combine our master time cycle work, you'll see here we did see, around about the 18th of December. I don't know about you, but that sort of pattern there is looking a little bit, not quite as sideways, because I guess here we were high at 2009. That level there is at higher prices, but this little area here where you saw the market run up, pull back down into, about the, 12th of, 10th, 11th, 12th, which is kind of what we've seen, followed by a drive out, first high bottom drive out, where we had a little bit of chop. It didn't start really getting going until the 18th, and then we were fine by, just some high bottoms up, not necessarily the easiest run to get into. I'm looking at it, there's not a standard ABC trade there. I'll just make sure I've got a one-day filter. Yeah, there's not going to be a standard ABC trade entry here. You can see that's a great long the openers entry there. Went sideways over the Christmas period, and then we had this great run up until the 4th of January. So that's the 20-year anniversary that we're following. So that's 1989 into 1990. So if I just look at the, I guess the framework of the percentage move, if I was going to pick on that, we are looking at about a 200% move of that range. So just doing some forecasting. But as you can see through here, had you just trailed stops underneath swing bottoms, What I'm arguing here is maybe even 1 day or 2 day swing bottoms. This area here, that outside day obviously throws out, doesn't give me the close of the exception. It doesn't give me the exception of the close rule, which it does on the normal swing chart. But if you take a look at this period here, that's the sort of thing we might be seeing unfolding at the moment. And if you just trailed stops under swing bottoms, you would have been pretty handsomely rewarded. And had you made the decision to sort of close your position on, say, the 4th or the 5th of January, you would have been once again handsomely rewarded. And then it does sometimes present a short trade back out the other side. So that's back in 89.90, using master time cycles again. This is all work that if you're trading the SPY, should be stuff that you're on top of. But happy to point it out to you if it's something you're not looking at, because I think there'll be definitely some good trading. Back in 99, we had a slightly different story. We kind of had a top on the 4th of January, so the market actually did also fall out of bed on the 4th of January, but the run-up sort of commenced on the 1st, and it really wasn't what you consider a major Christmas rally, but 20-year cycles are obviously important. 15-year cycles, which is 180 months, so that would give me, what am I thinking, 15 years would be 94, 95. So if we take a look at 94, 95, right at the very end, well, I don't know about you, but that sort of screams, well, there's the 23rd of the 11th, our lows on the 27th this year. Market made a little bit of top pull back into about the 12th of December, then rocketed up to the 29th of so the end of December before it fell out of bed. Once again, though, if we're using this just as a pressure point, that ran 100%. Okay, so even if we jump into where we are right now, if that's the ABC that we're picking on, 100% would get us to 48.34, and 200% would get us to 5,073. Well, I'd tell you, I think 5,073 is a little bit ambitious, but 150% is very close to that, mystical 5,000 point mark, which many of you know is halfway between the top and the bottom. So that's all good work, and I'll let you guys do some work there. I guess part of the reason I'm confident that that's potentially our plan of attack is if you have a look at the share price index, the S&P 500 in the US. If you take a look at what's going on here, it's also got this situation where it's got a congestion pattern around these tops. But it's interesting that in this discussion on the S&P 500, that area there is actually sitting higher than the lows in November, where, for example, in our local market, that congestion area is actually sitting back probably, more in that sort of area there in comparison to these tops back in October. So we haven't broken our October tops where the S&P 500 has actually pushed to new highs. Now, I can't see the US markets breaking out to the upside and our market sitting still and deciding to not go with it. So particularly on thin volume, I think we could see our market get a pretty good wriggle on. So that's the sort of pattern we're seeing, is that we are seeing that, congestion around the 50% point, and now we're seeing the market making higher bottoms. And as you can see, once again, that's holding pretty well. There's a trend line that I've put together. We could use a Gann angle, as we talked about last week, a Gann fan. We'll play around with the points. We don't have a fantastic fit there. All right, I was looking for something that was a little bit nicer. We could probably even go back to this major low here and just see whether or not we can play around with the run at 1 point per day. And, we are once again kind of holding that level, and we're pulling away from those angles. That's on a trading day chart as opposed to a calendar day chart. So I think we've got all the hallmarks of a market that's doing its best to try and push out through to the upside. And many of you would know that the weekly charts and the 3-day charts on say these markets are all still pointing higher. This congestion of the market moving sideways is sort of taking a lot of energy out of the market. But if it can get itself moving, and we've seen obviously it close last night or break out last night, just make sure that that's the right data. I know it probably is, but I'm just looking at that figure. It just for some reason sticks out as not maybe being right, but I'll just do a DOD and nothing's changed. So that obviously is the correct figure. So if you argue that's been the line that we've been holding, we haven't been able to close above that. We talked about that last week, didn't we? If we could get a second close or maybe even a higher bottom, so let's say another day up tonight and maybe a higher bottom, we could be sort of in an instance where we're using let's say another day up here B and maybe a higher bottom, something C, and we could be using that as a driver. So the seasonal date will be very important, and I know we're sort of sitting on, the 15th of December. So I really start being sort of focused on the seasonal date anywhere from sort of the 18th to the, 22nd, 23rd. They're all good for me. If we got a higher bottom, so I guess what I'm suggesting is if we got a higher bottom sitting on a confirmation of a higher bottom on what we could argue as being our seasonal date, I think we're in a scenario where we've got something working for us. And I guess if I pull around that and I use the 20th as a midpoint, where you're sort of seeing, you know, now using some time by degrees theory, you're sort of pushing and pulling. We're about 45 degrees back off that low, about 60 degrees off that top. You know, 135. I'll have a look at what 120 is doing. So that's about 120 degrees. It's actually working quite, I seem to be finding most of the markets I'm watching are working quite well in 60-degree multiples. So you could argue they're working in the triangle a little bit more than in the square. 180 wasn't a great big hit. 240, etc. You know, we could keep going back, but I'd say I'd be comfortable. 630 is not a bad hit. 720 is not a bad hit. So if we go back 2 years ago, we can actually see that, you know, we did see a small rally into the early part of, you know, 2008 or the latter part of 2007. But they were instances where we didn't really see Christmas rallies because we were in what's typically, you know, we can all remember as being a pretty strong bear market. One thing that, like the share price index, that I'm keeping a strong eye on, I'll just make this a weekly chart. Any sort of rally that we're going to get through this period, I'd be very cautious to watch where these 50% points are coming in. So knowing that the top on the S&P is 1586.50, and the low is 665.70. Yep, oh, moved it. $667. Sorry, $665. All right, so 1126 I think is going to be obviously a very interesting level for us to keep an eye on. I know it's not a huge rally, but you know, if it breaks out through that rally, maybe we get a little false break, maybe a nice, you know, I'm ordering it up, island reversal pattern. But I know there are certainly people watching early January as a potential, you know, relatively good turn in our markets, and obviously that'd be followed by the S&P 500 as well. So knowing where the major 50% points are sitting, I think are critical, and obviously knowing what the situation on where that market's sitting. So there's, I guess, a little bit of insight into the equity markets at this stage. So what I might do is pop out of here, come back and just sort of have a chat, because we'll break it up into chunks, I think. So we've talked about obviously the share price index and the S&P 500. Everybody happy with, I guess, clear in their mind how they might tackle that environment if it was to unfold. Keep in mind, volume is going to be relatively hard to read. Follow your patterns. Watch for gaps. Gaps always tend to be a commonplace throughout this time. So if you're expecting gaps straight away, long the openers, short, you know, well in this case, long the openers, or island reversal bottoms and those sorts of things would definitely be areas that would be good enough reasons to start tackling it on. I would really encourage you to take a look at Murray's post, which he's put on the discussion boards, just, you know, available to everybody, because he's actually put some statistics together and he's actually thrown out his trading plan, how he's going to tackle it, and I don't disagree with how he's handled it. But you know, depending on how we go with time before Christmas, I think looking at the schedule of what the guys in the office have planned anyway, I think we're not going to get another session in before Christmas. So I think it's pertinent that we have this discussion now. So happy to throw it to you guys if there's questions, comments, or queries. And we'll come back, and when we do some speed angle work, I'll just relate that to the current environment, and that could give us a bit of a hand as well. But I definitely think there'll be some opportunities there, and would encourage you to start planning for those, because they'll come thick and fast. And I don't know about you guys, but I have people come and stay with me at Christmas, so it's always a bit hard to sneak off and you know, check the markets and do those sorts of things. But I think it's one of those times where you might find the you know, Christmas pays for itself while you're trading through Christmas. So you just have to ask for a bit of forgiveness from the family. So just want to make sure you guys are comfortable. So Darren said he's happy, and no one else has typed me a question. So as always, I'll take your silence as meaning your consent. As I said, very happy to deal with some time on that if necessary, because as I said, I think there's a pretty good chance that might unfold, just looking at my statistics and what I know about this market. So Neil's happy, which is great. So I'll keep pushing on, and we'll sort of break out our other couple of markets, keep this moving. All right, so I guess a couple of the other things I want to share with you where I'm seeing oil, because I know a lot of you follow that as well. And obviously gold was a big driver. Oops, gold's obviously been a driver in our market. Interesting, we should go back and take a good look at what the seasonal dates are producing. Interesting that we're getting around about the middle of the month, and around about our seasonal date, around about our 50% point. So we might start to see some, the US dollars had a little bit of a turn of fortune. So I was getting some data fixed on that. So I'm just going to check and see whether that's been taken care of, which it hasn't. I had to rebuild my machine, as I said, and I had to rebuild databases, etc. And one of the issues is getting this New York Board of Trade figure in, which is just one of these markets that seems to be one of the hard ones to get back up and running. So anyway, I'll have to operate without that, but we'll go with the, actually open up, I'll got two computers running, so I'll just see if I can open it up on the other one. All right, so going from that perspective, we've seen the market moving, you know, in a pretty straight line on the upside. We've then seen the markets pulling back. One of the things you would definitely be measuring in terms of these pullbacks would be taking a look at what the sort of the last few pullbacks have been. Well, that's 15 days. I'm sort of measuring the time from sort of tops to bottoms. That one there was even less, but it probably took about 15 days before the market took off again. So 15 seems to be a pretty interesting sort of pullback time frame on the gold market. Well, there's 11. You know, 17 days gave you, 18 days gave you the high bottom. So in context of where we are now, we're seeing this market has actually come back about 11 days. Now, if it went 12, 13, 14, 15, well, that's going to make it put us on around about the 18th of December. I'm just going to take a quick look back. About a year ago, you know, we started to see this market push away in the early part of December. The 17th was actually a top, so there's no reason why this year that may not end up being a bottom. So it certainly was a turn, 17th to the 18th. We are hovering, as I said, around that 50% in terms of price. And the other thing that I'd be looking for here is to just balance out the timeframes here. So, you know, you've got 36 days up, and if you want to do the halving of that and do the mathematics, it's going to be 18 days down, and that's going to put us smack bang on the 21st of December, which we know is pretty smack on our seasonal date. So maybe some sort of rundown into around about the 21st of December, and you know, even if it got back and, you know, let's argue for 2 seconds, let's say it gets back in double bottoms. Like, I know it's got to do a lot of work to get there, but everything's possible. Came back and sat on that old top, maybe sits around the 50%, even comes back in double bottoms. That could all be outcomes, but what we've got is a good understanding of the fact that you know, some time frames are balancing out, and just to, you know, satisfy my own curiosity, if we you know, just put together some time by degrees work running back to from our now projected date. 60 degrees gives us that top. 90 degrees is within a couple of days tolerance. 135, so it's been pretty good at picking tops, you'd argue. 180, that's a couple of days out from what's a pretty normal bottom. 240 is a pretty good hit. 270 is a pretty good hit. 360, well, that is a top, not a major top. 450, which is 360 plus 90. 540, oh, well, there you go. 630, 720. I don't know about you, but that's probably firmed up a few things in my thinking anyway, just to, you know, how that's traveling. So, no, Des Murray's actually in the, he's not in the Wednesday night group. His post is on the, just the general part of the forums. I'll find it for us later. It's not actually in the Tuesday or the Wednesday night group. It's public. It's, he's chucked it out there to everybody on the forum. So I forget which one it's on, but I'll find it for you before we wrap up tonight. So is everyone sort of comfortable that just doing a little bit of, you know, time by degrees theory, just a little bit of balancing time, and those sorts of things, giving us a pretty good area to watch. Now, I know we haven't talked about speed angles yet, but if we did get a sort of solid move out of that area, let's argue that it's going to be, you know, somewhere around the 50% level. You know, there's definitely, you know, some upside potential, and running at the same speed angle would be a good guide. So the trends on oil, gold, the other oil market, they're still on the major trends. We're still holding higher prices. We actually had a confirmed downtrend. Yeah, end of January is always, yeah, Ashley's onto something there as well. Certainly some places I'm watching for. I think January's going to have a lot to give us an idea of how 2010 is going to unfold. So looking at the one-day swing chart, we do have a confirmed downtrend, but the weekly trends are still screaming up, and you know, the 2-day and 3-day trends are still holding as well. So in my mind, I'd have to have a view that this is probably more just a pullback in regards to a bigger picture move rather than you know, the end of the world come gold, because I just can't find this move in the US dollar to be you know, all that sustainable. So we'll see how that unfolds. So keeping you know, our commodities rolling. You've had oil fall out of bed. Now, I can't remember how much I spoke to you about it last week, but I was very keen on that date being the 27th, sitting on the 50%. If I go back to this area here, I was dead keen that this market was moving higher. How wrong could I be? The market sort of spent the next few days selling off. It's busted that 50%. And I think we're in a situation where this market, oil is particularly bearish at the moment. A couple of things I guess I'll share with you. As I said, just in case I don't get a chance to have a chat to you prior to all of this coming together. One of the things that we know oil does fantastically well is 50%. So if we put 50% together, you know, we're sitting right on, we're actually busted that level at the moment. If I pull apart down from that next 50, you know, that next major range, oops. You know, if you set anywhere around that $63 mark, it's lining up with that old bottom there, okay? and I think you're definitely shaping up for a low. It could actually end up being a double bottom as well, so it doesn't have to run that far. I guess one of the things I'm going to point and remind you of, in case you haven't heard it ad infinitum, is we're now shaping up to being 12 months out to that low in 2008, which was the 19th of December. And interestingly, most of you know the work I do on oil involves, the time by degrees work and seasonal dates. So if I run back to sort of that 19th or 20th, you can see here that 60 degrees has given me a turn, 90 degrees is that bottom. You'll find that 120 is very close to that top there. 135, 180 you could argue is a little bit out, but 240 is pretty close. 270 isn't giving you much, and you're getting that low there. And I guess the thing that I'm firming it up with that's going to give me the low is, and this is where the vertical line can sometimes come in handy. I'm just going to place a vertical line around our seasonal date. Now, the December seasonal date's been pretty kind to the oil market, so we'll pin the 20th as being our date. We haven't done zero date discussions yet, but if you were looking like I am and you've been watching this market, the 161-day day count from our seasonal date gives us this low back here in July of this year, which was a pretty strong move. It was a great turn. So as you can see, I think that the 20th of the year of the month of December has got a pretty good opportunity to see what it can deliver. And one other time frame that I tend to use a little bit, which I'll just check for my own curiosity, is the 403-day time frame. Yeah, which doesn't give us too much, but anyway, the 161 time frame is one that's been pretty useful on the markets, and I'd also be checking that in trading days as well. But that's something to keep you entertained with. So if we continue to see this market moving south, just looking at what this time frame's doing to the run up, we've got a run up of 26 days. We've now got past 200% of that. And I'm looking at most of the major sort of down moves that we've had in 2009. We haven't really had many. The down move there was only a few days, so we probably have to go back some period in time to actually get a benchmark of a time frame that's doing that. I guess one of the things, if we're using roadmap work as well off the bigger picture, we should be clear on what it did about 10 years ago, because we know it lowered in 1998. It ran out and into very end of the year, and so this is what we'd be talking about. This is the end of 99, and we did get, you could argue that's a slight top there, but we didn't really get a major change there before we saw the market rally. So we might be not following the 10-year roadmap. We might need to go all the way back to a 20-year roadmap to be following 1990 and 1989 into 1990. So if I go back and take a look at that work, December, around about the middle of the month, there was that sort of spike around there, but the markets did push in, and interesting, early January was where the market sort of didn't get much good from. So if we're looking for a low, we may get some sort of run out of it, but it may not be particularly spectacular. So that, I guess, is just a little bit of insight into how I'm seeing those markets, because I know that they all have a little part to play in what we'll be doing, come the rest of the year. So I guess we've got a couple of things to be watching for the equity markets, a couple of things to be watching for gold, which will obviously impact our Newcrest mining stuff, and obviously a little bit of extra stuff on oil. So that seasonal date, I think, is going to, could be a locking for a pin for a lot of the environments or a lot of the markets we're seeing. So questions, comments, or queries on that little discussion there, because I do now want to flick across to both Newcrest and the Aussie dollar, have a quick idea, quick little update on those. We didn't have too much in the way of trade setups out of them for last week, so there's not too much to review, just a general position of the market discussion, and then we'll get into some work on squares. So how does that sit with everybody as I have another cuppa? All right, go, fantastic, good stuff. Onwards and up, yep, no worries. Because I just want to, thanks everybody, that's great. I just want to make sure that we're all on top of that sort of stuff, because I think, I hate sort of playing the same record over and over again, but most of us do tend to switch off a little bit over Christmas, and over the years I've tended to take a break and not trade the markets. And so from that perspective, you then look at what happens and you think, I should have. I can tell you this year, I'll definitely be switched on in that regard and ready to pounce, because I just think this year could be one of those years where we get some good stuff occurring. So all I'm saying is just keep your eyes on the price, get set up for it. Maybe keep your powder dry even until the seasonal date in the middle of the month. There's a few little equity plays that I'm in at the moment, which are producing some good results. But mainly it's been a case of, I think, a little bit of patience, waiting for these sideways markets to sort themselves out, and then getting ready to get stuck in. So all I'm saying is that the patience that you've probably had to exhibit over the last month, particularly with the sideways stuff, you just would hate to miss the opportunities, just as I say, because your focus is somewhere else, and it's logical that it is, because it's a time of year that we spend with family, etc. All right, so let's take a very quick look at Newcrest Mining and the Aussie dollar, and let's make a discussion on that. I've just got my other PC up, and I'm just taking a look at the work on the US dollar. So yeah, the US dollar's really, yeah, it's kind of can't show you the chart off that screen. I actually can, I think. So what I'll do is I'll stop sharing that screen, and I'm going to get really clever here. I'm just going to show you from my other PC, because this one's got the updated data. So that's the right. So can you guys just interested to know if you guys can actually see that screen? Make me a host. That's fine. Yep, it loaded up there. No problem. Hang on 2 seconds. I'm just going to. Okay, great. So you can see it now. Perfect. I just got to flick back on the right screen. So as you can see here with the US dollar, the reason why we've had the Aussie market unfolding is mainly, or sorry, the gold market unfolding is that sort of period there. We've seen quite a strong rally on the US dollar, and obviously that's then meant the markets have sort of retracted because of that. I think we did a good discussion last week on looking at the range. Okay, so if we kind of look at what we've seen previously, we're now sort of over 100%. We add it to that bottom there, we're sort of sitting right on about 100% of that previous range. So if it's a case of if we're going to see that market, if we're going to see the US dollar keep pushing on, well, it's sort of now or never. This is kind of a bit of an interesting point for that market. So that's obviously going to impact our gold and obviously our other, move that over so I can drive this. If I go back and probably pick on this as an even bigger range, because that's probably the size of the range that we're now contemplating. I'll just be interested to see. Yeah, we've only done about 2/3 of that range. So maybe a continuation into the seasonal date. If you've had a look at the US dollar index, I can tell you that it also, does some fantastic turns. If you have a look at that date there, that's the 18th of December. So we're now coming up on a 12-month anniversary for the US dollar index, and it's had some pretty reasonable turns using time by degrees and using seasonal dates. So all I'd put together is that, we are running into that date, and we're definitely looking for a top on the US dollar as opposed to a bottom. And just I don't think all the problems from the US dollar have gone away. And it's certainly had a good strong run based upon the the idea that Dubai is it's the end of the world in Dubai and all that sort of stuff. But reality is that it's it doesn't look as strong in my mind, particularly technically and the fundamentals as well. So if that was to occur, we'd probably start to see the US markets unwind. So let me get back to my other screen. All right, so we'll take a look at Newcrest Mining. So we've seen, as we know, strong move in the gold price to the south side. We've obviously seen some gapping down. We're seeing a bit of a recovery today on the market, assuming that's today's price, which it is. Interested to see what the volume's doing there. See, that's a good move up, but obviously it's on pretty low volume. So the volume's really been, getting rid of this stock at the higher volumes. It has fallen away, and maybe we could start to argue that we're forming a little bit of a base there, using volume alone as a little bit of a picture. Putting an idea together as far as retracements is concerned, we're now back above the 50%, so we probably have to rate that as being relatively, in a stronger position. The market's run up for 30 days. It's now, if it comes down 15 days, well, that's going to put it into the 18th. Okay, so 50% time in price. So maybe this market's going to do a little bit of sideways before we start getting something out around about the 18th. But for me, once again, like gold, I think the bigger picture trends are looking like a higher move. And if we do get a turnaround in gold, and we do get a turnaround in the equity markets, where we get some certainty, I think you're really primed. If gold, as well as the S&P 500 and the US markets get going, you might be looking at this as, an ABC in conjunction within the bigger picture. So, we're talking about, the same sort of run repeating in time and price. We said it's about a 30-day run. 30-day run's going to put us into the, so all I've done there is I've taken the A to B range in terms of time and price from memory. Yeah, so it's 31 days. So interestingly enough, if we add 30 days to where we are right now, assuming that remains a low, we're into the 8th of January, which once again sort of seasonal date area or Gann's he talks about it in the seasonal date discussion. He talks about stocks will run from December into early January. He doesn't talk about why early January is all that important. But as I said, for Darren and Des and I'm just trying to see, and Robert, you guys who were at the Master Forecasting Summit, you'll remember that Tim in particular had a bit of a chat about that area and why that sort of has some significance. Everyone else doesn't. You don't need to worry too much about it. It's just some extra confirmation that early in January you might see some fireworks. So it'd be interesting to see how that unfolds. So I guess just looking at the general position of the market, we are coming up towards this sort of little double top area. Okay, but we might yet test those tops, particularly if the market comes together in the way that we're expecting. I guess I'm also looking at using sort of we're going to talk about some speed angles, but I guess one thing that I'm seeing is how savage the run was down from 08 into there, and then if I not delete it. We could be watching that time frame. I'll just create a parallel. Now, this is a trick that Sinan taught me, is to actually get a mirror of this, is that you copy that one over there, so you reverse the arrows, and there we see we have a sort of an inverse V. Okay, so you're actually getting a speed angle that reflects on the way out. So we're certainly moved away from that speed angle. One of the things I guess we could also play around with, which we've talked about already, is I'd be balancing time from that top to that bottom. And I just want to make sure I'm getting that absolutely right. So we know that the top there is the 6th of March, which we know is an anniversary of the all-time low. Well, no, it's not, sorry. Oh, yes, it is. No, the recent top is 6th of March and 24th of the 10th. 24th of the 10th, I've got it. That's okay, Darren. Just drop me a mail and I'll refresh your memory if you need to be. So you've got 230 days and you've now got sort of, another projection. So if I'm going to look at the 50% points, I was just seeing if any of that balanced out into, well, that's working pretty well, I'd have to say. 50% of that time frame's nailed that top. All right, another 50% of that time frame, well, within a bit of a fudge factor, about a week out. Another 50% of that time frame, pretty much called the low that was the 2nd of the 10th. That's 3 days out. So I think end of January we could definitely be putting some some emphasis on that, and that was something that Ashley was saying. End of January as being a place to watch. So early, I'd definitely be looking at that though as potentially an ABC on the bigger picture. So keep that in line with and just doing standard time and price alignment. It's done 31 days up. If you expected it to run out from C, you'll find that it's going to bring us into the early part of 30 days. Will bring us into, as we said, about the 8th of January. So anywhere in that sort of 4th to the 8th of January, if we've got this market hitting 100% or anything silly like that, I think that'd be a very good place to, lock in some profit along the way. So how would you consider trading this? Sort of, we could set up a speed angle in line with where we are now. So getting into that third dimension work of speed angles, if we're going to pop that along there, well, currently we're trading below the speed angle, but we're starting to sort of get back towards it. So while ever it can hold that angle, what would be, I guess, throwing it out to you guys, and if I just jump out, I'll leave the chart up, but I'll throw it out to you guys to, challenge you how you might consider, trading something along these lines. What would be the implications or the problems that you'd be facing trading that sort of repeating move? So what would be an entry signal that we could use if we were comfortable that this was a low? And I'm not saying that's absolutely the case, but if we were comfortable that was the low and we were following that as an ABC on the bigger picture, balancing time and price, what would be some of the methods we could use to trade it, I guess is my question for you. How am I going to capture some of this move? I'll come back to camera. You've had enough time to see the chart, and with any luck, you might even have your own open as well. So I've thrown the scenario to you, which is that we might be seeing the beginning of another upward leg on Newcrest mining. I'm throwing it open to you guys. How would you consider trading it? What are the options? Yeah, maybe a third of the average daily range behind the lows. Bit adventurous, I'd say, because probably a third of the average range. I'm just thinking that's every chance we're going to get stopped out. I'm sort of thinking something that's got a little bit more technical structure. So rather than just jumping in where we are now, because we haven't got confirmation, yeah, we've got to get some swing bottoms, as Mark's saying there. So we do want to see some swing bottoms forming. So maybe the first higher swing bottom out of there could be, exactly what we're after. And Darren's put it on to me, and he's absolutely given me exactly what I wanted. So the first high bottom and then trailing stops behind a 2 or 3 day swing chart bottom. For my mind, I'm thinking definitely first high swing bottom and trailing stops beneath a 2 day swing chart. So that might give me the ability to hold in for some of the big moves. Hopefully I haven't lost everybody else. Annie, I've got you. You guys going okay? Seems okay from my end. Working on both my machines. Yep. Okay. All right. Maybe just a glitch in the matrix for you, Annie. So let me know if you're not there, or no, it's a bit hard to say if I'm not there. I'm not there, and you can't tell me. But seems all okay from here. So I'll just reiterate what I was saying there, which is that first higher bottom could be yeah. So 40.50. So Richard's. Thanks, Annie. Richard's brought in something. $40.50 is the all-time high. Could be a temporary stopper. Absolutely. So if we can get into this trade where we let me get the prices. So we're at about $36 now. If you can get it up to that old top at 40.50, there's still some $4 move in there. So, and the 17th is 45 and 90 degrees from top to bottom. So that's fantastic. So we'll have a look at that in just a sec. I guess what my thoughts were, and Darren hit the nail on the head, is I'm thinking first high bottom, maybe openers rules, and the other thing I'm thinking is trailing stops behind swing bottoms along the way. Yeah, look, Linda, that would be a fair assessment. Is if it starts to gap away, would we look for along the openers rule? Absolutely. I guess I'll bring the chart back up and just show you there's only one small problem that I'm seeing, and I'll get the chart back up so you can all see what I'm talking about. My only concern is that we've got this little area here where we've got a bit of a gap, and so my concern is that I'd really want to be I'd want to be set in the trade before I reach that gap, and then I'd want to let it have that opportunity to get into that gap, and then probably move up and down and fluff around. There is a first high bottom, yeah, absolutely. Darren's right. That is actually a B, C higher bottom there, but I'm arguing, I guess, from here, assuming that we haven't all jumped in. A couple of little subtleties, I guess, that are important to note is it's closed this little gap. So today's data closed the gap that was sitting in there. So we've managed to close that first gap, and we're now got this area here that we'd want to handle. So I'd probably it'd be nice if we could touch that gap, give you a higher bottom. I guess let me draw you the perfect scenario of what would be just the most perfect situation going forward. Is let's say we got another couple of up days. It touched that gap, and in touching that gap, let's just say it's tested it. It's had 1 day down. Let's just find the trend line. We've had 1 day down. That happens to line up with our seasonal date. So now we've got an A, B, C. Let's call that the middle of the month. So if I throw that down there, let's say that's the 18th, 19th, somewhere around that as being my seasonal date in the month of December. And now I'm in a situation where I can jump in on a first higher bottom. Let's just say it does something silly like that, and look to trail stops under swing tops or swing bottoms into around about that January date, which we know says the 8th, but we know the Christmas rally can sometimes be over by, say, the 4th or the 5th of the month. So if we could get it somewhere up around those tops, trailing stops underneath swing bottoms, 1 day or 2 day, and away we go. Now, just to answer the other possibility is if it keeps gapping away, and when we start getting long the openers, well, if we got another gap up tomorrow, so let's say it gave us something along those lines. So we've got a nice gap up tomorrow, gave us a nice long the opener signal. It might be worthwhile to take along the openers. Now, of course, we want to see gold moving, the right way. But as we said, the 18th of December may be the date that gold decides to get its act together and the US dollar starts heading lower. So maybe just a small little creep in price. But if it does get really aggressive on the move and it does gap hard, you might have to take along the openers and just put your stops behind the gap, and then just wait to see it unfold into the new year or into the early part of the new year. But that's probably not an optimal strategy because it's a little bit hard to just leave stops under gaps. You're going to want to move them. So just keep in mind that little gap there will have a part to play. Richard's pointed out that top at 40.50 is certainly a strong one. So let's not sort of discount that. Sorry, not that top there. Yeah, that top over here, that 40.50 top. I guess if I put it to you, if you could get in long anywhere where we are now and get up to $40.50 on or around the 4th to the 8th of January, we're talking about a $4 move there, $4.50 move. That'll certainly, you lob into that in the right way, and I think you'll certainly find that it's got some juice for you. And just to answer the point, if I click on the 17th, just talking about the degrees running back, So if we got a higher bottom, and so if I line that up on the 17th, let's say we get a higher bottom there, got 45 degrees back to the low and 90 degrees back to that top. So yeah, that was another point I wanted to raise, Mark. Thanks for pointing that in. Is that let's just delete that. So the 17th does have a little bit of harmony about it, particularly for a higher bottom. Would you consider that a 4-day island? Now, what we're arguing here or discussing is that a 4-day island reversal? Technically, no, because the high of that day is 35.38. The low of that day is 35.30. Had that been 8 cents higher or above, you could argue. Now, I'd argue that it is an island. But it's not a textbook island. It's more of a pseudo island. You know, you're not going to get anyone, you know, guarantee that that's an island reversal. But it could be said that I reckon you could sort of drive. You know, I always use this analogy. Can you drive the boat? And I reckon you could just fit a boat through there and then go around the island through there. So I'm not going to say it's classic, but I would be comfortable to say it's an island of sorts, but not your classic sort of island reversal pattern. All right, so hopefully that answers that part for you, Mark, because I think it's definitely a possibility. And then you've obviously got this scenario where, well, we could be running out of, you know, that as a low, because that's where the swing bottom is. And if that's the case, well, we're currently running quite strong. So I think there's some interesting times ahead for this market. I think it's very much a case of staying smart. One of the things I guess we haven't really sort of thought about, you know, when setting up this market is probably getting a lows resistance card in and just making sure we're happy with where the market sits. So if I'm going to set up a preset Gann square back here, I'm going to sort of set it up at $1.13. I know it's $1.12.5 or whatever, but we'll just use $1.13. It won't make too much of a difference. So we should have a strong awareness of where we are sitting in the lows resistance card. And let's get a few more of those and a few more of those. And we'll zoom forward. There we have it. So just sort of zooming in on where we are now, the argument's going to be, well, where are we sitting in terms of the low there? Well, I'm looking at that saying, well, it's pretty close, depending on how you adjust the lines, and this wobbles a little bit. But if you get it set there, you see that that market's essentially given us 2 double bottoms. That's at a 50% point of the square. All right, and if I put, and we're going to do a lesson on squares, so we may as well introduce the concept now. So if I go back to the original square, which is frustrating, but we have to, if I get rid of the horizontal lines and I put the vertical lines in, or sorry, the diagonal lines, we're actually going to see the position of the square, whether we're in the strong or the weak part of the square. So if I jump in and zoom into where we are here, the market has, on a couple of occasions, it's got into the neutral part of the square, but you see here it came through into the neutral, couldn't, and then got into the strong part of that square and closed again in the weak, had another crack, fell on that diagonal, and at this stage it's now, you know, we'll get rid of that date, but we've come out of the strong part of the square. Technically we're back in the weak part, but if we can get a close above that diagonal, and then you can see we're moving through squares at a pretty rapid pace. And isn't it interesting that if we run our time count off there, so remembering that not only are squares useful in terms of price, but we're running a 113-day time frame. We run a 113-day time frame off that all-time low. We're looking at multiples that are, you know, taking us into about the 6th of January. So for me, that's really giving me some confidence that that, you know, anywhere from the 4th to the 8th of January will be a place to watch. So I just want to make sure that that date is set correctly, because I don't want to sort of work out that I'm on the wrong date, which it looks like I am. I'm well out, so that's a problem. So we best get that set up. So I'm 10 days out, so that's going to throw the day count all the way out. So, all right. So if we look at that time frame now, the 27th to the 12th. Well, there you go. Pretty close, you know, within reason of our sort of seasonal date, but no, you can't really call that a victory at this stage. But I guess if we look at our tops, this top just stuck its nose into the weak part of the square, all right, and fell away from there. We go and take a look at the all-time high, which isn't that one. So we sort of jumped to squares a little bit earlier than I expected. But if you take a look at where that market made its top, it pretty much hit in the neutral part of the square, but pretty much hit right on the diagonal that as it sits in play there. So, and then the market made lower tops, you know, and got into the weak parts of the squares, and then fell away, as we know. So, all right. Let me just bring up a fresh chart on that, because it's getting a bit cluttered. All right, so that's kind of where we're seeing the market sit now. I guess if we're going to look at the volume, you can see that volume sort of, it's still liquid. You know, we're still doing, you know, about what do we got? 1.7 million shares a day. So it's certainly got enough liquidity and depth. But you're going to find that that's going to start to fall away. It'd be interesting to see what it did last December. And just to give you guys a practical, understanding, we'll have a look. Last December, it actually picked up in volume. So that throws my low volume debate out the window. But as you can see here, through this late December period into the early January period, you can see that the volume just fell away. So you're talking on some days, how many? Yeah, 1.1 million, 1,900,000. So that's where, prices were going higher, but you'd see them here on low volume. You can't say, oh, well, that low volume is going to keep me out. That period in volume is purely because the market goes on holidays, and most of the people generally take a little bit of a break, be it the institutional community as well as the private traders, and that's why we get that fall away in volume. So if you see that again, don't be too panicked, and even if you see an increase in volume, well, that's obviously going to be a help for us. So that's kind of how I'm seeing this market rolling out, and we talked a lot about Gann angles last week, and we'll slot one on the bottom there, and we can see it's holding as we see. And this little subtle sign, I guess, is that two things could happen, I guess, is that we've seen it hold here, we've seen it hold here. This is a little subtle sign of strength for me, is that when a market runs from one angle to the next, hits it again, okay? So, we can note the places where we've seen it working. So it's working once there, working twice. The third time is that it's come back, is that it's kind of looking to me like this scenario where it's ready to jump, where it didn't get anywhere near the angle, and then it's pulled back again. So what will be something to be watching is to keep this as keep this angle, as a safe chart page. If we get a jump up, watching to see whether it comes back and test that again in the new year, and if it breaks that, well, then it's definitely a weak market. But if it comes back and bounces off that again like it did here, it could be another buying opportunity. But yeah, plenty to watch, and I think there's reasons definitely here to be long, and I know that sort of probably goes against the standard little idea of what our swing chart's telling us. At this stage we don't have a confirmed trend. We've got we've got a fractionally higher bottom and a higher top. So our one-day trend is now technically up. Our weekly chart is obviously up, and the other sort of 2-day and 3-day trends I fancy are probably in support of what we're talking about. No, 2 days uncertain and 3 days up. So there's only one of our 4 time trends that's actually proving to be problematic, and that's the 2-day chart. So we can probably ignore that because all the other 3 are telling us that we're heading higher. All right. So coming back to you guys, does that enable you, I guess, to sort of tackle, Newcrest mining over the next week or two? I guess I've given you the insights that I have at this stage. Obviously, all subject to change. If the market falls out of bed consistently, well then we're in a situation where we might have to reassess. I'll try and keep you updated on the discussion boards if anything changes dramatically that would cause me to vary that view. But how does that sit? That sort of simplicity versus complication. I guess just looking at the simple things and then trying to build the bigger mapping around it. As I said, I think the seasonal date will definitely be the key. If we're pushing higher after that date, definitely go with the flow. If we're pushing lower, well, that could be also a sign. But yeah, questions, comments, or queries, because that's hopefully going to give you a trading plan for the next 2 weeks as to how to tackle that market. All right, Elizabeth's saying that's all good. So I guess my question that really sort of sits in the back of my mind is, do you feel, Richard saying you watch the tape again? Okay, that's fine. I'm sort of trying to make sure that you would feel comfortable to execute. I guess that's the whole question. And if you're not feeling comfortable, if those patterns arrive, then happy to sort of extend our discussion in that regard. But that's really what I'm waiting for to see. All right, fantastic. Because I want. Do you have the entry price yet? Well, as I said, if I didn't take the higher swing bottom, and it's probably going to, if it all comes together, it's probably going to look like we should have jumped in today. But yeah, look, I think it's very much now having to go back, sit back and say, look, you've got all your advanced entries from your number 1 trading plan. The simplest thing is going to be to get the next high bottom entry, even though it's not an ABC trade. There's a good chance it won't be an ABC trade. So what I'll say is that, that next high bottom entry will definitely be one to watch. Linda, it's a case of if you, so Linda's sort of saying you're worried you're going to get in early. Well, worst case scenario, like David used to do, if you get in early, keep your stops tight. And if you get stopped out, just be prepared to jump back on if it keeps moving. If you're going to get in early, and that might mean, getting in on intraday data, for example, you want to keep your stops very tight. And then, if you get stopped out, make sure you're ready to have another crack. Ashley's saying if gold moves up and the market falls, will NCM follow gold? I haven't got a coin handy, so I can't flip it. I'd have to lean to the tendency of yes, because obviously our market does, Newcrest does tend to track gold pretty religiously. One way we can check that just for correlation is to overlay them. So I'll do that for you now, because I can't give you a straight answer to say yes or no. So I don't know how well from memory, they correlate pretty well. But just let me get a brand new chart up. So I'll get the gold contract up. So what I'm going to do is overlay the gold market over the Newcrest mining market. Well, I think that's a pretty good indication. You know, you've got gold in black and Newcrest in green. So you generally, if I make them a weekly chart, I think we're comfortable to say within a tolerance. You know, you'll find that gold, you know, especially in this last run, you know, here you've got gold, you know, going higher, but Newcrest even pushing higher than that. But I think we'd probably say that that would be, to use the system design term, that would be positively correlated. I think you could argue, going back and having a look at the two. So I don't know about you guys, but I'd be comfortable to say that that's probably the case. All right. So if gold pushes higher, Newcrest should likely go with it. All righty. So let's take a quick squizzy at the Aussie dollar. And we don't want to look at a line chart. There we go. Let's have a look at a bar chart. All right, so Aussie dollar, we've seen it, you know, continue its sideways pound pattern. Now, remember that we've had a return to strength in the US dollar, and you know, we had this real sideways sort of you know, movement in the market. Now, if I try and pull out the sections of this market, you know, you could probably argue we've had one section, two sections. You know, that's pretty hard to call that the first section. So I guess I'm arguing with the sections discussion. You could say that's the first section. That's the second section. Maybe we are needing a little bit more of a pullback before we can gauge on the third section. As you can see, the second section's from a speed angle perspective is certainly slowing down, and from that case, it's you know, it's only run out about 75%. So it's taking longer to get there, and it's you know, it's certainly that doesn't make sense. I've drawn the different lines. I thought I copied and pasted them. There we go. So that'll sort of tell you that we're weaker than the first move out. Timing wise is pretty good. All right. So that was sort of telling us where the end of that orange arrow, but we just fell a little bit short. So if there is going to be a third section in this situation, often what can be said is it generally ends up being about 50% of that move. So let's say we get a pullback to here. It might only, let's say that's the low there. You know, we might only get a run to, you know, 98, you know, as far as that's concerned. So I think we're waiting for the US dollar to sort out which way it wants to go. And in doing so, we're in a situation where once we have an idea of what the US dollar is doing, our market might have a bit of a recovery. If the US dollar gets strength, well, you can expect our currency being commodity-based to suffer. Just looking at the run-up and the run-down, just in terms of time and price, you know, we've done about a 75% retracement in terms of price with 13 days up. We're now sort of, you know, best part of 26 days sideways, all right? And, you know, the previous run up in terms of price, you know, we failed right at that 50%. So at this stage, I could just continue to see this market producing some sort of range-bound activity, waiting definitely for the US dollar to decide what it wants to do. And really, as we sort of talked about last week, waiting for it to break out, you know, you could probably argue to the upside and to the downside. It could come back and test sub 90 cents, come back down and test that 89 cent mark. And if it did that, maybe a little double bottom and then followed by one last little leg up. But one of the things that our master time cycles tell us is that if you go back and do the work, master time cycles, and I certainly remember some of the work that I've done, is that January has generally been a poor month for the Aussie dollar in the sense of we often get a December move into January, and then sort of towards the end of late January, we get quite a vicious sell-off. And if you go back and do that master time cycle work, so we know that January, I'm trying to remember the exact work, but I know we did that master time cycles lesson, and I know January was an area that we worried about. So Des is saying the 1 by 1 off the 15th of the 7th, 08 top intercepts recent top of 16th of the 11th, 09. In the Auburn Motors lesson, Gann says that if it doesn't break through the 1 by 1 after a major high, then the market is weak of interest. Yeah, 16th of the 11th. Yeah, absolutely agree there. That Auburn Motors lesson is one that is a great lesson to do. I know Tim's a big advocate of that. He's done a huge amount of work there. Of interest, 16th to 11th, 09 is 480 degrees from the all-time high, 355 from the real low. Okay, No problem. So we've definitely got, you know, we've definitely got some interest in that market, and I must admit, I think if there is any upside potential left to the Aussie dollar, I think there's I think there's one leg potentially, and then we might, you know, 2000 and start of 2010, we might see that market starting to unwind a little bit. But definitely go and take a look at what Des has put together. Des, would you mind posting maybe if you could put that chart together and post it on the discussion board, that would be great. I've got another message here. I'm just going to put it together. I'm just going to have a read. I'll put some pictures in a thread on the forum regarding angles for the Aussie dollar as examples, some good ones for current market. Yep, okay, so birth the contract. Yeah, I think I saw that, David. So I just have a look here. I've got the forum open. Oh, you must have. Okay, you've got in there quickly when David's put some work there on the Aussie dollar angles. Okay, fantastic. So I won't bring it up in the forum now for everybody to have a look at, but David's put some great work on there with regards to lots of angles. Jeez, you've done well. It's we've got Charlotte's Web. It all makes sense to me, but it's I tell you, there's a lot going on in those charts. We'll have to do a fair bit of study on those. So rather than me trying to dissect them at the moment for the benefit of everybody, can I you know, ask everybody to go to the forum? And as I said, I'm in there now. David's put a huge amount of work on there, and as far as angles are concerned, so go and have a look at that, and we'll have a chat about that when we next get together and just see what we can do from it. That's fantastic stuff, David. Thanks very much for putting that on. I guess that's the sort of stuff that you know, is really where I'm hoping you guys will drive our discussions, is get in there, do some work on it, throw some angles around, throw the work around, and see where it takes us. So, but definitely I'm short-term neutral on the Aussie dollar, but I guess with the stuff that Des has mentioned, stuff that David's put together, I guess I am, and knowing the master time cycle work, I'll just see if I can quickly recover that work. So if I jump back into profit source, I think we definitely saw that the January period on the Aussie dollar was not a fantastically strong period. So I think we were sort of doing some master time cycle work, which will put us back into 2000. Remember here we saw early January, so about the 13th of January, Aussie dollar absolutely fell out of bed. Okay, so we're talking 67 cents down to 57 cents, followed by the low that was eventually sort of 47, 48 cents. So massive sell-off there. And then if we go back to 1990, just using 10-year and 20-year pictures. So if we go back and take a look at 1990, oops, you can see that the market really sort of struggled into the early part. And there we go. We've got the 22nd. You could argue that's the true top, the physical tops back here in middle of December, and then sort of December seasonal date. But as you can see, it really sort of struggled into the early part of January, and then once again had a pretty strong fall into what was the middle of the year, so or early part of the year in that regard. Then it did push away, but I think those two patterns alone, given where we are currently, any sort of move out here into January next year, if it did do a 50% of a previous run up or something along those lines, I think you could argue it was we might get a definite time to go short. And it's funny, I do have some time frames and some work that I've been doing on the US dollar that's sort of pushing me out into early February. So late January, early February, those sorts of things all get me excited as far as an area to watch for the Aussie dollar, and we'll all be together at that point anyway. So they'll definitely put that on our calendar as for things to watch. All right, so as I said, unfortunately, I think out of our two markets, if you're going to talk about potential setups in the coming weeks, I think you've definitely got Newcrest Mining as a far greater trading opportunity than the Aussie dollar. But keep an eye on the Aussie dollar, because as we said, if we get that sort of little surge into out of December into January period, and if we can line some time frames up there, we're definitely in a situation where we've got potential for some shorting. And if those moves that we saw based on the master time cycles unfold, we're talking some greater than 10% moves in the currency, and that's obviously a pretty significant move if you can capture some of that using the leverage products. And so maybe that's telling us, if you're going to buy your flat screen TV, maybe prior, Christmas sales or Boxing Day sales before the dollar shifts, maybe it's time to go and buy all those new things that are affected by currency. So I better get Mac together and get my new cars organised before the Aussie dollar slides. So there you go. All right, so questions, comments on that, on Newcrest or Aussie dollar? So, as I said, trying to change the style of how we analyse them, get more into sort of the nitty gritty and how I pull them apart. That's exactly how I'm seeing them at this minute. And I've sort of given you a plan, I think, on how we can tackle those in the coming weeks. And as I said, go and take a look at the work that David's put on the forum. And Des, I know, will be good enough to post that chart up from the Auburn Motors lesson. just on that, if you haven't done the Auburn Motors lesson, Tim Walker is a great guy to get the data from, and he's a big advocate of that lesson, and I'd certainly encourage you to go and take a good look at it as well. All right, so into the bottom half of the second hour. So we've done a fair amount on talking about the analysis, and I think that's really critical because I guess going back to your original surveys that you put together, most people I guess are comfortable with techniques, but it's just sort of seeing them folding in together and in application on a week-by-week basis, and that's why I don't want to lose the focus of being able to evaluate what those markets are doing. We've got some trades on the SPY potentially, and some stuff on gold we looked at. We've got the December seasonal date. So even though we're focusing heavily on 2 markets, we've got 4 other markets we talked about tonight for potential trade setups, because we do want to turn this analysis into dollars. It's not just meant to be a discussion that we get together on a Tuesday night and just talk about the markets. I want to see you guys feel confident enough to do something with it. All right, as I knock my camera over. All right, there we go. So I guess what I want to do now is, and that's what I'm hoping to share with people, Linda, is just to get that sort of, mindset of how I tackle it. And, it's always good to, talk amongst, and that's why I'm always happy if you guys say, look, I don't agree, or I disagree, or I don't see that, or, that doesn't make sense, or it's a long bow, or, how can you draw those 2 conclusions from that one piece of information? Then, I'm always happy to have those chats. But assuming that we're comfortable with what we've discussed so far, what I'm going to do is I've got a few slides just from my PowerPoint presentation, which I'll load up. Really, I don't want to spend too much time on them. They're just really a quick recap on some of the things. It just gives me my talking points, I guess, to remind myself. So we're going to talk about squares tonight, and reminding ourselves that squares are a fairly complicated, application of Gann stuff. They are 3rd dimension tools, so by rights they use time and price in their calculations, and we have a number of different squares that are relevant in our discussion. So obviously we use market squares, so these are derived from individual markets. So for example, the square of 458 on the share price index, the square of $9.75 or 975 is the square that I use on oil. All of those market squares are absolutely critical. I'd use a square of 147.27, which is the all-time high. You could be using a square of 68.80 on the share price index as markets. $40.50, we could be using that on Newcrest Mining. So do I use 4774 on the dollar, or does this get adjusted? Absolutely, because it trades to 4 decimals. That's what I'd be using as the low. Now, there's a couple of ways we can handle that. Is because that ends up being 4,774 days, and obviously points. We can muck around with the point size a little bit to make it more relevant, and we'll have that yarn, I guess, when we get to it. Market squares are obviously specific to each market, so you can't take the Aussie dollar one and apply it to Newcrest Mining. All-time high and all-time low are absolutely the best place to start, and I wouldn't really require you to tackle too much more than that. We know natural squares exist as well, so the square of 52, which comes from 52 weeks in a year, square of 144, which you argue is 6 multiples of 24, 168 is 7 multiples of 24. The square of 168 is definitely something that David enabled in the in his discussions with Gann. You definitely won't see that in Gann's work, so I've got to credit where credit's due. The square of 144 is something that many people are familiar with, and I can tell you, as I've already told you, Newcrest Mining and the gold market do operate very well in the square of 144. Natural squares relate to all markets, okay? So in other words, I can put a square of 52, 144, 168 on oil, on gold, on the Aussie dollar, on Newcrest Mining. We want to be, I guess, careful in how we apply them, because if we run squares off every major high or every major low and high, we really do run into some battles. So Gann also used his squares as a master calculator, all right? So we're talking about as an overlay or a master calculator. We're not going to touch on master calculators tonight, but we'll definitely do that in a session. They're certainly not a standalone tool. I did meet one gentleman over the years, and this would be now going back 6 years ago, probably. And I think it was one of our very first Gann masteries, and he was one of David's very old students. And he said that he basically primarily traded the SPY off the square of 144, and in his words, did fantastically well. Now, he's either a genius or a liar, and I can't vouch for either of them. But what I'd say is if there's a way to trade purely off squares, I don't know of it, or I'm not bright enough to do it, because squares can lead you down a garden path. So what we're going to try and do is always align time and price. For example, if we're looking at the Newcrest Mining market and we want to see that low that we currently have in the market, we'd want to see that in the strong part of the square rather than the weak part of the square. If we get into early parts of January next year and we're in a weak part of a market square or a natural square, that could give us good confirmation of a place to jump out. So we're going to investigate how you can judge strength and weakness in the market using an overlay. So Gann angles run from a bottom forward, and we can obviously put those together. We know that they're 1x1s, 2x1s, 1x2s. If we run a bottom going forward and a top going forward, and a bottom backward and a top backward, we actually start to end up with the overlay of the square that we come to know as being the square in the market. Now, hopefully my dear wife's going to pick up the phone. The answering machine's got it, so there we go. So I guess when we talk about that as an overlay, it gets very, very complicated if you include all of the lines. And so what my advice has always been to keep it simple, just mainly to use the diagonals, okay, which are the the black lines here. If you start using all of them, you will definitely run into calling every major top or bottom that's ever existed. We can also run the percentages. So in this case here, like we do with the resistance card, that's 25%, that's 50%, 75%. And then we can also put the vertical lines in as well. So we'd be running 25% in time, 50% in time. And I guess they're very important as well because the time frames on squares are just as powerful as the price is concerned. So we often refer to this area of the square up the top here as being the strong part of the square. So we're really looking here for lows to sit in this area, okay? So if I expected a low to come in on the market on a certain date, I'd love to see it sitting on the square here. And if I'm looking for highs, we really would say that that's the weakest part of the square. It's underneath the major diagonals and all of the major lines. The other two parts which aren't highlighted, which you'd argue is the neutral part of the squares, they are certainly harder to read, and how we handle that is obviously to put more weighting on the other emphasis or the other tools we might be using. So we say the market's strong when it's above the 1x1 or the main diagonal. We say it's weak when it's below that diagonal. All right. So strength and weakness is a pretty relative term. So what I want to do is, I guess, show you just a very simple way that you can create a spreadsheet to give you a hand. And I guess I'll set it out in your mind, and then we'll do the work and fill it in. Is that if I bring up my screen, and I've got a spreadsheet here. So if that should hopefully be up on your screen. So one of the things that you can do on a day-to-day basis, let's say we're in, let's say this is Newcrest Mining, and you were sitting on today's date. So today's date's the square of the 15th of December. So I'll just highlight that. So if we came across to the square of 52, we could maybe use a color. So let's say we're running a square of 52, and here's where you're going to probably have to keep separate tabs when you're talking about where you're running it from. So this square might be from the all-time low, or let's say, which is the 3rd of December. So we know that's the all-time low. So what we do is we'd say, if I run the square of 52 off the all-time low, am I sitting in a strong or a weak part? So we might rate it as being strong. So that's it's in the green. We might find that the square of 144 off the same date is sitting in the weak part of the square. Oops, wrong cell. In the weak part of the square. And what you might do is, just for a small period, is just to go and track 52, 144, 168. Now what I've done is I've said, all right, what's the all-time low square from that date, say, and then you might track an all-time high square. Now then you might create a different reference date here. So you might take the same spreadsheet. So if I just copy that, I'll create a copy, and I'll drag that across there. So we now might have a different date. So if I jump into Newcrest Mining, I might say that I'm just getting a date here. We might go back and pick on the October 2008 low, which was the 24th of the 10th. So we could put in here 24th of the 10th, 08, and then what you could do is go in and rate the strength of the market based upon those days. So you might say, off the 24th of October, this could be weak or strong. What this does is this gets you into a routine of checking strength or weakness, and then ultimately, if you've got a pressure date, so this is where I tend to use these spreadsheets, I'll have a pressure date marked in, let's say it's the 20th of December, that's the date I'm watching. I won't make it green, we'll make it purple. You can see I'm an Excel guru. So we might have the 20th of December as being my target date, and then what I'd want to see is, let's say I'd want to see it sitting in the strong parts of the squares, and I have agreement with all of my 52, 144, 168, all-time low and all-time high square. It's sitting in the strong part of all of those squares, so therefore I'm more comfortable to tick it and say, all right, well now I'm expecting a bottom because I have an alignment. And if I could do that not only on the 3rd of December, I could do it on the 24th of October, I'm getting this situation where I'm able to rate the strength or weakness in the square. I guess the reason I do this, if I just jump out of this and turn the camera back on, oh, the camera's actually still on, there you go. The reason I do this is because you can't keep a square of 52, 144 and 168 off tops and bottoms all on one chart at one time. So even if you were keeping a hand-drawn chart, I know, Darren, you were saying you keep the square of 458 always in the background. That makes sense because it works so well. But you also would want to know where it sits in the square of 458, but also where it sits in the square of the all-time high, for example. And you're not going to have two of those on the screen or a hand-drawn chart because it's just going to have squares everywhere. So what I try and do is I try and create one saved chart page. So you set up a square of 52 for the 3rd of December, a square of 144 for the 3rd of December for the all-time low, a square of 168, and each day you just go in and fill, is it strong? It takes 30 seconds to go and just look at that chart, update your spreadsheet, and eventually what you're going to start to see is you're going to start to see correlation of the turns. So if you say, I know it turned on this date, this date, this date, you can say, where did the squares align? And, were they strong or weak? Was I getting mixed signals? Was I getting conflicting signals? And this gave me confidence with that sort of every day doing that work on our chosen market of being able to, and I've done it for oil, is that to be able to say, I should expect when I have a date based on time, 90% of the time I'll get correlation with the major squares, or 80% of the time I'll get correlation, or 60% of the squares. So what it does is it teaches you whether you should go with what the squares are confirming, or whether they don't correlate, and they could be inverse. You might have a signal on all the squares that says not to trade, but the trade ends up being profitable 90% of the time. So does everybody sort of, I guess in my convoluted ways, I've kind of never sort of shown that to people before. It's sort of one of the things that I thought I'd share with you guys. It's too much to do it again, mastery. Imagine sitting down and getting people to do 6 years of, tops and bottoms on that sort of thing. We, be Excel'd out, out the back door. But can everybody understand what the relationship to that spreadsheet is? And so Darren's saying, when dealing with smaller squares or markets that cover large ranges, how do you rate strong or weak? The daily range covers both the strong and weak area. Do you look more at where it closed? Absolutely, where it closed. Now, if I'm also seeing the market move through one square a day, let's say, for example, the square of 144 is $1.44 on Newcrest Mining. If Newcrest Mining's moving, $2 a day, the square of 144 is not that relevant. So what I then do is now change point sizes. So I might make it, instead of 1 cent per day, I might make it 5 cents per day. So what I'm now seeing is 5 squares of 144, where I was seeing 1 square. And we'll take a look at when we do that. Does that answer that question for you, Darren? Because I know exactly that problem that you've got, which is that, you've got a tight market, massive ranges. And, when I'm getting, can I tell you the square of 144 on oil is not that relevant when you use 1 cent as your marker. So, can anyone tell me the last time oil did $1.44 in a session? Well, yeah, every other day. So I can't use the square of 144 off the all-time low on oil and hope for the sort of success. So I'd much rather be using a square of, what's 5 multiples of 144 for, it's, get a calculator, it's too late at night to work that stuff out. So what I'd be getting is, in terms of price, is I'd be getting, 720. Now, 720 is obviously a number that, do the simple maths, half 1440. 720. So when you look at that, 720, is that a number that you'd be comfortable to work with? I'd say absolutely. 720 is absolutely a number that I'd be comfortable to work with. And if let's say a market was doing $14 a day, you used to calc as well. All right, I was going to give you the credit of being clever, but you're better with numbers than me anyway. All right, so getting back just to relate it to this spreadsheet, I guess what I want to do is make sure, you don't have to use that as a mechanism. That's just one way that I track it. And you might want to use something different. But I think you'll see the problem when we jump into the software, and you'll see the problem and why you need a mechanism to track it. And then it gives you the ability to rate the strength of the market. So what I'm going to do is jump in. We'll start with Newcrest Mining. We'll deal with some market squares. We'll deal with some natural squares, and we'll have a play around and see what we come up with. All right, so let's jump into profit source. So we know from relevant points, we've got, all-time lows and all-time highs as being places to commence our discussion from. So there's our all-time high, there's our all-time low. Now, we could do a number of different things. So we'll start with some market squares. So when I pull this apart, we know that the low in there is $1.13. So I'm going to set up a preset Gann square. Now, you can't obviously use the ones that are, when we're doing a market square, you can't use the ones that are automatically built because they're 168, 458, 52, and 144. When you're using a square of 52, Gann does talk about using it on a weekly chart, and I'll talk about that in just a second. But what I'm going to do is use the preset Gann square. I've got my start date. I'm going to call it $1.13 is my square, and I'm going to make my box size the same amount. And so what that means is I'm going to get rid of the horizontal lines, put the diagonal lines in, and what we've got is a situation where, as it started to run out from that low, I'd be testing, well, were these angles acting as support or resistance? And in some cases you can say yes. Now, I look at that top there, straight away you can say that that top was in the weak part of the square, and the fact that it islanded into the weak part of the square and then island back out the other way, and then have a look on the way back down, it stopped on the diagonal, gave you a lower top entry, and as it broke through that diagonal, it fell away like a stone. But that to me is a pretty give-me top when you're using the market square of the all-time low. Now, sorry, push the symbol tree button, so it's just going to load that up. Should push it before I start so it doesn't have to load everything into memory. There we go. So that top, once again, is also weak within the square. Now, you could argue it's very close to the midpoint, so time is acting as a little bit of a supporting mechanism here as well. You'd definitely be watching 113 days on the 112, 113 days on Newcrest mining. Here's one that makes it a little bit harder to read, because you've got the situation here where it's kind of got through that square and it's sort of now sitting in the neutral part. But really, you can see it decided to get its direction together when it hit the time. Top there, that's weak, fell back into the strong part of the square, arguing now that that's so. It does seem to like to sit in the midpoints as far as time's concerned. So we seem to be getting a bit of a correlation there. We can see it sit on that diagonal as well. Time was working pretty well for us there as well. Middle of the, strong in the square, got into the neutral part, so on and so forth. You can keep pulling this apart, but as you can see, those lows there were in the strong part of that square there. So we don't obviously have enough to cover the current market. And so here's where the problem might lie, is that if I stretch this out to cover, let's say 60 rows and 80 columns, we may not have enough to cover the current market. We do. All right. So if I just reset the count or reset the chart scales, we're seeing a scenario here where the market is, well, that top's in the weak part of that square. Okay. So when we were looking at that as a potential top, so I know Richard, I don't think you were with us last week, but you had the 3rd of December, or around that 4th or 5th of December was an area you were watching, and you posted it on the discussion forum. Now, seeing that top make that move into the weak part of the square of the all-time low and then sort of get back down underneath that major diagonal, that might have given you some confidence that you were definitely looking in the right spot. At the moment, if you look at what we're seeing, you've got to sort of zoom in here. What you've got here is, I just draw, and this is where it gets hard because this market's doing ranges that are pretty large. If I sort of just draw an arrow there, that's the strong part of the square. And so the market's come through, got into the neutral part. It's got all the way down here into the, a lot further down, but let's argue where the market is currently sitting. So it got into the strong part of the square here. It's closed once, closed twice, and now it's got back up above those diagonals. And isn't it interesting that it's sort of now sitting on that diagonal, and that's where the market's being held now. Interesting when you play with that date. As we said, we get the 27th of the 12th. So using the all-time low and running the all-time lows card, or square off that, you are actually getting that. So could we go in today and say, well, based on the all-time low, using that mark, we could say that we're sitting in the neutral part of the square. So if I went back to my spreadsheet, I could argue that we're now sitting in the neutral part of the square. Problem I see with this, I always have a look at the average range indicator. As you can see, the average range in this market at the moment is about 76 cents. So it's actually going to move through a square every 2 days if it's moving or if it's trending. So this is where I'd probably have to feel like I wanted to make some changes to this all-time low squares card, this permanent square or market square. So what I'm going to do is I'm going to sort of back how many rows we're going to use. Here's where I might go and make it 5 cents. Now all I've done here is I've gone and made one orange move to one orange move. Instead of being 144 cents, it would now be 720 cents. Now, I can probably not so much want to validly use it in the good old days when it was doing, $3 or $4 a share. But if I bring it into the context of where we are now, Does that give you a bit more clarity? I hope it does, because if you have a look at that, that's a pretty good spot on red hit to give you a low to watch for the market to move from. And we were watching that as a double bottom trade, remember? So we were watching that as A, B, point C. Now that tells me that it's closed in the strong part of the square, and as you can see, the market took off, and then it got into the weak part of that square there. Or sorry, it's not the weak part. Yes, it is. Sorry, it's in the strong part of that square. It's in the strong part of that square. The market made a top. See how it couldn't close or hold in that area there? So it's managed to get its nose just above, stuck its nose under the diagonal, and then it's fallen away. And now this is far easier for us to read rather than trying to use the one squares of 144. You can now definitely agree with me that these two bottoms that we're looking for this market to have a rally from, that little double bottom pattern there, tell me which part of the square is it sitting in? Changing the percentage or changing the scale size to 5 cents. We'd have to argue that that's now sitting in the strong part of the square. And now look what it's done. It's managed to get back above the diagonal and it's closed above. And if we then put together that ABC pressure point that we were looking for, running it out to say 100%, that's going to put it up somewhere in here. 75% is going to just get it into the next part of the square. If we got that in early January, around 75%, early January, 6th of January, if it stuck its nose into that square and gave me a weak close, or it gave me an island reversal or something like that at 75%, that would make me, happy to jump out. We also saw that we had about the middle of January. That's February now, so we won't worry about that. Middle of January is a date if it ran into one of those angles. So, all right, I'll show you the properties box, Richard. That's fine. Just let me go back to the beginning. As you know, you've got to go all the way back to the start. Now, yours might look a little bit different. Make sure you got it on calendar days, not trading days. All right, so I'm running a calendar day square here, not a trading day square. All right, I'll just bring up the properties box there for you. All right, so hopefully that lines up with what you've got set up. So go away and have a play with that. So that's the properties that I'm using on that particular square. All right, so I'll just cancel out of that. As I said, make sure down the bottom here, you're using a calendar day rather than a trading day. Because if you use trading days, you're going to get a completely different look. Well, you won't get a completely different look. You're actually still finding that it's sitting in the strong part of the square. But anyway, calendars and traders both confirm that that's actually not a bad place to be looking. Using a trading day count, look at that. The all-time low date gives you the 22nd of December to watch, all right? So anyway, it's all random. I just want you to remember that. All right, so I just want to take this step by step because I don't want to miss too many of the little important steps there. So is everybody happy? What we did is we placed a market square where we got the all-time low of the market, which was $1.13. I know it's $1.12 in a bit, but I'm happy to go with $1.13. What we've then done is we've used that in context when the stock's $3 or $4, $1.13 is a fantastic move. It's 20, 30% of the stock's price. When it becomes a $30 or $40 stock, $1.13 is something that it's doing every 2 days. So what I did is I adjusted the point size from 1 cent per day to 5 cents per day. So instead of looking at one square of $1.13, we're actually looking at 5 squares of $1.13, which isn't 7.20, that's 144. If I look at 5 squares of 113, I'm looking essentially at a scale that's giving me 113 days in time and 565 cents in price. Okay, so when you get a market that's moving so quickly through your all-time low number, for example, that's when I start to change it up. And I always use, as we've said many times, mathematical proportion 5 or 10. Okay, so I just want to make sure that sits with everybody. Silence is a good thing, but now's an excellent time to erupt with questions if necessary. Okay, so did that? And I guess the conclusion I want you to be comfortable to draw is everybody happy the current lows are in the market based upon the square of the all-time low. We're sitting in a strong part of the square where we could expect this market to expand from this perspective. Now, we haven't checked the other squares yet, but at this stage, we'd argue that it's sitting in a pretty no eruption necessary. All right. Did I say? I don't know what I said. There you go. If I said eruption, I apologise. I probably meant interruption, but there you go. So Annie's happy. How about everybody else? I'll take no as an answer. So if we're all good, fantastic. Just to let me know you're still there. So that stuff is that's the finesse, I guess, of the work of squares, and that's stuff that it's pretty powerful what I've just shown you, being able to get that stuff working for you, being able to correlate it. Can I tell you that what you've really got to learn how to do is to take this information. So first part of the process is learn how to get the information, and the second part is learn how to record the information, and then the third part is how to interpret it. And you do need to see some consistency before I want you to start just, going mental and trading on squares alone. And I know you're not going to do that, but can I tell you the confidence that you get when you collect the data and you see 9 out of 10 of the major turns, all of the squares that you know to use in a market, all told you it was weak for a top and strong for a bottom. It really gives you confidence to know that you should be using squares a whole lot more in your analysis. And so I can tell you just that work we've done there gives me great confidence in the work of that all-time low square. All right, now let's do the all-time high, and then we'll pull apart some of the natural squares. All right, so starting on a new chart for Newcrest Mining. Interestingly, when we're going to start with the all-time high square, we're actually going to have to run that down. So the all-time high is $40.50. So this one here, we're not going to have to muck around too much with the point size, I don't think. So I'm going to set up a preset Gann square. I'm going to run it down. All right, and here's where it's going to be a little bit interesting because 40.50 is the start value. I'm going to make my box size 4050. All right, and this is probably not going to be exactly what I'm after. It's actually going to run to 0. So what we've essentially done there is we've created a all-time high resistance card, because obviously that's $40.50 running to 0. You can see half of that obviously produced some interest. Here's where I'd be a little bit more generous with the lines that I was going to place. So I'd probably put on maybe the horizontal and the vertical. So here I'm going to put in, I guess, a few more lines for us to play with. Because it's such a big square, we can actually afford to chuck in all of the lines, and we'll see what it looks like. So interestingly enough, we could say that the market is currently sitting in the strong, well, it was sitting in the strong part of the square because that major blue diagonal is the strong part. Isn't it interesting that our angle off the top firmed up those double bottoms? So the market stuck its nose below, took up, it took off. Looking at where the market was sitting here, it was holding a support and then an island reversal, so it broke down. And we're just about, if we get another update tomorrow, we're just about to stick our nose into the strong part of the square. And if I'm using 1/8 or 1/4 of that time frame, it's giving me about the 25th of February. Now, we've seen a little bit of that February stuff coming in, so that could be of interest to watch. But this square, as you can see, is not going to prove to be all of that relevant unless this market starts to break down to the bottom of the market. So, if you wanted to put together a real big picture, forecast, if you're bearish, you might sort of pick on, the $20 mark. If it came and sat right in the middle of that square, you'd be, if you were tracking this square and it just happened to unfold that the markets do get bearish and they happen to hit right in that center point of the square, well, you've got, well, then now 2015, so don't do anything till there. I am going to check a date though. I'm just going to see something in around. Oh, isn't that interesting? If I take a look at that time frame there, just using the little crosshair tool there. For you guys who joined us on the Gold Coast earlier this year, that sort of early 2012 discussion point might be something to just keep in the back of your mind. But anyway, I'll let you guys file that away for later use. Okay, but that could be a discussion we could have on the MFS forum. But anyway, so all I'll say is that this square is probably not going to be the most useful for us at this stage. We'd certainly save it. We'd certainly be working with it. You'd certainly be keeping a lot of information. But you can see that the zoom in. You can see that these tops, island reversal, got underneath, made a top, got underneath. So time to be a bear, got some support. So that angle which is running off the top. So this one here, I'll just put an arrow over the top. This one here is proving to be relatively useful in its scenario. So another way of doing it. Now there are ways to make this fractionally. Ooh, I might leave that discussion alone. There's something else that you can do, but we'll leave it just simply at that stage, and I'll come back, and once you've mastered that and had to think about that, we'll have a little bit of a play with some of the other ways we can handle it. All right. So one of the other things we could do is we could run a square of 144 off the all-time low. We could also run a square of 52. So let's start with the square of 52 because that's probably going to be an easier. Oops, not what I wanted. an easier discussion. Now, remember I said when you read Gann's commodities course, he actually talks about running the square of 52 off a weekly chart. So I'm actually going to set that up as a weekly chart. Now, the problem we're going to have here is that starting it at $1.13 and running at 52 cents a day is going to be absolutely painful. So we'll run it at 10 cents a day, and we'll run the interval as being weeks. So we're still going to get the scenario where that's 1 year, and you can just see whether or not 1 year is proven to be useful. Always here, I'm comfortable to have the timelines as well, because if I put in my vertical lines, that's going to give me 180 degrees, 90 degrees, and 270 within tolerance. They're not exactly degrees, but they certainly will help you with your dates as well as your prices. So $1.13, fantastic. So sorry, they're not giving you, they're giving you 25, 50%, and 70% of, oh no, this is square 52, sorry, I stand corrected. All right, let's just make sure I'm covering the market, which I am. So if I go and look at the major tops that we've seen in the market, you know, the all-time high sat in the, what was the neutral part of that square. So, you know, I can't actually color that in. I might try something. Hang on a sec. I'm going to see if this works. Screen will go blank for a second. I'm just going to see whether or not something I'm about to do to see whether that works. So that sort of area there, which you can't see. All right, it doesn't work. One of my presenting tools that I use to draw, when I use it, it blanks the screen. So what I was doing was essentially coloring in this area here where we see the neutral part of the square. How'd you feel though if you sort of only saw 1 week close in that area and then got into the week part, came down, you know, obviously concerns whether the market can hold there. If we go down and take a look at the low, I think that's fantastic. Look at that, it's just stuck its nose into the strong part of the square and closed above the diagonal. That screams to me on the bottom, and the market obviously has pushed very strongly out of there. And if we go and take a look and see where we are at the moment, once again, we're seeing the top was in the neutral part of that square, and we're in a situation where we're in the neutral part of this square. So the square of 52 off the all-time low is really not, unfortunately, giving me too much to work with. And so I'd have to rate that as being in a neutral part at the moment. But have a look at the diagonals. They've proven to be pretty useful. You know, market's making, you know, support and resistance, as you can see, holding a support, couldn't close, couldn't close, couldn't close. And watching a square of 52 is really, you know, a useful little part to the puzzle that I find in my analysis as well. Now, one of the things you could do if you would, you know, if that wasn't giving you enough, is that you could actually then select running the square of 52 off this low, because this is obviously a more recent low. So I'm now picking the cycle low rather than the all-time low, and that's 16.55. I'm also going to make sure it's 10 cents again, just because running at 1 cent's still not going to be much use to me. And as you can see, neutral in the square, neutral in the square. So pretty much the same pattern that we saw a little bit earlier, okay? If this market was to run up and run into one of those diagonals and stay in the weak part of that square and fail to close those diagonals on or around the, you know, early part of January, that could give me a bit of a view that it's time to go the other way. All right, so what we've done is we've plonked 52, and as I said, square 52 works best when you run it on a weekly chart. That's a natural square. We can use that on all markets. We've run that off 2 points, an all-time low and the cyclical low, which was the low in 2008. Now, what I'm going to do is just quickly repeat the same two things for the square of 144 and the square of 168. I'll do them off the all-time low, but then understand that you can start to push them forward and actually run them off tops and bottoms as well. So getting back to profit source, and this is where knowing your prices and dates is really helpful. So I'll just delete that. Now I need to get back onto a daily chart. Zoom in down the bottom here, get close to my low, go and pick a square of 144. Once again, I'm not going to run $1.44 because it's just too small. I know the low is 113. I might use intervals of 5 cents. Okay, I think 10 cents is going to be too much in this case. So I'm now getting I'm getting $7.20 on the upside, 144 as far as the time frame's concerned. I know the vertical lines will be helpful here as well, because they're going to give me quarters and halves of 144. So if I take a look at where we sit in the current position, let's see where the all-time top was sitting. So it was in a neutral part of the square, okay? And what we saw is that the market sort of fell below, held those diagonals. The all-time low came in, well, not the all-time low, but the 2008 low Who's happy when they see that the 2008 low come and sit on a diagonal like that? Who'd be relatively happy that that would be a good place for the market to find some support? I know I would. The market's pushed away from there, holding on the middle of those diagonals. There's that strong part of the square. So if you're banking on those being some lows, you can see you've got the vertical line, which is time lining up. There you've got that top, and guess what? It just sticks its nose in. That's perfect. I love when I see that sort of setup, where if you, let's say you had time reasons why that was the top, it just to stick its nose into the weak part of the square, and then can't close, and then have a look. That was where it really fell out of bed, and you know, big gaps down, island reversal tops. Island reversal tops that give you, you know, weak parts of the square, you know, that island pattern where the fact that the highest point sits in the weak part of the square, that's just red hot. All right, you've got those double bottoms. Remember I said we were watching that as a double bottom, and it came back and sat right on that one by one, found support, bounced out again. And as you can see, the market is sitting, this current top was sitting in a neutral part of the square, but certainly not, you know, a terrible place. It's got back into the strong part of the square. And as you can see, we're sitting in a neutral part at the moment, but if it gets its nose and can hold in this level here, we are in the strong part of the square too, springboard into potentially this next little run up, okay? So yeah, lots of different, you know, confirmations that maybe we're looking at the right place here, okay? So that's the square of 144. Keep in mind that we can run the square of 144 off the all-time high as well. So it doesn't just have to be run off bottoms, it can also be run off tops. And I've actually done myself a disservice because I've been looking at it as a trading day chart. I was about to say, remember to always check it's on the one you want it to be, which I didn't do. So let me go and set that up again. All right, now we've got a trading day chart. Sorry, calendar day chart. We might, oh, even better. See, I knew I'd looked at it earlier, and all right, all right, you got me? Let's come back to camera. It looks like it's all working my end, just making sure I've got Neil and I haven't lost everybody else. All right, Wayne, I've got. Key's good. All right, Des is there. Thanks, guys. Thanks for letting me know. Darren, cool. All right, everybody's there. So what I was saying is that I actually had the trading day. I had the trading day tab checked. So what I've done is I've gone back and placed the all-time low, square of 144, using a point size of 5. If that's not enough variables for you, placed it on a calendar day chart, and now I'll jump back in, and I think you'll agree with me that we're sitting in a good position. I'd actually done the work before. I'd actually checked that square, and I just didn't look right. I was sitting in the back of my head thinking there's something not right, and then I said, okay, better check it. So as you can see here, good place for a top, you better believe it. And we're sitting right now, right in the midpoint of the calendar, you know, angle, and we're looking in the strong part of the square. So I'd have to say the reasons that we've come up with, all of those would suggest to me that that's shaping up as a pretty strong area to trade out of. We just need the rest of the market to line up and come with us. And looking at the all-time high on a calendar day chart, once again, you are in a neutral part of the chart, so that hasn't changed. You know, sitting on an angle there, that's not bad. All right. Could it meet resistance at the square's border? Yes. So, Linda, I guess I think what you're asking me, are you sort of saying here, as it comes up, could we maybe run into, you know, prices being an issue there? Absolutely. So what we're going to have to do is watch that. It has acted as resistance in the past. That's not the first time that we've seen that occur. But all I'm suggesting is that, you know, if we're going to get up and tackle that. Remember, you've got this gap here as well. All of those factors will need to be taken into consideration. Yeah, as you put there, coincides with the gap. All of those things will need to be taken into consideration. You'll want gold and the equity markets moving hard with you at that time. If you're not getting a lead with gold or the equity markets, you're going to have problems. Okay, so that could end up being resistance again and heading down. All I'm commenting on is that I think this, as a foundation low, all right, this area here, pushing up to test that area and maybe going on, that has a higher probability. I think it's at least going to go and test that blue line. Whether it gets through, well, we'll have to see at the day. But if we get a Christmas rally and gold moves in the right way and the US dollar, you know, capitulates, we could have something to keep us interested in. But of course, we can't get ahead of ourselves. We've got to see whether that's going to get broken first. Yeah, it does look like, I agree. I think it's a great setup. But, you know, I've thought lots of great setups are good and watched them see them not necessarily produce results. So you can only go by probabilities, and probabilities tells me it's not a bad setup. All right, a couple of things. I know I'm looking at time and I want to get you guys away quickly, so just keep in mind you can run squares off the high. So I've got a square of 144, and I'm actually running it off the high instead of the low. Okay, so I'm projecting that down. So take a look at that low there. It was obviously in the strong part of the square. Nice little sort of double bottom pattern there. If we look at where we are right now, that was in the strong part of the square. Technically, we're in the weak part of the square running off the top. So, you know, that's something that we'd have to, I guess, argue as, you know, whether or not which one's stronger. Would it, you know, that low there. Is everybody now maybe starting to see why that is a double bottom? Something I was really keen on. I remember we talked about that setup there, and you know, I was absolutely on top of these angles at the same time, but it was more just a case of we hadn't got there yet. So you can see why that was a strong place, strong in the square, and the market took off. Okay. All right. A couple other things, and then we'll have a quick yarn, and then we'll wrap it up. So the only other square that we haven't dealt with is the square of 168, and guess what? It's going to be quite similar to what we're seeing on the square of 144. You know, there's not a huge difference with them. Remember, one's David square, one's Gann square. Different markets have different relationships. I can tell you that 144 and 168 both work well on oil. So let's make it 50 and 100. Okay, so Annie's telling me you've just run 405 back and down, and it looks interesting. Okay, fantastic. So was that the square of 144 you've run backwards and down, Annie? All right, so let's see if we can get to the current market. All right. Square of 168. Strong part of the square. All right. So we're in the neutral part, and we're now, if we can get above that diagonal, all right, we're now going to be back into that neutral part. Oh, no, sorry, square of 4050. Okay, with you now. So we're looking at that as being a little double bottom on a 168 multiple in the strong part of the square. You know, I think we firmed up that that's a pretty decent low. Okay. All right. Now the other thing is that Annie's given us time high square. So she said, okay. Hopefully I'm back now, Neil. So all I was saying there is that on a square of 168 off the all-time low, square of 144, both those places that we've spotted that low in, I think have shaped up as being pretty strong lows. Annie then said the square of 4050 off the all-time high running back. I guess the challenge with that is that the square of 4050 is one that would you have known how to use that square, and you couldn't use it going backwards because the market didn't know that top then. So can I tell you that I get where you're coming from? It probably has some harmonies, and I do see it all the time. But just understand is that we didn't have the square of 450 prior to having the top, so we can really only run it forward rather than running it backwards. Now, Graham's actually hit on something very important, the 764 day count as a square. Could we use that as a square? And I'm glad you reminded me of that. That'll be the last one that we're going to do. So this is a market-driven square. Hopefully I've got you back, Neil. So I'm going to jump back into profit source. So what I'm going to do is off the square of the all-time low, or off the all-time low, going to get a new chart up. So off that all-time low, we know the 764-day time frame. I haven't done this, so it's going to be interesting to see the results. All right, well, weak in the square, sitting on the diagonal. That top was weak in the square. That top was in the weak part, in the neutral part, and this current top's in the weak part of the square. So I'd want to go back and, well, those little double bottoms sitting right on 764. Look, to me, at a just first glance, that looks like it's got some merit as well. But you know, you definitely want to go and do some further testing on that, and that can actually be some of your homework. All right, so big night tonight, guys. I've tried to break the back on squares as best as I can, and using lows, using highs, using permanent squares or natural squares, using 764 as a day count. the world's your oyster with squares. Just try and keep it simple, try and keep it organized, and try not to run too many things. But I think given the current low that we see in the market, I think most of us would agree that we've got some reasonings based upon squares that it's sitting in a relatively strong to neutral position. So we might expect that to unfold as we've talked about. It may not as well, but as you can see, you've got to have other reasons why you'd be looking at that place in the market, but then from there, you can start to see it unfold. So it's a big topic, as you can see. And as I said, the problem is not so much the application, it's the management. All right, so Linda's saying, still struggling with big numbers for the square on the dollar. All right, let's just play around with one. So I'll get up the Aussie dollar. We know the all-time low is 4774. Yep. So I just do a square of the, if you're talking about doing a square of the all-time low, that's pretty simple. Just make the point sizes and box sizes all the same. That's really making it kind of a lows resistance card, and then putting in the diagonals. So at the moment, that's a bit, you've got the whole market being covered by one square. So what you could argue is you could knock out a 0 here. Actually, tell you a lie, you can add a 0. But that I think is going to make it way too small. You're going to sort of see tops and bottoms in the all the time. Darren said, how do you avoid having to shrink the chart to get it to show up? You can't. Simple as that. That's just how it's been designed. I've got no problem with the square of 144, etc. with regards to currencies, because you can obviously adjust the point size. I think the problem we've got here is it's more just to do with the square of the all-time low, for example, square of the all-time high. So do you know what I'm going to do is I'm actually at an ITW this week with Matt Barnes, and I'm going to have a chat to him, and I'll post an answer to your question, Linda. How are we going to deal with the 4774 low, turning that into a square? Because I know Matt will have the answer, but not being a currencies aficionado and not used to dealing with 4 decimal places, that tends to throw you around a little bit. So can I put my hand up and say the best answer I can give you is I'm not 100% sure. So rather than give you the wrong answer, I'll check with Matt and I'll post up a response to that tomorrow from the ITW. So I'll put a chart up there and I'll show you basically how he reckons we might handle it, because he's obviously had a lot more practice on pulling currencies apart that have 4 decimal places. So Stephen suggested, 0.005. Happy with that. That may be the answer, but at this stage, I just want to defer to the expert in currencies, which would be Matt. And all right. So Darren said, yours show part of the chart. When I tried doing some on the euro or the yen, you needed to shrink the chart so it would fit the whole square. You've got to fit the whole square on the screen before it'll appear. I know it's just part of how they design the software. So Linda, I'll get that done for you. So I'll make a note of that. Just with the screen, Darren, you just got to shrink it down to make it all fit in. All right. All right, everyone. It's 2.5 hours, so I think that's a fair wrap for tonight. I expected it to be the quick night, so there you go. Tried to probably bite off more than I can chew with squares, but sorry, Darren, you're saying I didn't seem to have it. Yours shows part of it on the chart. When I tried doing it on the yen or the euro, you needed to shrink the chart so it would fit the whole square before it appeared. Then you could expand it and see part of it. Yeah, that's how I understand it to work, and you're saying mine didn't seem to have it though. You're saying mine didn't seem to have to, don't you? Yeah, either that or drop me a mail, because I'm not quite getting what you're getting, but it might be a specific example on a market or something like that, so just let me know and I'll more than happily look at it. All right, guys, I'm not quite sure what the plan is. As I said, I think from memory, they've scheduled in a break. Obviously, next week's Christmas, so I fancy that many of you have got last-minute things that you're running around, you've got family rolling in. At this stage, I think we can plan on not having a session next week, but I'll get in confirmation with the operations people and work out what they've planned. So stay tuned, and I'll have an answer for you before the end of the week, okay? So I'll know exactly what's going on. If I don't obviously run a session next week, I'll wish you all the very best for the Christmas season, and stay safe and look after yourselves. And if you're traveling, be careful and have fun with friends and family, because that's what it's all about. And don't worry too much about the markets. Enjoy your time with your family, but keep one eye on it, because I think we've got some things unfolding. If we don't meet next week, I'll try and do my best to update discussion boards, keep things rolling there. Make sure you have a check through there, and I'll send out a schedule that basically runs us through to the end of through the end of the session. So obviously we need to know when the dates are. You guys need to plan for next year. So sorry to leave that a little bit up in the air, but I just need to work with the operations people just to work out exactly what the plan of attack is, which I'll be speaking them tomorrow. So questions, comments, or queries? Thanks, Graham. Thanks, Linda and Debbie and Des. Thank you, and Ashley. So thanks, guys. I think tonight was a good session. Hopefully you got a lot out of it. You got some things you're definitely going to have to practice, and doing all of that stuff. Yep. Good health to everybody, and tally ho. I like that. So there you go. And everyone be well, and I'll be in touch with all the admin bits and pieces, and you'll know what's going on. But until I see you next, take care. All the best in the market, and be absolutely well. So thanks, everybody. Take care. Thanks, Linda. Thanks, Stephen. And any questions, make sure you drop me a line. So I'll talk with everybody soon. Thanks, everybody. Thanks for your message, Darren. So good look, officially welcome to 2010 and welcome to session 8. As I said, it's a new year, and obviously, hopefully, I'm keen to get your, I guess, take on how you've seen the markets, and hopefully you've had a break, which is always important, but hopefully you've also had a keen eye on, particularly on our markets of choice anyway. And I've had a couple of posts on the discussion board from people who had a pretty good start to their trading accounts for 2010, which has been great to hear, with people who've gone in and been able to trade some of the things that we were talking about towards the end of last year. So a quick recap, in case you'd forgotten through 2009, I'll remind you of our compliance official part of our discussions as always. So to let you know, the Safety in the Market holds what's called an Australian Financial Services Licence. In providing information to you through our education, it is deemed to be general advice only. We've not taken into consideration your personal financial objectives or goals, and obviously you should seek professional advice in relationship to any trading decision, whether it's suitable for you. And obviously any questions relating to that, I'm always happy to be available to answer those for you. So pretty simply, we know the compliance part of it, but obviously all trading decisions need to be, obviously made through your own trading process as opposed to any direct advice. So as mentioned, I want to do a market update. So it'd be interesting, I guess, to throw the cat amongst the pigeons. I had meant to get this set up a little bit earlier. I guess the one that I usually do is just to make sure that you can hear me. So I've sort of forgotten, I've forgotten my place, haven't I? So let's just make sure, I haven't even got the right one up. There you go. Let's just make sure that you can actually hear me, which would always be, I guess, a good start. I know you probably ought to let me know that you hadn't, but just to make sure that we are all on board, just if you can let me know that you're hearing me okay. And as expected, everybody's clicking on yes, which is good. All right, so everybody's being able to hear me fine, which is great. So let's drop that down. Let me throw a cat amongst the pigeons early. Let's just make you guys do a little bit of work, and let's see what your opinions are. So if I could spell, that will help. There we go. So I'm going to ask you a question. So I guess I'm going to throw it back across to you guys, and throw it out there straight away, because I'm going to do an update and I'm going to share with you some of my views. But I guess just to see whether or not I'm going to have some supporters or disagreement, I'm going to throw a little question out there to you, which is, in the equity market, are you a bull, a bear, or neutral as far as the markets are concerned? So I want you to click on what you believe the markets are at the moment, and then I'll show you what the answers are. So I'll actually show you what everybody's put in there. But it's up to you guys to go in there and cast your vote. There's no, I can't tell individual what you're actually voting. So all I can see is the overall numbers. But it's a bit like a Dutch auction. The numbers are, it's a bit like watching election night. The numbers are changing in front of me. Either people are changing their opinions, or they're late voters. As I said, there's no right and there's no wrong. I'd just be interested to get your opinion. And once the numbers stop moving, I'll actually show you the results. All right, a couple of people haven't voted, but I'll assume that obviously you're not planning on voting. So what I'll do is I'll open those results too. So as you can see, 40% of you are bullish, and 20% of you are bearish, and 40% of you are neutral. So we've got a fair spread as far as the three different ways we could expect the market to go. So I find that quite interesting. I was kind of expecting more to be polarised one way or another. I'm surprised by the neutral vote. I'd be interested to know why some people, maybe neutral's a poor discussion point or a poor terminology choice, but I certainly don't think the markets will be neutral. I think we're in a phase right now in the market where we're going to see Linda saying you're looking for a market to go short. So I fancy that means you're a bear, Linda, and I'm not far wrong with you in that camp. So I want to share a little bit of a view as to why I'm bearish. And obviously we've had a great Christmas rally, and with any luck, you were able to take something from the market, you know, as the December period unfolded, December into January. Elizabeth sort of saying some sideways, could be a lot of downside soon. So Lois, I reckon you're in the bear camp as well. You guys are giving yourself away, but that's okay. All right, so I'm going to ask you one other question, and I'll just bring that down. So I just want to know from my own perspective, so I'll just get it set up and then I'll throw it out to you. And this one I won't make public. I'll just ask the question and you can answer without the fear or favour of everybody seeing your answer, or not seeing your individual answer, but seeing as a group. And this one only has yes or no answers, okay? So from that perspective, I just want to know, did you trade through the Christmas period? So did you take a break completely? Was it a yes or a no? I'll find my cup of coffee once again. All right, so it's about 60-40 is probably the best way to describe it. 60% did, and 40% didn't is probably the best way to describe that, if that's the answer. So I guess from that perspective, you know, half the room is probably hopefully happy with their results, and the other half maybe either are happy that they took a little bit of a break. And by the way, if you've taken a break and that was your plan, there's absolutely no problems with that whatsoever. But I guess what I've learned over the years is that I used to take the Christmas period off, and I'd often see the results of trading through that period and sort of wish that I had been involved in it. So I guess from that perspective, that enabled me to take different times off in the year and to switch off. So I've certainly been very active within the markets over the last few weeks, and been happy with the return. So let's get stuck into, I guess, what we're going to talk about tonight. So we're going to do a market update. Now, in doing that, that's where I'd really appreciate a discussion with you guys, and you guys can type any questions that you might have had. We don't have to get into the numbers, but you know, as far as how many you bought or sold, but I'd be really interested to know whether you're in the index markets through the Christmas rally, whether you're in Newcrest mining, whether you're in the oil market, because hopefully you guys took a little bit of guidance from Linda. Took an oil trade, fantastic. Tell me it was a long trade, Linda, and I'll be your best friend forever. If it was a short trade, we won't talk about it. But if you took a long trade on oil, I fancy you're relatively happy, as many of the people who got in behind that long move are. It's been a fantastic rally. Annie's been in the SPY. Linda was saying that she'd be interested in what stop strategy I used. Fantastic. We can definitely have a bit of a chat about that. And so Lois was in Newcrest mining. Fantastic. And that's really unfolded exactly how we expected. Remember, we talked about the market maybe giving us from about $34 to $37. There was that $3 range that we were talking about as being potentially. Des is in the you know, coffee and SPY. Fantastic. Ashley's been long NCM. Key's been in gold and NCM as well. That's. I won't take that personally, Des, when I see you've got the coffee in the SPY. I know we did talk about the SPY, but you know, at least you could have made me feel a little bit better and taken an oil trade or something. But I know that we're all in different markets, so I don't feel anyway bothered by that. But there was a good sort of $3 move there in Newcrest, which I want to talk about. So we're going to do a fair discussion on what the markets have been doing. Take a look at obviously our markets and review any trades that were up and coming from them. So I do want to take a look at the index markets. So that'll include the SPY. I do want to take a look at Newcrest mining. I do want to take a look at the Aussie dollar, and I do want to take a look at the oil market, because even though that isn't our market of choice in our discussions, it was something we talked about pretty heavily. And obviously, because it worked, I'm going to talk a lot about it as the best of my you know, learning from David was, is that if it works, make sure you talk a lot about it, and if it doesn't work, well, just make sure you don't mention it too much. But that seasonal trade out of the seasonal data about the 21st, 22nd December, we had that day count running out. We've had a really strong move, and it's been a great way to start the year if that's been the market you've been in. Obviously, we want to continue our discussion on the third dimension, and that's going to include a discussion on speed angles and boxes, because they're really two intertwined techniques that you could argue are essentially speed angles, or boxes, I should say, are just an extension of speed angles, obviously just building a lot more around it. So from all of those perspectives, there's a fair amount to talk about tonight. I do want to make sure that we ease back into our discussions, so I won't attempt to run 3 hours like we did close to that at the end of last year, but we'll have a good, robust discussion. And it's really at this point in we've sort of turned that homeward stretch, you could argue, into 2010. It's really important that you guys now start to push me for what you need, because I'm not I was booked in with Tim to do Mind Reading 101, but they did cancel that course on us, so we've had to rebook for later in the year. So pretty simply, it's a case of we're at that point now where I want to get a sense of what you're needing, what you feel is missing in your mindset anyway, so I can start to address that and hopefully fill in some pieces for you if that's what I can do in the time we have remaining. So I am building to the idea that we're going to put some forecasts together on these markets of choice, and my mindset as well is that I don't know quite how I'm going to do it, but I'm essentially in many ways wanting to get you guys to contribute to what would be a trading plan for these markets. Now, I guess my mindset around that is a pretty simple one, is that I might ask you guys to send something in and I'll give you the right email addresses and just to see if you guys can start to put down your thoughts about let's call it a rudimentary trading plan for Newcrest mining and the Aussie dollar. If you could write a very detailed one, obviously I wouldn't stop you, but what I want to be able to do is be able to say, okay, let's put down a set of rules that we could apply that would give us, with more than a certain amount of probabilities, a profitable return on our markets of choice. Now, I guess I thought about that and I thought, well, how could we best do that? And I thought, well, one of the things we could do is I could get you guys to contribute and that'd be fantastic. But then I thought, well, hang on a sec, there's going to be a small problem. If I take the time in collating your work, adding the work that I'm going to put into it as well, because I plan on spending a bit of time on that, I want to make sure that obviously, if you don't contribute anything, then it means you don't get the trading plan. So I guess my mindset is that if you, when it comes time to that point where I'm literally going to try and put together a written trading plan for our markets, I'm going to expect some input from you guys. And if you don't put the input in, you won't get a finished copy of the output, if that makes sense. So I'm not suggesting you've got to spend 100 hours of work on it, but one liner would also be a bit, something greater than a one liner would also be good. But I thought that's only fair. If we're going to put together a written trading plan as a group, and you're going to have some input into it, to get a copy of that, I think it's only fair that you guys have to put something in for that. So that's something I wanted to float as a bit of an idea at this stage in the game, and obviously don't need an answer from you now, but I thought that would be only fair that if to get a copy of that sort of thing, I would hope that we would all be prepared to contribute something to get that. Because it's less about writing the trading plan and actually trading the rules that are in that. It's more about the formulation of that. And so what I want to do is get you thinking about how we could bring that together. And it's actually an exercise that we did at the Master Forecasting Summit last year. And it's one of those things that a lot of people, the lesson goes, one of two ways. It's either really well received or it's actually hated, sitting down and writing a trading plan. And depending on your personality type, a lot of people really do struggle with that, because they sort of go, well, I know all the techniques and I know that, this is a bit of a waste of time. Can't we get in there and trade it? But then, a lot of people found, because I actually ran that session at the summit, really found that it was a benefit to sit down and actually think about it. And if you imagine all the work that David's done, imagine he did that without actually cementing that into a written text, we wouldn't have anything to follow today. So is this to fill in the trading plans or writing? Yeah, look, I guess it's a bit of a combination, Lois. It would be writing down our findings and then turning those into rules. Now, I'm happy to collate it all and make it look pretty and I guess make sure it's accurate and do all those sorts of things. But I guess we should be able to deduce certain findings and then turn those into trading rules, I guess is what I'd really like to. As I said, I haven't put a huge amount of thought, can't you tell? But all I'm thinking is that we want to come up with something that, isn't a textbook. We don't want another Ultimate Gann course chapter or, version 2. What we want is a set of rules that we could say with reasonable certainty are going to produce us a result. And obviously everyone's personal trading plan is always going to be a bit different. But what I'm suggesting is that we should be able to get a set of rules that enable us to take action in that market. So, okay, so Linda said you've done a lot of testing on the Aussie dollar over Christmas, looking at different stop strategies and entry rules, and was surprised by the results. Okay, fantastic. I'd certainly love to have that discussion at the appropriate time. So, it's very important that we do, I get a sense some of you are doing a huge amount of work, which is fantastic. And others are probably not so much that you don't want to do the work. I fancy everybody's committed to do the work, but maybe it's how. It's how do I do the work and what should I do first and those sorts of things. So they're all the things that I guess come into putting together a trading plan together. So that might even be one of a little session that we cover off, is how to write our trading plan or how to bring together one. But I do want to come up with something that's in hand, that's something that I can send you, albeit as a PDF document or however we can make it look pretty. But at the end of the day, that will require input from everybody. And as I said, to get the maximum use from that, it's really about you thinking and working out what should go in there. And as I said, I'm happy to do the work that brings it all together and sort of turns it into something that's tangible. But anyway, that's kind of off that's off topic a little bit. That was just something that I probably meant to mention in the beginning. But anyway, so tonight's session, we'll do a market update. We'll take a look at our markets. We'll look at the trades that were on offer. We'll take a continued look into the third dimension, and we're going to do that by taking a look at speed angles and boxes. And it's interesting, Linda, you were saying about stop strategies on oil. Certainly speed angles are a big part of what I use as a bit of a guide, but certainly they're not standalone. I'll tell you, speed angles and boxes are far from being standalone techniques for me. They're very much applied in a in a confirmation sense, and they're very much used in combination with other tools. I don't believe I've got the skill set that enables me just to trade off a speed angle or just to trade off a box. There'd certainly be other things that I'd want going for all of that if I was going to enter or exit the market accordingly. All right then. So what we probably should do at this point, I'll just pause the camera, and what we'll do is I'll jump into profit source, and we'll take a look at obviously what the markets around the globe have been doing. As I said, we'll do this pretty quickly because I fancy many of you have been keeping a fair eye on it, and then we'll get in and take a look around what the planet has been, or the markets have been delivering. So I guess if you take a look at what we were talking about on the share price index, so here we have the SPY market, and obviously we were talking, I think we got together last around the sort of the 14th or the 15th, I think it was the 15th, and this was kind of the area that we were looking at here. So it was at that point we were sort of looking at these case of higher bottoms through here, and the potential for a market move. Now it did come back on the 18th of December and break out, clear out those two bar chart lows there, and obviously that was a bit of a, if I go back one day, that was a bit of a concern there. A lot of people were starting to think, oh, well, maybe it's broken through, maybe there is no Christmas rally. I can certainly point out a few pundits on some of the commentary websites were all sort of saying, will there or won't be. I guess the thing that I was watching here on this day, which was the 18th of December, was that strong close. Okay, so what's happened here is the market obviously opened, it came down and it tested that level here, which was at about that 4,600 level. It's had that little subtle breakthrough of what would have been that one-day swing bottom. So if I just throw a swing overlay on that chart, swing overlay, there we go, you'll see that there was a three-day swing bottom was there, and you'll also see that there was a two-day swing bottom at that point there. There's probably also a one-day swing bottom there, and which there was, and there's probably even a weekly swing bottom there. No, there wasn't. All right, so I tell you a lie. So I'll make that just go back to being a daily. So obviously there's a lot of pressure in the market here that suggested that you've got what we were looking at here as a higher swing bottom. So what we had was you could argue that that's an A to B range. It had taken out that previous top, and you were looking at here as being, okay, maybe there's your higher swing bottom, and you were saying, okay, Christmas rally out from say the 9th of December, into the early part of January, and everything was looking pretty good. Now, what the market then was able to do was give us another little higher swing bottom through here, and then what it was, nastily did was basically just false broke that low. And so, as I was suggesting to you, the running stops at 1 cent underneath that, 1 tick underneath the low of that day, which was 45.95, probably wasn't particularly bright. Only because you were stopped out by what was just an absolute smidgen. Now it's interesting if I take a look at this day here, I'm just going to put a little circle around it. The low on that day was 45.89, and so I guess when I look at that, I'll just pop out of come back to you guys, and I'll just come back to camera. If I know tonight markets aren't necessarily about the share price index, but if I start talking about prices of 45.89. That's getting very close to 45.80, which would be 10 squares of the 458 low, which is Linda's right on the money there. So I know a lot of traders actually got in and placed stops. That actually got long through that area, but what they did is actually place stops behind 45.80. So that would actually put it into the strong part of that square of the all-time low if I do it that way. So enabling the market to come back in and test the strong part of the square. Now it didn't actually get there. It actually only got down as low as 45.89, but in doing so, that enabled you to hold into that position if that was where you were already in the market. So that was just a concept that I wanted to share with you. Is obviously stop management strategies, particularly for the SPY that relate to the square of 458, are generally pretty intelligent. I'd have to say, obviously not being my prime market, but I'd have to say that knowing what Noel does with that, and certainly a lot of the traders I know that trade the SPY very heavily, the square of 458 is really critical to them, particularly and including stop management. So I just wanted to mention that. All right, so we'll hop back into profit source. So 45.89, the market just came in and tested those lows, as you can see. But the interesting thing was here is that the, if I go just back one day, that really strong close there would have given you a bit of a sense that maybe that was just a, you could argue that's even a little double bottom, all right? Not your classic double bottoms, but the market came back, just false broke through those lows, hit 45.89, strong close, and the market from there obviously started to suggest that, well, at that stage you didn't know what it was really trying to do, but at that stage it really started to get moving. Now that day there probably would have got you thinking, which was the 21st of December. You might have been thinking, oh well, is that going to be a top? But really, what I want to point out with that day is that if you're looking at a turn on the seasonal date, if I just put a circle around that day, What you really want, if we go back to, it'd be interesting if I got you guys to rattle it off. I'm sure you could, particularly you guys have been around a while. But when we're talking about a top in the market or a bottom, if we're looking for a classic Gann setup, we need some time, we need some price, we need some pattern, we also need some position, and we also need some volatility. So they're those 5 things that David says we should look for in a, that'll do. Not quite right, there you go, typing on the run. But all I'll say to you is that, sure, the 21st of December was pretty close to our seasonal date. Sure, you might have argued you had time. I'm sure you could factor in some price. Pattern there, well, that's a bit of a pretty strong reversal day, but you're only looking from an open-close perspective. If I just take that circle away, that is still an up day. It's still a green bar, even though the the open and the close look quite severely bearish. It still was an up day in the context of what this market was trying to do. So all of those things, I guess you could argue, weren't enough for you to start desperately thinking you should want to go short. And I guess when you look at the other two, position of the market, well, are you in the right position for a top? Well, I'd say you're more sideways there. And volatility, well, I'd have to argue that the volatility probably wasn't there either. So all of those things, just if you were watching that as a seasonal data, thinking that might be a top time to get the market going lower, I can tell you it might have been one way of thinking that some of you might have had about that being, well, that's going to start a down move, but really it wouldn't have been worthwhile getting short as it broke through those lows. You certainly wouldn't have been getting short on that 21st date. 22nd, market moved higher, and then look, that's really where things started going from. So that's why I pointed out that low there, 45.89. It false broke those lows, and that's really where the market got going from. So a couple of ways if you weren't in that market, well, potentially you could have got in as it broke out through those tops, okay? So as just a standard little breakout trade. You might have waited for a higher swing bottom. That's also another way to trade it, but the market at this stage was pretty much telling you that it was on a strong move, and that's our problem with some of these moves, particularly the Christmas rally. I told you there'd be low volume, and I told you that the moves could be quite strong, and it may not necessarily give you a way to get back into the market. It wouldn't give you a standard ABC entry. I kind of remember talking about that as being, one of the things that I mentioned is that, yeah, we might have to be a little bit aggressive with our entries. We may not just be able to sit back and wait for an ABC trade, and that was definitely, I guess, proven through this period. It was very hard to enter this area, if you're just waiting for a standard ABC trade. Now, breaking out through, I guess if I sort of pick on, you might have jumped in that day there as it broke out through multiple bar chart tops. You might have jumped in there along the openers as it gapped up. That's a second way, I guess, of getting in. That bar there actually shouldn't be there. That needs to be taken out. I wonder if they've done that. I need to refresh my data. So exclude that day there because that's actually just a repeat of that one there. Next day up, the market obviously, was continuing to move higher. Still an up day, even though you got an open close reversal, another up day, inside day, another up day, and now we're into the early part of 2007. And it's interesting when Gann talked about his discussions on where the markets will find some resistance. He said, generally I mentioned the 4th to the 6th of January or 4th to the 7th of January as being that area to watch. The 4th was obviously a weekend, so the 5th was the Monday. The 6th, well, the markets have both opened on their highs there. The 7th, well, we got a down day. It's then come back and tested that today, and obviously we've had quite a strong sell-off. So I'm looking at the top today, 49.46. So it's broken that's the 6th by 4 days. But had you jumped out on the 5th or the 6th of the month, you probably would have been pretty happy with your results. So we're talking about that sort of move there. If I break it down and just use a risk and reward tool, if I said you got in as it broke those tops, stops in behind the previous day, potentially jumping out on that day, you're looking at a sorry about that. That's what Profit Source wants to do these days. Every time you put the risk and reward tool on, it wants to trade. But you're looking about a, potentially, and I'm sure you could have minimized that risk even more, 50 points risk, couple of 240 point move. That's a pretty solid move. Now, let's argue that you jumped in on the openers rule and you just play stops behind the gap. Well, now you're looking at about a 12 to 1 reward to risk. You might have added to your position there. There's still about 190 points in that move. So I guess the argument that I'm going to present to you now is that that Christmas rally, as it came out of the 18th of December into the early part of the month, you'd argue that the market's made an interesting little move into Gann's area where he talks about the early part of January being an area to watch for changes in trend. And had you cleared out your positions on either of those days, be it the 5th or the 6th, I think you'd be pretty happy with your returns and you wouldn't be in any of this sort of rubbish here. I'm in Linda's camp. I'm actually waiting for a short signal, potentially a lower top. I know these areas in January often give us a potential for a pullback. So part of the reason I haven't been ridiculously bullish on the index markets is that I do think we're due a little bit of a pullback in terms of where the market's going. So I'm just getting something organized on my other PC. So just forgive me for 2 seconds. Rightio. Now we're organised here. Okay, so I'm just going to jump out of profit source, and I guess what I'm going to do is come back on camera, and taking a look at that little move there. I guess what we can see in hindsight is that there was no higher bottoms, and that was always going to be a tough one. There was a couple of ways we could have entered the market. You could have argued that that little higher bottom on about the 14th of December was a way to get into the market, and placing stops behind, I guess using the square of 458 as a way to position your stops might have seen you in the ability to even run a little bit more out of that. But even if you'd missed all of that and you just got out of the market, out of the seasonal date as it broke through those tops, looking for along the openers, and cleared out cleared out your position, or at least trailed your stops very closely as we got into about the 5th or 6th of January, according to Gann's rules that he wrote, donkeys years ago. He said always watch around January 5, January 6. And for those in the know, you'll know why that's an important point from a I guess a greater construction perspective. You'll be interested that that's a pretty reliable trade as far as particularly Murray's work. He talked about the statistics of how successful it's been. But I guess I'm interested to see how you guys saw that. I'm just going to turn that camera around a little bit. Just interested to see how you saw that and whether or not that makes sense, particularly if you traded it, but more so in hindsight now. And obviously if you've missed it or you didn't want to trade it, that's fine. But how does that sit with you as far as what we talked about prior to that occurring, and then I guess talking you through how it's unfolded now that we can look with the better part of hindsight? So that's why I want to throw it back to you guys, just to get your take on that. If it all makes sense, great. If you want a greater discussion, let me know. If that's exactly what you did, or if you had another way to get into the market, I'm very happy to hear it. So Darren's saying the market is just below 50% of the 6880 to 3100 range. Yep, agreed with that. We're just right under that 5,000 point level, which is another good reason why we might be running into a little bit of price resistance. And he said you gave us good preparation for the Christmas rally. I was happy to take a profit. I'm happy you took a profit, Annie. Linda's saying went long on breaking of tops, but got a bit scared at the end and had stops very close. Okay, that's fine. At least you had a crack. Hindsight's great. Happy with the review. All right, Lynn's saying. And it is great with hindsight, Lynn. I don't discount that. It's a lot easier to do the lesson, I can tell you, after the fact than it is prior to it. But I think we definitely had a good discussion. And this is where one of those things comes in where I've been catching up with a few people over the Christmas break, and some mates I've got in that I've known from safety for many, many years. And there's one guy in particular who can do all the analysis probably better than I can, and I've just shown you there, but really struggles with the trading side of things. And he said, for him, it's been a real challenge as to, he did all the prep work, he knew exactly what he expected the market to do. But then as the signal started coming along, it was that trading mechanism, or the where do I place stops and how do I do those sorts of things that I guess were really challenging. So, rest assured, it's a far easier lesson in hindsight. And what I'll tell you is that now that you've lived and breathed through one, in this level of detail, can I tell you, don't lose the benefit of this lesson and be ready to do it all again next year, because we know statistically it's a pretty reliable signal. Now, just to, obviously just to make it, elongated, it probably won't work next year and we'll have something go the other way, but at least you've seen it once, and it's really important to relive this lesson as many, many times, because Gann wrote about this stuff a long time ago, and it's continued to work long since he, nodded off, as they say. And so this could be a great way for you to start your trading year more often than not, as you continue to develop your skill set through the career. So I certainly hope you feel a lot more close to the trading side of a Christmas rally now with the work that we've done. So hopefully it's no longer something you just read in a textbook. So Ashley said we're approaching 90 degrees from the October top, and 94, 99 day periods approaching. Sure. So I think there's definitely some views, and Darren put some price in there. Ashley's given us some time. I'm going purely on the work of what Gann said. Into early January, we can expect a little turn in the market. So all of those things for me, particularly after such a strong run. So if I jump back out, and I'll just clear that chat, I'll pause this camera. If I jump back out, and for the guys who follow the ABC Bulletin, I'm obviously putting some of the stuff together for that at the moment. And the great challenge that I saw with a lot of the long trades that were coming out of, particularly for this week in the market, was that, what you've got here on the share price index is, I can't point, I forget I can't point. Is you've got this scenario where you've got a 353-point range as far as the current upswing is concerned. So with a very small pullback, 64, 68, 67. So there is some symmetry in those numbers. But really now it's hard for me to want to go long on that ABC as just an extension of that range. 353 points. It's the biggest swing up we've seen on a one-day chart since, geez, for a while. It's probably the best way to describe it. 357. So back in July of this year. July of last year. I forget it's 2010. So we are seeing an extension of a range that's pretty large. So just purely buying that as a higher swing bottom, saying, yeah, time to go long, into what is 50% of that bear market range. So the one that Darren picked on. So if I go and just map that out for everybody, I'm sure you're watching it, but just in case we're not. This has been an area that the market's been talking about forever, and the longer that the market talks about it, the more important it generally becomes. So what you've got here is that 5,000 point level for all intents and purposes. The market's sitting around that 50% level, and so from that perspective, it's an interesting one to watch. I know a lot of people who are also balancing time out from that top. So if I tune that up, so we've got the 6th of March as the low. So it's about a 490-day range. So, definitely the 10th of July would be one that you could be watching, later into this year. And watching the 50% point was about that, November 11th. November 11th, 6th of November. So the market load on about the 5th of November. So what we've seen is definitely that as being an important turn. All right. So around about the 5th, we saw the market obviously make its, went pretty sideways from there, but you can argue that is a major low there on the 5th of November. So just purely putting that together, you'd have to argue that 10th of July 2010 figure would be one that you'd have to be, at least keeping in the back of your mind as far as that's concerned. So I guess also if we just take a step into what we're going to do a little bit later on with our work on speed angles, my esteemed colleague has also told me that the 2003 low squares out on the 13th of July 2010. So we'll say thank you to Tim for that. Everyone should say hi to Tim. Tim Walker's lurking in our room tonight. I'm glad you could find some time to join us, Tim. Sorry we haven't caught up for lunch yet, but I'll send you an email on that, or I'll give you a ring. It's I think the time we talked about looks good. All right, so looking at that run up. So you're a celebrity, Tim. Looking at that run up, I guess we're talking about using a speed angle to work out the level of that move. Now, all I'm doing here is copying and pasting or extending a trend line or an arrow line that both of them do the same work. Is that, there's our first move out. We could really call that our first range out, using that as a speed angle, picking it up and extending that there. We can also, well, would we add it to that low? Probably not, mainly because it's got broken and the market broke away. So I think it would make sense for us, if we want to measure the strength of this current run, would be to plonk it on that low there, which is the 18th of December. So I know it's not exactly the standout low, but if I'm looking at the strength of this move in comparison to the previous moves, you'd have to argue that we would want to see this market come down, sit on that speed angle, and then obviously continue to move higher. Now, I guess the view that I'm looking for here is that you are looking at a daily trend that's up, a weekly trend that's probably up. All of those trends are starting to suggest to you that markets have got to go higher. I guess if I'm going to look at using speed angle work in what we're talking about, I'm just going to draw, as I usually do, I'll draw some market activity. If we could see the market maybe drop down underneath, that's probably quite severe, but that'll do for our purposes. And if it came back up and gave you a lower top underneath that speed angle, oops, bars generally don't look like that. There we go. So if you could argue that, the market can get down underneath that speed angle, come back and test it, and then give you what would be, easily defined as a point A as a top, a point B somewhere underneath that speed angle. And then if we were to see a point C top, or first lower swing top underneath that speed angle, that could be a logical place for us to expect to go short from. But, that's just a little bit of how I'm seeing, this market currently. But that's certainly something that, you could be watching to give you a little bit of a guide. So over the next few days, it'll be very important to see whether it can hold that speed angle. So that would be one that I would have set up, waiting and watching, just to be aware of how it's moving. If you wanted to even go onto a more micro view, that's the opposite of macro. I'm looking at some of these swing ranges through here. And if I want to get a real sort of bird's eye view on how sharp the move is, that's probably pretty steep. We're well under that speed angle, so that's probably not going to be one that I'm going to use particularly for my reference. But these are going into quite small speed angles now. Yeah, Linda, absolutely. If the speed angle offers support, I would be very comfortable to if it gave you a higher swing bottom. As you can see there, we're currently underneath that speed angle there. So technically we're a little bit weak in comparison to that run, but that was a pretty strong run. But you'd have to argue that we've also seen a pretty powerful move here as well. So I think they're all useful in consultation or in confirmation of what we're looking for as far as the other work we would be doing. So Linda's asked me, what about if it gave us a confirmation of some support? So I'll just drag that across. So if it came back and gave you a higher swing bottom somewhere along there, and yet couldn't close below that speed angle, and then I'd probably be thinking, Linda, for my own satisfaction, knowing what I know about this time of year, let's say it came back and tested that speed angle, all right? So I'm giving you the opposite. I'd probably want it to, for my own personal satisfaction, is probably to break out to the upside, and that's probably where I'd grab it, is if it took out the upside there, or if it gave me a higher swing bottom above that old top. So if I calling that the tops that we've got in the current market, let's say it comes down, sits on that speed angle over the next few days, I'd really like to see it get a really strong bounce out of there, maybe come back and old tops become new bottoms, and that's where I'd probably be thinking that it had some more to play. But I really want to get above that 5,000 level, and we're starting to get into that key level, that 5,000 level. I'd want to see strong bottoms above those old tops or current tops. Can't call them old tops yet because we haven't broken them, and maybe hovering above that 5,000 level. So if I can drag that up there, and get above that 5,000 level and get in above that, and then starts to use the 50% of support. Yeah, absolutely, Linda. Agree with all of that. So I guess that's my my current view on the SPY in particular, and I think we can probably be safe to say that it's all right to be out of that market at the moment and waiting for it to give you an idea. Now, I can tell you that if you've just given that a fair hit, so I'll just highlight that. If you've done all right out of that move there, which hopefully some of you have, and I know plenty have, it's a case now of sort of not trying to push the elephant, as Noel likes to say, and just sitting back and waiting for this to give you confirmation, because what you don't want to do is have locked in some profit through that period and then spend the next few weeks giving that back. So, you want to bank that and make sure you don't give it back too easy. So as you can see, I guess if I come back to camera, the difference, I guess, in starting the year in a positive sense. Now, this is, I guess, the trading psychology stuff. If you've done all right out of the Christmas rally and you've traded oil and you've done Newcrest mining and you've made dollars out of all of those, now you're in a position where 2 weeks into the month of January, whereby your account's obviously looking a whole lot more positive, and you actually feel less pressure to get back into the market. So particularly if you've had a little bit of a break, be it from your 9 to 5, whatever you do, and you've been doing your trading on the side as a, hopefully not as a full-time thing, but as something that's kept you engaged through that period, the pressure's now off for you to have to jump back in, because you might have to go back to your normal job now, and so therefore that always has pressure starting the year. So from my perspective, if you start that Christmas period and the new year well, you actually don't feel right now as a real need to be in the market. And I think if I look at the position of what the share price index is doing now, it's definitely a market that I'm happy to be out of until it gives me a guide one way or the other as to what it's planning on doing. So that's hopefully how you guys are seeing it. And but the problem is, if you've missed that whole 353 point swing range, what's the psychology telling you is that you want, particularly if you're kind of going, yeah, we talked about it and I didn't do anything about it, and I had a big Christmas lunch and I forgot all about it. Now the pressure's on to say, okay, well, how do I get that back? It's kind of, in many ways, you kind of feel like you're owed something, and now you start to force a few trades, and suddenly the account balance doesn't look so healthy. So all I'll suggest to you is now's a good time to be sitting back and waiting for what this market's going to provide for us. All right, so let's keep moving. I want to take a quick look at, just to contrast our equity market with, say, the US market. Very quickly, I'll just check our trend sympathies. Obviously, we know our one-day swing chart's up. Our weekly swing chart's also turned up. Okay, so we're now in that situation where the 1 day and the 1 week are in sympathy. Taking a look at the S&P 500, it's a slightly different story. It's actually a stronger trend that's developed. Okay, so it's probably a clearer and a prettier pattern, as you can see on the 1 day chart, and even on the weekly chart, it's just it's been a very clear, nice 1 day. Higher tops, 1 week, higher tops, higher bottoms, and just a really nice clear pattern. And we all wish we could see those all the time. It's hasn't had that real sideways rubbish that we were seeing here in Australia. Now, interestingly enough, we've now got the 11th of January here is also the high, but we blasted through the 5th and the 6th, and that area there that we saw as Gann being an area to watch. So this is where we might start to see our market start to decouple a little bit. All right, oops, we've seen those areas act as resistance in our market. The US market's pushed a whole lot higher. Always important to know where it sits in terms of the bigger picture. So knowing where the 50% is, not only on the on the share price index market, we will get to oil, rest assured. We've now broken through that 50% point. If I get this tuned up properly, 1586.50 is the high. And 660, 665.70, I think is the low. Forgive me if I'm wrong, I'll check it. $665.70. Yep, perfect. So interesting, in the US market, we've actually seen it break through that 50% level. So obviously that's been some conviction that's followed through in the US markets. Be interesting to see what volumes have been occurring on those. Well, as you can see, the volume through this period is generally a lot thinner. So it's a little bit hard to read whether or not that's just, institutional, whether that's just, weak volume because people aren't really behind that move, or whether it's just because all the institutions and the big money's on holiday. So very hard to read volume around this time, which we talked about. We certainly don't have these spikes that we had around contract rollover, but all I'll argue is that the market is sitting above that 50% point. If it came back and tested those old tops, and it came back and tested that 50% level and shot off from there, then I think, yeah, you'd have to argue that our market is likely to move long and strong. But let's wait for some confirmation. But it's interesting that we're starting to see a slightly different picture between what we saw on the Australian market and what we're seeing on the US market. So we're holding underneath our 50% level, and they're sort of pushing through it. And I guess that sort of I'll come back to camera because I find that really strange. I guess if you are somebody who sits around and ponders why in the world of the markets, why they do certain things. Now, if you're following anything to do with the United States market, they're calling it a jobless recovery. They're questioning whether or not it's sustainable. There's bulls, there's bears, and all of these things. And you talk about Australia, and we're told that we're the best prepared, and look, we dodged the recession and all of these sorts of things. And our market can't technically push above 50%, where the US market, which I'd have to say is from an economy's perspective, is certainly in a lot worse shape than ours, has been able to recover through 50%. So that's the sort of stuff that keeps people up at night. And, those who care to think that way, I find it an interesting one. I don't have an answer for you as to why. It just is, and that's why being technical is nice, because I can just look at it and say, well, it's technically stronger, so therefore, maybe it's a buying opportunity, and then weigh into the debate with other tools. But it's just an interesting observation that I made, is we're really struggling to push through 50%, and we're the best Western economy on the planet, and the United States has pushed through 50% like it's not really there, and they're realistically not in a situation where you'd argue that they're on the road to a long-term recovery anyway. So interesting to get your thoughts on that. I guess if anyone's got the answer, let me know. Tim probably does. He'll probably give me a page number I should read from Gann. Which page did Gann talk about on that one, Tim? Which book? I'll give you a moment to reference your mental teletext and give me a page number. But it's just an interesting one that I thought was worth a comment. And as I said, I don't have an answer. I don't know why. So I'm not a trained economist, and nor am I a fundamentalist. So, as I said, they're probably the questions that are keeping those guys up at night. We're just going to take a look at it from a technical perspective. All right, so the SPY, obviously we've got a bit of a plan of attack as to how we might tackle that, depending on breaking out one way or another. And going forward, I guess let's just take a quick look at some crowd psychology from Des. Yeah, look, I think there's a bit of that. I think I guess I'll add my 2 cents worth, which is that I think the US is in love with a bit of optimism at the moment, where maybe the Australian market is potentially pricing in or factoring in the reality. And I guess the Australian market's been good at that in the last 12 to 18 months, as it's probably been tighter to reality than some of the other global markets. So if the crowd psychology is, yeah, everything's looking good and, fantastic, and then we're broken through the 50%, I can tell you, if we dip underneath that 50% on the S&P 500, if it can't hold that 50% and it gets underneath it and gives you a lower swing top, the crowd psychology will kick in again, and they'll all say it's technically weak, and you'll find that it gets absolutely belted. So I think this is a real tipping point in our market. If we can hold that 50%, no prizes there. So hang on a sec. All right, Tim's given me a quote here that I best digest. So Gann does allow 45 years for market to go a bit above the 50% without it being a real break. The Nasdaq's even stronger. Could be the bailout money being spent in the US. Yeah, absolutely. Could be all of those things. So I guess that's sort of leading to the point Des was making, and maybe the one that I'm alluding to, which is that it could be built on a little bit of hope and optimism, as opposed to any real reality. Maybe the Australian market is actually okay, I'll get to your point in just a second, Wayne. I'll just finish my point. So when we're talking about the view of where we see these markets, maybe our market is pricing things accordingly. From a technical perspective, maybe the US is not pricing accordingly. So that's probably the best I can give you at that stage. So Wayne then said, per the December sessions have been stopped out twice on short trades with long sideways moves. I set up a support and lower and went back. Did not see a breakout this range until the 4th of January. Okay, no problem. Understand. Certainly, I can see your reasoning there. I certainly, I'd be interested in you thinking about, if we're talking the SPY and being short, I'd be interested to sort of get a view as what got you thinking that, but we can do that at another stage. But, certainly being short over the last few months has probably, as we all know, not been the most profitable way. But that being said, I hear what you're saying and setting some upper and lower resistance, waiting for a decent breakout. We could be at that range now and we could be breaking to the upside, as you say, but, I'll wait for some confirmation before I jump into this market too aggressively long. So, okay, you're talking about the S&P 500 roadmap comparing, the 13th to 3rd 06 and the 4th to 5th 06. Okay, I'll have a quick squiz at that when I can, Wayne, but what I'll do is I'll pop back in and to our discussion in PS and profit source, and I'll just finish up what I wanted to talk about, and then we'll get into Newscrest and the Aussie dollar. So the only other real market I wanted to have a real, decent chat about was obviously this move out of here on oil. Now, we talked a lot at length in our last, session of 2009, and I wanted to give you my, best insights. We're around about this low here on the 14th, and I was sort of saying, well, we might expect. Okay, so Harry S. Dent's changed his prediction of the forthcoming depression to the later part of the year. Okay. Well, if he's done that, well, then obviously, it's definitely going to be in the later part of the year. I wonder if I can change my forecast as the year rolls on too. So I shouldn't pick on him. From all accounts, he's, particularly from the sort of economic stuff he does, it's all pretty clever. All right, so we're looking at the market here potentially making, a low on or around the seasonal date. I even talked about it coming back and double bottoming at around about that level there, and, the 50% and all those sorts of things. Really what I was keen on was after seeing a year ago the market make its bear market low on the 19th, really watching our seasonal date. So I was sort of quite confident or, quite happy once the market started pushing out. It did give you a, gone too far. It did give you an ABC trade. Now, it's one of those sort of more interesting ABC trades. It's not your standard ABC trade. What am I looking for here? I'm just going to turn this quickly into a swing chart. And what you'll see here is that we're looking at potentially what was a bit of an overbalance situation. So you've got here $6, and I'll just turn those longs off for a second. So what you've got here is $6.10 on the way up compared to $2.36. So what you've got is a potential for a higher swing bottom, and what you're getting here is a nice overbalancing price trade. So there was a guy on the forum who asked me a question about whether that was your classic overbalancing price trade, and I'd have to say it was. We did get the confirmation, and I can't step through on a swing chart. There we go. We did get confirmation of our ABC trade the next day, so I'm calling that an ABC. Now, here's an interesting one. You definitely had to ignore the limits discussion. Okay, so I guess when I was talking about the pullback here, the fact that it had pulled back 50%, it's actually 48%. I'll get rid of that for just a second, but it pulled back 48%, and 48% onto the 21st of December. David actually talks about in the Master Forecasting course, he talks about pullbacks or retracements of 50% or extensions of 50% into seasonal dates, but he's generally referring to pullbacks of a 50% pullback into a seasonal date as being sort of little gifts. So if you're arguing that you're expecting your seasonal date to come into the market, a pullback of about 50%, you really should have been expecting this market to, if it did break to the upside, to give you a pretty, I guess, interesting move. Now, you have to be prepared to jump in just outside 33%, or you might be thinking, I'm going to use something like along the openers or, an outside continuation day. You needed to be a little bit creative. Obviously, the entry was definitely made as it broke through the top, so you're looking at about 74, 40, somewhere around there. You might have even waited till it broke through point B as a top. That could be another way to wait if you're looking for that extra piece of confirmation. Where would you place stops? Well, obviously, trailing stops underneath the swing bottom down here was obviously, there's some relatively large risk in that. That's why you need some of your larger accounts. You might have also managed that intraday as well. So as it broke through the top there, you might have then placed, using an intraday 60-minute bar chart, you might have, trailed stops under 60-minute bars or something along those lines. That was certainly a strategy I was looking at. The next day, having stops under here, you didn't even get close. The market obviously smashed through those. And obviously, Linda was asking before how would I manage stops. So at this stage, obviously, the hit 75%. I was expecting maybe a higher swing bottom to trail stops after. So you might have maybe just got out at 100%. That would have been fine. I was expecting something a little bit more. So once it got up to about these levels here, I started to just trail stops up underneath using the lows of each day, generally by about a half of the average daily range, and then using my pressure points as a bit of a guide. So we're now up to about sort of the 150% point, and then getting back to those old tops of around $82, which is where we were at the start of the year, that was definitely going to be an area that we could watch for some resistance. So I actually jumped out through this area here at about 150% at around about that $82 mark, expecting maybe that the market was going to run into a little bit of resistance there. But if you look at the risk and reward on that as a setup, jumping in as it broke through, get the right tool, jumping in as it broke through the top of that day, let's argue you place stops underneath there and ran it to say 150%. You're looking at about a 3 to 1, but you're looking at in reality of about a $6.70 move. And if you sort of stretched it out a little bit further, you were sort of looking at about a $6 or a $7 move, which there we go, there's that tool again. So you're looking at about a $6,000 or $7,000 move per contract just out of that little run there. So and certainly watching the square of the all-time low, so like the 458 square, using the 975 square could have given you some other areas to watch through there. But definitely have been a very, very strong move. So to relate it to some of the things that we can take a look at tonight on speed angles, we're in a situation where we can see the market made a run from September into to late October, or mid-October, I should say, and measuring to see how strong we are in comparison to that now. Now, you might have said, okay, well, here's an example of where the market came back, tested the speed angle, closed below it, but then obviously got back on the upside of it. And as you can see, it just held well above that speed angle till that area there, stuck its nose underneath. And now you can see we're underneath or on the underside of that speed angle. You might argue that maybe we're starting to move away from that speed angle. So that suggests we could be going into a bit of sideways, or maybe even into a little bit of a potential for a downtrend. But they're just other ways that you could have been managing those positions. If you're going to look at the run out of the 14th of February, 12th of February low, and pick on that as a move. Now, I know that's not exact, but that'll do for what we're watching at the moment. As you can see, we're quite strong in comparison to that using speed angles. So if we're going back to the run out of February and the major move into June of last year, we're now seeing the market comfortably above that speed angle and holding. So maybe we could expect it to come down and test that. And if it did so, that would be an opportunity to maybe look for a higher bottom and keep going with it. If it breaks through that, maybe we can look for a move to the downside. But if you look at the history of the moves out of sort of your December periods, using standard sort of trailing behind swing bottoms, etc., has certainly been a good advantage. But oil has got a tendency to be able to do these sorts of things where you get these really strong moves and not have swing bottoms as far as that to trail stops. So you've got to get a little bit creative. Once it sort of got to this area here, that's when I started to just trail stops up underneath the lows of each day, generally speaking by about half the average daily range, allowing the market to come back and tackle me. And if it did, great. And if it didn't, well, I was still in the trade. So I was interested, I should say, to get your view on the on the oil move and whether you watched it, whether you saw it, whether you traded it, whether you what you liked about what you didn't like about it. Was it as we discussed? No one likes oil. Too busy trading soybeans with tin. Might have to become a beans trader. There's a few more of you guys out there. At least I have something to talk about next year for Annie. Okay. Yeah. Look, Linda, oil's a bit of a beast. Yeah, look, it was a great run, Wayne. Oil's a beast where you've got to be comfortable to. It's not a market where you want to learn to trade it by choking it. In the sense of Robert was saying the only bad thing was it wasn't on it. Yeah. He's saying was that watched it, but it was a bit of a loss when it opened outside your limits. Okay, so interesting that obviously the limits was a bit of a concern. I can tell you limits on oil doesn't really bother me. That's experience coming through. That's just sort of having seen it enough times to be comfortable to say. And we're only talking about 35, 36%. It wasn't 50 or 60%. Knowing how well seasonal dates work around December, that also just sort of blows the whole concept of limits in my mind as being a limitation of stopping you getting into a trade. But all of those things, and I guess sort of knowing how to place stops is an important one, because you're talking sort of sometimes, if I look at the average range on oil through that period, I won't bring it up on the screen, I'll just get a figure for you. So in that run there, you're looking about an average range of being about $2.30 a day. Actually, we won't say a day. We'll get an average over, say, that 20-day period. So you're looking at about an average move each day of about $1.90. Okay, so you're looking at $1,900 a day that the market's moving on you, and that's positive for you, and that's always going to give you some food for thought as to how you want to run your stops, because you don't want to leave your stops $4 or $5 away, and I wouldn't recommend that in the early days. But Oil, I'll tell you, is a hard one to cut your teeth on with regards to trailing stops, because it does require patience, and it does require a mentality that allows you to be $2,000, $3,000, $4,000 away from the market, particularly in these sorts of setups, and sort of be comfortable to do that. So I don't sort of begrudge anybody who was trailing stops relatively tightly, you know, sitting on some profit in particular, and didn't want to see that go backwards. So that's I'm comfortable with all of that, but and that's where I choke. Well, Linda, that's fine. You know, I can give you a phone book full of stories of where I choked. As long as you walked away with some profit out of it, that makes me happy. And then you know a little bit more for next time. All right. So yeah, look, you know, profit's profit. All right. So, you know, I'd like you to take yourself into your bathroom mirror tonight and give yourself a long talking to about how you made money and how it was a bad thing. Don't spend too much time though. Okay. So look, next time around, just know that, you know, it's a market when it gets going that, you know, you can be a little bit more patient with or lenient with your stops. But once again, experience and, you know, just knowing what this market is capable of doing. And, you know, it's a long way away from $30 a barrel. So I understand that, you know, when it was at $30 a barrel, you know, it was actually moving $2, $3, $4, $5 a session. And then, so it hasn't really calmed down as far as, even though it's up at $80 now, it hasn't really, it's actually moving less in a session, but it does require a little bit more of a challenge. So that being said, I think you guys will get that. So, and some of you obviously watched the move, but you didn't get a chance to trade it, but that's fine. As long as you got the benefit of watching it unfold. And as Robert said, the only thing wrong with it was that if you weren't on it, but that's okay. So that's now 2 years in a row that we've seen strong turns out of the December seasonal date. So 19th of December 2008 was a major turn, and 21st of December 2009. So I'll get you to pencil in for your diaries December 2010. Okay, so I'm giving you a forecast. It's technically, you know, 11 and a bit months out. But all I'll say to you is that it's just something that once you know that these dates are working, you just know automatically to watch them each year. So hopefully you'll be keen to watch and see what happens in December of this year. So, all right. Any thoughts on February in oil? We'll get to my thoughts on what oil's going to do in just a little moment. What we'll do is we'll go and tackle our markets of choice. So obviously the Aussie dollar and particularly Newcrest mining, because I know that's probably where many of you got your, you know, cut your teeth, as they say. I know a couple of people with both gold and, well, let's take a look at gold first. So we were together around about the 14th. Okay, so this is sort of where we were, you know, together last. So we were talking about potentially a little 50% retracement. I remember talking about that as being an area to watch. Well, if we can hold above that 50%, that might be a plan. You know, we're talking about potential for, you know, maybe even coming back and double bottoming, testing those old tops. Now, gold did unfold, and it did obviously come down and give us an eventual low in the market. Now, it's interesting that as I zoomed through that low ended up being December the 22nd. So there's our seasonal date bottom. Okay, so like oil, it gave us a higher bottom on the seasonal date, but gold actually lowered on the 22nd. Now you're in a situation where there's your first higher bottom off a seasonal date. And since then, well, there we go. There's our first high bottom. So if you were going to call a potential trade up in regards to the gold market, there's your first ABC, first high bottom out of a seasonal date. That one you could have jumped in within limits. Okay. Now it did come up and touch 50% and then come all the way back down. So that would have been a bit of a problem there, knowing how to stop, you know, knowing how to place stops. The next day there, then it's rocketed all the way to nearly 100%. And if you got stopped out on that day there, you'd feel pretty dirty. But there's certainly been some strong moves out of the seasonal date once again. So there you go, seasonal date's working pretty well. Now, isn't that interesting that we've got a scenario where gold actually turned on the seasonal date on the 22nd, and then we go and take a look at our market, which was Newcrest, and we were looking at about that $34 level as being the area to watch. Now, we didn't get anywhere near the continuation of that sell-off. We were together, as I said, on the 14th. So once again, watching the 50% like we were on gold, on the gold futures, we're saying, all right, well, is that a little double or a triple bottom? We're arguing here around that $34 level. Are we going to see the markets holding along there? Now, market pushed out, got above that 50% level. Then it got its nose back underneath. Then it gave you an outside reversal day. Then it dropped down, all right? So there was no entry through there if you were looking purely for a higher bottom entry. It then came down, and that was that 18th of December. Remember that one on the share price index? It just did that little false break. Then it started to push its way back out. And if you're saying, all right, well, I am going to try and get a higher bottom if it comes together. There you've got your first higher bottom. And then on that seasonal date where the market lowered on the 22nd, then you've got that great outside continuation day. So that's obviously going to be a pretty aggressive entry. But considering what we were watching and using some time frame analysis and all of that sort of stuff, I was confident that that was going to be an area that we could watch for a trade, as we was talking from about that $34 level about to that $37 level. Remembering we're talking about that gap there as being an area that if we could get it up somewhere near there, the market would have to work pretty hard to fill that gap. Went in on the bottom reversal, so that's what Lois is saying. I'm just going to drag that across. So if you're ever wanting the sort of signal seasonal date with an outside reversal, that's, market had closed the gap. All right. So if you'd seen the market gap down and then we're wondering, well, is that going to be, that's kind of like a, maybe shaping up as an island reversal bottom. The market actually did close the gap. So the gap down there, the market was closed. Okay. So then we're looking at your first high bottom, massive outside reversal, outside continuation day. And jumping in there, you would have seen, obviously, the market pushed away strongly. Now, you could have waited for your first ABC. So had you missed that entry, which was at around, 34.43, somewhere around there, had you missed that, you could have waited for your first ABC long, which gave you a nice little 48% retracement, obviously filled by 33%. And then the market in the next couple of days got moving quite strongly. It then gave you another ABC long. All right. Now, I know a lot of people were thinking, all right, well, that's another great look, gaps and those sorts of things. But remember, with our resistance card work and some of the other things we were looking at, just sort of saying that $37 to $38 range was going to be hard work for this to fill, considering it's a really big gap. So maybe leaving that second ABC trade alone, because obviously the market then stuck its nose into that gap, and then the following day it got absolutely smashed. And so that's the 7th of January as well. So remember, that's our date that we are pretty keen on. If we could run it into about the 6th or 7th of January, we were pretty happy. Now, if you were just purely following your ABC, pressure points, 100% milestone came in on the 5th of January. So that's not a bad price. That's not a bad date. The 7th of January has since proven to be the top. And so the market obviously hasn't broken through those tops just yet. So we're still in that gap. So I think that was an ABC trade that you'd be comfortable to leave alone. Okay, you added 100. That's all right. Hopefully, didn't break the bank. If you'd got him down somewhere there, you would have been, pretty happy with the result through there. But remember, we talked about that buffer from 34 to 37 as being, our target range. Of being able to sort of measure some profit through there. So depending on how you manage that with milestones, etc., had you jumped in as on the outside day, the breaking of those tops with the outside reversal day, jump out at that 100% point, you're looking at about a 4-to-1 reward to risk trade. Once again, trying to tell me I can trade it, which I don't want to do. But obviously not a terrible trade, and if you'd been able to get even on that ABC trade, it was a pretty reliable signal. So with any luck, you guys have done all right out of that, because it was certainly one that we talked about. And certainly had some pretty clear guidance. Now, at this stage, what's that mean for this market? Well, until it can close that gap, I'm sort of a bit concerned to be long right now. And as you can see, we're starting to get a real sort of number of tops forming here. If we can break those tops, close that gap, maybe we're in for some more upside. But at this stage, I'd comfortable once again to wait and see what this market's prepared to do. Okay, be that break to the downside, or be that continue to moving to higher prices. So. All right, so back to you guys. Just so Newcrest Mining, how did you see it? How did it work? Obviously, Lois has tipped her hat and sort of explained where she got in and added positions, and hopefully it was kind to you. Any questions, comments, queries on how you potentially tackled it, or where you wanted to place stops? If you got stopped out early, if you're still in it, if you're upside down, if you went short, if you bought Rio Tinto instead. I guess I'm just keen to get your feedback, because hopefully I left you in a situation where, in the middle of December, you were pretty keen on, okay, Lois is saying still got the original position, that's fine. But still pretty keen on, sorry, what I was going to say is left you in a situation where, hopefully it all made a bit of sense as to how we're going to tackle that. So trying to make it as real a case study as we can by talking about, whether you didn't. And I'm sort of, silence generally tells me that maybe you were enjoying the festive season, and that's fine. If you didn't do anything with it, there's no crime in that. You didn't lose anything. Just hopefully you watched it and got a benefit from it as far as an educational experience, or whether or not it may be added to your bottom line. Coffee was sour, so you only watched. All right, Des, you're allowed to. Your late note or your leave absence pass is accepted. So Key said you placed your stop below the gap and you got stopped out with a small profit. Robert's saying, okay, Key, which gap? Can you just give me an idea of the gap? I'm not seeing the gap in my head. Robert thought the double bottom. Are we just at a head and shoulders potentially? Small profit exit on the 8th, yep. Okay, Graham is saying he's out of communication. Well, that obviously makes it a bit more challenging. Yeah, okay, that's fine. So, that's all right, guys. I'm not looking for, I'm not trying to nail you to the wall and say you've done something bad. If you're out of communication, if you're on holidays, they're all fine things. But I guess from my perspective, I've had some feedback from some of the guys who are in it. So it's a case of just wanting to make sure that I covered that off adequately for you guys who lived through it, as opposed to, just sort of saying, all right, there we go. And just below the top on the 4th of January. Okay, just let me have a look at that. All right. Okay, so you placed your stops under the gap of the 4th of January and you just got stopped out. Okay, no problem. And that's off the standard ABC trade I'm fancying. So, yeah, you would have, small profit involved in that. Okay, no problem, Key. That explains that. I guess what okay, great, Lois. I'm really happy it gave you the confidence to do that. I guess probably what I'm sort of sensing is that a lot of you potentially just waited for the first ABC, which was fine. I guess what I'll point out to you is that there was just, if you want to, the lesson from this that I think is probably even a better one is just that seasonal date with that outside reversal entry. That really would have got you in as close as possible to the turn. And that really would have probably just bumped up your risk and reward ratio just that little bit. Nothing wrong with waiting for that standard ABC trade. But I can tell you if you had a nibble, even if it's a small position size at that turn, that then covers the risk for the traditional ABC that you're going to take along. So I guess if you're going to talk about what the Ultimate Gann course is really all about, it's about picking that bottom. It's about knowing that that's the strong low, being able to wait for the Gann's safest place to buy, which is the first high bottom, which happened to be off a seasonal date, major outside continuation pattern, so major confidence boost that you're in at the right place. And then as you're seeing the next ABC trade coming along, that's probably a position where you can add or take a larger position size or a traditional position size. So what I'm trying to say to you is that maybe the ABC trade at the moment is probably the first trade that you're comfortable or confident to take. But what I'm trying to say to you is you should stretch yourself to start to think that that really probably should have been the second trade in this campaign, if that makes sense, rather than the first one, because the first one was definitely on offer, I'd like to think, and I don't think it's that much of a stretch to say that that it was there. Certainly, it's the day before Christmas, I guess, and many people were, not available. But taking the time of the year out of the case, looking purely at the example, from my perspective, what I'd really like you to feel comfortable to do through the Ultimate Gann course studies is to see that first trade and then be able to apply your ABC skills to the second one. Only took the bottom with only 100 and then took a bigger position on the first ABC. Fantastic, Lars. That's exactly what I'm sort of suggesting to you there, is that if you just had a nibble off the bottom and then added to your position, then that's perfect. That's certainly a strong way to to take and to leg into that position, to use an options trading term. All right. So we've, I guess, talked about our, a fair amount about the SPY. We've talked obviously a lot about the oil market. We've sort of covered off a little bit on Newcrest mining, and now what I want to do is we'll take a look at the Aussie dollar. Now, that was a market that we really didn't have a setup on. We didn't really have, I know I didn't give you a clear idea, and I guess it wasn't something that was moving in my brain as far as a setup was concerned. But obviously we need to do a review on that and just see where we're positioned in that market. So if I bring up the Aussie dollar, we'll get rid of our ABCs. We did see the market come down and make a bottom once again on the seasonal date. So, you're going to argue that the 23rd, well, it's not the 21st and it's not the 22nd. I'll just say you better squint, okay? Because in my mind, that's very much a comfortable seasonal date turn. You might sort of say, well, was there any price? Now, this is all hindsight. I'm not professing to give you anything that was operating in my mind before the case. There's not a 50% retracement there into that low. It's probably, I'd say it's 38.2 or very close. So the Fibonacci guys probably got all excited about it. But I certainly wasn't watching the Aussie dollar. It's actually gone past 38.2%. If I pick on that bottom there, 50% sort of, all sort of a bit of a stretch here. We're not getting any sort of clear, bottoming or clear price point. If I go back, it's not 25%. If I go back to the ultimate low, there's nothing really there as far as price is concerned. Potentially, we had squares that might have given us some assistance there as far as price is concerned. But the market obviously sold off. It ran down for the sum total of 37 days, which going from my memory is not exactly what you consider the time frame of the century. So if it was a 45-degree rundown or a 45-day or 60-day rundown, I might get more excited. So running into that seasonal date, you might have said, okay, well, what's that all really going to mean? Potentially some balancing time might have come in. No, I'm not seeing. Going to check a couple of time frames here just to. So yeah, there's your 45-day run up. So you might be expecting, a 90-day run down. So maybe the end of December would have been a better place to be watching, for that, a nice double bottom at that point. So not suggesting that that was an easy one to spot, but the seasonal dates are always areas to watch. And it's interesting that, we've talked about a gold stock, we've talked about gold, we've talked about oil, we've talked about now the Aussie dollar. We've also talked about, obviously, the share price index, the S&P 500. They've all turned around these dates, which happen to be these seasonal dates. So it just reaffirms our time by degrees work that Gann wrote about so long ago, where he talked about seasonal dates being important places to watch for changes in trend. We could run some angles off that bottom. I'm just looking at that low there and that low there. Pretty much, I'd say they square out. If I threw a few angles on there, I'm sure we'd come up with something. That being said, the market moved very strongly. So we're talking about a low here of 86.5 for want of a better term, up to about 92, 93. So that's, call it a 6 cent move, 6, 7, 5, about a 6 cent move. So you've got a pretty considerable amount of money there. Now, I'm certainly not suggesting that we would have traded that as a turn. There's probably things going on there, but we certainly weren't on top. Well, I wasn't on top of them. If you guys were, let me know. How would we have potentially traded that run? Once again, no higher bottoms up until recently. The move's really sort of taken off from there. I'd be pretty hard pressed to want to grab that as an ABC long trade. A to B looks pretty overbought, and as you can see, we would have been filled in last night's session, but not the sort of conviction we're getting back to these old tops here. So you'd be arguing, well, maybe not the time to be jumping in, but it's interesting that, strong run down. There wasn't even a short trade to get us in on the short trade on the way down. So really what we've seen is a sideways movement, a big sell-off that we probably couldn't get in, got a part of, and then obviously a market that's bounced out. Now, the only thing I guess that we can add to this discussion is when we're going to talk about, the work of speed angles, is to really look and say, all right, well, where did the market sort of fall from? I'd sort of pick on that 3rd of December top. And this is a tip that Sinan, or a trick that Sinan taught me. So I'm going to show you some speed angle work in getting what we call a reverse speed angle. So if I just use a trend line tool, I'll make this nice and accurate just to, I guess, show you the benefit of what we're doing. I need to get my data window. So the high of that day is 93.15. So we want to make this absolutely accurate. So the low there is 86.65. So we have a market that's basically, running down. All right, let's make sure you guys are still with me. Yeah, that's fine. I thought I dropped out there for a second. All right, so what I'm going to try and do is if I'm trying to create if I'm trying to, sorry, I'm just unplugging things. My other computer's decided to fall over. So, all right, so back to this. So we're looking to create, in essence, a reverse speed angle. So I've used these 2 points as my points of reference. And what I want to do is I basically want to measure this run out to, I'll use a rectangle. I want to measure this run out to this area here and say, look, is it in proportion to the run down? So this is something that you can use for double tops and double bottoms to rate the strength of the market running into a low and then running it back out the other way. So I can create a parallel speed angle. So for many of you, you'd be comfortable with that, but I can't obviously apply that to the move out. So what we can do here is I can basically just go and copy and paste these 2 numbers. All right, so 0.8735 and what I've done is I've actually created a reverse speed angle. Okay, so what I've done is I've taken the properties of that first speed angle and then I've just reversed them. Okay, in terms of price, the dates aren't important, but in terms of price, I've reversed the 2 numbers. And now what we've got is a market running out. Now, as you can tell, it's never really got much above that speed angle, and we certainly haven't got closes above that. Now, it's hard to say that this market is weak, but if you ran into that sort of as a double top on about the 11th of January, what you'd have is pretty much a double top on the 11th of January, which would be the 11th or 12th of January, I should say, which would be a symmetrical double top. And if it happened at the same price and the market fell out of bed from there, you'd know that the market had pretty much repeated in exactly in terms of time and price. Okay, so that would be one way that I'd be watching the speed angle work, and we could certainly compare it to trying to look at the most relative run. As far as strength's concerned. So if I picked on that sort of move there, that's probably the last really strong bullish move. So if I tackled that, you can see that we're actually we're a little bit stronger than that previous run, which was from March to June. So in context for that, we are actually looking, a stronger move. But in context of the run down, we're actually, the market isn't recovering as quickly as it fell in terms of that information. So, alrighty. So I'm just back now to your question, Lois. So could you use the openers rule out of the seasonal date with a few other things going for it? Absolutely. That probably sparks a good discussion. So my mindset is always around seasonal dates, be them time by degrees dates for a given market or be them seasonal dates affecting all markets. For me, the greatest way that you can get into those areas is always to use a low risk strategy. So obviously the best way that we do that is to potentially use an openers rule. So in suggesting that to you, it's you could have used that, but you'd wanted a lot of other things going for you other than just being a seasonal date. As I said, I tried to fit a little bit of price up there. So going back to what I showed at the start, you want time, price, pattern, position, volatility. I couldn't readily see any major price elements in there that jumped out as being simple. Certainly time could be one of those things. If I quickly just, whilst I won't bring it back up on the screen, all I'm going to do is run a time by degrees tool back from our seasonal date and just see whether or not we were getting sort of any major hits. And I'm looking at 180, didn't really give me much. 240 wasn't bad. 360 is close. We did see the 26th of December in 2008 being a pretty major high, but I'd have to sort of really stress the point that was one that you're probably just going to miss. And only unless you're all over the Aussie dollar and you know every day count. But I'd say I can't give you any sort of conviction that said that, yeah, that would one that I would have spotted and would have traded. There wasn't a lot going on there. So, you've got to accept that we're not going to get all the moves because they're not all going to be forecastable. But and we've proven that the Aussie dollar, and I guess just to come back to when I'll come to your comment in just a second, Darren. One of the things we've found with the Aussie dollar is that it's certainly not as easy a market to fit our style of analysis to than what we've seen on, say, the Newcrest mining. Now, I think when you look back historically on the Aussie dollar, and Linda, you mentioned you'd done some testing, and so I'd be interested to get any comments you might have about the work that you've done, is that I think historically the Aussie dollar probably would have been an easier market to trade based upon our skill set, but in more recent times it's produced or proven to be a little bit harder, particularly traditional ABCs are seem to be relatively ineffective. So all of those things are, a cause for, just an understanding that this market is definitely a little bit harder to pick than, say, a Newcrest mining or some of the other markets we've focused on. So, it started falling. All right, so yeah, Darren's just giving me some comments about, funding accounts in US dollars and Australian dollars, and it's always the case that when you convert your money into US dollars or Australian dollars, then obviously the currency tends to move the other way. So that's that Murphy's Law. So Linda's saying over the last 5 years, regularly fell back at the 50% mark on trades. Okay, so obviously it shows how important the 50% level is, and how we might need to adjust our trading plan accordingly. So, but yeah, look, I'd definitely be interested to continue that discussion, Linda, and sort of look at the work that you've been putting together. All right, so we've talked about the trades that were on offer. So Newcrest, I think, was one that most of us could have, had we been focused on the markets, picked up on. Obviously, the Christmas rally on the share price index was certainly one that was I think something we could have been a part of. Oil, obviously, different story altogether because it's a slightly bigger market, but I think we've all got a pretty fair focus on that. And the Aussie dollar was one that we just probably had to let go. But I guess where we see this current market, particularly as far as the indexes is concerned, just to recap before we talk about some boxes, is the Australian market's below the 50%, the US market's above the 50%. What's that all mean? Well, let's wait for a bit of confirmation. I'm not prepared to be brave enough to say exactly what's going to happen just yet. But as a couple of you have mentioned, there's Dent's saying that the depression's coming at the end of the year and all of those sorts of things. So it'll be interesting times to see how that all comes together. But all I'll point out is that I'm still not convinced as to whether or not this market's going to push to the mystical 5,000 and above level. I'll be happily guided by confirmation as opposed to forecasting at the moment. I'm sort of putting my forecasting hat, just hanging that up at the moment and just getting back to the trading hat only because I think this market needs confirmation, and I'm just going to wait for it to comfortably tell me what it's prepared to do. So one of the things I was going to quickly show you before we talk about boxes, because I know a lot of you probably have a keen eye on BHP. I'll quickly show you this just as a little bit of an aside that helps you with, I guess, putting together some work with regards to markets. Now, there was an ABC long trade on BHP on the weekend, and it was obviously set for Monday. So if you'd taken that trade, you would have just been filled had you leave your entries on, and it got up to about 66%, and then today it's fallen back down. So you would have actually been stopped out for a loss on that trade because obviously you would have moved your stops progressively, maybe under 50% entry plus commission. This morning it's gapped down. So it was one of those trades for ABC Bulletin that I like the pattern, I like the setup, but then, you know, on a normal ABC checklist, it looked fantastic. But then when I went back and took a look at some of the seasonality that's involved, you've got the 7th of January that was a top there, and you've now got this 11th of January scenario. And this is where, I guess, knowing what our markets do around about this time of year. Now, BHP is a big part of our index, as most of us would be familiar with. It's our biggest share. If we go and take a look at 2009, the 7th of January was an outside reversal top, or sorry, an island reversal top. And the market obviously fell away quite heavily. Now, it didn't sort of, you know, it fell into those sort of March lows and got going, and it wasn't the end of the world, but certainly there was a fairly solid run there. So you've sort of got the 7th of January being a bit of an area to watch there. 2008, we can see that the market made a little top here on the 4th of January, but that's not exactly major consequence. I kept going back though and just sort of looking at what happens in Januaries on BHP, and you know, it was interesting that you know, you've got a low there which was on the 8th of January. Now, sure, that's a low and that's fine, but I'm sort of seeing the 7th and I'm seeing the 8th as being areas to watch. And so I kept building a bit of a case and saying, all right, well, January's proven to be a turning point, be them tops and bottoms. You'll see through here, not a real clear top or bottom. So here's where your master time cycles start to come back in. I started to say, all right, well, what happened 5 years ago? What happened 10 years ago? And what I started to note was that, you know, here in early January, you've got the 5th of January. Once again, it was a bottom, but the market did turn strongly from there, and kept going backwards and backwards and backwards, and eventually sort of came to the conclusion that there's the 6th of January. So that was the top. But I think we're seeing enough conviction to say early January has been an area. There's the 3rd of January, another island reversal. So if I go back to 2000, which would be a 10-year anniversary, okay, so using 10-year master time cycles, what you've got here is the market made a top on the 10th of January, all right? So that's 10 years ago. 1995 would be 15 years ago, so that's 180 months. Market made a top on the 29th of December. Made a little bit of a low on the 9th of January, and the market did move away, but not a major one. We can go back 20 years ago, so that's the nice part about having this sort of length of data. So going back now to 1990. Zoom in. All right, so going back to 1990, well, there we've got about the 12th of January, and the market sold off. So using that as a bit of a basis for my thought process, it stopped me taking the ABC long and using that as a case study trade in the bulletin, which was obviously vindicated today when the market hit 66%, and yesterday I thought, hang on a sec, this is a trade we should all be in, and then obviously today the market's gapped down and it's taken out the swing low, and obviously would have stopped you out for a very small loss. I'm actually thinking if the historical run occurs around 6, 7, 8, 9, 10 January, we've got our top in play right now. If you could see a lower swing top on BHP, and that might correspond obviously with what's occurring on the index, we could be in the money for a little short trade. Now that little short trade could materialize into a bigger short trade as from a time duration, but I think that perspective, BHP, seeing that seasonality, plus what we're seeing on the share price index, we might be waiting for confirmation for a potential short trade. And Linda, you mentioned that in one of your opening statements as being maybe for a first lower swing top. So just to keep that in the context of what we're talking about with the equity markets, I know BHP is not our markets of following, but I do look at the two together because obviously one forms a very, very, very large part of the other. So that's some of my thinking that relates to that as well. So I just thought I'd share that with you because obviously it's fresh in my mind. All right. So any questions, comments, or queries? I could go back to the poll now and say who's bullish, who's bearish, and who's neutral. And so we could argue, based upon that extra information, has that changed your mind, or are you still in the camp that you were prior to that? So all of those things, are just food for thought at this stage. As I said, I think it's time to be getting our trading hats on. All right, what I want to do is quickly touch on some PowerPoint stuff that I put together, mainly relating. We've done some work on speed angles, and I'm sort of going to, have that discussion in full in just a moment. We've talked about what we're going to cover in this section. What I wanted to do is touch on boxing the market. So when we finished up last year, we talked about using natural squares. We talked about permanent squares. And I guess the concept of boxing the market was one that David used to sort of mainly teach at incubator level. It wasn't something that was traditionally taught through the video series or the Ultimate Gann course, but it was something that was obviously included, and also something we do at Gann Masters as well, because it is a valuable tool. It is in Profit Source. The questions were, how do I use it? But there's a lot of complicated ways to use boxes, and I guess that'll be left to other times and other devices. But what I'll say to you is using a very simple method. So, okay, Love's the same. BHP is 125% of the first range out of the low. Fantastic. So when we're talking about boxing the market, I guess what we're talking about is stepping away from using a square, which has obviously got symmetrical sides, and talking about taking a cycle from the market in terms of time and price. So once again, it's a third dimension tool and very specific to an individual market. You can't take a box from, say, BHP and place it on the oil market. Okay, they are individual market boxes as such, and there's some quirks in how the software actually constructs them. So I want to make sure we're on top of those. So very simple term, we take the size of a previous bull or bear cycle in terms of both time and price. We draw a box over that cycle, drawing internal angles. Now, really what you could argue is the internal angle, particularly from the top to the bottom or the bottom to top, is really just a speed angle. And so that's where the two come together, boxing to market and speed angles. We place a box of the exact same size over a corresponding top or bottom, and we watch the market trade within that box. So is it inside, is it outside? And we can also see the angles that exist in that box, but they're not your traditional 1x1s and 2x1s because we don't have set price and time. Price and time can be very different as far as our scale is concerned. So this one here is on the US dollar, and this is certainly not my work, and it was I forget who presented. It was definitely one of our students who gave this freely out and was watching this box on the US dollar. So boxing the major cycle here from top to bear market low and adding it on the lower top there, you could argue, or that bull market top, pretty much came very close to nailing in terms of time and price right on that low on the US dollar. So that was a major catalyst for many people going long the US dollar through that time frame. And obviously things like the Dow Jones. So what you've got here is a cycle, and it really doesn't matter which cycle we're looking at. We're taking a major bull cycle here from major low to major high. Now you could argue, why did we pick that top? Yeah, Noel wrote about it in his last Platinum article, absolutely key. I know Noel's been doing a lot of trading on the US dollar and associated markets. So what we're talking about here is, how do we keep the second box the same size when we copy it? Absolutely. These are all important questions which I'll make sure we get answered. But really, when we're picking on our low here, we could pick on that top, the market, even though it did push to fresh highs. You could really argue through that cycle there, that was really where the market was getting re-engaged or fueling up to make that next move. So I think that top there is a pretty obvious one why we've selected that one. Placing it on the next major cycle, you can see that the box just came short of the actual top just came in a little bit earlier than where the market actually topped on the Dow Jones. So that's the sort of way that we watch it. We're also going to watch what these angles are doing. So you can imagine that the major diagonal that runs through, we'd be quite comfortable to say looks like a 1x1, but it's not a traditional 1x1, but you could still argue it is the major diagonal. It's just really the speed angle you can argue. And then we can say, is it sitting on these angles? Is it finding support? Is it finding resistance? Okay. So these are things that we start to bring into the view that we've already got on our market. So what I want to do is jump into profit source and I guess play around with how we're going to construct these and how we can interpret them. Now, what I've always said with boxes is it's a bit like squares. If you want big results, you focus on big things. There's a lot of small small boxes that we could use, and they are helpful. But in the early phases, they tend to become, they complicate the situation, and so you end up having so much information on a chart, and you can't quite see what's going on. So what I'd say to you is it's very simple. We start with the biggest cycles possible, and then we can step in accordingly, and we can measure where we sit in terms of previous runs, in terms of time and price. So it's kind of doing your speed angle work for you in many cases. But I tend to focus these on a major scale. So jumping into profit source, there are a few quirks on how to copy and paste it, and people sort of say they're bugs. They're not. They're actually designed this way, but you'd argue whether the design is exactly how it should be. So let's jump into, let's pick on a market that is close and dear to us all. So the share price index. Okay. So the first thing we could be doing, let's just argue for 2 seconds that this is the new bull market. Okay. So this low in March of 2009 is the beginnings of the whole of the bull campaign again. Now we could argue, or we could measure to see how well the market is performing with regards to the previous cycle. So if I throw a box on the market, as you can see, I can set the parameters according to time and price. Now, if you look at that, it looks like a square. Now, particularly if I adjust it, I can pretty much make it look very close to looking like a square. But you've got to remember, it's not a square. Okay, it doesn't act like a square. Well, it has similar properties to the squares, but it's not a direct time and price alignment, because I can tell you that the amount of days from these 2 points do not agree with the amount of points from low to high. Okay, even though they look pretty similar, they're definitely not. So what we've got to do is make sure that we set up our original box as clearly and as accurately as possible. The easiest way to do that is to get it on the screen, and just set it up according to your to the exact parameters in the market, I should say. So we know the market low at 26.79 in 2003. We know it made a high of 68.80 in 2007. So what it's done is it's created a box that takes into consideration that cycle. Now, what we're going to do is we want to pick that up and we want to add it to where we are in the current market, but doing that is not as easy as it seems. So what you've got to do is you've got to right click on it. So if you pick it up with the internal angle, all right, so any of the angles that are internal, you won't move the parameters or the shape of the box. But if you pick it up with any of the borders, you'll see that you actually change it, and that's obviously something we want to avoid doing. So I'll get it set up again exactly where we needed it, which is the 13th of March, 26.79, 1st of February, sorry, 1st of November, 2007, 68.80. Now you can actually lock that if you want. So you could lock that. I could right click on it and lock the Gann box. Now that's wise, but there's a small problem with that. When I copy and paste it, it will actually be locked. So then I'll have to unlock it to move it. So I'm going to right click and select copy. Now, if you zoom in here and you then try and right click and paste, what will happen is it will give you a box that doesn't look anything like the original one. All right. So as you can see, that does not constitute a box that looks anything like the original one. The reason it does that is that you've got to have enough space in terms of white space to paste that on. Otherwise, the software doesn't quite know what to do. So what I mean by that is you need to sort of, if you're going to paste something on, you want to make sure that you've got a lot of white canvas here to paste it on. So I'm going to right click, copy. Now don't try and paste it to the low because you'll never get it on. Just right click and paste somewhere out here in the space. Okay. Now what you're going to do is zoom in. Now as you can see, I can't pick it up and move it, so I'm going to have to unlock it. And what I'm doing is pick it up by the internal angle, and I'm actually going to drag it in. Now here's the problem. If I go into the parameters and change the point sizes and the dates, I'll actually adjust the shape of the box, which I don't want to do. So what I've got to do is zoom in as close as I can to that low. And what I've got to do is place that on that low to the best of my ability. Now, as you can imagine, you could spend hours trying to get it as close. I think that's about as close as we need to get it. You know, we're talking within a few points here over the cycle of our box. I don't think that's going to be too much of a concern. Now, the interesting point here is that we can now say, well, how is this current move running in terms of the previous cycle? Now, the problem that I also have with the boxes is that you can't color code the angles, or you can't color code these speed angles. So everything looks the same color. Now, if I was to just put a trend line on here or an arrow line, I can actually create overlays over the top. It's a very manual process, but I could actually just draw a trend line over the top. Now that is really the speed angle from the bear market low to the bull market top. Okay, so we're clearly above that. So you can argue that we're above the major speed angle of that move. Okay, but what's that really mean in context? Well, see, and now I've moved. So that's the problem. If I move, try and move the speed angle, I end up moving the box instead. Now, I meant to mention my other computer's gone down. So if you're typing questions, I'm not seeing them right now, but rest assured I'll answer them as soon as I get back into the other screen, which I'll do in just a second. All right, so we've got that set up on our low. So what we're really watching for here is if you said, okay, well, give me a forecast. Well, I could say, you know, the market should, you know, if it repeats exactly to this level, I'll tell you the 28th of, it's not going to work. So, you know, 7,312 points on the 29th of December 2013 will be the top of the market. Now, that's if the cycle repeated exactly and according to the previous move. Now, if we go in and zoom in on what the market's currently done, it has actually used these angles, or these speed angles, in terms of support and resistance. So initially the market ran quite strong, and it found some resistance there, fell to the next angle, and then obviously that's that July low, and obviously the market moved out of there. Got into a bit of no man's land here between the speed angles, and but has now come back and sat on there, moving a little bit sideways through that period. But you know, your higher bottom there did come off that angle, and technically you'd have to say that we're running quite strong in comparison to the previous move. So if it did continue to move in this fashion, you might say, if I'm looking for a time and price alignment, well, it can't hit that one there because that's obviously passed, and that'd have to be a pretty spectacular move to get anywhere close to there. Maybe a more realistic target might be to watch something like that. So that's going to tell me about the 8th of May, 5,200 points or somewhere around there. Now, if we started to build a forecast on the share price index, which we're not going to do, and you happen to come up with dates that were around early May, once again, close to, seasonal dates, etc. And around about those prices, you could say, all right, well, what if the market sort of meandered into that and then fell out of bed and went south? These are just extra ways that we can use boxes to guide us in our application. But remember, and I'll come back to your questions right now, is that you've got to copy it and paste it. You've got to have enough space on your screen so that it can be pasted effectively, and then you'll find that they're easy to pick up, but they're hard to move around. So, all right, Lois is happy with that answer. All right, so can I just get a quick, I was about to say show of hands, but that shows I'm out of practice on this online stuff. Is everybody happy with how they apply boxes? Because I guess the theoretical side of how you click and paste and all that sort of stuff, because if we're good with that, I'll just, Darren's hands up, great. Great, fantastic. I thought you all would be, so I'm just making sure that I haven't left anyone behind. So what we want to do now is actually get in and start to throw some boxes on our markets of choice, okay? So we'll start off with, yep, everybody's great, which is good. So what I'll do, I'll pause this camera again, and I'm going to jump back into Profit Source, and we'll pull apart some of the major squares, or boxes, I should say, that we could be using on, say, Newcrest Mining. And then also we'll take a look at the Aussie dollar, and that'll probably obviously keep us busy for this week. I guess some of the things I sometimes do is head out to a weekly or a monthly or even a quarterly chart, just to sort of see, all right, well, what's this market? Where are the major sections that I could be picking on? I guess the first one that I'm sort of seeing there is trying to pull apart, a bearish cycle. You could say, all right, well, if I was looking at bear cycles, you'd probably be comfortable to pick on that sort of move there from bull market top to bear market low. So that would be a bearish box that you could be using. Now, this is over obviously a very large time frame, but we'll make sure that we get this set up accordingly. So that's the interesting 21st of December, 87, $19.14. No, wrong. That's the low of the day. Why don't I take the high? 1984. Right, what I want to do is pick on that. There's our 97 low, which is the 3rd of December at $1.13. So with this sort of stuff, you've got to be accurate. Okay, there's no point being kind of close. All right, you've really got to work on being accurate on this. So what I'm going to do is pick up this one, paste it on the anywhere on the screen. There we go. And I'm just going to measure it in comparison to the cycle that we saw off that bear market top. Sorry, bull market top, I should say, just to see whether we've got any conviction in our current market analysis. Now, from a price perspective, the market fell through the box. As you can see, the market actually went some way through that. But I guess you could have been using this just as a guide, and we could still be if you argue that that top doesn't get taken out and that we are in a bear market. If you're going to box and use that cycle, that's the best bear cycle that we have in terms of this market. We could be watching this now, and it's going to give us a forecast date that's well into the future, 2018, which is all a bit too far away. But that's the premise of the technique that we're using. So if I look at that in current action, as far as watching the angles is concerned, well, I'd be comfortable to say that we've got a hit. I'm just going to zoom in a little bit further. We definitely have a hit there. Okay, island reversal hitting on that angle. You could say, all right, market's sort of come back and found some support, and isn't it interesting that there's that 23rd of December. So that cycle that occurred many years ago is still potentially being useful to us. At the moment, we're seeing the market bouncing around that angle, and interestingly enough, it's right on that gap. And interestingly enough, one close. Down day, it's now closed. So if we can get maybe a couple of closes above that blue line or that blue speed angle, potentially where we're in the situation where where we could close that gap and push higher. But at this stage, maybe it's planning on following. And one of the ones I'd definitely be watching in setting this up is to take a look at. Oh, that'd be right. Just not enough space. After this one here, which I'm just going to color code, I'd be watching that angle to hold and potentially to see whether or not we can, I've moved it, there we go, I'll just delete it. Maybe watching that angle to hold and say, all right, well, that could be, our guidepost. Now, interesting it will be whether it breaks this box to the upside. Now, as I'm doing that, that's obviously a pretty large cycle. So you'd be thinking, all right, well, how valid is that? How useful is that to me? As I'm going to zoom in here, I'm actually going to take a look at this smaller cycle, which is obviously still a number of years, but I'm now sort of pulling apart, bearish cycles that have existed in this market. So I've started on the biggest one. It's given me some positives without giving me the keys to the golden city. So I'm now going to sort of pull apart that as a cycle and say, all right, well, where does that sit in terms of what I've got working for me? So I think these are all equal tops from memory, 692, 692, 692. So we'll take the first of those tops, which is the 6th of January. There you go. 6th of January, 692. And we'll get that low point. There's our all-time low, 3rd of December, 97, $1.13. All right, so now I'm going to pick up that cycle, or that box. I'm going to copy it, zoom in, give myself some space so I can paste this. I'll paste that on top. Now, I always go back and check to make sure it looks right, and that doesn't look right. It's probably the best way to describe it. So maybe I didn't copy that. Maybe it's the original one. So I'm going to copy that. Paste it. Still doesn't look right. I'm not sure why. This is some of the little vagaries that sometimes Profit Source decides to throw. There we go. That looks about the same size. You can always chuck it over the top to see. There we go. All right. So now I'm going to pick that up, remembering using the internal angles. If you use the edges, you'll find that you end up changing the size of the box. Now, as you can see, that range or that cycle is pretty inconsequential in terms of the current moves, because we're talking only a few dollars, and we're only sort of saying, okay, well, we're talking about a $5 cycle. But I guess there are a couple of things that we can do here. Is we can actually add multiple boxes. It wasn't something I was planning on having a major discussion about, but because the market has given me a reason to talk about it, I'll have to. All right, so I'm going to throw that on there. Now, the first thing we can be doing is watching for time frames. So time frame analysis would say, all right, that cycle, not knowing how many days it is, that's going to be 25% in time. Now, obviously, that gave us the top. 50% in time is going to give us around about the 16th of February. 75% in time is going to give us around April, and now we're getting into 2011. But purely looking at a time frame tool, we could be arguing that if it follows out in a similar pattern as far as time is concerned, somewhere around about the 16th of February, 16th to the 18th of February could be a date to watch. All right. Now, what I'm going to do here is get a little bit tricky, and it does require a little bit of fiddling. Of course, this doesn't want to play tonight. What I'm actually going to do is just add. I just want to see how many of these boxes the market ran down, and whether or not price ended up being an important part of it. There we go. So what you've got to do is, if you're going to make multiple boxes, is you've actually got to get in here and sort of, it's a bit like my son doing jigsaw puzzles. You've got to kind of join these all up together. Now, as I said, it's a bit messy, and it's not the most obvious and neat way to do it. But if it helps you with your analysis, I'm all for it. And if you're doing a hand-drawn chart, obviously you don't have these problems. All right, so I'm just going to link all of these up as best as I can. I'm just going to overlap them. I'm not trying to get too cute to the actual cent. But it's interesting that I've zoomed in too far. And then I've moved that one. There's the aggravating part of it. Let's see if I can paste another one. No, that doesn't look right. Pick that one up. There we go. So I can tell you that according to just using these boxes, you've got basically 4 cycles in price. So if I went back to that rundown, I can use the manual ABC pressure points. Now it won't give me the exact, it won't give me 400%, which is what I'm looking for, but it will actually illustrate my point. Is if I 692 and $1.13. I need the date. 6th of January. All right, so if I zoom that in there, you'll see that I've now got that working in terms of price from top to bottom. And if I drag that to the current top we have in the market, you'll see that it's gone more than 200%, but I can guarantee you, as you can see, sitting there 200%, it's done about 400% of that. If I get it on the right day. Oh, be kind. Creating the ultimate Charlotte's Web. There we go. I'll change colors there. As you can see, that's done 200%, 300%, 400%. So even though we've had to create a few extra cycles or a few extra boxes, you can see that the current bear move is actually in context of price is 4 times that original move. Now, here's where we can use multiple boxes to get in and say, all right, well, was there some support or resistance around certain levels, and was it sitting on angles? And you can argue that there's some resistance there and there's some support there. So there's a, I guess if we're in a bear cycle, isn't it interesting that we're now seeing the market holding up against those levels there around about that $37 level? So until we can get a clear market moving through that gap, and then obviously you know, closing above those angles there, that could be one to watch. So that's sort of some of the ways that I would tackle placing boxes on my market. So using major previous bear cycles and bull cycles is certainly one of those, just checking if there's any questions. So that's, I guess, from a bear perspective. Jumping back in, we can go and take a look from a bull perspective. Now, I guess before I go and start doing all of that, we do with this information. So before I start sort of, you know, coming up with more dates and prices to confuse you, remember that we're going to use boxes in comparison to other work that we've done. So we're going to look for time by degrees, we're going to look for angles, we're going to look for price support, we're going to look for time support. So if we had a view that, you know, there's a current top in the market, we could be looking at the boxes and saying, all right, well, we do have some resistance sitting on that speed angle, and therefore we might expect the market to turn at this point. Very important that we don't use these as a standalone indicator. I don't know many people, if anyone, that I know that could constantly be profitable just using boxes, particularly because you've got so many variables which cycle to play with. How many boxes can I use to cover the market? It's a bit like squares. We've got to use multiple boxes. One of the things I want to get put into the software is being able to just create properties and just create 2, 3, 4, 10, like we do with squares, as many boxes as we'd like. But at this stage, it's a manual and a messy process. So I'll apologise for that, but that's just how it is. So remember that we're not going to stand alone purely on the use of boxes, but we are going to use them as a guide, particularly if we've got time and dates coming in that back up from our boxes, that back up the work that we've done with our other timeframes, etc. So I need to be very clear on that point. I just don't want boxes being chucked on markets and expecting the cycles to repeat. We're going to watch for support and resistance within inside the box, but we're also going to use timeframes like we do with squares, 50%, 25%, and the same with obviously the use of the boxes. So we want to line it up with some of the other work that we're doing. All right, so jumping back into profit source, we can take a look at the view of the, you know, we've now measured some boxes from bearish cycles. We could obviously go and take a look at the same thing if we expected that we're in a bull cycle. You know, the same thing, I guess, exists with regards to that 3rd of December low. Oh, sorry, 3rd of January. Yeah, 3rd of December low. Back here in 97. And running it out. Now, I won't, for the benefit of time, I won't go through the process of tuning that up exactly, but we can actually pick that up, assuming that that was all tuned up exactly how we would like it, and we could throw it on the current low. So assuming that, as I said, that that's all tuned up exactly how it should be, could we argue that, that the market has produced, you know, that previous bull cycle has produced some areas to watch for changes in trend? So we can see the market holding the angle through here, and then obviously running into the to the next angle there. So if I said to everybody, oh yeah, the run out of you know, 2008 is looking very, you know, is running in comparison to the run out of 97. You know, most people would look at you and think that you know, you've gone for a long walk off a short pier, but you could say that you know, I'd be keen now to go and check that date, because you know, if we push that in, you know, we're now looking early February. You know, seasonal date as being one of the areas that we could be watching. So that could be some homework for you, is to go and set up that box from the 97 low to the 2008 top, and then place it on the 08 low, and see what unfolds. So yeah, the 2008 top, the March 2008 top, and throw it on the low, which is in the 24th of October 2008, and just see how that's repeating. And you can obviously go and look at the time frames, and you can look at the support and resistance within inside of that as well. All right, so the other thing we need to take a look at is potentially the Aussie dollar. All right, so if I'm looking at bearish cycles, let's assume that we're in a bearish phase. I'm not suggesting that's the case, but let's say we were looking at bear markets. We could go all the way back to, this area back here and measure from this top all the way down there. Going to give us a very large cycle, though. Nothing wrong with that, but I guess I'm trying to come up with things that are a little bit more relevant to the current move. All right, so what we've got here is a high of 82.10 and a low of 49.96 from memory. No, sorry, 47.74. And that's on the 2nd of April. All right, so now I've got my cycle established. I'm going to copy and paste that and plonk it on the current top. And that'll give me a guide to say, all right, well, that looks normal, fantastic. Is this cycle anything like, is this bearish move down, was it anything like the major previous run? Well, you'd have to argue that the price worked pretty well. I'm going to zoom in and get that close as I can. There we go. So the price worked out pretty well. As you can see, the market did break through there, but it's made it's made a number of bottoms on that level. So it's just stuck its nose into that next box. You'd say, this area through here, where it's come back and sat on and found a, little bit of support, little double bottom on that angle. In the same way we'd look at squares, there's some support there, resistance at the moment, and now we've broken back out through that resistance. It held the market once, false broke, got its nose a few times, fell away, came back down, and interestingly, it sort of fell right into that time pressure as well, because as you can see, that intersects with terms of not only price but time. So if that's, wrong button. If that's 25% of the cycle and that's 50%, that's 1/8, a quarter, that's 3/8 of the cycle. All right, that's 50%, so that's about 37.5%. And as you can see, that time frame gave you around about the seasonal day, and that's where the market obviously found some support and started to push higher. So if that time frame seems to be working okay, and I'll just go back and check. Well, that time, I won't argue that that's right on. That one's a bit, close enough, but not fantastic. So all I'm saying, moving through here, you could say, all right, maybe early April as an area to watch for the Aussie dollar. Around about the 17th of June, June seasonal date. The 75% point is going to put you in around about September 2010. So that could definitely be one of the little ones that we'd be watching right now in terms of that cycle. And that's obviously using a bearish cycle. Now, assuming that we believe that we are in a new bullish phase, and it's okay to use bear cycles in bull runs and vice versa. Whatever's working, I guess, is the most useful one to be helping yourself with. 47.74, 2nd of April, up to the all-time high. Oh, 15th of the 7th, 97.70. All right, so we'll create a bullish cycle now, or a bullish box. There we go, it's now all behaving for me. And we could be watching to see how this market's been operating since then. All right. That's not bad resistance and support through there, I'd have to say, and we're coming right into a potential time and price alignment there. So price and time coming together, in about the next few days, which interesting. All right. So if that, the market can't break that, you might find that it just sits into there. Now, one thing I haven't touched on is that I've been looking at these as purely as calendar day boxes. One of our conundrums with all of our third dimension work is that we can then look at them in terms of trading days. and calendar days. I tend to focus mainly on calendar days with these sorts of cycles, but I have obviously had some success as well using trading days as well. So just keep that in the back of your mind. So calendar says that we've got some potential resistance coming up, and then obviously the trading day says that we're just holding above that. So important to have a view, I guess, on what both are telling you. All right. Okay, so let me pop back to you guys. So remember, with our cycles, with our boxes, that the bigger the time frame, obviously the harder they become to use. If you've got a box that's 4,000 days long and $500 in price, you'll find that the market engages with that on a far less frequent basis. So what I tend to do is try and pick on the major cycles, obviously have them saved as chart pages, and then start to narrow myself in. And really, you can get down to using boxes over sort of cycles that would be considered to be far smaller. So if I gave you one last example. Yeah, which one to believe, Lois? And that's why you need to obviously have a view as to what you believe the markets are doing prior to, jumping in with all guns a-blazing, saying this has to be the cycle that I'm in. So I'm just trying to see a smaller cycle here. Let's just say, for example, and I won't tune it up. Let's just say we'll pick on that one there. So as far as a date was concerned, we're about a week out as far as that time frame is concerned. So, if I was balancing time, I would have been, a little bit late on that as the market fell away. And obviously, as you can see here, the market really couldn't, and I should say the Aussie dollar here couldn't break through. We're about 3 or 4 days out from that top, and it's just sitting on those angles there, which it just couldn't get its nose, hit that angle, and speed angle, and it just found resistance, and it couldn't push its way through. Finally got its nose, and then it sort of fell out of bed. But that's how you can start to break them down into smaller sort of phases. I would never really want to be running boxes that would be smaller than a few months in duration. Would it work on an intraday perspective? Absolutely, but you've got to have the time, the inclination, and the tools to want to be able to draw it on 60-minute bars. But start big and then obviously work down. Yeah. True, thanks, Darren. I forgot that little one. I remember that one now. But not being a huge currency trader, I just do the old dog and no new tricks technique, which is just open up the data window. But there you go. Thanks for reminding me of that one. All right. So I guess from that perspective, over to you guys now. If you've got any questions about boxes, that probably only recaps all the things that you've already learnt through your studies and through your application. So I'm sure there's no new brain waves there. But it's one of those things that it can pay to know which of the boxes are working, and obviously going back and testing them in the market is a very, very important one. So I'm going to obviously do some work on boxes and come up with the solutions that I think are the ones that we can be following going forward. But I'd certainly like your input on that. So yeah, exactly, Des. Avoid having bull and bear outlook. Exactly. So you just want to see because the thing is that like we all know, we're geniuses in hindsight. This recovery, what I've done in the instances of our markets is I've taken bear ranges and I've applied them to tops, and that would assume that we're still in a bear market. And they seem to be working okay. So what I'll say to you there is that there is more conviction, to my view, that maybe we haven't, maybe we're just seeing a bear rally within bull rally within a bear market. So, but yeah, let the market tell you what it's prepared to do. As we all know, as soon as we start telling it what to do, we run into some problems. But always having an open mind on boxes. I try not to get caught into a directional bias. I just see what the markets are doing, show me what's working best, record the dates that they give me, and obviously areas to watch, and just see if I can lap them up with or align them up with other parts of the tool set that we've got. If I could get time by degrees, balancing time, known time frames lining up with some stuff with boxes, that'd make me really happy. If I don't get a box lining up with that stuff, it's not going to perturb me from moving forward, but it's just nice to be able to just to see whether a market's running strong or weak in comparison to its previous move. And if we leave it that simple at this stage, then that's all we need to do with it. All right. Great, thanks, Lois. I appreciate that. Whatever you got from it, I think is fantastic. So over to you guys for questions, comments, or queries. Other than that, we've got a bit of a view on what our markets are doing. I think we've got a strong view on. We've had a good look at the time that since we've been together last, and hopefully that would give you some thoughts and ideas to go back, and even if you didn't trade those moves, go back and paper trade them. Just sort of make sure you live them sort of a day at a time, and just make sure you get the lesson from that. But otherwise, guys, it'll be same bat channel, same bat time next week, and we're going to continue to sort of finish off our discussion on third dimension, and then we'll start to set a plan for our last few weeks together as to how we're going to bring together some forecasts and put together some trading plans. So that's my my thought process for our time that's left together. So excellent stuff, guys. All right. Well, thanks everybody. If there's any questions, shoot them at me. But yeah, other than that, guys, square of 4 and square of 9. Richard, unfortunately, they're not covered in the Ultimate Gann course. I might do a little bonus for you. How's that sound? But yeah, the actual discussion that David has on square of 9 and square of 4 and things like that are generally at the Master Forecasting course level. So I know we used to do some lessons on a little bit on the square of 9. I'll definitely I'll touch on that, and you know, I'll give you a little bit of an insight into it. But unfortunately, the scope of giving a full lesson per se is going to be a bit of a challenge. But I'll definitely give you some food for thought. All right. Well, thanks Key and Lynn and Richard and Linda. I'm going back through the list, and Elizabeth and Ashley and Darren and Annie and Robert and Wayne and Graham. Thanks everybody. Jose, thank you, and I hope everybody you know, had a enjoyable and a relaxing Christmas, and looking forward to 2010. So all the best, everybody, and I'll see you in a week from now. Rightio, everybody. Well, thank you, and I'll catch you next week. All right, so officially a welcome to everybody here tonight in the room, obviously for session 9 of our Ultimate Gann coaching lessons. So just getting the right bits and pieces up. There we go. So seem to have a full house tonight. So obviously everybody's probably back into the swing of things. Obviously the markets are certainly tracking back to normal volumes, etc. We did actually have a public holiday in the United States last night, so that's obviously given us some I guess less of a lead. It was interesting. We saw the Dow down about 100 on the last trading session on before the holiday, so on the Friday, and our market responded yesterday by going up, and then obviously with no lead from Wall Street last night per se, today the market sort of struggled a little bit. So we'll have a bit of a chat about that. Obviously keen to get your thoughts and feelings on where the market's at. So sort of paraphrasing where we left things last week, we're sort of talking about being a relatively good time to be waiting for confirmation in the market, whether those tops of around sort of 10, 11 January would hold, whether we get a lower swing top formation as a possibility to get short, whether we'd see a breakout opportunity of the market to get long. So obviously there's a variety of things that we're watching and waiting for, and obviously we've got a little bit more of our third dimension studies to have a chat about tonight. So without any further ado, we'll just remind everybody of our financial services license compliance obligations. So that just advises everybody that we hold what's called an Australian Financial Services License. That enables us to provide generic and specialised advice with regards to derivatives and a number of other products. We need to remind you that we've not taken into consideration your individual personal circumstances or financial objectives. In doing so and putting together all of our materials, it's designed obviously from an educational purpose. And of course, we'll be looking at the current market, and we'll be taking a look at potential setups and entries into the current market environment. You need to obviously work out whether they're suitable under your own steam, and if in doubt, you should obviously consult a licensed financial provider or advisor to guide you in that process. So as always, if there's any questions with regards to our license or how that impacts you, please always make sure you get in contact with me or ask me any questions you'd like. I'm only too happy to answer those. All right, so moving into our session, obviously, as I mentioned, session 9 of 12 sessions together. So sort of into the you know, the 75% milestone, you could argue, of our time together. So, or just past that, or sorry, coming into that, I should say. So what that means is we're sort of tailing off now with regards to the theory components. I'm sort of going through my own mental checklist. Tonight's discussion on squaring time and price and squaring lows and highs and ranges will probably be the final point, I guess, of our organised theory from the Ultimate Gann course, as far as the sessions that we repeat or we replicate from Gann Mastery. Obviously, there were some discussions last week. I think it was either with you guys or maybe even the Wednesday night group, I forget. Obviously, whether I do a complete lesson on the square of 9 and the square of 4, and you know, there was a few other squares thrown in there. Obviously, from my perspective, they are very full lessons on their own right. They're not actually contained in the Ultimate Gann course, but I guess in my forecasting discussions, as we're going to compile them over the next 3 sessions, I thought it was only fair that I probably touch a little bit on those tools. They certainly won't be complete lessons with regards to you know, the ins and outs. That sort of stuff's mainly at a master forecasting course level, particularly the square of 9. But obviously, they are certainly part of Gann's arsenal of tools to be applied in the market. So I thought I would have a discussion on those in the coming weeks. I haven't yet worked out where I'll slot that in, but I think it's only fair that we have a discussion in relation to the square of 9, because I guess if anybody's ever Googled Gann, the first thing you tend to arrive at is a square of 9 discussion, which is I always find quite amusing. It's people don't know what a stop loss is, or they don't know what a swing chart is, or they don't know what a trend is. But if we teach you the square of 9, where we're bound to replicate trading success or create untold riches for you. So it's one of those things. I actually just on that topic of squares and square of 9, etc. The whole concept of squares, of natural and permanent squares, which we've already talked about, really was something that came later to me in my progression. It wasn't something that I got a full grasp of. I guess I was using the tools in many ways, maybe how you're feeling them. I was throwing them at the market and hoping to see what stuck. And then through time and experience and good judgment and poor judgment, they all started to sort of come together. And you just spend individual time working through, for example, the square of 144 or 168, and then light bulbs start going off. But I'll tell you that things like the square of 9 and some of the other master calculators and master squares that Gann talked about, really for me are finishing stones to the discussion. And I actually had a good chat with David in September of last year, just before the session that I did on the square of 9 at the Master Forecasting Summit, and obviously had a good chat to him about where he saw it and how he saw it in the pecking order of his tool set. And like many of the things that we're talking about, it really does form the basis of baking a cake or a recipe. It can't be used in isolation. It was something that he relied on heavily in some moments and less so in other times. And it was really about what was working for the setup at the time. And so what I'd say is that, particularly with our lesson tonight on squaring highs, lows and ranges, I definitely will look to that to tie things together with regards to what I'm looking at in the market, but I won't go out solely based upon squaring a high or squaring a low and suggest that that's the place I should be looking for in the market. So hopefully by this stage of our time together, you're starting to see that whilst all of these individual pieces within a puzzle are fluid, they and sometimes in a market you'll rely quite heavily on a particular tool, and then other times you'll shelve that a little bit. And I guess when we look at squaring lows, highs and ranges, it's something that, for example, on the oil market is not as prevalent as far as what I would consider successful tools or useful tools, as say something like balancing time or time by degrees or calendar day counts or trading day counts. But I know, for example, things like the share price index, squaring highs, lows and ranges is hi Neil, everyone else having challenges, or has everyone got me okay? Is the audio working for everybody? Just give me a yay and nay. Yeah, okay there for you, Darren, great. All right, so fantastic. Thanks for everybody for confirming that. So I'll just push on. Neil, let me know if that starts to continue. We'll look at what we can do at that stage. But I'll assume that we're all systems go from this end. So as I was suggesting, it's very much a case of layering those techniques and understanding what works on a given market. So what we're going to do tonight is we'll take a look at the Aussie dollar. We'll take a look at Newcrest mining. Hopefully you can share some of your experiences with squaring ranges, highs and lows, because on some markets I found that they're not as valuable a tool as some of the other ones I've mentioned. And then in other cases you can find where you just seem to get a series of clockwork turns that all just seem to come out with relation to squaring time and price. But in sort of thumbing my way back through the Ultimate Gann course, and obviously knowing David's work from from obviously the Master Forecasting series and those sorts of things. So Neil, what you might try and do is just log out and log back in. That might be one way of solving that. But if it was affecting everybody, then I could certainly start to worry what my setup was looking like here. But the fact that it's sort of jumping in and out for you, it just might be a case of having to refresh the connection. So log out and log back in and see how we go if that resolves. So as I said, just following up, I've managed to lose my place again for a second time. That's all right, not your fault, Neil, just my inability to do two things at once. I am still on holidays, you see, so I'm only single focused. Single thoughts, one at a time. That's about all I can manage at this stage. But it's really about knowing your individual market. We'll test it on things like Newcrest mining, on the Aussie dollar. And yeah, I'm also a bloke, Annie. Thanks for pointing that out. I was going to use that joke, but I thought I'd let cleverer people like yourself, throw that one at me. But I'll also point out that there's a lot of work required to square lows, highs, and ranges, and then you've got calendar days and trading days. So there's quite a discussion involved in that. So there's a fair bit to that. There's a lot of work involved, and the problem can be is it can be very rewarding. It can give you a lot of pressure dates to watch for that tie in with the information, but it can also be a bit fruitless on some markets as well. You might find that it's just not working. So I guess I want to start the discussion by saying that the person I've seen get the best precision or the best outcomes or results with squaring highs, lows, and ranges I would have to say would generally relate to would be David. So I'd have to say that sorry, that's just my home phone ringing. It's all happening. But would be the best person that make those results come together would definitely be David. So we're all trying to attain that level of proficiency. But I'm going to explain how I tend to use what I call the footprint method, which is where I tend to get a footprint with some of these dates and then obviously try and line them up with some of the other techniques that we've got working for us. So that's certainly going to be something I want to share with you tonight. So not having to rely so heavily on just coming up with one date and then trying to hang everything off that, but just using it as a footprint with regards to other facets that we're comfortable with. So that's certainly going to be a good discussion tonight. So quick reminder is that obviously we'll do a quick market update. We did a pretty robust one last week, so I'm going to try and move through that relatively quickly tonight. You guys probably should now start to be able to give me that market update with any luck. You should start to be able to break down the markets that we've been following and have a good discussion about the position of the market. If I go back to our first session together, David always talked about being able to, know the position of a market at any time, rate its strength being weak or strong in a particular direction. So they're skill sets that you're never going to grow tired of as far as in time in the market, because it's very much a case of always refining and honing those. It's an awful feeling when you don't know what a market's doing, and I still experience that, where I get caught in situations where I'm not quite 100% sure what the market is due to do next. And so there's two things you can do. Is you can either push on and try to trade it and generally give back money, or you can wait for the market to confirm itself. And as I mentioned, I think we're waiting in one of those phases at the moment. Just we're waiting for a bit of confirmation. And as I said last week, I'm a little bit more bearish than I am bullish, but always happy to change that. So yeah, sure, Debbie, we'll take a look at gold as well. So we'll do that as part of our normal market review. So we'll take a look at the SPY, we'll look at the S&P 500, we'll take a look at gold and oil, I guess, as well, being the drivers of the market, and we'll see what they look like, just to be able to get relative positions on all of those markets. So that'll be certainly something we'll take some time to do. So obviously a review of our markets being Newcrest Mining and the Aussie dollar. Obviously the third dimension continued, so I sort of jumped ahead as far as what the slides are telling you here, but I've jumped forward saying that we're going to obviously do what David referred to as squaring time and price. And I guess once again, sort of paraphrasing the work that you would have done from the Ultimate Gann course, David talks about how in his studies, and I can certainly only back them up with what I've done, I've never seen anybody other than Gann combine time and price in this sort of methodology. So I think he was the absolute pioneer in this sort of sense, is that this style of analysis is not something that you would consider a traditional technical analysis technique of what's out there and available, turning time into price. But if you wanted just a one-liner when it talks about squaring time and price, basic concepts in the back of your head you need to remember is that if time and price weren't the same thing, then you couldn't square them. So Gann said time and price were interchangeable, but he did say that time was obviously the overriding factor. And really what we're going to do in a market is we're going to take prices and turn them into times. And that makes sense because we already do that with squares, because let's take, for example, the share price index. We take the low of 458. We know the square of 458 works fantastically well. We know 458 points on the share price index is certainly one to watch, and we know 458 days, both calendar and trading days, can be worthwhile to watch. So all of those facets of turning prices into times, and I've also done I've also done it vice versa. And just to give you a sort of a discussion on that, is that with the use of the 161 day count, I've also run squares of 161, so $1.61 movements or $16.10 movements on the oil market, and they work fantastically well as well. So really what we're trying to say there is that prices and times are interchangeable as far as techniques are concerned, and we'll do our best to see how they impact the market. So obviously that flows on to talking about squaring a low, obviously is one of our major areas in the market, squaring highs, and obviously squaring ranges. So that's the three sort of components that I see left as far as going through the Ultimate Gann course, saying what are the techniques that we need to just review. For many of you, you probably understand how the tools work. You probably understand what you're trying to achieve. But all I'm trying to do in our time tonight is just to tune up your understanding, make sure that there's no gaps, and make sure you're comfortable and confident in applying those techniques, and then you will obviously be able to tackle them going forward. It's really about understanding the individual parts and knowing how to move forward with them. So that's our plan of attack. So square of the ranges are confusing. Fantastic, Graham. Thanks for sticking your hand up for that, because that's definitely what we're going to be talking about tonight is taking the value of a range. So really, in simple terms, we take a range and we turn that range into a time frame. So if the range is $1, $10, $100, we turn that into a time frame. We do that through the use of Gann angles, and then we come up with some pressure dates. So we'll definitely do that as part of our discussion tonight. So let me jump out of our PowerPoint presentation. Let me just jump on to Profit Source. And before I do that, I'll just I'll throw a caveat out early. There is a possibility that I might have to run out tonight. I'm having my two boys are getting looked after tonight because my wife's heading out to be in other places. So for whatever reason, if my youngest son decides to misbehave, which he hasn't done for very, very, very many months. But if he does, I might just need to sort out his pumps and tubes and bits and pieces. So if that happens, I generally find if I mention it now, it won't happen. But if I don't say anything, then it's about an odds-on chance of it will happening. So for whatever reason, if I have to duck out, it'll only be for a moment or two. And just wanted to throw that out there just in case it shocks you, so it doesn't shock you if it does happen. All right, so let me bring up profit source. So that's obviously where we're going to drive and do our discussion from. So you should see profit source popping up on your screen. I'm just making sure that that's happening. Yes, it is. So, all right, so what we've got is a scenario where we've seen the share price index obviously trade today with a relatively large, outside reversal day. So many yesterday were sort of seeing that as a resumption to what was the big picture trend. So if I just go back one day, that was off the market, heading down 100 points in the United States on the Dow Jones. Thanks, Neil. Glad it's seeming a lot better for you this time around. Obviously, strong day on the Monday, opened on its low, pretty much traded up throughout the day, only to be followed today by a relatively large outside reversal day. So not a good sign for the market. The tops that are holding here around the early part of January, where we talked about obviously Gann saying, the market can tend to run into that area. And Tim actually posted or wrote an article too. So we'll take a look at the volume, Annie, because that'll be a good sign. But Tim Walker actually wrote an article in the Safety in the Market monthly newsletter, which would be certainly a good one to review. So if we sort of talk about the highs, on the 6th of January there, so 49.42 is the high. So what we've got is the market holding at those levels and seeing what comes from that. So at this stage, we seem a fair way away from that level. It's certainly not insurmountable that that's going to be breached. But remember, we were talking about if the market could get to the upside of that level, we would obviously be more confident about being bullish. Until that occurred, we were in a bit of a bearish phase. You could argue that you did get a lower swing top confirmed. So if I just put a swing overlay on that chart, if I drag that down a little bit further, there we go. So if I take a look at just a one-day swing overlay, the major trends are still very much up, but we saw a lower top, lower bottom scenario, then a higher bottom kick in, and now we've got this lower a potential for a breaking of those bottoms. But at this stage, that's looking like a little bit of support through that area. So what we'll have to do is wait and see how the market decides to hang on to that level. Around about that 48.36, that low there's 48.37. Low today's low is 48.36. So we've managed to break that by 1 point, and it'll be interesting to see whether we hold those levels. We've got little gaps there and those sorts of things. So understanding where we're sitting on a one-day swing chart, the perspective is obviously quite different, in the sense that we're seeing a little bit of a uncertain trend. 109 points down, 70 up, 72, 68 points, so it's a contraction on that downside. That swing chart's not taking into consideration the outside day just yet, because obviously we, if I use the close of the outside day, oops, I clicked the right button. We put that in there. We've now actually sort of got 70, 72 points repeating, and then 75 points. So you now actually have sort of equal ranges, 68, 70, 72, followed by 75 points, which is expanding. But it's still, as Linda said there, the one by one in the square of 458 around those levels. So it's still strong in the square, absolutely. So we're still holding around those 48 50 levels. 4580, no, 4850 levels, I should say. We've got a long way to go to get back down to one full square, which we know is kind of in that area there. So we're still sitting strong within that square. I completely agree. So it's not time to just suddenly just go short for all those reasons. The problem with squares though is that you're always going to have the potential for conflict, because you could be weak in one, strong in another, and it does take some time, particularly for the SPY to move half a square. That's approximately 224 points. It does take a few days. So if you're waiting purely for confirmation of where it sits in the square, you're going to be late on a lot of moves. So that's why we've got to obviously back it up with other time frame work, etc. Weekly chart's still very strongly up. So we've got that 357 point upswing, 110 points down. So that that can't be construed as being too bearish at this stage. But I guess the point I want to make, and I'll come back and have a look at that volume that Annie was mentioning, is that we're still in this scenario where we've seen higher volume today. So we've seen the market jump up to about 37,000 contracts. Yesterday was only 24,000. So there's certainly been an increase in that volume. So that's certainly a sign that things are potentially problematic for this market. If you had to read that purely as a form reading signal from that one day alone, outside reversal day on high volume, you'd have to argue that the bears are in control, but that doesn't mean that they can't return. You're going to want to build other cases or other reasons. Now, we know for a fact that we're still holding that 5,000 level, which we talked a whole lot about last week, which is, that 49, let's just call it 5,000. That's that psychological level, 49.90, whatever it is, 94, which is half the all-time high to the 2009 low, sorry, 2008 low, no, 09 low. Stand correct. I'm getting my years wrong. I had to sign something today. I had to write 2010 on it, and I nearly fell over. I wrote 2009 and had to start again. Okay, so Dave's put in here resistance from the 1x20 angle days up from the all-time low for calendar days. Fantastic, David. So market's holding a bit of resistance based upon some, once again, third dimension work. So that's something you guys should all, I won't put that on a chart now, but that's something you guys should all be across and familiar with, is just being on top of where that sits as far as those zero angles off the all-time low. We know how important they can be on our market. So I guess the philosophy really hasn't changed all that much from where we were a week ago, whereby we were saying, all right, market hasn't pushed through 50%. Gann talks about early January as being a place to watch for changes in trend. We've seen that. We've seen a run up, the Christmas rally, strong move into early January, and we know historically we can get a decent pullback from there. So I think the mindset here would be pretty simple, is that, what it can do around those lows, and whether you could get, a breaking of those sort of those bottoms there. If that started to show you a lack of support through that 4,800, 4,840 area, you could maybe argue, potentially time to go short. I'd still want to sort of see where we're sitting on things like 2-day swing charts, etc. That's always a nice confirmation whether or not it's decided to turn down. At this stage, it's still strongly up. So if we could get that's all right, Des, welcome aboard. The reality here is if you could get a lower top and then break out through that swing bottom, very well, let's keep it simple. Let's just say a confirmation of a lower swing top on the 2-day chart. I think that would give me far greater confidence to start thinking about going short. We know the 3-day chart is pushing to higher prices. So we're going to have to wait a little while for that to add up as being a reliable indicator. So I guess, all of those things, being what they are, hold us in interesting times. And, sometimes if I break down, to sort of revise some of the lessons we've done, is that, if you were looking at sort of little sections within the market, you'd really want to, have an understanding, and obviously not trying to make this a lesson on the SPY. You'd want to know pretty simply, if I, wanted to know some day counts through here. So if you're doing some time trend analysis, you'd really want to know where you're sitting on the big picture as far as time trend analysis is concerned. So what's the market been doing on the way down? For me, you've got expanding downside, contracting downside. I'd fancy that's done about 200% of that time frame, and then you've started to see big expansions to the upside. So what we have to start to argue is that, all right, we've seen this market sell off, and that's great. In terms of a pullback, I'll just bring up a fresh chart. In terms of a pullback, there's be a couple of ways that you could probably measure this. There'd be two sort of Gann retracements you'd be following. Obviously the one from the November low, and if you take into consideration, it's only done about a 25% pullback. And then you could obviously also take a look at the pullback from, from the December seasonal move. And if we look at that, we're talking about a 33% pullback. So we're talking very simply, a small pullback in context of, the moves that we've made. So if the market can't break down and can't break out through to lower prices, I guess the thing that's going to tell you where it could be possibly time for this market to make another leg up is to have a pretty good idea as to what the timeframes have been on the south side. So if we look at that time frame running down there, we're looking at about 21 days on the downside there. If I pull apart some of these other smaller time frames, once again, you might be thinking, do I really need to know, that's a 10-day time frame? Well, what's 50% of 21? Well, it's about 10 and a half days, and we don't trade half days unless we're talking Christmas moves and and public holidays. So the numbers for me are always important. If I then sort of drag it down there, well, if we talk about 16 days down, we're in a situation where 16 as a percentage of 21, 16 as an extension of 10, one day either side is going to give me 150%, 16 as a percentage of 21, those sorts of things. So I guess what we're going to look at here in context is, let's assume that, well, we can't assume that's the top. I'd like to make the 6th of January the top because it would just suit my my story a little bit better, but unfortunately the market hasn't done that yet. So we've only run down 8 days. So, your classic example would be, well, if it's going to repeat the 10-day range, you're looking at about the 21st. If you average it out to the 16 days, well, it's going to be the day after Australia Day. And if you push it out to the 21 days, as far as that bear market move, and I need to move my chart over. If we push it out to 21 days, we're looking at early February. So all of those could be potential dates if we're just watching pure time frames and using time trend analysis. So 21, 10, 16. Now at this stage, you've got 16 days down was the last move. And if I just bring it back to today's date, we'd be watching for, and today's date being the 19th. Let me check that. Yep, it is the 19th all day. So if we're talking about an 8-day move, well, we're talking 50% of that time frame there. So we're not sitting on a 50% retracement. So what would get me most happy would be if the market had come back maybe to a 50% retracement and run down, but it hasn't. But this is the sort of thing I'm just looking at. I'm trying to show you the micro picture here. If we're going to measure that time frame, I can certainly run that time frame down. Time frame in 16 days. I can run the same in terms of price. Well, I find that it's somewhat interesting that the 50% point, which is lower 48.36, the 50% point's 48.37, depending on how you want to round it. And so if it's going to run down 50% in price, it's going to be at the level we're at now. And if it runs down 50% in time, using the 11th as the top, well, today's the 19th. So that's the sort of harmony I'd like to see, that if I was exceptionally bullish in the market, if I could see a reversal and it can't break through those lows, holds that 48.37 level and starts to push back to higher prices, that could be an opportunity for us to get long. But that to me is, certainly, not the best setup in the world, but that is a time and price alignment when looking at previous historical moves. So we could be looking for a potential push to the upside. As all things being said, we're going to have to see some support here, we're likely need to see a big move in the United States market to sort of give this market some impetus. But that was just some of the work I've been doing throughout the day, and I kind of found that was something of note for us to be discussing. Just talking about a smaller picture, because sometimes we tend to get. If I pop out of here, I'll come back to you guys. Sometimes we get too focused one way or the other, and sometimes we're working in the world of 17,462 days and in time frames of 3,742 days, and then other times we're too much in the micro, where we're focusing on 5-day moves and 10-day moves. So in terms of the bigger picture, we're sitting under that 50% that we've talked about so often. Obviously we're strong in the square of 458, so that would back up the idea that if we were I guess to try and give you my scenarios, if this market is strong, we should see a bounce out of here. So if this market is the real deal as far as being a bullish move, I think this is as good a place as any for that to start to unfold from. But if you can't see that bullish influence start to come through, my reckoning or my rationale is pretty simple: is if this doesn't provide a springboard for this market, then by definition it is relatively, it is somewhat weaker, and then maybe we are in a situation where we should be looking to get short. So as I said, confirmation's a great thing at the moment. It's not about being brave and trying to know every date where the market will turn, but I think that little pulling apart the time trend analysis and knowing what a market's done in terms of price and time in a small window as well as a big window, I think is a pretty good skill to have. So just to tie that loose end off, I'll jump back into profit source. Let's assume that today, we're saying, all right, we're bulls out of here. We want to see something happen. Of course, things we would be doing would be running. We'd call that a zero date. So you can actually use today as a zero date analysis. Let's assume that you only sort of came across today as a forecast date today. Keep in mind we could be running back timeframes that relate to to the share price index. So I guess the one that always jumps to my mind, not being a spy guru, but having a view on it most of the times, I'd obviously be interested to know what happened 458 days prior. So this is where you'd start to run back, and we've done a small discussion on zero dates, but nothing massive. If I can find the other end of our ruler, there we go. So if I ran that back, well, I'm not getting too much of a hit 458 days ago. I'd be applying other time frames there. And the other thing as well, obviously we know how well things like time by degrees works on the share price index. So if I tune that up to the 19th, which is where we are, we'd go back through. I'll just delete some of those days. We're coming close now. We're about 45 degrees to that top. We're about 60 degrees. We're about 90 degrees. So all of those tops, 15th to the 18th are also yellow time by degrees dates. Absolutely, Darren. So we're right on that for our, middle of the month time by degrees. But as you can see, tops are coming in. And then a few days later, we're seeing sell-off. Tops coming in, sell-off, tops coming in, sell-off, tops coming in, followed by sell-off. 180 is not great. 240 is pretty close to a low there. 360 is not a huge turn. So, you'd have to argue, whilst there's a little bit of harmony there, maybe not quite yet ready to bank the house on it. 540, 630, 720. So the market low on the 22nd of January in 2008, and we saw a strong little move up from there. So yeah, this is where obviously your master time cycle work and all of those things you could bring into just start to firm up whether you consider that a strong place to be watching from. So, a little bit of more in-depth work on the share price index, but I guess the value of knowing, if I put it to you guys, and I know a number of you do trade the share price index, had you been watching you know, these runs, did you know how many days up, how many days down, percentage retracements and all of those sorts of things. I tend to find that, you know, that's some stuff that we tend to sometimes be not as diligent on, and we sort of lose focus a little bit. So just to, you know, tune that up for you, I'm really looking at the last bearish cycle, and I'm talking very small picture stuff here as sort of being that run down. There we go, I did have it. There we go. Sort of, why am I not getting a drawing tool? If we call that run down there to there, we know that that's 16 days, and we know it's a certain amount of points. We know that this current move down is 50% of that move, and it's taken 8 days. And I guess if we're using that as a speed angle, which is some of the work that we did last week, if we're only focusing purely on the last bearish cycle, we'd have to say that the market is on the upside of that speed angle, and therefore, you know, it hasn't yet broken to the underside. It's had 2 days underneath it, had a third day where it tried to crack it, fourth day couldn't get above it, fifth day held the close above it, and now we've held 2 days above. Now, that's not a strong close, but, you know, I'd have to argue that that's probably more of a bullish sign at this stage. If the market can push through, get back to the downside of that angle, maybe we've got something to, you know, keep us busy. And, you know, if we're looking at price targets, you know, end of January, 27th of January is going to give us a, you know, the time target. And, you know, where does it sit on, say, a Gann retracement tool? Well, I'm just thinking, does that sit on a 50%? Probably a little bit greater than that 50%. So yeah, it's actually more about a 62.5, 61.8, somewhere around there. So there you go. If the market can fall down there, you know, we might be getting back to that 47.20 area. But once again, all sort of just pure analysis at this stage. There's not really a trading idea in there. That's just trying to firm up where we see ourselves. And, you know, I guess the interesting thing here, going back just to talk about volume really quickly, is that we have seen an increase on volume today. I guess the interesting thing that I always like to think about in these cases is that whilst we've had a dramatic increase in the amount of contracts traded today, we haven't broken through those major areas, that speed angle being one, the 50% point on the previous range and those sorts of things. So even though we've had that increase in volume, we haven't broken that strong technical level. So that could mean that maybe the bears are going to run out of a bit of steam. They've had a few cracks at it, haven't been able to push through, and they might run out of steam at that point. You know, I've seen that occur plenty of times, but I've also seen the opposite where it'll slide through there, and, you know, it's a great time to be short. So I think very much, you know, just to give you a potential for a setup, I guess if the US was down heavily overnight, if we saw a gap down on the day market tomorrow, maybe a short the open, something along those lines could be a potential way to get in, given we're looking at that as being some relatively strong support in terms of price and time. And, you know, if we don't get something, you know, positive in terms of bullish movement out of there, we get a gap down. If you've got a nice short the openers, if you could keep risk small, that is a little bit of a trading idea, I guess, that I'd throw at you. So something to keep in the back of our minds. And I guess jumping now quickly to the S&P 500, you know, we saw last week, you know, a discussion that we're now sitting above that 50%. I think it's warranted that we I set that up properly. Now, I've probably just thrown 100 things at you. I'm on holiday, so I'm nice and relaxed. So I talk faster than I normally do. All I'll point out is if you've got any questions about that, it's probably a good time to shoot them at me while I'm poking around on these markets, because I tend to, as we know, jump to other things. And if I jump to something and then it's time to come back and talk about it, I'll probably have lost my point. So if there's any questions about where the SPY sits or any further discussion we want to have, I think now's an excellent time to have it. So I'm just making sure that that low from memory, 667.5, which 665.5. There we go. All right, so taking a look at where we are, we saw last week that the all right, let me pop out. So have you you've all got me as far as sound's concerned? Because we've just had a great discussion. So I asked for questions, and it's one of those things. If you're not hearing me, I'm not surprised you're not asking any questions. All right, everyone seems good. So battle with us, guys. It's all seeming okay from where I sit. So you know, if it isn't, let me know. It comes and goes. All right, let's battle on. All right. So what I'll try and do is you know, not move profit source around too much. When I start moving the image, that obviously sucks a bit of bandwidth from you guys. So all right, I'll try and not move the chart around as much. All right, let me just jump back into profit source. So we were talking last week about the S&P 500, if you recall. We're talking about how the 50% point was really, you know, interesting in the fact that we had not found a 50% level in our market. So we'd not been able to break through that, you know, just under 5,000 level. But here in the United States, we've had, you know, that 1126 level holding as being sort of sacrosanct. And the market had pushed through that. It's come back and it's had a couple of red bars there. So if I look at that, you know, had 1 day down, then it's had 2 days up, strong close on the 14th of January. On the 15th, that's where we saw the market, you know, have a big reaction and, you know, you'd argue once again a pretty weak day. coming back to really test what is a number of multiple bar chart bottoms there. Now, as I mentioned, last week, if we take a look at a swing chart, the trend is going to be predominantly up on the time frames like a one-day chart. Sorry, tell you a lie, it's actually down on a one-day chart. I meant on a weekly chart, we've got a nice clear uptrend, and 2 and 3 day charts would probably be neutral to bullish. So I guess the information we need to take away from the S&P 500 is that if we get this market holding at 1126, we might have some potential for upside. Remember sort of mentioning it to you, if we get back under that 1126 and we get a weak close, I'd have to argue that the market is in for some is in for a bit of a caning. So I think that'll be a very key level for. I'm just getting up my platform just to check live pricing. Just bear with me while I do that, because you guys will be seeing a screen that doesn't look anything like Profit Source. But just stand by for a second. All right, so it's. All right, for some reason it wants to, I don't want to deal with that. Just let me log in, how's that sound? All right, I might have to come back to that. Let me try that again. There we go. All right, so I'm still here. I'm just getting up the S&P 500 because I just really want to keep an eye on that that 1126 price, because if the markets will start to get going again shortly, even though there's been that holiday in the United States. The evening trade should have started to kick off, if not now, very in the near future. There we go. I'll just find the right contract. There we go. So we're trading at 1133.70. So 1133.70 is the current trade. Turn that back into a bar chart. So I'll just put up a horizontal line there. 1133.70. So that's where we're trading. We're holding above that close, but we're a long way away from 1126. But that will be for me the barometer that if we were to break under 1126 tonight on the US markets, get a really weak close on high volume, and then we saw a short the openers underneath those levels we talked about on the SPY, then I think you're acceptable, as far as a short signal is concerned. But at this stage, in thin trade and in the evening over there, you're looking at a market holding somewhere away from that 1126 level. So interesting times ahead, because that will either, if that fails to act as a springboard, I would have to really suggest that the markets are in trouble. So, we should expect maybe to come back and test 1126 at least, and then obviously pushing out from there. So time will tell as far as what happens there, but keep a good eye on that overnight, and we'll see what comes from that. But once again, that sort of 11th of January top is holding as far as time's concerned. So going back to all of that work Gann put down, markets running out into the first or second week in January, and then potential sell-offs from there is holding. But that I look at that sort of move there, and it doesn't really have the I'll just put a circle around it. That doesn't really have the hallmarks of a bearish sell-off. That's just more, to me, a bit of a potential accumulation, potential distribution. They're always always easy to read after they've occurred. But in looking at that, that 1126 level should hold as being, as I said, a springboard to higher prices. If it fails, this market's probably in a fair bit of trouble. So you'll get definitely some technical selling underneath that level, and we'll see whether or not the bulls are really committed to this so-called bull market recovery. All right, so let me come back to you guys. So we've sort of touched on a couple of different things tonight, and I guess probably more pure, analytics rather than, anything of theory nature there. But I guess I want to throw it back to you guys and just sort of make, some observations. If you guys are happy with the assessment of that analysis at this stage, if you're in agreement, in disagreement, I'm sure there's other things we could bring into it as far as, squaring that low or high and putting different time by degrees and running time frames, and where does it sit on this square and that square, and what about a box? But I guess all of those things are useful, but for me, they come in application once I've made a little bit of a framework along the lines of what I've just given you. That's my discussion, or my mental process that I have in my head, is where does it sit technically on a small picture with swing charts, with obviously price resistance off, straight number one trading plan stuff. Give me some trading ideas. If it breaks that level, go short. If it holds that level, go long. And then what we can start to do, and that's from a trading basis, and then from a forecasting basis, we can say, well, is there anything backing up the 11th of January high? What can I do to support the current low that's in the market? All of those sorts of things. But I guess throwing it to you guys, and it's not just the case of, yes, we agree and we thought it was great. I really want to start to push you to think about, is that something that you feel comfortable being able to derive that analysis yourself by taking a look at the chart? Now, maybe not as quick and maybe not as clean and neat, but those should be, working parts that are a part of your arsenal when you're looking at the market. So we've talked about the S&P, 500, and we've talked about the SPY, and we've come up with some trading ideas associated with that. Back to you guys. Are you comfortable with the work that we've just done? Does it make sense? Is it foreign? Is it feel like you got a grip on it? Great. Linda's comfortable. Hands up if you're comfortable. I'll start telling jokes if we don't get responses. Okay. Yeah, Graham's good. Wayne's good. Great. Ashley and Debbie, fantastic. All right. So I guess effortless from Des, great. Key and Lynn, good stuff. So it's less about. Okay, so just scrolling down here. Neil's asked me a question there. Volume, how to establish bears and bulls. Okay, well, that's the greatest challenge that we've all got, Neil, is that you can't read, and I'll just recap, I guess, a bit of volume, is that the reality is that you can't ever know whether it's completely bullish or bearish volume. And volume is a great indicator, but it's what's called bidirectional. So in other words, you've got buyers and sellers mixed into volume. So you don't always get a clear read on it. So one of the things I'll show you really quickly how I can sometimes qualify whether I think it's bullish or bearish volume. I'll show you one indicator. It's probably the only indicator I use in Profit Source that isn't a Gann one. But that being said, I'll give you an idea of how I sometimes pull that apart technically. But I'll go through the other comments here. So Graham's happy. Richard's taking time to get a grip. Richard, no problem. Richard, I'm taking time too. I'm over 10 years now, and I'm still getting a grip. So, I don't know whether that's encouraging or not, but I'll let you know when I've got it perfect. And I think 3 or 4 lifetimes I should have it nailed. Albert's saying not quite yet. That's okay, Albert. Just we keep plugging away, but I guess keep throwing questions at me where you need to, and make sure you when you're not comfortable or you're not quite getting it, you just got to make sure you let me know, and I'll always do my best. Yeah, David said getting analysis is okay. Getting the entry is troublesome. Well, absolutely. That's and I'm glad you really raised that point, because I guess that's the story of my great frustration. I guess is I'm at a level now where most of the analysis I do is pretty good. I'd have to say more often than not I get the right direction. But why is trading still challenging is that you've got to get an entry. You've got to get a way to manage it, a way in. You've got to be comfortable with the risk. And I have to tell you, I'll be absolutely upfront with you, is that still remains a challenge to this day. I don't ever see a day where it won't be a challenge. Where, okay, sometimes you get your classic textbook entries where, they're just like they're from a page from the Ultimate Gann course or number 1 trading plan or starter pack, and they all come together simply. But that's the street smarts of trading. That's the stuff that you unfortunately only get by trading. That's the stuff that takes a long time to actually file away in the mental archive. So next time around you see that, you feel confident to do it, because we've all taken setups that didn't work, and then next time they come around, you go, oh, the last time it didn't work. You really know you should be on top of it. You should hit it at that point. You don't, and then that proves to be the successful setup that you should have been on, but you didn't because you got gun shy. The same thing occurs when you have a good run, and then you try and do something that you do something silly that undoes some of your good work, and that's the street smarts of trading. And I think if you can accept at this time that you'll never master the trade management, you'll never be, hindsight is the only master of trade management. Everybody else is out there trying to make a go of it. And Linda's saying you're guilty of the silly stuff. I could write you a book on the silly stuff. The silly stuff that I have done. I should get a website. The silly stuff I've done in trading.com. I give you plenty of examples of what not to do. So, but look, they teach you things, you grow from them, and if you're prepared to take a lesson from your losses, then they've been worthwhile to some extent. I remember talking to some people about this. David said you've got to learn to love your losses, and he just says, he wish he could get someone to love them for him. And I've never really fallen in love with my losses, and I've always, battled with them. I consider it. I get frustrated. I don't take them well. Even at this stage, I'm not a good loser. Is probably the best way to describe it. So rest assured that doesn't change. I still do silly things from time to time. It's far less. The frequency goes or changes. You instead of seeming to do it every second day, you just do it every third day. But you'll find that over time you knock some of that stuff out. But once again, that's from experience and those sorts of things. So whilst it's been a 5-minute discussion, I think what David said there is important to realise is that the analysis bit will come first. The being able to pick direction and then being able to pick tops or bottoms on the day they're happening, and then a week out and a month out and 6 months out and 12 months out. That's the stuff that always comes first. The second bit is the nuances of then how to sort of turn the analysis into dollars, and that's that extra learning process that goes associated with the analysis. So rest assured, that's something that I've never mastered. I don't plan on. Well, I don't think I ever will, where I can get everything right. I consider mastery being able to be right all the time, and so I don't ever think that'll be the case. So It's just a case of learning how to manage it when you get it wrong, and then turning it into setups and managing it out of, intensive care, or getting out of it with the least amount of damage is probably the best way to describe it. So, all right, well, I think that was a good discussion. Thanks for your comments, everybody, and thanks for yours, Darren. I appreciate that. So look, nice and simple. I'm glad you're seeing that analysis on those index markets. Happy with those potential setups, and what you've got to do now is go and own those. So in other words, if you are somebody who trades those markets, particularly the share price index, what you've got to go and do is do exactly what I've just done, and then dress that up in how you need to do it in your head, and say, all right, well, come tomorrow, if I see this or I see that, this is going to be my plan of how I'd tackle it. And if you do that, even if there is no trade signal tomorrow, just by owning that information. And it's funny, Tim Walker and I were having a wee chat the other day just on email about how do we it's kind of like going to the theme park and not riding the rides type stuff. It's like how do you get people to go to Australia's Wonderland and actually get on the roller coaster? And it's great to go there and watch the roller coaster spin around, but no one knows quite what it feels like until you jump on it. So, I don't want you to just get out there and just pour money into the market and just take every setup that you think's a good one or a bad one or an indifferent one. But there is a way that you can learn and own things, and that's by actually living them. As if, come tomorrow morning, watch what the market does, have a view before it opens. If it hits here, I'd be a buyer. If it hits here, I'll be a seller. And follow it through like it's the real deal. So Robert's saying, yeah. So Robert's given an interesting conundrum, which is he's talking about if he's bearish, then his analysis is bearish, or vice versa. So if you form an opinion, you can always be very good at finding the reasons why that opinion's correct. And that's where you've got to go back and be valid and validate your tools and say, am I sort of trying to find reasons to agree with my methodology or my view, or am I actually finding things that agree? And there's another half an hour discussion, so I'll let that one go through to the keeper, as they say. But it's very true. You've got to learn to not have a bull hat or a bear hat. You've just got to learn to have a trader's hat on, and that'll be the best thing you can do. So, all right. I do want to make sure we touch on the couple of our other markets, and make sure that we don't spend all night yabbering on about trading psychology. Will be the next thing that we pull apart. So we'll do the short course on trading psychology. It only goes for 2 years. All right, so we'll take a look at gold, because obviously that's a big part of what we're thinking about on Newcrest mining. So there's obviously interesting patterns starting to form out of our 22nd of December. So we know that the reality is that 22nd of December was a low. We got a higher bottom. The market's pushed out strongly from there. We're still some way off that all-time high, which is obviously some distance from where we are currently. The swing chart's telling us that we technically have a lower top and a lower bottom. So technically we're in a downtrend on the one-day chart. We're in a screaming uptrend on the weekly chart. You would have to argue though that $200 weekly swing there was probably a little bit overcooked. $206 there, and the market sort of had a little bit of a sideways before it gained momentum again. So maybe we've got to go through a little bit of a sideways before we see that market sort of getting some strength. I guess once again we're always keen to see where we sit in terms of retracements and those sorts of things. Look, I'm probably going to sort of perform some of the same work that I've done on the share price index, but I'm going to sort of take a look at this bearish moving, from sort of late November into December. I guess if I go back and look at the last sort of major bear cycle, particularly in terms of price, these ones here are all sort of snippets through here. They're really not ones that I'd be overly focused on. They're probably a bit too small scale. But if I sort of go back maybe and take a look at sort of February into April last year, that's probably the last major bearish move. You'll see that it's run out at 100% of that. So in other words, prices has been repeated. I think you'll find that time is obviously a lot shorter in this current pullback. So if I pull apart that run down, well, that's 45 days. We've never seen that number before. I reckon if we take a look at where we are now, I reckon it's going to be very close to 50% of that. Probably even less, actually. No, well, it's pretty close to 50%. So, it's 20 days, 19 days down as opposed to the 45 days down previously. So just shy of a 50% retracement in time, 100% retracement in price. If we go back, and I should have left that up there. What I want, that one. So if I grab that one again, it would be quite logical to expect that, at 100%, we might find that the market's found some support, of which it has. We can go in and then sort of look at retracements in terms of the bullish move and all that sort of stuff. But we're pretty comfortable to say 22nd of December on 100% of a previous bear market price move or bear cycle price move. That's probably good reason. First higher bottom. That's just a give me trade. Didn't take it, but I can tell you that, in hindsight, that's the sort of, ABC stuff there that gets you feeling pretty good about life. Interesting, it's run just under 200% of that A to B range. but we're holding right at that 50% point. Okay, so it's not surprising that we've come back to run down, run 100%, come back to that 50% point, and we've really struggled at that 11.5620 level, you can say. So it's sold off from there and bounced to the 75. So I don't know about you guys, if you think that this is working pretty well as far as milestones is concerned. I think that's, you know, that's pretty textbook. It's bounced off the 100, it's rallied to the 50, it's fallen to the 75. For me, I'd be looking at this in one of two ways. I think really the safest trade is going to be if it can break out, back out through that 50%. So if I just draw a little, not a balancing time, you know, if for some reason my arrow line tools just decided to pack it in. Anyway, let's get a trend line tool. So let's say we're now expecting that sort of move on the way back out. So for me, it's going to be very, very important to see what it does around that 11.56 level. So the safest trade in my mind is going to be when it starts to break out through those old tops. You know, you're going to be left with hopefully a decent sort of run. And so what I'm saying there, break out at the 50% to the upside safe trade. You've got a little small double bottom there. So, you know, only on a very small time scale, but you'd argue right on that 75% point, which is 11.2055. If the market breaks through those areas, you might see a retest of the 100% point. So, you know, 11.20 to 10.84, you know, there's, you know, $35 worth of move in there if you got 17. So I'm saying if you got half that move, you'd be pretty happy. And oops, move my pressure points tool. And vice versa, if it breaks out to the 50%, what have I done? I've managed to move the original one I fancy. Yeah, there we go. That's always designed to be helpful. I think you get what I mean though. If it breaks out through the 50%, you could then be obviously coming back to test, you know, up here at 12.20. So half the move on that side or half the move on that side, either of those would be fairly useful. Now, I've given you obviously a small perspective in terms of, you know, time up, time down. Quick little thing I want to check is that we know it's run 19 days down. I want to now check and see how many days it's run out from that low, just to see from a time trend analysis perspective. You know, we've seen it run up 20 days, so it's interesting that it's run down 19 days, run up 20 days, and it's done about 50%. Let's take a look at and see on that side. All right, the 50% is also holding on in terms of that move. Okay, from the all-time high down to the December low, it's come up and touched 50%. You'd really, in my mind, want to see a breakout above that level to be bullish. And while ever it holds underneath that level, I think a retest of those lows there, which is about 10.75, is more likely in order. So to me, the risk in this case is more likely that the market's going to head lower than it is going to head higher. But if it can break out through that around that 11.52 level, I think you've got some upside potential. So you're going to want to see some strong closes through there, and obviously you know, look for an entry signal, maybe a first high swing bottom on the way out, or maybe breaking through tops, etc. Multitude of ways, but it's got a fair amount of work to do before it gets there. Let me quickly check and see what the gold market's doing. All right, it's about 11.3840. So we're very much no, we've actually come off a little bit off that close. So if I'm taking a look at the close there, which was 11.3070, so we're about $8 higher than that. So coming back up to test that 11.50 level potentially, but you know, that will definitely have an impact on you know, if gold remains bearish, we get a sell-off on the share price index. I think you're obviously going to continue to see that flow through into Newcrest mining, which we'll take a look at in just a second. Final thing we'll take a look at, shoot any questions on that if you guys would like, is obviously the oil market. It's made a top out here at just under $84 and starting to come off from there. Knowing what I know about oil, I'd say that, you know, we're probably in for some continuation of that bearish move. I'd be watching very much that little 50% point. That's not set up exactly, and I'd be very much watching to see, you know, if that's 28 days. About the 25th of January, at around about that $76 mark. You know, that you never know, you're lucky in a big city. It's probably the best way to take a look at that. 50% retracements in terms of time and price, I think are pretty good ones to be watching on this market at this stage. So you know, I think short-term bearish on oil, probably short-term bearish on the gold market, and potentially, you know, quite bearish if we break that 50% on the S&P 500 level. So, you know, I think once again, if I jump back out of here, come back to you guys. I think once again we're in a situation where we've got cause to be patient. If we, you know, we're poised to make some moves, and I think they'll be, you know, relatively, you know, robust in their movement, be it on oil, be it on gold, be it on the S&P, be it on the SPY. So I think right now it's better to be a little bit late in these moves rather than a little bit early, because I think there'll be still a little bit of volatility. we're seeing a lot of stuff coming around mid-January, late January, those sorts of things, particularly on those gold and oil trades. So, you know, it could be a little bit of holding pattern until then. Watching that 1126 level on the S&P 500, watching what the SPY is doing around that 50% move. I think now it's worthwhile having a more micro view rather than a macro view. So, you know, obviously we'd have our dates if the SPY was our market and those sorts of things. We'd have dates to be watching, but at this stage, I'd be comfortable to just keep a micro view and just you know, wait for confirmation and you know, keep our risk very small at this stage in the market. So jumping in. Oh, okay, yep. Thanks, Annie. You know, memory like a sieve. Thanks for reminding me. What I'd say is that sticking to the micro pattern and keeping risk and getting very, very small risk entries away is probably how I see trading over the next couple of weeks. Is getting tight entries and keeping risk small. And if you get stopped out, having the confidence to jump back on the horse. But I wouldn't be swinging massive bats at the market. And it goes back to the point I made last week, is that if you did all right out of the December rally, and if you did all right out of, you know, Newcrest mining, and if you did all right out of oil, and you did all right out of all those things, at the moment you don't feel the pressure to have to go and extract something from this market. So you can have a little bit of a nibble and feel a little bit more confident. All right, so what I'm going to do, Annie, is I'll make sure I talk about that indicator, and I'll also look at Newcrest mining and the Aussie dollar. So let's get back to the share price index, because that's the one that I think it was Neil might have been saying. I forget who asked me about volume. So if I take a look at profit source, the scenario we've got here is the share price index. We talked about volume being greater today than what it was yesterday. It is greater than the average, which is that blue line. So in other words, it's slightly above the average. Knowing whether that's bullish or bearish, you'd have to argue purely based upon a close of that bar and then the volume doing that it's bears in control. That's a little bit simplistic. It can be, it can help you in the fact that it can remove the analysis paralysis, but it can also be a little bit simplistic. So one of the tools that I use, and there's a few in Profit Source that are available to you, one is called accumulation distribution. Now, what this indicator does is basically looks at volume and price. Okay, so if you want to know exactly how it's calculated, you go into the help menu, and as you can see here, it was developed by Mark Chaikin. If you've heard of Chaikin's money flow, he basically is someone who does a lot of price and volume work. All good stuff, I mind you. Like, once again, squiggly lines crossing squiggly lines, but it's you know, not always easy to understand. But really, what it suggests is that it takes relative close value, looks at, you know, close and highs and this and that and the other. Read it to your heart's content. What it basically says is if it's pointing down, then people are distributing the instrument, or if it's pointing up, people are accumulating it. So through this area here, we'd argue that you know, we were right to be thinking, you know, there's a bit of accumulation going on through that phase. Even though price action wasn't actually rocketing, you'll see a big shift in the indicator, and that was sort of suggesting that there was a fair amount of accumulation going on through here. Since about the 6th of January top, how surprising, since the 6th of January top, people have been starting to distribute, okay? And now it's not as reliable because volumes are patchier through the early part of January, but you'd have to say that prices are going sideways and the line's going lower. So that tells you that people are probably distributing that. So that sort of firms up the case for our bearish view, if you want to put it that way. The same can be said with on-balance volume. Now, this is just another indicator that uses a different calculation. And what it does, there you go, there's an even bigger one that you can go and read in the help menu. So you guys have got some homework in front of you. I want a 10-page document on the on-balance volume and how it works, put together in 1963 by Joe Granville. I've heard the name, I don't know too much about the gentleman. But really what it does is, once again, tries to look at volume as positive or negative. Now, if there was a foolproof method for this, people would have already worked it out. It's not. It's just, once again, it's probabilities, and it's taking best guess. But once again, on balance volume is pointing to the fact that we are making lower tops and lower bottoms, you could say, as opposed to making higher tops and higher bottoms. So what I would say to you is this, and I can sort of tie that up for you. What I'd say to you is that if you are bamboozled by volume and you're looking at it and you just can't get a clear idea and you don't know whether you're reading it as bullish or bearish, go to either, and now my personal preference is the accumulation distribution. The line tends to be smoother. The on-balance volume can oscillate quite violently, and it can make it harder, in my humble opinion, harder to read. Now, I know a bloke like Tom Scollin, who I've learned a huge amount from over the years. I was lucky enough to get some time with him when I first started many years ago. You know, he lives and dies in many ways by the on-balance volume. So I think there's something to be said about the skill set in reading those indicators. It's not just a case of being able to, okay, what's it tell me, and rely on it constantly. There's some artistic requirements, like all indicators, particularly our Gann indicators. So what I'd say to you is that if you're completely bamboozled and you're unsure and you're just looking for a relevant backup, either of those two indicators could be helpful, but please understand that you have to line them up with a pre-existing view. So if you're bearish, and you're looking for confirmation that you're going the right way, you might look at those indicators and say, okay, fantastic, they agree with my view. I will continue along with my analysis and my trading process. But please don't just bring up the accumulation distribution index and go, it's pointing down, so I'm bearish, okay? That's the way I see danger in using those sorts of indicators, okay? So if all of your other work's saying, I think it's time to be short, see what you can put together with the use of that indicator. But they are two good ones, but I advise you to use them sparingly and also in consultation with a number of other techniques, okay? Don't stand alone with those because they will burn you. If you've made that mistake before, place your hand in the air. Oh, there we go. So living from real world experience, that's I know that feeling. So I'm just trying to give you a guide there. All right, so let's jump into profit source again, and let's take us to our two markets of choice. So we've got Newcrest Mining. We'll get rid of the on-balance volume. What we've got here is the market really failing at that $37 level, which we talked about. It was right on that gap. It's getting harder and harder to sort of see that that gap's going to be taken out in the near term. If we're looking purely as a retracement level, we've got those major gaps there. We've got the early part of January, and we're sitting, underneath that 50% level. It's sort of rallied to about 62.5%, 61.8, somewhere around there, and the market's sold off. Here's where probably that trading acumen versus the analysis acumen. We sort of talked about last week, if it breaks through those tops, time to get long. Maybe if we got a lower swing top on the south side, maybe it's time to go short. The problem we have is that, if you argue that's your first lower swing top setup, you're entering at 60 or 70% of the reference range. Thanks, Neil. So you're entering at about, 75% of the range, unacceptable in terms of a normal ABC trade. Now, profitability would have been there, okay, but the reality is that that's not, going to get you into a trade. So how would you have taken that? Maybe a sell on the close, and then maybe the next day you're going to run into a few problems there holding that trade. So difficulty in saying, we're saying lower tops underneath that top was a good trade. Trading it was very, very different. So I guess the next scenario we could argue is that we're now looking for another lower swing top underneath that 50%. So if I look at that, I'm probably going to ignore that swing that's in the middle. So there's ignoring outside day swings. So what you've got is another scenario where you've got another potential short trade as far as a lower top's concerned, but you're going to have to enter at sort of approximately 50% of the range. So for my mind, if gold gets smashed overnight and you've got this scenario where you could get a short the openers or something along those lines, then I think you've got a scenario where, you're underneath that 50%. These tops seem a distant memory away, and maybe there's a short trade set up there. Now, of course, I'd want to back that up by, running out some time counts, using some of the things that we know. I'd certainly be running back off what I'm now calling a potential point C. We're seeing that as being about 45 degrees off that top. 90's not giving us too much. 135, 180. We're not seeing massive turns there, so I'm not getting huge harmony. 270's pretty close. And 360's a little, we're talking a low on the 15th of January. Just going to scroll back and see if I can get any other sort of triggers. 450's very close. 540's relatively close. 630, I'm moving back in 90-degree increments here. 720. So there's a little bit of harmony there, but I'd really want to firm up with some other day counts and some other bits and pieces. For me, running angles off the tops has always been an important method. So just using some third dimension work, I think it's important that we, running angles off that top. 39.75 is the top. I'm probably going to muck around with that point size, maybe a 5 cent point movement. So we're underneath the 1 by 1. We're holding on a trading day angle. We're also holding on that calendar day angle there, but it's fallen just short of that 1 by 1. All right, to me, that's a little subtle sign of weakness, and I think you could probably find it run down to that red line again at some point in the near future. So if we then sort of said, all right, well, 100% would get you back onto that angle. So, that's if you jumped in at 50%, you're only going to get a 2-to-1 reward to risk if you jump out at 100%. So here's where you've got to get a little bit smart in through this area. What we'd love is maybe an inside day tomorrow, a really small inside day. What would be fantastic is a short the openers or something along those lines to mitigate your risk, get you in as close as possible to that as a swing top. All right, if you can get in as close to that as a swing top as you can with getting confirmation but not getting your risk that high, and then running it into maybe that area there, you potentially got a bit of a setup on board. So I then sort of throw, we're sort of holding above that 50% level, but if this market is weak, you probably expect it to break through that 50%. And, if I'm going to use the, I'll leave that on there for a sec. I'll just throw that up there out of the way. We could be using that as our guide. So 100% would bring us back down to you could argue double, triple bottom along those lines. So, approximately in that zone of 100%. And as the market sort of came off, and if I swing that angle down, well, I don't think you're going to, I think that's a stretch getting to that angle by, holding all of that on the way down. I think you're far more likely to run into, that angle there if it really just decides to get going. That's going to, well, that's probably a bit adventurous as well, being at the end of this month. But anyway, there's some guides there for us within that market. So at this stage, it's hard to be bullish, and we've got a bit of a view that we could have some shifting in gold prices as well to the south side. But once again, if we see breakout of that 1152 area, maybe it's time to be a bull. But the trend is clearly down at this stage. You're seeing expansion to the downside, $10, $57, shrinking upsides or pretty consistent upsides. So for me, definitely more of a bearish sentiment at this stage than a bull. The weekly chart's also giving you an interesting scenario. You're getting now your first lower swing top, which has been confirmed. So, ABC short. It's not quite an overbalancing price trade, but you are seeing 615 compared to 568, 383 versus 819. Looks to me to be, very much in the bearish camp at this stage. Much that we spoke about last week. So, if I had to have a standing rule on this market, it will be, I wouldn't potentially look to go long until maybe if it double bottomed around that level there and you got some good time pressure, maybe even if it comes back down. I think that level there, which is at about 31.57, I think that's very doable in the near future. I don't think that's beyond the realms of what this market's capable of doing, particularly if the S&P breaks down. Gold could go well with it. And, we might sort of see a triple bottom around those levels. But the other thing is that it's really hard to get serious about this until we see that gap get filled, which is the point I was going to make there. So we've sort of got those gaps holding there until that market fills that gap. You're really going to, unless it got back down to these levels, then, you'd have some buying opportunity. But at the moment, let's assume that we're going to call that an ABC just, because we can. 50% of that move, let's say that, let's say you got long today on that is a higher bottom, even though it's against the trend. 50% puts you in the smack bang in the middle of that gap again. So for me, a lot of hard work, all the risk in taking trades would be the long side. If you had to push me, to be long or short, it would definitely be to the short side. All right, so for some reason been logged out of my screen there, so I'm just logging back in. I was just going to check those prices pretty quickly, but I'll come back to those in just a second. So let me come back to you guys. All right. So how does that, snapshot of where you see Newcrest mining? So if I probably should have asked you the question prior, are you bullish, bearish, or neutral on Newcrest prior to then sort of having that discussion on the analytical side? But interested to see, is there any diehard bulls out there on, okay, Graham, cool. I was thinking the same. All right. Lois is bearish. Fantastic. All right. So, I guess it's good to get confirmation when, as I say, great minds think alike. I'm glad some of you are thinking similar things, which is great. We could be wrong, by the way. There could be a couple of people there thinking it's bullish and we could wake up tomorrow and it rallies. But I think on the synopsis of where we sit right now, yeah, look, Ashley, I don't disagree with you there. I think, once again, on a, if you want, Albert, we could check that. I'll leave you guys to check the accumulation distribution tool. For me, I think the case that we present on the other work that we've done on where it sits in gaps and retracements and 50% and all of those things, I think they, in my mind, they give me enough reason to think I want to be bearish rather than bullish. If I was confused about volume and really needed help with direction, I could probably go to that indicator. But the problem I see with that is it becomes a bit of a crutch. We don't really, we do all that work and then we say, oh, what's the accumulation distribution index? So we'll just go with that. I always like to make a bit of a view, and then if I need it, I'll pick on that from there. So Neil's bearish. Okay, Graham says I'd like to be a bull, but I think not for a while. Yeah. Look, and here's the problem: is that kind of like what you were saying, Robert, is that we kind of like to get into a bullish or a bearish phase, and we get our heads around a certain way, and then changing that mindset can be really challenging. So that's why I say being a trader is far more important than being bearish or bullish. You can be the uber bull or the uber bear, and and get it wrong, because you can't be right all the time with those sorts of things. So learning how to shift is one of those critical sort of pieces of judgment. Now, Debbie's saying I thought bullish from my work, but bearish from your work. Okay, I'm with Debbie. So okay, well, where I'm always interested to have that chat is that by all means, throw up you know, it's a bit hard to do in this environment, but give me your reasons why you're thinking that it's worthwhile being long, because you know, I'm more than happy to take a look at them. You've got to remember, what I try and do is try and come up with a trading idea and a trading framework, and then try and stick things to it. And I guess it's a case of not trying to sort of say, well, it's too easy for us to run to time by degrees and calendar days and all of those things. I think you guys will be held in a lot better stead if I can teach you how to read charts, how to read swings, how to read retracements, and form a view, and then line them up with price and time and other things and angles and boxes and squares, rather than just relying, hopefully, and I'm not saying you guys are doing this, it's just, okay, Debbie, I'll take a look at that as we speak. Why don't I go and do that? Because I do actually have the forum. I remember looking at it today, now that you remind me, Debbie. I apologise. It's not that I didn't look at it. All right, so let me take a look at what you've got there. Yeah, I had a look at, you had some time by degrees work there, which is, you know, doing some calendar day work, 30, 90, 120, 150, 180. Yeah, I didn't disagree with that. I guess the problem I had with it is that it was just not as tight as I like it to be. Yeah, exactly what you said, Des. I'll come back to that in 2 seconds. I'm just going to check some of these other charts. So, you know, I'm just looking at what Debbie's put on here. So that second chart there that you put there, Debbie, it says you've got a square on the market. Which square is it? I guess it's probably the, maybe it's the all-time low square, something along those lines. For me, just looking at that square, and I can share this picture with you, so why don't I do that? Just let me find, I think that could be it there. That looks about it. So Debbie's presented that as a square for us to take a look at. If you could just let me know, you didn't note in the post, Debbie, what square it was. Just let me know what actual square is it, the all-time low or whatever, you know, square. That would be great. 144 from the all-time low. Okay. So as you can see, you know, I can't highlight this particular screen because it's just an image. So if I put my pointer there, as you can see, the market came back and held, you know, on that, that's a quarter of 144, and it's held on the major diagonal. As you can see, it's held on the diagonal through there. All of those things, you know, I don't disagree with, but you agree here that that's a full square of 144. We've seen a top there before. We've seen the market make tops here around that $37 level. I don't disagree that holds. To me, this chart reads more as a neutral. All right, it says to me that to make money on the long side, I'm going to have to break through this level, which says it's resistance on the 144. But it also says I'm above this that major diagonal, which I'm showing you with my cursor there. And look, until it breaks that, it would be difficult to be exceptionally bearish. But in the short term, you know, it could move from, you know, $36 when you posted it. It could move down to that line there, which, you know, and it could test that and it could bounce and head off. But looking at that chart that you've presented, and I agree with the, you know, it's a valid chart. There's nothing wrong with using that as a square of 144. I guess a couple of things I note is that it's running at, that's about 75%. If that's 50%, we're coming up to about 75% in time of that square. So maybe we've got to see a little bit of a rebalancing. If it came back, it maybe give you a little 50%. But I'd have to say it's probably more of a neutral to bullish rather than, you know, super bullish. It's certainly not saying it's bearish. So for that reason, yeah, I don't disagree with you there. But where's it going to bounce to? Let's say it did bounce off those diagonals. It's still got to get through that gap from $37. So if it goes from, where did it close today? I'll just check the price exactly. Like it closed at $35.95. So let's say it goes from $35.95 back up to those $37 marks. There's about a dollar of easy money in that if it is a strong turn before we run into that resistance. So, or that question mark, which is to close that gap. So for me, getting where we are, back up to there, making a dollar out of it, there's a lot more risk in making that dollar than going with what's the trend at this stage. And I know that you've got a little horizontal line there and a little diagonal line there that says, yep, the market should bounce through those. But as we've seen, it got through there before. It has broken through diagonals before. It's held diagonals before. So I don't disagree with the analysis. I just don't know how. I wouldn't say it's the strongest piece of analysis. That's the only point I'll make on that. I just want to check the other post that you've given us. So you've given us a highs resistance card. All right, so let me now go and share that one with you. All right, so this is good stuff. Like this is where we're starting to, I'm really hoping we get to with our discussion is that, there's nothing quite, getting, putting your skin in the game, throwing your analysis up there and then sort of, arguing its merits. So once again, highs resistance card. So I guess the important thing to remember is highs call lows. That's what Gann talked about. The 50% point 2025 you wouldn't argue that called it with absolute precision, but you'd argue in that area it would have been smart to be buying on the upside of that. 66%, well, that really hasn't, outside of that low hiding in there, I don't think that's given us all that much to say it's working fantastically well. 75%, bit of a mishmash. Like, I'm looking for really clean hits here. 87.5, yep, that top's good there. And so what I'd have to say is that the highs resistance card, whilst it's given some encouragement, you wouldn't argue that it's been brilliant in its application. And so what we're now seeing is, okay, the 87.5% point, if it came back and held that, okay, then you could argue to me that, and let's set that up. Let's set this up exactly in profit source so we can take a more detailed look at it. All right, let me jump into profit source. Alrighty, highs resistance card. So, no, wrong one. It'll work anyway. So 40.50 is the all-time high. 0 is the low. Stand right. Let's get some of these ones in. All right, there we go. So you've got your 87.5% point here. I'll run it left and right. I'll lock it. All right, so we've seen areas where, yep, there's a little bounce off that low there. Yep, there's a few little areas where it's working okay. This line here, though, the 87.5% point, I'll make it a different color if I can. This is what we're basing our analysis on, saying, okay, well, if it comes back and sits on that, it's above that, therefore it should be relatively bullish. I'm going to go back and say, all right, well, in history, yep, we had a little top fall there. Okay, so we can go back and say, yep, we've had some tops there. Top became another top there. You've got that island reversal top that couldn't hold above it. But all of those facets in play, and I can't disagree that it's been strong. You'd say that top there, not a huge amount through that area there. It's been a bit sideways. So if I sort of circle the areas, you could say that it's had some relevance. There's that one. Yeah, I'll do my best, Graham. I'll go and pluck that information out as well. All right, so we've sort of got that area there. Got that area there. Little top there. Okay, so that's probably the key areas where you could say we've had some relevance. Now, at this stage, the market has got to do a couple of different things. It's got to come down. If that holds as the low and it bounces away, well, then things are looking fantastic. If that, to me, is going to be an important level in this market, I'd really want to back that up with a lows resistance card. I'd want to get, so what do we know? I'll just get a calculator here. We know that the all-time low is $1.13. So what I'm going to do is divide, calculator. I'm going to divide that level. We'll call it 35.44. I'll divide that by $1.13. So it's not a clean number. It's about 31 1/3. I was hoping for a nice round number. So what I was trying to do is validate the lows resistance card and the highs resistance card is giving me a cluster. So yeah, $1.13. So we haven't got that. It's about 31 1/3 multiples of the all-time low would give you an area somewhat close to that. I'd want to go and take a look at other retracements and other different bits and pieces. But for that to start to become, that on its own is not enough to say bullish or bearish. It's certainly one to say let's watch it and see what happens. But that on its own, I'd want to back up with some other price clusters to get a view as to whether or not the market was pushing higher. Otherwise, it could come and test that. And certainly if it closes underneath that, we're in an interesting situation. If you're sort of basing it on as being a bit of support, we've got to be careful if it breaks through that. What does that mean for us? Now, the other thing I wanted to quickly look at was the fact we've just fallen short of that 50%, right on that gap. So that's another bit of a view that could get me concerned. But I'm happy to say that could act as support. But for me, the trend is down on the one-day chart. You've got gaps there. You've got bigger picture potential. Gold on the bigger picture is a little bit weak. Gold or the S&P 500, the SPY, they're all looking a little bit weak. They could sort of add some influence to that. What I want to do is quickly just ask you a question, Debbie, with regards to the square of 144. Would you say, and sort of here's where my, I guess, scale of what's important and what's not. Would you say that the square of 144 is red hot on the life of Newcrest Mining? If it is, then it's one that we can obviously be a lot happier with. I'd be interested to see what a square of the all-time low looks like in comparison. Okay, so I'll set these up and then we'll have a bit of a chat about them. But I'm just trying to get it in a pecking order that's relative. And what I want to do as well is also get Graham's chart up there where he talked about the hits on Newcrest Mining. So this is good stuff. This is taking analysis and learning how to see from it from both sides. It's never meant to be a critical, work, if you want critical work, you can take it to David and have him take you through it. I can guarantee you it's always it's character building. So I've learnt, through trial by fire. So don't ever feel that I'm trying to be a school teacher and tell you that you got it wrong or right, because at this stage none of us know, and it could all come out and anything I say could be proven incorrect or correct. So I'm not suggesting in any way, shape or form what you've presented is incorrect. I'm just trying to give it a weighting as to how much weight I would personally place on some of the tools that you've used. All right, so Graham, I'm going to get to your work. So just let me get back into the Safety in the Market forum. And all right, so let's go back. I think that's the one there. All right, so Graham's given us a chart here, seeing if there's other bits and pieces. Fantastic. Yep, we'll go through all of those. All right, good stuff. So we'll kick off here using a time by degrees, and you thought you'd post a chart on this. So what you were using here was, a reference date here of sort of early February as being something to watch. Okay, so you're sort of using your 2nd of February here as your look, that's fine, Debbie. So that's all I'm saying. I guess the point, and I'm glad you sort of acknowledged that you haven't done enough work on 144. So that's what I'd say to you, and I'll jump out of here because I'd like to say this stuff while I've got my face to camera, so everybody sees my intent with my language. Is that the fact is that if you had to present this trade to somebody who was going to invest money in it, all right, the question that I would ask you is, if someone brought this trade to me and said, I like the 144, forget if it's Debbie or it's Sinan or if it's Des or if it's Tim or whoever, I'm going to ask you the question, which is, well, how well does 144 work, broadly speaking, on Newcrest mining? Is it something that we can place a greater amount of influence in? And if the question comes back, well, I'm not sure, or yes it is, or no it isn't, then that's just another relevant tool that we're going to use in our discussion, because the old saying is you don't lead with your chin, because you generally cop one on it. And by saying, yeah, the square 144 is fantastic in this instance, but always know how well it works on a broader picture as well, because then if we could say categorically 144, which I do think works pretty well on Newcrest mining, I'm not saying it doesn't, the square 144 is quite useful, particularly on gold. I just want you guys to feel comfortable to say, yes, I know for a fact that 144 is a great earner on Newcrest mining, and this is the reason that we can go with it. So, and if you can't do that, that just means you've got to do a little bit more work to get that courage of your conviction to say yes, no, or I've got to do a bit of work. And saying I've got to do a bit of work is not is not a negative in any way, shape, or form. I'd much rather people say to me, I've got to do a little bit more work, but I'll come back with the answer, or I've got to do a little bit more work before I put my hard-earned on it. I'd much rather you do that than say, well, I'm not going to do any more work, but guess what? I'm going to buy, sell, or do whatever, and then come back and say it didn't work out. So I think that's the obviously the best road going forward. All right, let me get back to what you were showing us, Graham. Alrighty, so there we have it. So what we've got here is Graham sort of really giving us what he's sort of giving us here is a 2nd of February being a bit of a zero date. So if we run back to our current lows, we know 45 days, 45 degrees, 60 gave us the top, 90 you'd argue is within tolerance, 120 is within tolerance, 180. Now that looks like a bit of an obscure top, because you'd be much happier if it was these ones here. But I guess what I like about it is it's the second leg of a double top followed by what was a relatively strong sell-off. So 180 degrees, that's the 5th of August. So we've got the early part of the month, the early part, so about the 5th, the early part of the month is giving us some turns there. And they have traditionally been, here's where I start to try and count, just do a rough count, are they mainly tops or mainly bottoms? So here you've got a sense of bottoms. You do have some tops in there as well. 240 is plumb on giving us a top. So as you've noted here, 60, 120 and 140, 60, 120 and 240 are very good turns, and they're obviously more of your triangle type scenario. 360, not the actual physical bottom, but you could argue that's a bit of a true bottom where the market got going. 315, I'd argue that's a bit of a hit. And 270 is a bit lost in some sideways moves. So what Graham's done is given us some time by degree. So using that zero date on the 2nd of February. Now, probably what I'll do is I want to keep this discussion going, but I guess I want to throw the question to you, Graham. Was there a reason that you picked 2nd of February as a zero date? If you want to maybe share if there was a reason behind what got you going about February. While you're thinking about that, we go and have a look at some balancing time. So here you've got a bottom to bottom time frame of 232 calendar days. Yep, the next part of the chart. Fantastic, Graham. So bottom to bottom, and then balancing time from top to top. So what we had here was 350 days. Yep, close to the seasonal date. Fantastic, Graham, because we're talking early February seasonal date. Annie's chimed in. Fantastic, Annie. It's the birth of the contract as well, which we know. So you've got a bottom-to-bottom time frame of 232, 232, 232, 175% of that, 50% of that gave us relatively good turns. The 2nd of February is the birth of the contract. 31st of January is where that time frame terminates. If you balance out top to top, you're getting 350 days, 175. Well, 50% gave you a very, very strong low in August, and then 4th of February gave you the 350 day or 100% of the top to top time. Very close to our seasonal date, very close to our birth of contract. You've also got some time by degrees hits there as well. So they were the charts that Graham presented, and then obviously with a master time cycle view going back to 1990, which is 10 years, 120 months. You see that we see a major top in the early part of January, or late part of January, a sell-off into April, 14 August top into a December low. So on a master time cycle perspective, end of January, early February, going back 10 years, maybe with an area to watch now. Will that be a top or a bottom in 2010? We can't say, but it would certainly be one worthwhile viewing, saying, all right, well, we know end of January, start of February could be a place to watch for our next major turn. Okay. All right, so fantastic. So go back, and if you haven't looked at those charts, that's the value of the forum. So hats off to you, Graham. And I know, Lois, you came in and added some bits and pieces there. We were going to chat about it last week, and I ran out of time, or I forgot. It's probably a better way to describe it. So from my perspective, that's the sort of, that's work that is really leading us to where we want to be. So obviously early February, at this stage, it's probably more likely to be a low than a top, a bottom than a top. But, the market will prove that, and we'll let the market sort itself out there. But, for me, that's good analysis, and I can't fault that work in any way, shape or form. So, yeah, so Graham, at this stage, like if you're going to nail me to the wall behind me, you've got lower tops, lower bottoms. Gold's looking potentially a little bit weaker. As I said, I want to check where it's trading at the moment, so I'll go and get you a price. Metal futures, that's what it is. All right, so 11.38. All right, I'm actually going to look at a different contract. Be pretty comfortable. I don't think the January contract, it's probably the current contract, but I don't think it'd be the most heavily traded. Just let me check what March is doing. All right, so that's about the same price, 11.37. So Annie's chimed in with the 4th of Feb approximately is coming 9 times as a turning point since 1991. Only 9? Yeah, so all right. Once again, okay, all good. Going back, that's a great anniversary date. Okay, so 4th of February being a place to watch. So all of those things are positives about Newcrest Mining. So as it stands here on the 19th of January, we'll call it a combination. It's a bit of everybody's work, but we'll call it Graham's forecast because he's the one who's got out there and plucked the dates out there. So we'll watch Graham's forecast with much interest. So going back to what you're saying, Graham, for me right now at this stage, I'd say it's more likely to be a low than a high. But as we know, being a top or a bottom picker is really not what we're interested in. We're looking for a potential trade. So while ever we see lower tops and lower bottoms, for me, the optimum is to be short into that date. But obviously, as the market changes, you change your view accordingly. It could well be a top. But just seeing the constructs of that market, I'd say my experience tells me it's more likely to be a low. But as I've said, been wrong plenty of times. If it's a top, we'll still claim it. I can guarantee you of that. All right. All right, well, that's a fantastic discussion, everybody. Let's quickly wrap up our work on just a quick little discussion on the Aussie dollar. Because otherwise we'll be here all night. All right, so what we've got on the Aussie dollar is a very sharp movement. So we were watching on a speed angle last week, this market running down. Hopefully you all went away and had a bit of a practice on reversing angles so we can watch the pitch of the market running out the other way. So all right, so we've seen the market rally out and hold that speed angle actually. So, we've seen, very hard way to get into the market, massive oversold, first high bottom. Very hard to take that as just a standard ABC long trade. You've seen this market starting now to get into a little bit of congestion. But while ever it holds above that speed angle, I think we can argue that maybe we're in for a double top. So, maybe we're in for a double top early in the middle of January. Remembering that late January off our master time cycle, mid to late January is also an area to watch for weakness. So we know that we can often get a bearish first quarter on master time cycle work. So Would I be happy for that to come back and double top on or around the the mid to end of the month? That would be interesting to say the least. So David's saying current market actions fighting resistance from the 1 by 1, 14 days. Okay, so David, are we talking Aussie dollar here, or are we talking Newcrest Mining? I'm assuming you're talking Aussie dollar. So resistance, yeah, fantastic. Thanks, David. Current market action fighting resistance from the 1 by 1 from the 15th of the 7th 08 top. Yep. So we'll throw a 1 by 1 off that top, which it is. I won't tune it up exactly, but I think we get the point. And 14 days down, 14 days up. Last 2 days in the last 2 day swing, just confirmed second day down, and from the 14th high in okay, no problem. So what David's adding here is that the market's run down 14 days, it's run up 14 days, it's holding on that 1 by 1, which seems to be some pretty strong resistance, because if you go back and pull this apart, you've only had for the best part of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 cracks at that angle. We've only seen it hold and close once, twice, 3 times. So 3 out of 11 is a pretty poor probability when it comes to this market, holding above that angle. So all I'd mention is that that needs to be respected, and probably waiting for a clearer breakout or a higher bottom above that if you wanted to be a bull. But 14 days down, 14 days up, balancing out. We could be in a situation where I think you'd be smart to be definitely watching for if you can get a lower swing top off that area there, little double top off that 1 by 1. Let's throw out some just some time by degrees basics just to see if we can tune anything up. Well, we know 60 degrees back to that top. 120 I don't have on there, which, let me see what 120 looks like. Yeah, it's a bit lost, so we won't rely too heavily on that. 180, very close to that bottom, 180 degrees. If I push and pull that around, we could already be on that top. So 60 looked good, 180 looked good, and 360, well, the market was already sort of descending at that stage. 540 off that top, and that's the top that we're using as that 1 by 1 anchor. So yeah, I think very hard to be bullish the Aussie dollar at the moment. So just let me tune that up, because now I'm more interested. High is 97.70. The day out, so 15th to the 7th. All right, so yeah, I think the fact that it squared out that low, that's given you good confidence on a seasonal date. Squared that low, double top, time by degrees, can't close above that angle. I think first lower top would be a fantastic looking trade with all of that going for it. I think you'd be definitely worthwhile pulling apart some looking at that. So you've got position of the market in terms of the double top. You've got some price work and third dimension work as far as the speed angle is concerned, and the angle off the top. Bit of time by degrees gives you the time. Really what I'd like to firm that up with, and it's work that you guys can do, would be to go and do lows resistance cards and some ranges resistance cards and some highs resistance cards. If you could get some price clustering around that, I think that looks to me to be a pretty high caliber setup. All right, just looking at where that market sits. Okay, so I'm happy to go out there with the idea that in between now and the next time we meet, the first lower swing top off where we're looking could well be a good place to get short this particular market. So can you keep that all on your trading radar and keep an eye on it, even if trading the Aussie dollar is not your market of choice. Keep an eye on that, because I think that could have some probability to it. I'll go and take a look at some price work, and if I can do some bigger picture stuff, I'll share that on the forum over the next few days. I've got a couple of things on there that will make it hard for me to post things, but I'll do my best. But yeah, I was wondering when you'd chime in, Darren, with that. So I'm, Master Time Cycle says January is not a good time for the Aussie dollar. All that other work in the near picture very much suggests that we could be watching that unfold. So time will tell, but keep an eye on it. So I want to hand that back over to you guys, though, to do a little bit more work on. Okay. All right. Well, we've had a fair whack of a discussion with regards to just where the market is and all that, and adding some of your stuff, which was all fantastic. Please don't think for a moment that I didn't think that was valuable. I certainly do. I hope you guys found it valuable as well. I guess what I want to do now is get to our discussion on squaring highs, squaring lows, and squaring ranges. So just as a brief recap, we know that, and obviously some of you mentioned that squaring a range was a little bit of a challenge. So really just to give you some visuals before we go in and do it in the software, what we do is we take the range that a market provides. So once again, we're going to look at fairly major ranges. So we're going here from a low on the Swiss franc to a high on the Swiss franc. So we're taking that range now. That range could be X dollars, X points, X cents, whatever it is, and we take that price, and what we do is we then turn that into a time frame. So really what we're doing is, if you imagine that that vertical line that's blue, if we just really ran that out in terms of a semicircle, like imagine if that was your compass and that was your point, and you dragged it around, you could basically drag that sort of circumference, is probably the best way to describe it, and you'd end up with a date in the market to watch. And then obviously you'd track down from that date and you'd be watching to see whether it was a turning point, okay? So you're taking prices and turning them into time frames, okay? So that's our whole attempt. And so what we're looking for is wherever that blue line terminates, that's what we're looking for as a turning point in the market. So squaring a range is we convert a size of a range in price to a time. So that's the basic understanding of it. The easiest way that we do this is through Gann angles. You can use more than 1x1s, but we'll keep it simple to start with. You can run angles from tops and bottoms. You can use calendar and trading days, just in case you've got not enough to look at. And they're the variables, I guess, that always are going to present challenges for us, is that once again, we can run them angles from tops and bottoms, and we can use both calendar and trading days. Now you can run them forwards and backwards as well. So, like the use of geometric angles, we're always going to have a lot of variables in there. All right, so when we square a range, what we're doing is we're going to take a high and a low. What the software does is essentially works it out by running out those red lines are 1x1s. So it'll run a 1x1 down from the top and a 1x1 up from the bottom. Now, wherever it crosses the original starting point, so in this case the high, if the 1x1 from the low runs up, whenever it crosses the high, that date will be one that's important for us to watch. The same with the 1x1 off the top, wherever it crosses the low, because if that's running out at 1 point per day, or 1 cent per day, or 1 tick per day, what you're ultimately seeing is you're seeing the market square time and price. It's turning a price into a time frame. So if that was 1,000 points from top to bottom, it would take 1,000 days, as the market rose 1 point per day, it would take 1,000 days from the low to cross the top, and it would take 1,000 days from the top to cross the low. Okay, and that's really what the basics of our discussion are there. So 1x1s are the main angles that we're going to use. 2x1s and 1x2s will also give us dates to watch. So you can, if I bring up my little pointer again, that date there where the blue line crossed the low, that's a pressure date. Where the red line crosses, that's a pressure date. Out here where the blue line crosses, that's a pressure date. Up the top here, that's a pressure date. Up in the middle there, pressure date. Out here. So you've got essentially 6 pressure dates for squaring a range. So you're going to get some that are close to the market and you're going to get some that are far away. Now you can find with squaring a range that you might have to go back 5 years ago to get something that's current in the market. And you might find that if you square a range from 10 years ago, it's already been and gone, and you can't use that range anymore. So you've got to find one that's relevant to the discussion per se. So all we're doing there is we're lining up places where the angles cross the tops and bottoms, and they end up being pressure dates. So in this case, you're looking at that low, call that top, little pointer again. So that date there was pretty close to the top. That date there was pretty close to the top. That date there was a bottom. And that date there was a bottom. So all within a tolerance, you were getting some pretty successful hits. So I guess the best way I want to describe it is that you can use this tool in what I consider like a spotlight mode, or what I call a footprint. When you get these dates, they could be somewhere out in the great distance. I've often been happy to say I'll give it a week either side of these dates, particularly if I can tie that up with master time cycles, balancing time, interim time frames, time by degrees, and other work. I'd be happy to call it a success if it was 3 or 4 days either side of these dates, maybe even a week if you're going out big time frames. I said in my introduction tonight, the person that I've seen get to the crystal clear, here's it to the day type stuff is David, and I've not been able to replicate that sort of stuff, particularly on the oil market. There are other markets that work better, but when it comes to oil, this technique tends to get you more within a window rather than giving you the actual date. That's why I rely more heavily on some of the other tools too. Guide me as to actually coming up with that forecast date. So if I jump back into profit source, so we'll do square the range first. So let's take a look at Newcrest Mining. So we'll do our work on that, and I'll leave the Aussie dollar like we sometimes do for you guys to pull apart. The obvious range, I guess, for us to work from would be the all-time high in 08 and the 08 low. Now, it'd be interesting to see whether this is going to give us too much to work with. All right, it would help if I haven't shared my screen, so let me do that. I'll come to that point in a second, Wayne. So getting back to what I was saying, the two most relevant points here are likely seeing us going to tackle the all-time high and the 08 low. So I'm going to go and find the square of the range tool. Now that square of the range tool lies under Gann tab number 2. So what I'm going to do is click on square of the range, grab the top, grab that bottom. Now what I've got to do is obviously make sure that these are tuned up exactly to the point. So I need $40.50 on the 6th of March as being the top. I'll go and make sure the low's set up exactly. So 16.55 is the low. Now what you'll see here is that my point size set to 1 cent. I'm running in days, but I can change that to weeks if needs be. You'll see that the appearance here, I can change weightings and different bits and pieces. You'll see that I've got with my start fans, I've got 1/8, so I'm going to turn off. Let's just keep it simple. We'll run 1/1s. And oh, I've got 8/1s tick. There you go. 1/1s. So what you can say is the 1/1, when it crosses, now this is on a calendar time frame, it's going to take till about 2015 and 2014 before they cross. Now they're going to be pressure dates. Now I guarantee you they'll be worthwhile watching, but they're just a little bit too far out. So the next thing we could do is say, all right, well, is there something 1/2s and 2/1s? Could I bring those in to the equation? And they might give me some other dates in the near future that are a little bit more relevant. So they absolutely bring us dates that are more relevant, but we're still talking about the first one here being 2011 and the next one here being sort of 2012. So just interested to look at that 2012 date. That's one for you guys. Anyway, we'll move on from there. So, and I've managed to move that, so there you go. So, all right, so you've got the information giving you some pressure dates well out into the future. Now, I'd have to say at this stage that date, the framework of dates isn't working for me because it's not giving me anything in the current market. Now, that goes to Wayne's point. So what Wayne's saying is that does it make sense or is it relevant to watch for these sorts of intersections, okay? So where these lines cross, that's also essentially, you could say, time and price alignments. You know, you could say that that's where time and price are squaring in some relationship. Now, here's the rub. I'll see if yeah, my mate Tim's online. So if there's a page number that Gann talks about where the intersection of the diagonals is, tell me. I can't tell you off the top of my head. I'll come to your part in just a moment, Richard. I can't remember anywhere through my studies where I've read Gann say you should watch where the diagonals intersect, and you should use that information in forecasting and trading. Okay, so I can't give you with any certainty where he says that. So what I can tell you though is that I've seen in some markets the results are okay, fantastic. Tim's told me in the Auburn Motors lesson. I was actually only thinking today, and it's interesting you say that. I kept thinking I've got to go back and do some work in the Auburn Motors lesson. All right. So Tim's saying in the Auburn Motors lesson, he says the intersection of two angles is very important for a change in trend. Okay. So what I've said to people, and my basic rule has been this, is that if you saw the intersection of those two angles and you had other information going for it, then by all means, that's confirmation, okay? But if you've got nothing other than the intersection of two angles, for me, I've never tried to use it as anything other than a confirmation indicator. So I'd be comfortable to say to you, if you can create other reasons based on time, price, pattern, position, and volatility, and then back them up with the crossing of those diagonals, I'm quite happy for you to use those as part of your trading process. But purely watching for where they cross and saying that's a date to watch, I think that's not necessarily the best way forward for us at this stage. So I've seen it work really well on some markets, and I've seen it be absolute the opposite on other markets and just not give you anything to work with. So I've just got a case for and against. So for me, it's just a very neutral thing. So hopefully that helps you with that one, Wayne. But it was a good question. So Richard saying the Aussie dollar spot V square of the range 07 to 07 is very relevant to current market. If I get there, Richard, I'll definitely take a look at that. I just want to jump back onto Newcrest. All right, so jumping back onto Newcrest, we're really in a situation where, you know, okay, the next little intersection there is about the 22nd of February, and then you've got an intersection there about the 5th of August, and so, you know, keep an eye on those dates, and, you know, if they come together, well, fantastic. If they don't, well, we know it's not important. So that's on a calendar day chart. Now, if I train it to trading day charts, you'll see that obviously the intersections have moved and the dates have moved. Now, keeping with natural time, David tends to say natural time is the one that he tends to work with more often. Okay, so we know that this range Still not working. There we go. If we see that this range from here to here is not giving us much in the current market, we've got to move back from there. So the next thing we could be arguing is, okay, well, where's our next major range to work with? Now, here's where it's going to start to get a little bit messy because, you know, I could, 2007 low, or do I go back here to the, to the bear market low? And this is where you've got to start to, really do a lot of testing is probably the best way to describe it. And so I guess if we start to just work backwards sequentially, if I square the range from, I'm going to pick on that low there, pick on that high, 6th of March at 40.50. And we go and find low there, 1573, 14th of June. All right, so now what we're looking for is a date, and I just got to put the right 2x1s on there. All right, so we do now have something of use to us. Okay, so I'd go in and I would check. Oh, no, what I'd do is I'd move it. That's what I'd do. All right, lock it. There we go. So the first date that's of interest to us. Okay, so there you've got an intersection. Okay, so involving that into our discussion. There's an intersection of two angles. So all right, that's worthwhile watching. There's another intersection of two angles. Now the price wasn't particularly good, but time was not really there either. So here's where you've got to watch well. And people have said to me, is support and resistance worthwhile watching in here as well? And I'd have to say, yeah, it probably is worthwhile looking at these angles for support and resistance as well. So if I take a look at that angle where it's crossing, it's going to give me about the 5th of the 11th. Now here's where, unfortunately, where the tool is, you've got to get a little bit, you've got to zoom in really just to get the date. So it's actually giving me the 4th of the 11th as being the area to watch for a change in trend. And if I go and watch down here for the turn came in on the 2nd of the 11th. So for me, I'd have to argue that that's a hit. Okay, so that's certainly working quite well. And so what we're going to do here is obviously move to the next potential pressure date. So moving along, the next potential pressure date is the, July of 2011. So we're some way away from that. But this is certainly proving at this stage to be something that's worthwhile watching. So that's on a calendar day. We can do the same thing with a trading day. We haven't yet seen one of those dates come in. But now what we'd have to do is start working back sequentially. And now you might want to run from, oops, wrong button. We now might want to run back from this bottom to this top and square that range and take a note of see whether or not they were useful dates to be watching. All right. You then might want to go back and run from that low to that high. So you're going to find that you may not get all of your, you may not find that just one bottom and one top gives you all the dates you should be watching for. You've got to go back and actually run it off most of the major turning points. Now, once again, how would we get the turning points right? We could probably use the turning points highlight filter and maybe look for 2-month swing tops or 3-month swing tops, and they would be the ones that you predominantly want to square ranges on. But the best piece of advice I can give you is to get a spreadsheet and just to manually record the dates, okay? And then you start to look for clusters because it's very hard to remember all the dates, particularly if there's some, many years apart. So all I'll say is that range that we just did then gave us the 2nd of November, or 4th of November, the bottom was the 2nd of November, but now we've got to wait some time before the next dates roll in. So we can't rely on that. We can't hang our hat on that and say, well, we're not going to trade until middle of July next year. We'd have to go back over previous major, ranges to get a date that would be working within the current environment, okay? So those things for me are obviously very important, but there's a lot of donkey work in doing this, okay? And a lot of calculations involved and a lot of recording. And, we're never going to be able to do all of those tonight. This is obviously just meant to be a refresher to make sure you're using the tools correctly, and then you guys can go and set to the task of coming up with the information. All right, I want to touch on what Richard's given us there, so the Aussie dollar. So I'll just pick that up and just do a quick one on the Aussie dollar, and then we'll do squaring lows and highs. All right, so we take the Aussie dollar, and you're telling me the 17th of August, 07. So we're talking this low here to the 7th, okay, oops, no, the 7th of the 11th, 07. All right. Okay, that one there. I think that's the one you meant. Yep, that's the one. We'll get that set up exactly how we need to. The high is 93.82. The low is 76.65. Lock it. All right, so if we take a look at the dates, if I'm looking at those dates, maybe I don't have the 2x1 default. There we go. All right, so the 2x1 squaring out's giving us the gave us pretty much the seasonal date. So yeah, I definitely agree with you there, Richard. It was giving you a time frame that was 22nd, 23rd, smack bang right on the change in trend. So happy for that. I guess my only counsel that I would offer for, we've sort of got a March date there. The only counsel that I'd offer there is that that's not exactly, it's a relatively large range in terms of price, but it's not a large range in terms of time. And if we start squaring out all of those ranges, we're actually going to run into so many pressure dates where we're going to have enough to keep us busy for a long time. So I don't disagree with it. If you guys are trading on a smaller time frame, maybe even intraday trading, that's the sort of the range that you probably would want to be squaring, because it's going to give you more pressure dates, more turns. But if we're going to start to square, that range, well, then we probably should be squaring, that range as well. And then we're going to have to square, probably that one, even that next one down, and we're going to end up with a lot of pressure dates. That's my only concern. But other than that, good work. So, definitely on the money there for what we need to be looking for and the sort of hit that we're after. All right, so once we've squared a range, we can then move on to some of the other facets, which is squaring highs and squaring lows. All right, so same sort of work if we talk about squaring a range. Next part of a puzzle is we'd square a high. So we're going to take the price of a major low or high and convert that to a time frame. Now, I think that word there is the critical one, major. Otherwise, you're going to end up with enough tops and bottoms to keep you very, very busy. A 1x1 line starting from 0 on the day of the high or the low will take the exact same number of days to cross that high or low at that price. The intersection will give you a pressure date, and you can square lows using calendars and trading days. So just to give you another practical example, you take the value of a high, in this case on the Swiss franc, whatever that value happens to be, run down to 0, and then you run a Gann angle off that. All right, so you'd run a 1x1 off that bottom. Now the software does it for you, and now it runs out and it gives you pressure dates to watch. Okay, so squaring highs and lows are obviously the same tool. The software works out which one you're squaring. Okay, so jumping out of the PowerPoint, just back into profit source, I'll show you exactly what it looks like. Obviously the major low that we consider squaring would be the all-time low. The problem with that's probably going to be on Newcrest Mining, if we use that one, that it's going to give us dates that are definitely historical, but that's not to say that they weren't relevant. So if I go to the squaring of the high, squaring of the low, we know all-time low came in on the 6th of March, sorry, 3rd of December, 6th of March. I'll make it up as I go along. $1.13. Now, the nice part to this tool is it actually gives you the dates, the forecast dates, without actually having to look for it. So it gave us a couple of different dates to watch there, 28th of January, 26th of March, and the 17th of July 1998. All of those, I guess, weren't necessarily useful in terms of giving us major pressure dates. In the past, when you've got a really small number like that, you might consider adjusting, no, not adjusting the point size that way, adjusting the point size that way. So it ended up giving me the 21st of June, 1999. The low came in on the 10th of June, 6th of January, 2001. Not much happening there. And the 10th of February, 2004. So zoom out so I can take a look at what's happening there. So 10th of February, 2004. Market top there on the 6th of January, 3rd of February, 13th of February. So that little use of the tool there, squaring that low has not really given me what I consider much work that would be worthwhile following. Now, we could then go forward and say, all right, well, let's square the all-time high, but we know 4,050, which is $40.50. If I'm going to square that, oops, wrong one, square that high, we're going to end up with some stuff that's pretty well off into the future. So we've got a top there on the 6th of March. There we go. That's the 6th of March coming in. $40.50. And if I run out my forecast dates, well, I'm going to get the 21st of September 2013. So that's an interesting date. 8th of April 2019 and 2030. Now that's on a calendar day. Now if I do that on a trading day, 13th to the 30th to the 12th, and you've got a huge amount of time to be waiting for these to come to fruition. So challenge we're going to have is, well, they're all great dates to be watching, but we need something that's more relevant in the current market. So I'd probably come back to this top here. So 1st of February 06, 2509. And we'll go and take a look and see whether or not that gave us some things that were more relevant. So first pressure date that it said to watch for was the 9th of the 7th, 2009. The low came in on there was a low there on the 9th of the 7th, and I'm just going to see the market came back and just false broke that low. You could argue it's kind of double bottomed there, and that's really where the market got going from. So I wonder if that's a little sneaky ABC trade. No, it's not. Big change in trend on that day though. So big signal day. There's your first higher bottom. If you had that and other reasons going for you, but let's assume that's our only reason for trading. There's your first high bottom. Market ran to 100%, if not a little bit more. So, it's certainly given us a decent change in trend. One that we could have made some money from. The next one's the 15th of December 2012. So that's obviously too far into the future for us to be thinking. I'd also have a quick squeeze at trading days, and trading days gives me the 4th of January next year. So once again, not useful. So let's move back and we'll do one other. So we've gone back from there. We then say, all right, well, that one didn't give us too much. Where's my next major top prior to there? Maybe the 05 top. So the 05 top was the 14th of March at 1740. All right, as we step forward, using a calendar day count, or calendar chart, I should say. 1st of the 8th, 07. Market load on the 1st of the 8th, but you wouldn't claim that as the greatest victory of squaring time and price. 18th of December 2009. Interesting. Market load on the 18th of December 2009. So that's definitely got my interest up, and the next date to be watching is going to be the September seasonal date in 2014. So everyone write that one down. We're not going to do anything until 2014. Okay, so we're not going to do any work whatsoever on Newcrest mining because we've got our forecast date. So it'd be interesting. I'd be looking at what happened in 2000, and hang on, my memory serves me right. Let me jump into the software. All right, I want to take a look at, so that's giving me September 2014. If I go back 10 years prior to that, September 2004, got a pretty decent change in trend around about the 27th of September 2004. So 23rd, yep. So within a 4-day tolerance, going back to 2004. So I'm using a master time cycle view here. Find the bit that I'm after. Spot me a few days either side. The market pretty much moved, percentage-wise, it moved $13 to $17. About a 30-odd% move out of there. So, wise people would write that date down. Look for the September seasonal date in 2014, and the fact that it gave you the seasonal date December this year in 09, and we got a launch out of there. To me, that holds you in good stead. But once again, too far away to work with today. But you could definitely play around with that and start to have that in a notebook somewhere, and you're starting to do the work already, but you're just doing it some distance into the future. So just in our basic use of squaring ranges, highs and lows, I'm quite comfortable with the results that we're getting there off Newcrest Mining. But as you can see, you've got to go back and square every major top, every major bottom, square all the major ranges, and then come up with a list of dates. And then what you do is you just keep them in some form of trading journal or trading diary. And as you're starting to get into that environment in as far as the dates are concerned, you then start to try and marry that up with other things you've got going for you, interim timeframes, big picture timeframes, and start to see what the market's going to give you. So I'd be interested to see whether you guys could go and square a range or square a high, square a low, and come up with early February for 2010 as being an area, and that could back up some of the work that Graham was doing with the balancing time and the time by degrees. So that would be your challenge for this week ahead. But I guess, I left the discussion on squaring highs, lows, and ranges, to this end bit because it is, as you can see, it's pretty in depth, and I've always found it hard going. Once you've done all the major ranges, major tops and bottoms on a market, it's done, but doing it is not easy. It's very much donkey work. I wouldn't say I've enjoyed squaring ranges, highs and lows. It's not part of analysis that I really enjoy, but it is worthwhile doing. So I have a spreadsheet that I've kept that has every single top bottom range on oil that gives me every predicted date, and then I highlight the cells that give me changes in trend or very close to it, and then I start to use them in predictive senses going forward if I'm putting a forecast together around a particular time frame. So they're all things to keep in the back of your head, but it's very manual labour and hard labour is probably the best way to describe it. I can't dress it up any other way than that. All right, so have I any comment on the YT article by Michael Jenkins where he looks at square roots of prices and ranges? He looks at square roots of prices and ranges. I haven't read the article. What edition is it in, Wayne? Can you tell me? January, February. Okay, I haven't yet got my copy because it actually gets sent to the office, and I haven't been into the office for a little while. So can I reserve comment on that, Wayne, until I have a read of it? I don't want to sort of. I want to read the context of the article. I've got some thoughts and I've got some views and I've got some ideas, but I want to read what's been written there, and then I'll give you my my take on it. Is that okay? Yep, no problem. Fantastic, Wayne. I will make a note of that. So, and if I forget, you remind me, all right? Because I don't have a pen next to me, but I will remind myself. Page 42. All right. There we go. I found a pen. All right. So, making note to self. All right, Wayne, I'll definitely have a look at that for you when I get a copy of it, and we'll have a chat about it. Hopefully, we'll be able to do that for next week. All right, so yeah, next week I'm not sure what the plan of attack is because next Tuesday's Australia Day, isn't it? So I don't know what the plan is for, but I'll sort that out and we'll get in touch with you. So I've only just thought about that on top of my mind. So I'll get an idea of whether we want to do a session or not, and I'll organise that through the office. All right, so. Moving forward, just questions, comments, or queries about squaring range, squaring highs, and squaring lows. Questions, comments, queries. So, well, Annie, what I might do is I'll do it less formally. So we'll, formally but informally, if that makes sense. So what I'll do is I'll get a take on how many people do and don't, but we won't do it here because it's a little bit hard to do it anonymously. Oh, actually, I could set up a poll, couldn't I? I can do that. I forgot about that. Graham said, could it pay to square all the tops and bottoms, or maybe the Look, Graham, if you were going to do oil like I've done, it's every top and every bottom that's a major turning point, like a primary turning point. But that being said, it's hard in a market that you're only casually being a part of to do all the tops and bottoms. But really, you can't do too much work is probably what I'd say. But it does end up being a lot of work. Like if you're happy to do it, I'm sure you'll find value in the analysis, but I'm not going to sort of sentence you all to squaring every top and bottom because it will take you the best part of a weekend. All right, so this isn't gospel, but I'm just going to ask you to vote yes or no. So we don't have everybody in the room tonight. What I've said is, would you like a session next week on Australia Day evening? So that would be Tuesday next week. So just let me know yes or no, and I'll take it from there. If I told you the answers, I couldn't give you a forecast. I won't broadcast the results, but I feel it's 50-50. It's absolutely split. Okay, it's exactly 50% yes and 50% no. So I will organise it. Okay, how does that sound? I'll just stay tuned. All right, I'll have to say that. So Linda's saying, do you put more weight on the square of major tops or the lesser ones carry as much weight? No, absolutely the major tops. And for me, it's the 1x1s carry the most weight. The 1x2s and the 2x1s carry less weight than the 1x1s would. Okay, sorry. The 1x1 carries more weight than what the 1x2 and the 2x1. But for example, if you want to know whether the 1x1's got a real strong resonation and whether that's going to work, you'd obviously look and see what the 2x1s on the 1x2s before that did. But to give you the basic synopsis, David says if you focus on big things, you'll get big results. So if you want the major turns in the market, you've got to focus on the major tops or bottoms. Okay, but it really comes in down to how you're going to relate that to the other work that you're doing, because it can't just be squaring a range, squaring a high, squaring a low that makes it come together. You've got to have other things going for it as well, as we talked about. Alrighty. SPY's down to 48.20. Oh, there we go. Let me check what the US markets are doing. So yeah, SPY's down, and gold's hovering a little bit, and it's up a little bit, but it's down from what we were talking about before. And let me find the S&P 500. Yeah, it's down fractionally. It's trading about 1131.9. All right, so interesting times. We'll know a lot more when we wake up tomorrow. So it's probably the best way to describe it. We can sit here all night and watch it tick away, but yeah, at this stage, time will tell. All right, about 9:30, everybody. So I think we've done well again. All right, so we've done a good discussion on the markets. We've had some of the discussion with your analysis, guys. Well done to Graham. I like that early February stuff. I think that's definitely an area to watch. We've started to open some doors on our markets with regards to squaring ranges, highs and lows. But as I said, that's always going to be some work you guys are going to need to pick up. We talked a little bit about accumulation distribution, and yeah, look, we'll pick it up going forward from I'll get in touch with you regards to how we're going to handle next week. So thanks, Wayne. Thanks, Annie. Yeah, thanks, Des. I'm on hold till 2014. Well, mate, I'll hold you to that. All right. So no trading until then. Okay. Thanks, Christine. Thanks, Keith. Ashley, thank you as always. Yeah. Thanks, Lynn. Always, yeah, a lot to put into practice, and that's what it's all about, making it your own. Thanks, Graham. Thanks, Debbie. Thanks, Neil. Darren, thank you. Everyone, take care. Have a great week, and I'll be in touch for our plans for next week, guys. So sorry to not have something finalised for you now, but I'll work it through with the guys in the office, and we'll advise you accordingly. All right. Look, everybody, thanks for that, and take care. Have a good week, and keep an eye on the market. And this week, we should start to get a better idea of which way we're moving this week. I think this week will be the story. It will be the next chapter in the book anyway. Maybe the kickoff. So hope you're all well, and enjoy your week, and I'll bid you farewell. Welcome officially to session 10 of the Ultimate Gann coaching. So I'll just drag down that screen and just bring up our PowerPoint for tonight. So we're up to session 10. Sort of it feels like Ultimate Gann coaching by torture, doesn't it? I can't believe session 10. It seems like we've been doing this for the best part of 12 months. But obviously we had a big break in between, and we've had obviously Christmas, etc. in the way as well. So certainly want to say well done to you guys for sticking in there. And I was lucky enough to meet a couple of you recently. I've just got back from doing a 2-day class in Brisbane, so it was nice to meet a couple of you, or lock eyes again, as they say. Obviously, I've met many of you before, so and it was good to get some of the feedback that you guys were happy to share with me, which was that you'd had some benefit from our time together, which obviously makes me feel better about, I guess, what we're doing anyway. So I guess getting to the I'll get the official bit out of the way, so I'll get the compliance bit out of the way. So I'll let you know that Safety in the Market holds what's called an Australian Financial Services Licence. That enables us to provide to you general advice only, or we deem to provide general advice only to you with regard to the financial markets. We've not taken into consideration any of your personal financial objectives or goals. So anything we talk about, current market, previous market, techniques, strategies, or tools have not been thought through in the process to specifically be geared to your outcomes. They're just to be general advice only. Obviously, we'll take a look at the current market and have done for all of our sessions, and obviously we come up with trading ideas and trading strategies, but they're obviously things that you should look into as to whether they suit your own personal financial objectives. So all of those things are standard, but obviously remind you of those. And I need to let you know that I hold a qualification that enables me to speak under our license and act as what's called an authorised representative. So there we have it. You might be saying, look, I've only got a few more weeks of having to hear me go through that each week. You guys could probably take me through it, but it's all very serious, obviously, and there for a reason, which is good. So it's out of the way. So we'll get sort of stuck into what we're going to talk about tonight. So I guess it is sort of 2 weeks since we last caught up, and I was going to sort of tackle this a couple of ways. I thought, well, I could put some instructions on the forum and have you all sort of walk in here tonight ready to construct a forecast and have you guys guide me through it. And then I thought, well, maybe, you know, you guys want me to do it, so therefore that was going to improve your skill set. And then I thought, yeah, no problem. I can be ready to take you through, as we talked about, it'd be impossible to do both Newcrest mining and the Aussie dollar in one session. So obviously we're going to split those out. So what we've got is we've actually got 3 sessions remaining. Including tonight. So obviously 2 of those sessions are going to be taken up with a practical forecast on Newcrest mining and the Aussie dollar. But I thought, well, then we'll need to do a review on what putting a forecast together is all about and what you need to do. But I thought, well, if we do it that way, we're sort of going to be putting the cart before the horse. So, and then I thought, okay, well, what I'll do is I'll send out some instructions. And then I thought, well, that's not really going to work because obviously it will make a lot more sense if I explain it to you. So I've had a lot of backwards and forwards, I guess, with regards to how I was going to run tonight and the remaining couple of sessions. I guess the good news for you guys is that I've come to the conclusion that we're going to need to have another one. Okay, so we're actually going to finish off the 3 sessions, obviously, that we're scheduled to do. And then what I thought I'd do is I'll run and I haven't got a time, and we might even do it on a Saturday morning or another night or something. But what I thought I'd do is we'll just have an informal Q&A to finish off our time together. But that'll be an extra session. So we'll actually have 13 sessions together. So what that'll be is an opportunity for you guys to bring any of your questions that have not been fulfilled or answered, or your conundrums, etc., through our time together. So, so the good news is that you're going to get another session. Well, I think it's good news. I don't know whether you guys do or not, but I'll leave that up to you to decide. But what I thought I'd set that up as being is mainly a Q&A because I didn't want to feel that we were, chopping into some of our sessions with a Q&A. So I kind of thought, well, you know, an extra session would go. Now you got to remember that this is the first time we've run an ultimate Gann coaching program, and I must admit when I sat down I thought, oh yeah, well 12 weeks, would that be enough? I'm sure that 12 sessions would be plenty. Thinking, yeah, but in hindsight probably an extra week would have made sense, and it certainly couldn't have been done in the 10 weeks that, say, the advanced trader coaching goes for. So all I'll point out to you is that we're going to do another session. I'll advise as to how and when and all of that sort of stuff. The guys in the office don't even know about it yet, so I'll have to bring them up to speed. But 24 weeks, fantastic, Graham. Yeah, no problem. It runs for 52 weeks in 2010. 3 sessions a week. I think you'd all get a bit sick of me by then. So I guess the way it's going to roll tonight is that we're not going to get into. We're going to start some work tonight, but we're not going to get into the heavy nitty gritty, and it'll make sense once I explain it to you. So let me take you through it. So I want to maintain our market update. So that goes without saying is that we need to take a look at what the markets have done, and in particular the review of our markets. So a quick discussion on what's happened. Obviously, I was having a bit of a chat with Darren, who is in the room tonight before the session kicked off with regards to what the Aussie dollar has done today. So it was a surprise to many that the interest rates were put on hold in Australia. So therefore that has caused the Australian dollar to essentially tank. And if I'll show you an intraday chart of it, and it's tanked a fair amount, and it's done it in about a minute. So it's a massive move over a very short window. So we'll take a look at that. So that really lines up with the fact that we were talking about short trading on the Aussie dollar when we got together 2 weeks ago, and I know a lot more people suddenly got, just through some of the posts on the forums, etc. People have posted some good stuff, and a lot of people, and I'm not quite sure looking through the list whether it's you guys. I'm trying to think who posted some of the stuff. Could have been a couple of the guys from the Wednesday night group. It doesn't really matter, but just got pretty aggressively short on the Aussie dollar over the last week or so, and that's really sort of come into play in recent times. But remember, we were looking at a bit of a double top pattern. We were looking at repeating ranges. We had the 1-by-1 angle off the all-time high. We had some time frames lining up, all of those sorts of things coming together. So for me, you know, the fact that they held interest rates today was a bearish influence. Obviously, keeping in mind that the thing that drives currency up is that if our interest rates kept rising, that obviously makes our Australian dollar a little bit more attractive to invest in, but obviously they've held them, put them on hold, and that's caused the Australian dollar to tank. I feel even more vindicated now. My brother does a lot of travelling to Japan, and he's actually heading off there tomorrow on Thursday to go skiing, and he asked me about a couple of weeks ago whether he thought it was time to get some yen, and I sort of said yeah, myself, and I even got Matt Barnes into the act, and we had a good squiz at the chart. It was good, and we got him to load up on the yen, which was good because the Australian dollar versus the yen's also fallen pretty well. So this trading business not only adds money to your trading account when you get it right, it's also good for going on holidays and helping family and friends. So there's a little diversity for you. So I want to take a look at our markets tonight, and then what I guess I want to start to do is go through the process of talking about the process of forecasting. Now, I guess when we sat down at the start of our sessions, 14 years ago, as I said, feels like that. We talked about obviously being able to construct a practical forecast at the end of this, and I guess when I thought about it, I thought I could just do one like I do it again, Mastery. I could throw facts and figures at you. I could just probably bamboozle you. We've had 10 sessions with our market. You've had the best part of probably half a year working now with Newcrest and the Aussie dollar. So you would certainly be much higher up the ladder than what you would normally be walking into a brand new market. But really, is it about and the question I ask myself is it so much about coming up with a date and a price? I fancy most of you, obviously, whilst interested in that, would probably prefer the process and being able to actually do it for yourself rather than me just saying, here's a date and a price. So I've actually put together my roadmaps for these two markets for this year. So I could pretty much give you an idea of where I consider these markets to go at this stage. But obviously for me, the process is probably a little bit more of the relevant discussion. Now, I guess when talking about that process, I want to take you through what works for me, which won't always work for you. I guess I wanted to do a quick review in the ordering of tools because we've got a lot of tools. If you just flick through the Ultimate Gann course and then on my training plan, even the starter pack, and you want and actually listed all of the individual tools, you'd find that you've probably got a list of 20 or 30 things that are applicable within our markets, and what order would you place those in? And that's really the great challenge in putting together a forecast, is not getting lost. And as we know, we need to do it as far as on a single market for specialization, because it's very hard to do this sort of stuff on all markets. So I thought I'd give you what I consider to be a little bit of a review and an order of the tools that I tend to use. And I guess starting the process, so I'm actually going to do some of the starting work for you tonight, and I talk about creating a funnel to get that information going down. Now, what I thought we would then do, absolutely, Lois, we need to learn how to fish, all of us. And so what my plan of attack was to, not go to the next screen, was to take you through this tonight, starting to get your head into the right place. We're going to do plenty of market stuff. We'll talk about potentially some trades, because I will remind everybody that we were looking at early February around the seasonal date for Newcrest mining. And, as I look at the tick of the clock, it's sort of 2nd of February. We're very close into that period, so I don't want to miss that. So that'll come in our market update and the review of our markets. But I'll start the process off with how I view the tools in order. And what I was going to try and do is, instead of doing my version of the forecast tonight, so that you could all sit there, take notes and go, okay, well, how am I meant to do it? In the interceding time between now and next Tuesday when we meet, what I want you to do is, we'll do Newcrest mining first, and then we'll do Aussie dollar the following week. Technically the last two official sessions, is that leading into each week, I want you to basically do the process for yourself and see whether we come up with an agreement. So I guess it was, which way do we do the delivery? Do I do the forecast and then sort of try and teach you how to do it, or do we sort of get you guys to do a lot of the work for yourselves? And then obviously we can come to agree on whether or not the forecasts are accurate, or whether we're coming up with the same sort of information. Now, I'm also going to work out a way for you guys to actually send me through any of the things that you'd like to be included, or things that you think are vitally important to this market with regards to putting together a forecast. So what I'm sort of saying is, before next Tuesday, if you come up with a date and a price and you want to share your workings, and rather than putting them on the discussion board, because it tends to become you're sort of putting your answers out there and suddenly they become everybody else's good work, I'll give you an email address that you can send some stuff to. And then what that's all going to do is form the basis of pulling together a trading plan as well for this market. Now, we've talked a lot about putting together a trading plan, and we still need to talk about that. But one of the things I'm going to do for you is when we get our official conclusion to our time together, even after our bonus session, I will have to spend some time bringing that together. That's probably not something that I'm going to be able to push a button on the day that we wrap up and say, here you go. I'd like to put a little bit more time into it than that. But that'll come sort of in the preceding few weeks after we finish, and therefore you'll have a lot of that information flowing around, and then hopefully a trading plan to back all of the work that we've done. So hopefully you can understand my rationale, which was, rather than me, because I know what it's like, because what tends to happen is, particularly in this environment, it's a little bit like you just fold your arms, you'd sit back, I'll drive profit source, and it's a bit like, me just talking at you, and it's like, here you go, here's a date and a price, is everybody happy? So what I'd kind of like to do is the other way around, is to get you guys trying to do a similar process to me. So come next week when I go through it, you can turn around and jump in and say, look, I did that and I didn't get that result, or I did that and it didn't work, or did you see that on top of what you've done because I did it a slightly different way, or I applied it off a different starting point and I got a really great, hit that backed up what we're doing here. So it's something that I thought, if you guys had a crack at it first, when I do it, it'll actually make a whole lot more sense. Now, so that's my plan of attack. Now, obviously, you're going to need to spend a little bit of time between now and next week. So that's probably the bummer in all of this, is that I probably should have got better organised to prepare you for that. But I'd like to think you've been working on these two markets, and I'd like to think if you could give me a couple of hours between now and next week, you should be able to go through the process and at least feel like you're part of the journey. So So Lois is saying you started some work but couldn't decide which tools to use for the best results. Exactly. So that's the exact question that I guess I wanted, not so much you guys to work out, but that that's the process, and that's the struggle. Is that forget the market. It's how did I bring it together that makes it successful? Because I fancy all of you guys can apply tools, but you do get lost, which is I jump into it, I get lost, I don't know which tools work best, which ones can we discount, which ones can we include. And I thought if you guys did that and gave it an honest crack, then when I provide my potential insights, I won't say that they're startling, but the things that I do, I've already found a few things that I've been having a good play around with these markets, and I've found some timeframes that I'm quite happy with, particularly on Newcrest mining. So there's some stuff there that's definitely working. But how does that sound? I guess from that perspective, as opposed to doing it, me doing the forecast and then coming back to you guys. If I give you obviously a good insight to what I'd like you to do through the week, I'm going to do a fair bit of the work for you tonight. I'm going to give you a list of the tools and maybe the process that you want to apply, and then come next week we can kind of compare some results. Thanks, Graham. Thanks, Wayne. Thanks, Linda. And I thought the best benefit would be for you to do it rather than me to do it for you. And I really did sort of sit and ponder this, and I thought through the process. You've all been to a Gann mastery, so it's not like you've had a limited exposure to people talking at you all day and all night about markets. And really what I thought, well, what is it that you really probably want from this? And I went back to that original survey that I got you to do, which was really about, I want to be able to walk away with more confidence. And I thought, well, the best way to do that is to get you guys to do it. So yeah, exactly. We need to as Key's saying there, you need to feel good about the results, and it's no point in me just coming up with something, even if it works and you can make $1 off it, you want to be able to go, I'm not going to be able to put the next one together for you. So that was my whole idea. So in saying that, what we're going to do is have a good chat about what the process is. Like, it's not just saying there is a process to forecasting, there's no prizes there, but we'll have a good chat about what tools are available, and we'll talk about starting this process, and I'll talk about the funnel. If you've been to one of my Gann masteries, you'll know exactly what I'm talking about there. But yeah, absolutely, Graham. You want to know when you're on the money exactly, as opposed to sort of clutching at straws. Now, the thing that I'll just add a point to that, Graham, is that I guess initially I can go back and think about when I first started doing this. When I started putting together, my forecasts, I didn't know when I was on a good thing or not. I really, you put it out there and you gave it a crack and you saw what happened. And I was actually reading a chapter towards the back of the Ultimate Gann course today, once as always, going back to the master in terms of David. And he said, look, what you've got to do is you've actually got to put together something like time by degrees, anchor it with maybe 3 or 4 time frames, be them short, medium, and large, interim, or balancing time frames. And he said, then what you've got to do is wait, and you've got to see what the market gives you. And so ultimately he said that's not waiting to, or not trying to trade that exact turn, but you would, in the first 3 or 4 times you were trying to put together a practical forecast, you're going to trade it what you would consider quite conservatively. So first lower swing tops or those sorts of things, double tops, double bottoms if they were in play. So what I would, like all things, when people first take their first ABC trade, it tends to be just out of sheer excitement or exuberance, and they don't really know what they're doing, but they just take a trade for the sake of it. Often it ends up being a pretty crook trade. And so from that perspective, we don't like learning that way. But what I'll say to you is with putting together forecasts, it's okay to have 3 or 4, 5, 6, 7 attempts before you actually try and trade the exact top or the exact bottom. You've got to get some experience waiting to see if it comes in, and then you'll start to surprise yourself and you'll say, look, I actually did get it right, and it did actually work. So, but I hear what you're saying there, which is the confidence to know whether you're on a good thing or not. Now, I guess I'll add one more thing before we jump into the market stuff, is that with obviously my market, which is oil, how do I know if I'm on a good thing? Is that I know the level of success that certain tools bring, and I know the level of confidence I can have in certain tools. For example, the square of the all-time low, 975 square, the 161 day count, the 403 day count, seasonal dates, all of those things I think provide a huge amount of confidence to me because I've been around that market long enough to know their level of success when applied correctly. The problem with these two markets is that even including myself, I can tell you what I think is a good quality setup and what all the things coming together look like should do, but that's no guarantee. And so that's why keeping your powder a little bit dry before you start jumping in, and just having a bit of patience, waiting for a turn, waiting for a more conservative entry in the early phases will produce some confidence. Okay, so you don't want your first experience in trading a forecast to be the first forecast you put together. And the worst thing that can happen is you get it right, and then you don't trade it, or you don't try and sell the top or buy the bottom, and then you think I should have done that. But it is a case of programming, as they say, the subconscious mind as to what you should come to expect. All right. So that's our plan of attack. We've got a fair bit to get through, so let's get started. I'll jump out of my PowerPoint presentation, I'm just going to jump into profit source. And we'll take a quick look at what's been going on around the globe. So first thing we'll do is we'll take a look at the share price index. Where were we? 22nd. Still haven't. I'll go and solve that. I've got to delete that bar. We're having all sorts of dramas with. Just going to do that. I thought I'd actually done that. So I'm just going to go and delete that 28th or 26th figure because the market didn't actually trade on the 26th of January. I had actually gone in and deleted it, but because they the way they build packs, it's obviously reinserted that. That's all right. So that's taken care of. Action, save data, action, get a price chart. There we go. So now what I'm going to do is go back into there and show you profit source. All right, so there we go. So we got together, obviously, the week before Australia Day. So that was the sort of Tuesday there. So we were sort of back in and around this area here, I think, from memory. Someone remind me, I can't remember the exact date. If I look in my little phone, it'll tell me. But, you know, two Tuesday nights ago, so going back a fortnight or so. I could do a date. I could do a, there we go. I'll use the time extension tool for the best discussion. There we go, 14 days ago. So the 19th, there we go. Thanks, Wayne. We've got time tools in a piece of software in front of me, but I'm trying to use a calendar. But there you go. So we were together at around about this point here. We were talking the virtues of how strong that top was, the 11th of January, knowing full well that that's that great Christmas rally into the early part of January. Top on the 11th, we've seen little gaps down. We saw the market sort of holding here, and then all the things sort of started to come undone where we got that big gap down. Okay, so if you were talking about you know, entering on the first sort of lower swing top, here was a real little pain in the backside because there's your first lower top on the 14th. You would have just got stopped out on the 19th before the market fell if you were just trailing stops 1 point behind the swing high, which in these sort of instances can not always be the best strategy. You might find that having a little bit more of a view of a bit more of a distance there might have helped. So there you've got that first lower top where that cursor is, and then obviously the market did just enough to, and that was the day we got together. But we saw that really weak close, so really weak close. We sort of also talked about the breaking of a number of bar chart bottoms here. So we sort of said if we get down to this area here, and we also talked about it closing this little gap here. So we sort of, I know it's going back a couple of weeks now, but if memory serves me correctly, we were sort of taking sort of a bit of a squeeze at that little gap there. And obviously the market gave us lower tops, big outside reversal day, and obviously, you know, managed to close or get through that gap down first and foremost. So on that day there, which was the 21st, you might have chosen to go short the openers, place stops behind the gap, and you know, depending on where you might have even gone behind the previous day's close, and that would have kept you safe. Next day, massive gap down, and then obviously the markets have really sort of got going now. If we take a look at what we've seen today, we've seen obviously early February, 1st of February, 2nd of February, we've seen obviously the market climb back up. But you know, we're talking about, you know, volumes are relatively the same, but I'd have to say the bears are dramatically in control in this market at the moment. I can't see, you know, a massive recovery in the near future. I'm of the bear camp that I think we'll get a little bounce out of this double bottom. I'm sort of resting, you know, no concerns there. But I guess if you were to sort of throw, you know, stretch me to the wall and, you know, nail me to it and say, well, what am I expecting? We know that the next seasonal date is coming in around early February. So if we take a look at, you know, February of last year, you know, always going back and sort of getting an idea of the roadmaps, you know, we didn't really get too much around February of last year. I'd go back and take a look, just, you know, purely thinking out aloud, master time cycles. I'd go back and take a pretty good look at what happened in 2000. So obviously that's about 10 years ago now. So we did see a little bounce around the end of January into, you know, middle of February, down into the 21st, and then up into the March seasonal date. That's actually the tech rec high. So we're coming up to the 10-year anniversary in the March seasonal date this year of the tech rec coming undone. I guess the you know, we could keep going back to even further to 1990, getting back close to David's Golf Ball low call. So if we're looking for a bit of a 20-year cycle, I guess this is probably the cycle that many people are, you know, potentially watching. You know, as you go around the traps, the 20-year cycle has worked very, very nicely on the share price index. So we saw a top here on the 11th of January. Market has sold off, did a little 50% retracement into late January. So what we've got here is a 30th of January. So we call that late January, early February top before the market fell over. So if you're looking at the seasonal date as being something, you'd have to argue, I'd hate to call the 1st of February the low and say that the seasonal dates come in a week early. My view, if it's as it stands right at this point in time, is that you're probably more likely to see some sort of movement along those lines, maybe back up to test that gap, and if that happened to give you another lower top around the 5th of February, around about that seasonal date, I'd be quite happy with that, okay, as far as being a top. But there's also the other view, which is that let's say the Dow and the S&P markets get hammered again tonight. You might see the market continue to, if it breaks through that double bottom, we might see something along those lines, and we could see a sell-off into what could be the the 5th of February, that seasonal date, and then we could maybe be watching for a low. So at this stage, there's been a pretty strong run. We're talking about a 500-point run there. We could expect a decent bounce in the near future. Now, whether it's still got about another week to go and we make a run into a 5th of February bottom or somewhere around there, or whether we make a recovery from where we are now into a 5 Feb top and then we go again, time will tell. But if you go back and, as I said, keep a good eye on that 20-year roadmap. I've been working obviously with Noel in Brisbane over the weekend, so we got to have a pretty good yarn about what we thought the markets were going to do. And I guess in the current environment, it's a little bit hard for us to be bullish. If you take a look at what happened, going back to the big picture stuff, and I don't want to sort of step on Noel's toes, but it's purely a case of nice big top here in 87, fell into an 88 low, made a recovery into 89. And then from 89, it had a really strong recovery in 89. So that's 20 years from 2009. So it made a strong recovery into the back end of 2009. 1989. And then from 1990 or 2010, 20 years later, we really saw the market starting to fall off, and into as much as sort of the late part of April, recovery into July, before we made our final low in January of 1991. That's that Gulf War low. So really what we're seeing is these opportunities as the market's fallen away. It's not a really good colour. So let's get in here and change that to blue, default that. So if you're looking at the movements up, the upside movements were really just what you consider to be opportunities to continue a bit of a sell-off. So I like to always sort of benchmark these sorts of figures. So if we're talking about the 1990 top here, we're talking about 1,750 points down to a low of 1184. So I'm just going to quickly flick to another screen. 1750 minus 1184. It's about 566 points. So if I just come back to screen there, so what we're looking at there is, from what was the major top here. Obviously, it wasn't straight down into this major low. In 1991, where the market actually decided it would get itself going from, was that we really saw a situation where we saw about a 32% fall. So if we run a straight line from the top here down to the low, you're looking at about a 30% fall. So if we take our situation here where you've got to top it at about, call it 5,000 points, we're looking at a 30% fall as being about 1,500 points. So we'd be looking at 5,000 back down to, isn't that interesting about the 3,500 top? And if you go back many years ago, you'll see that that 3,500 top was the all-time high back in 2002. So that's one scenario. So I'll come back to you guys on camera because I just want to make a couple of points there. I'm not trying to give you a forecast on the SPY, by the way. I'm just trying to give you a overall awareness. Would you all agree that the 20-year cycle on the share price index has been pretty red hot? Top in 89, top in 2009, top in 87, top in 2007. The litany of examples of that 20-year cycle. There's a 60-year cycle, an 80-year cycle, a 100-year cycle that are all working there as well. But I'm just looking in the list here, and Linda, you might back me up here. Linda was actually at the TT with us in Brisbane over the weekend, and obviously you guys are at a phase in your trading where I think if I talk about bear markets in that magnitude, you guys go, great, that's a bit of opportunity, and you say, look, I've seen it all before. Even sort of trying to broach that topic from a very wide base with a number of people in the Brisbane class, in the 2-day class over the weekend. I saw colour draining out of people's faces at a record rate. Be interesting if I write my next Yahoo Finance article and sort of say, you know, share price index to fall by 1,500 points, you know, just to see how well that would be taken by many people. Now, as I said, that is just purely basing, that's purely just basing it upon that 89 roadmap. Okay, so the 20-year cycle into 1990. So Ashley's giving us here the March 03 low is 7 times 360 to the 9th of Feb 2010. Okay, there you go. So yeah, fantastic. And Linda's saying, Greg, yeah, that's what happened on the weekend. Yeah, not too many people wanted to hear that there might be a bear market. They kind of think that all of that stuff should have got out of the system in 2007 and 2008. But all I'm suggesting to you is that I think the seasonal date that's coming up in February will definitely be one to watch on the share price index, but it's more about whether it's going to be a lower or high, and you guys possess the skills to be able to deal with that when it comes along. But I would not be surprised if it gives us a lower top. I wouldn't be surprised if we get a bounce out of here. But I wouldn't also be surprised if the Dow, even though it went up 100 and a bit last night, got whacked again over the next few sessions, and we saw it run down and get really oversold into early February, then see the market rally and everyone tell you everyone, you know, fantastic again before it potentially gets whacked again. But all I'd say is that if you're unsure of how to, you know, it's time to get the bear coat back out of the closet and at least just have it on standby if necessary. Now, I'm just looking through the list here as well. I'm trying to think. There's a couple of you guys that were with David and us up in on the Gold Coast in September of last year. So there was certainly some things that David mentioned as well that would give you maybe a bit of an idea where that could all terminate. So interesting times ahead. But all I'd say is that we're definitely in a trader's market, and we can forget this investing mentality anyway into the near future. So anyway, hopefully that's of some benefit to you. You know, the other side of the coin is that, you know, it could all be wrong, and it could be, you know, from there to there. So you know, if that's the case, swing charts will be pointing up and I'll be buying. But I just that to me